So quite a negative picture kind of overall. There's a bit of nuance within that. The FTSE 100 looks like it's going to have a slightly better day. Look at the DAX down by circa 1%. So Euro Stoxx 50 down, FTSE down by 0.3%. That's barely a drop in what we're seeing elsewhere. DAX futures down by around 0.9%. The key point here is, and we were talking about this just a moment ago, Anna, is that this is a macro market. This is a top-down market that we are looking at here. And Friday's session was really ugly, and what you're not getting this morning is any sense of buying the dip.
Yeah, absolutely. Not buying the dip. And as if the weekend didn't happen, as we've said a few times, could the oil sector then make the difference for London? We'll be watching some of those oil majors. Might that be one area of positivity for investors this morning? I note, though, that some of the basic resource prices are actually weaker. So copper prices weaker through the Asia session, so that might be a bit of a negative. Talking of miners, Anglo American in focus for other reasons. They've agreed to sell their steel-making coal mines to in Australia, to Dilmar for as much as $3.8 billion in cash. And Ryanair certainly in focus with higher oil prices in mind, of course, the whole sector in focus, but also they have been warning about rising costs this year because of jet fuel, of course, but also crew and aircraft maintenance. So we'll watch that stock as well, Guy.
Okay, here we go. Monday morning session. Ugly Friday. Monday, not looking particularly good either. Let's show you some numbers, give you an idea of what is going on. As we've already indicated, looks like the FTSE 100 may have a better day than most this morning, but we're still down pretty heavily on Friday. The bond market may be more of a focus to what is happening here in the UK right now, but we are expecting significant weakness elsewhere. There are a lot of ex-dividend stocks which you want to fold in to the narrative as well this morning, so just be aware of that. But nevertheless, the Stock 600 is down by 0.4%. The FTSE is down by 0.2%, kind of circa where we thought it would be at 0.3%, which is where we're now moving to. But we are expecting some of these other markets to look a little uglier. So the CAC is down by 1.2%. The AEX is down by 0.5%. Be interesting to see what is moving that. Maybe again some of the oil narrative in the mix there. But the IBEX is down by 0.7%, and we're not expecting a particularly positive picture out of the DAX, which remember was down circa 2% Friday. So more weakness potentially coming through for the German markets. Anna, let's dive below the surface.
Let's dive below the surface. And just to deep dive on what's happening with the AEX, there does seem to be some weakness. Well, technology is a sort of mid-table sector today. It is negative. Most sectors are negative. And we do see some weakness coming through on ASML and ASMI. So both of those are weaker by around 1.8%. So that could be explaining some weakness in the Netherlands. We mentioned energy stocks could be an area of positivity, and that is absolutely the case. So food, beverage and tobacco is flat as a sector, and energy is the only one that is really on the rise, so up by 0.7% in that sector. We see the likes of Equinor, Aker BP, BP itself and others all rising today, up by more than 1% because the oil price is higher. We're around $111 a barrel on Brent. The other side of that trade, though, of course, is travel and leisure stocks are weaker, and Ryanair is the poster child for those this morning because we've had an update from the business. The stock is down by 4%. Others in the sector are also weaker, though, because of the higher oil price. So TUI, EasyJet, all of these down by more than 1.5%, but it is Ryanair that a lot of the pain is focused on, but down by 4%. And this is a day where the management said, Guy, it's too early to give a meaningful, any meaningful guidance, which is obviously something you have to sympathise with because this is just, the visibility is incredibly low.
So you don't know, so you've got two issues with visibility, one of which is what's happening with fuel prices, the other one, what is happening with consumer demand. Now, consumer demand can be affected by a lot of things. Broadly, if inflation is going up elsewhere, can I afford to go on holiday? Will I spend the extra money for that extra weekend away? I don't know, so that's a factor. But you've also then got the kind of potential for higher prices coming through. And Ryanair is likely to kind of follow what others do in that space. If others push prices up, Ryanair will certainly follow. It'll kind of move. It'll sort of migrate with them. But they don't have the outlook at the moment. But this morning, yeah, in terms of the points doing the damage, where the points damage is coming through, ASML, Novo, Intesa, BNP Paribas. So the banks are in the mix. And then you've also got some of the luxury stocks under pressure as well.
Yeah. So that's the picture across European equity markets then. A negative day in train, down by 0.7% on the stock 600 as a whole. The CAC 40 gets the worst, perhaps, of the losses for the major markets. Let's get some more analysis with Silvia Viviano, who is Global Head of Equity Capital Markets over at UniCredit, and joins us now. Silvia, good morning to you. What we've seen over the last week or so is the bond markets really putting inflation fears front and centre. And again, we see reason to do that today, perhaps, with oil prices up by 1.5%. Are you concerned that equity capital markets kind of lose their footing as a result of higher yields, Silvia? How damaging could higher yields be?
Clearly, the risk is there, Laura. I mean, we today, after Friday, and also considering today, there might be a shift in the performance of the equity capital markets. Stocks have been performing pretty well. The equity capital markets managed to decouple a bit themselves from what was happening from the geopolitics and from suffering a lot of pressure from volatility. However, we will need to see, right, what's going to happen after today, and what we see on the bond market hopefully is not going to have a strong repercussion into the equity markets, but the risk is there, and this week I think is going to be quite critical.
Right, and your focus is on capital markets, and it's on those companies that decide to come to market to raise money. I mean, how is this, in terms of weighted average cost of capital and all of the other things that might go into the decision-making around how you do that and when? Silvia, what is the higher yield environment doing to corporates' willingness to come forward and look for money?
I think, listen, we have just come out now at 8 a.m. with the announcement of PPC in Greece raising 4 billion equity, right? It's a very fresh news. It's in the energy sector. The company has been performing very well, and it's a company that needs capital to grow. So I think this is quite emblematic of what we are seeing in the markets compared to 2021, where companies were coming to the market because they actually needed money. I don't want to say to survive, but almost to survive. Now what we are seeing is that there is actually a strong access to the market to raise fresh equity and to raise capital, to sustain the future growth, to sustain the new strategic plan, and to sustain some specific sectors like energy, defense, infrastructure that are needed within Europe to foster the growth and try to rebalance a bit what's happening from a geopolitical perspective.
Just picking up on, good morning, Silvia, just picking up on that defense point that you made. The head of NATO over the weekend was calling for European defence companies to do more. How much capacity do European defence companies have to raise additional equity at the moment?
To raise additional equity, there is plenty of capacity in the sense that investors are still, there is still space and room in Europe to raise equity, and investors are still very much looking to get exposure to the European defence sector. The defense company will need to increase capacity from a business perspective, in the sense that in order to sustain and be able to increase the production, etc., they will need to further do more investment to give a push and a booster to their business and to their facilities. So from that perspective, I think defense, like the energy one, is coming from a position of strength, and I think there is plenty of capacity in the market and appetite from investors to deploy additional capital and to sustain these type of sectors, which are going to be critical for the next, and I want to say a couple of years, it's going to be 10 years plus. So it's a long-term play, and everyone is recognizing it.
Do you think just turning to a sort of another side, do you think the AI trade is an equity trade now, or is it a debt trade? Do you think AI companies are going to issue more debt? We're about to see potentially SpaceX announcing its IPO this week. We've got some very big IPOs coming up. Just in terms of how do you see the AI trade working from a capital markets point of view?
I think there is still space for equity to have an important role in the AI camp. Investments that needs to be deployed into the space is still massive. So that will come and is going to come next to equity. But I don't think the equity trade is close also from an AI perspective. Europe is a bit different, as you know. I mean, we are quite behind from an AI standpoint in terms of sectors, in terms of exposure. So for sure in Europe, I think we're well behind what's happening in the US. The US is much more advanced, but I do think there is still space and room for equity deployment also in the AI sector, not only in defense or infrastructure or energy.
As we wait then, following up on Guy's question there, Sylvia, as we wait for SpaceX, for Anthropic, for OpenAI, for Discord, for many others, I mean, what is that doing for appetite for stocks in Europe and for secondary issuance in Europe or initial offerings in Europe? Are we seeing anybody holding back, waiting for this stuff to come to market?
No, we're not. We're not in Europe, and actually, to the contrary, clearly there's going to be a lot of paper coming into the US market. And so if anyone is willing and ready to raise capital and is in the right sector now, I think what we're seeing in Europe is actually a willingness to move faster rather than be there and waiting, right? You can raise capital in Europe only, as I mentioned, on some specific sectors, and you need to have a very clear use of the proceeds to sustain your growth. So if you're ready, you come to the market now. Now, if you wait a bit longer across summer, I think SpaceX and all these big IPOs, which are going to be really relevant in terms of size and also very relevant in terms of potential demand capture, right? Because liquidity will be partially drained from this type of offerings. Then I think the European market will benefit if all these offerings are going to be very successful and there's going to be plenty of demand. And then more will come, I think, after summer in Europe, hopefully trying to benefit from the positive momentum that the US has created with this massive jumbo IPO.
So can you just walk me through the mechanics? So, Elon Musk is on the tape right now talking about the fact that he wants to get the SpaceX IPO quote going pretty soon. Can you just give me a kind of an idea of the impact that scale of an IPO is going to have around the world? Like, what impact will that have in Europe? Will it pull funds out of Europe? Will it pull funds out of equity funds in Europe to invest in that? What kind of effect are we going to see?
So listen, I think clearly we will need to see what's going to happen, right? Because I think you should not be expecting to launch primary IPO at the same time as the one of SpaceX. I mean, the focus from all the global investors will be 100% dedicated into that. So I guess you will need to play a bit smart in order not to go and compete with such type of offerings. However, I think that, if you need to raise, if it's already a listed company, you need to raise capital, either primary or even secondary, and it's the right sector in Europe, I don't think, if there is a positive market window, I don't think issuers should just be waiting for SpaceX to finish or for after summer. This is a market where trades can get done. You need to find the right window from a volatility perspective and from a market performance perspective. So I wouldn't launch a big IPO in Europe at the same time as the one of SpaceX, but also I wouldn't hold back just because of SpaceX. There will be a lot of liquidity drain, that's for sure. But there are also several different pockets of demand of Europe or European funds that will need actually to get exposure to the European top players. So we need to play smart and we need to see what's going to happen and a bit also of the appetite of investors of competing offering, right? We will need to see how open they are to further education and discussing with European companies at the same time.
Sylvia, great to catch up. Really useful insight as to what is happening here and the effect that this could have. Sylvia Vivano, UniCredit's Global Head of Equity Capital Markets. Quick look at the call 6. You are seeing it's an interesting morning out there, to say the least. Defence companies are on the front foot, but elsewhere there is significant weakness to be found, pretty much from left to right. As you can see, farmers down, luxury's under pressure, a lot of pressure. Seeing that in the French market this morning. Tech is definitely under pressure. And even names like Nestle, which you would have thought would be a safe haven area of this market, down by 0.9%. We do also have some individual corporate stories to fold in, which are certainly part of the mix this morning. And Charlie's got the details of those.
That's right, Guy. I mean, the big story really was these earnings coming out of Ryanair, and they had a profit beat. But look at how the market is digesting this, down over 3%. So really, traders not liking what they're seeing. The company said they were unable to give meaningful forward guidance for the year ahead. And of course, we know that the oil story really has been negatively impacting not just Ryanair, but a number of other companies in the sector. Speaking of oil, let's take a look, though, at how that is translating to these big European oil companies. We're seeing this big, increase in the oil price, boosting them as well across the board. You've got BP, really the leader here this morning. So again, negative story for travel and leisure, but that oil price, giving a boost to these oil companies. Let's flip and stay in that commodity space and talk about Anglo. Now, we have talked earlier this morning about how they agreed to sell their Australian steel-making coal mines, but, shares down. So the market potentially not liking some of the terms of that deal. That could be putting, something of a dampener on the news coming out of Anglo American this morning on that sale. Let's flip and talk about Publicis, because they have agreed to buy LiveRamp, that is an American AI data company. Now, we know that Publicis has been under threat from a lot of AI technologies coming in, potentially eating into some of their business. So this helps give them a boost, right? That data coming from AI, helping to make the case that companies need Publicis's advertising, their marketing capabilities. And look, the market liking this up over 5%. So giving that AI boost to a company that had been viewed by some as coming under threat from AI. Let's look at European banks, because those have been in focus over the past few days. We've got this rate issue coming through on issues on concerns about stagflation. You see banks taking a hit. Monte Paschi really taking a big one, almost 9% there in Italy. But again, also here, filtering through into the UK, you're seeing some negativity. Now, we've been expecting some positivity from Standard Chartered, right? They just named a new CFO. That gives a little bit more clarity on management, but this could be part of a larger risk-off sentiment, concerns about banking, concerns about the broader economy.
I think we've got some ex-divs in that sector as well, particularly in Italy, so we'll keep that in mind. But Charlie, thank you very much for that. Charlie Wells with the rundown of some of the stocks that we are focused on. Coming up on the programme, Ryanair firmly in focus, warning of rising costs this year if unhedged jet fuel prices remain at current levels. We'll have more on that next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West, only on Bloomberg Television. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited, finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
What happened was you were out.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romain Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets.
So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
At this point in time on Q1, and much of this is down to the timing of Easter, we think fares will be down mid-single digit. This is the June quarter, and a lot of that's due to the fact that fares were up 8% in the quarter just ended, where the first key week of Easter fell in there. We had a full Easter in the prior year comp. On the peak summer months, visibility isn't as good as it typically would be at this time of year. So at this stage, having originally thought that fares would be up a couple of points when we were setting our budget, fares are trending broadly flat, but that doesn't mean the close-in fares won't go up.
Ryanair's CFO Neil Sarahan joining Bloomberg a little bit earlier on this morning, talking us through the numbers that we've just been seeing from Ryanair. The shares are under a little bit of pressure this morning. We're down by 3 points, let's call it 3.4. We came into the beginning of this year at around 30, which is an all-time high for the stock. It has since retreated, obviously, quite dramatically since then as a result of rising jet fuel prices. The average for the year is 25, but now trading at 21. So we're down quite a lot off the highs. The company warning of rising costs this year. Remember, it's 80% hedged, but that extra 20 is going to cost them. Kate Duffy, our aerospace reporter, joins us on set. Good morning.
Morning.
Cautious?
Fairly, yeah. I mean, what's coming through loud and clear in these particular results are that costs are rising, and there's no point in the foreseeable where they're going to be reducing. So what we're seeing is Ryanair is in a good position. It's well hedged, 80% at $67 per barrel, but the fuel bill is increasing. Crew costs are increasing as well under these new formed contracts with pilots, and also aircraft maintenances are going up as well, so with the older jets and some of the engines on the Boeings that they have in the fleet. But in the grand scheme of things, Ryanair is in a pretty good position if you compare it to other carriers. The CFO, Sarahan, was telling me this morning that their fuel bill is up, a few $100 million. If you compare that to the likes of Lufthansa, Air France, IAG, they've reported that their fuel bill is up, $2 billion around about that point. So you can see there is definitely a cost disadvantage with the current situation, but in comparison to other airlines, they are in a pretty good position.
I remember a day when they didn't hedge at all. I'm going back quite a long time now. Let me ask you about the profit guidance, or lack of it. I mean, do you think anyone was really expecting any firm guidance from any player in this sector? Because they haven't given any, but you might say that's reasonable given the huge amount of uncertainty about when the Strait opens.
Yeah, I think you've said it there, is the lack of uncertainty at the moment. This is what a lot of airlines are stating. They don't know when it's going to get back to a less volatile situation. Economic uncertainty with consumers as well. They're holding back. This is what Ryanair was saying this morning. Fuel is up, which means that ticket prices are higher. They're sort of really concerned and holding back on spending. So this is something that all airlines are reporting, not just Ryanair.
Do I have to start to conjure with a world that is Ryanair without O'Leary? Is that they're talking about his contract?
They are,
which is quite a big deal.
It is a big deal. O'Leary is the face of Ryanair. He is this outspoken, well-known CEO of the airline industry. They updated us in the results this morning saying that the discussions were underway for his tenure, essentially, potentially extending his contract from 2028 until 2032. Everybody, the shareholders, are very fond of O'Leary, of course. They want him to stay on. The board is keen for him to stay on. Sarahan was saying he's got, quote, oodles of energy left. He's very keen on the job. Yeah, no holding back. But we're yet to see. He's obviously got to stay on until 2028 in order to unlock this €100 million bonus that is coming his way. So we will see. But
Oodles. It's definitely the metric for energy. Cancellations in the sector, Kate, where are we on that story? We spoke to Goldman Sachs earlier. They were talking about jet fuel, saying we've seen something like 5% cancellations. They say if things stay closed until the summer, we'll see more like 15. What are we seeing in terms of the cancellation story for Ryanair or for others?
It's still very uncertain. We saw a load of cancellations last week out of Heathrow. They were citing weather and ATC. But in terms of jet fuel, we saw a couple of weeks ago Lufthansa cancel about 20,000 flights. So it's big in the grand scheme of things. Obviously, summer is the most profitable time for airlines. So for them to be cancelling flights is a big deal. This is when they're earning the most of their money, when cash is coming in. So we're yet to see. It's really volatile.
Are we starting to see prices going up? Is that already in the mix?
Yes.
To what extent are we going to see, and how much more tolerance do you think there is? What are analysts saying about how much tolerance there is for rising ticket prices?
Well, in the US, we know that the airlines don't hedge their oil, so therefore their ticket prices are immediately going up. We're seeing that. But we are kind of seeing it in Europe as well. As the situation progresses, you know, the oil that the airlines hedge is going to be more expensive. So we are gradually seeing ticket prices go up. If you just have a quick scan of even European flights, I've done it myself this weekend, you can see the price increase going on, and it does make you think, do I want to spend more money on even just low-cost flights traveling across Europe? So I think consumers will be making that decision. Do I want to go in the premium economy, or shall I cut back and stay in economy?
Kate, thank you very much. Kate Duffy with the latest on the Ryanair numbers. Let's sit with corporate news flow this morning. Standard Chartered has named Manus Costello as its new chief financial officer, promoting a former research analyst and critic of the bank to replace Diego De Giorgi following his abrupt departure in February. For more, our EMEA finance editor Tom Metcalf joins us now. Good morning, Tom. So we were wondering, the CFO, the previous CFO, left. It was quite a surprise, wasn't it? So it's taken a while to replace him. Now, this is not somebody coming straight from being an analyst to becoming Standard Chartered CFO. He's been there a little while, but not very long. So what's the backstory to Manus?
Yeah, no, he joined Standard Chartered in 2024, so our listeners may be more familiar with him as his co-founder of Autonomous, which is a sort of very well-regarded equity research outfit. And I think my sense is he joined Standard Chartered precisely because he was having these very kind of forthright, direct conversations with Bill Winters, who thought, wait a minute, I'm learning a lot every time I speak to this person, let's bring him into the fold. So yeah, but absolutely not a Standard Chartered lifer. And, you know, I think what's really interesting about this is it certainly suggests he might well be, in years hence, a contender for the CEO role. Obviously, a CFO is always someone people will look at if they're looking for an internal replacement for Bill Winters whenever he does finally decide to step down.
Rachel Reeves has got a lot going on in her life at the moment.
Yes.
I think she's at a G7, isn't she?
I think she is.
She's in Paris, so even more going on.
Yes, probably quite a nice place to be, considering what is happening in London right now. There has been this deregulation push in the UK to try and think about ways in which we can get the finance sector to maybe deliver a little bit more. It's kind of a double-edged sword in many ways. Tell me about this idea that maybe we kind of slightly put a few gaps in the ring fence around UK banks.
So it's been like kind of in the ether for a while, and we know they're reviewing it. And then over the weekend there was a report that basically Reeves has decided to effectively, you know, wasn't quite clear what the detail was, but basically enable more finance into the UK economy via bits that previously are sort of ring-fenced off. So the sense that kind of that regime is loosening a bit. You know, you look at the bank shares today, they're not really moving too much, partly probably because this is broadly expected, and perhaps also because it seems like, you know, it will be evolution, not revolution. So, but certainly banks like Lloyds, HSBC have all been calling for this. I think for me, the most interesting thing is probably the bank with the sort of biggest, sort of almost skin in the game, where it would want the ring fence and you think to be relaxed, is Barclays. But they're actually saying, no, we'd prefer it to stay, which I think shows, you know, it's one of those things so far down the line now, all these systems are in place, and some people are, you know, viewing it as a sunk cost, and guess what, we'd rather kind of keep that.
We've invested a lot of money in this.
Exactly.
Tom, thank you very much indeed. Tom Metcalf joining us on what is happening in the banking story. Up next, we're going to turn to the commercial real estate story. Investors there increasingly looking to diversify. We'll be joined by the CEO of CBRE UK and Ireland. That conversation is next. This is Bloomberg.
the Vivian Tom clientele.
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount, Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show, we've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible. Bloomberg Surveillance, we're talking about it.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome back. This is the opening trade. 30 minutes into a session that's looking broadly negative for European stocks. We're down by 0.5%. The pain does not fall evenly, though. We see the Paris market certainly under pressure, down by 0.9%. The FTSE 100, though, doing okay, pretty flat, outperforming. But that has a lot to do with energy stocks, of course. That is one of the only few sectors, Guy, that is in positive territory. Broadly speaking, it is a negative session with most sectors in retreat.
What I think is interesting, though, is that we have bounced. We're off our lows. So the Friday session was really ugly. Big losses being delivered pretty much across the piece in Europe. We've come down this morning. That's continued, but we have bounced a little bit, and that's taken the FTSE 100 into positive territory. In terms of the internals, actually the volume number looks good, which is interesting as well in terms of what it tells you about sort of how engaged the market is with this move. Higher 170, down the 400, so a little over 2 to 1 in terms of the ratio that we are seeing. In terms of some of the single stocks that we're watching, I'm going to start actually in the French market. Publicis is an interesting stock this morning, buying LiveRamp over in the United States. Now, normally what you would see would be a stock like this down, but Publicis is up. It's being perceived, this acquisition, as actually a fairly good one. Shell, to Anna's point, is up this morning. That is one of the major reasons why we're seeing the London market doing fairly well this morning and outperforming. Infineon's got an upgrade. That stock is up by 1.6%. So there are a few stocks that are shining this morning, but on the downside, there are some fairly significant losses that are being delivered. LVMH is one of those in the middle, down by 2%. The tech sector is under pressure as well, which is interesting in terms of what it's likely to signal about what is going to happen over in the States a little bit later, but it might tell you more about what happened in Korea. That market was under pressure, but actually Samsung had an okay session. ASML is down, though. Ryanair down by 2.6% this morning. Just the outlook. There is just a kind of lack of certainty about what happens next, and that is certainly weighing on Ryanair's stock. As I say, we came into the beginning of the year with this stock trading circa 30. We are down hard off those initial highs, Anna.
Let's get an update, Guy, on some of the other stories that we are covering this morning. China's growth slowed across the board in April, with investment resuming declines. The data points to an economy where booming exports no longer offset deteriorating consumption at home. Fixed asset investment unexpectedly shrank 1.6% in the first 4 months of 2026 from a year earlier. Retail sales rose just 0.2% in April. That was the worst reading since December 2022. The Financial Times is reporting that Anthropic has agreed to brief members of the Financial Stability Board on its AI model called Mythos. According to the report's sources, the briefing follows a request by the Bank of England Governor Andrew Bailey. The FSB is planning to release a report for consultation next month on sound practices for adopting AI in the financial system. And Elon Musk says he wants to get the SpaceX IPO going, quote, pretty soon. He spoke moments ago from the Smart Mobility Summit that's taking place in Tel Aviv. Bloomberg previously reported that the company could file publicly for its long-awaited IPO as soon as this Wednesday. Sources say the company has notified investors that it's executing a 5-for-1 stock split, a move that will reduce the price investors pay for each share offered in the IPO. Guy.
That could be a big story this week. Okay, let's talk about what's happening in the bond market this morning. Generally, we have yields higher across the board. Certainly in the United States, Germany, Italy, France, yields are all up. The exception this morning appears to be the UK, where actually we are bid this morning. So we have yields coming down a little bit, but given what happened at the back end of last week, maybe a little pause for breath is maybe understandable, and maybe people have decided actually yields at these levels start to look a little bit more attractive. How does this impact the various sectors here in the UK? Well, let's find out. Rishi Bukar, UK and Ireland CEO at CBRE, joining us around the table this morning. Good morning.
Morning.
Gilt yields have gone up quite a lot recently. Just walk me through how that translates into what you do.
Sure. Look, thank you for having me. I'd say, look, we're day 80 now of the conflict in Iran, and what we've seen is inflation expectations go up, clearly, which has a direct correlation with interest rates, hence the 10-year gilt through 10%. And as we know, most real estate investors are levered buyers, i.e. they utilise debt in order to buy real estate. And so as the cost of debt goes up, real estate becomes more expensive. And so we're seeing a level of uncertainty. However, we have been seeing infrastructure-type buyers now invest in real estate. And broadly speaking, typically they are less levered or under-levered versus your typical real estate buyer. And so we are seeing more interest and higher bids coming from infrastructure-type buyers.
When you say infrastructure, what do you mean?
Just traditional infrastructure investors who would invest in tolls and motorways. Right. They are now looking at real estate that have got infrastructure-like characteristics. Such as? Healthcare, where you've got long leases, barriers to entry, inflation-linked. They're sort of reclassifying real estate as infrastructure because it's got a lot of the same characteristics.
So where does that leave the traditional commercial real estate market, the CRE market? Yeah. Are we starting to see investors pulling back? Does the uncertainty mean we're seeing less transactions? Kind of what's the effect there?
Sure. So far, we're sort of, we're day 80. We haven't really seen pullback. We've seen some repricing. What I would say is real estate investors can invest across almost any debt pricing market, but what they need is stability and certainty, which is lacking at the moment, particularly here locally in the UK. And so we haven't seen a pullback. We've seen a little bit of repricing, but we've also seen traditional real estate investors move into what we'd call alternative asset classes, healthcare, data centres, which I'm sure we'll come on and talk about, and living. So student accommodation, single-family homes, and apartments.
Okay, so you've got traditional commercial real estate investors broadening the range of assets that they will invest in, what used to be alternatives and a small percentage, now bigger. And then you've got other players coming into the commercial real estate space from outside, infrastructure players. So it's all sort of turning into one, the dynamics in the market are changing quite a lot then, Rishi. So where does that leave vulnerabilities within the sector? Does that mean that the sector is more resilient, or are pockets still vulnerable?
I think the answer is a little bit more nuanced. So you've got to sort of go by asset class. But if I give you a couple of examples, offices, people were very worried that the office sector is going to disappear. That absolutely is not the case. We're seeing a lot of people come back 5 days a week. Supply is very limited. And so if you've got a new ESG compliant, an office like this, it's doing incredibly well. However, if you've got secondary offices, either by the nature in which they've been built or secondary location, they are struggling. They're going to be repurposed to hotels and residential. You're seeing retail that hasn't evolved with consumer taste. Some of the smaller shopping centres in secondary or tertiary locations, they're struggling a little bit too. Yeah. But on the flip side, healthcare assets, very strong. Living overwhelmingly is the number one sector that investors are looking to put more capital into, and data centers.
Yeah. Okay. So that's interesting. So on the data center subject, you've got a report out that talks about the extent to which the demand for compute is going to increase in the UK. I don't know if that's echoed across the rest of Europe, but in the UK, and what that means for the amount of money going into that space. Is there enough money going into the build-out of data centres? Is there more money than opportunities that planners will say yes to? How is that investment opportunity shaping up?
So if we step back for a minute and let's just talk about AI, because everyone talks about AI and worries about what could go wrong. We like thinking about how could it all go right? So if we're sat here in London today, we're seeing a huge number of AI tech employees being hired. That's the first point. Second point, we think that AI-focused companies could end up taking about 4 million square feet of new space here in London. We saw Anthropic take 150,000 square foot of space. And then finally, if we look at our major corporate occupiers, non-AI, but they employ a lot of people globally, we haven't seen them take shorter leases on any of their office buildings. Now, why is that important? It's important because if they were uncertain about the future or uncertain about the number of employees they were going to have, you would typically expect them to sign shorter leases. And we just have not seen that globally. And if you go on to data centers, we're sat here in London, it's about a third of the capacity across Europe, 80% of the data center capacity nationally. We expect supply to significantly outpace demand. There's a huge amount of debt capital before you even get to the equity that's looking for exposure in data centers. So I think demand is going to stay resilient. The issue we've got here is power. So if you're in West London today, start to finish, a new data center could take you 10 years. It's 2 years for planning, 2 years for construction, and up to 6 years to get a power connection. And that's a real issue we've got.
Right, and is that changing anytime soon?
I think it's hard to change. I mean, we're an island, we're an importer of energy. The government has designated data centres as critical infrastructure, so we're hopeful that either the planning regime will become simpler or it'll be easier to get power.
Yeah.
But the demand is so high, it's hard to see in the near term how you do that.
And what's holding back the residential build-out then? Because from what you've said, Rishi, there's a lot of investor interest in investing in residential build-out in the UK. So what holds that back? Because we never meet any targets. Well, planning is obviously the simplest.
Look, planning is the obvious one. What's made it harder this year is the supply chain friction. So cost of construction has gone up because cost of materials has gone up, availability of materials has got harder, and interest rates have got up. So the viability of developments today is just really difficult.
In terms of investors, are you seeing any impact? Are Gulf investors pulling back? Are they still looking to invest into the UK, into Europe? Korean pension funds, those kinds of businesses, are they still looking to put money to work? Their market is booming right now. What are the kind of the big institutional investors looking like right now in terms of their activity here in the UK?
So we've got domestically, we've got a huge pool of capital that is still looking to focus on real estate. But what we have started seeing, probably over the last 12 to 18 months, is huge demand from overseas, particularly Japan, Australia, and the United States. And I'd say what we're also seeing is money that would have gone into the US, a portion of that, and it's hard to define exactly how much, rather than going to the United States, has been finding its way.
Why is that? Is that a diversification trade, or is it?
I think it's diversification. Look, real estate, and we can, again, let's talk about what can go right. We're in London, we've got rule of law, we've got 5 of the best universities here in London, we've got time zone that we shouldn't underestimate in a global economy. You've got a relatively stable currency. All of those things in an ever-changing world are really appealing to investors.
Greenwich still punching above its weight.
It really is. It really does.
Rishi, thank you very much, Rishi Bouchard, the CBRE UK and Ireland CEO. Thank you very much for coming to talk to us this morning. Coming up on the programme, global finance ministers are gathering in Paris this week, looking to address the structural imbalances undermining world growth. We will have more on that next. This is Bloomberg.
is there anything that humans today can do?
Yes.
That will change the lives of the humans currently on the Earth?
Well, first of all, people who switch over are getting the benefit right away. But coming back to the point about the fossil fuel industry and our debt to them, there's an old saying that came from the king of Saudi Arabia years ago. The Stone Age didn't end because of a shortage of stones. It ended because something better came along. Something better has come along now to replace fossil fuels, which are dirty and polluting and threatening humanity's future. The cheapest electricity in the history of the world is solar energy. Second cheapest is wind energy. And now batteries, the only thing that's come down in price faster than solar is utility scale batteries, doubling every single.
Why are we ending the wind farms that are now being built off the coast of the United States? We're ending them.
Because Trump is insane.
On another subject,
you don't want to explore that, but let me add one point on the solar. If you look at all of the new electricity generation installed worldwide last year, I often ask people what percentage of it was renewable, and people say, you know, they're looking for a high number, say maybe 30%, 35%. Correct answer is 93%, because it is taking over the electricity generation industry.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Monday the 18th, the World Health Organization has now declared an Ebola outbreak in Congo and Uganda a public health emergency. The outbreak involves a rare strain of the virus, and it has no approved vaccine or treatment, prompting the US CDC to escalate its response to what is happening here. Jennifer Zabasaja joins us now, our Chief Africa, which would be more appropriate, anchor. Don't know why I said that. Jen, good morning. How worried should we be?
Yeah, Guy, I mean, if you take a look at what we're hearing from health officials, there's quite a bit of concern, especially if you take a look at this current strain, which is quite different from what we have seen in the past. Most of the Ebola outbreaks that we have seen in the past have been focused on this Zaire strain. This is a new strain that we are focused on, actually called the Bundibugyo, excuse me. And the concern really for a number of officials is that Ebola has a very high fatality rate, almost 90%. Many governments consider it so concerning to national security. And so that's really why we're hearing from the WHO as far as this current outbreak pertains to. What we know right now is that, yes, as you mentioned, we have about at least 350 confirmed cases in the DRC, at least 91 deaths in northeastern Congo. And really the concern is that this current spread went undetected for a number of weeks, and we don't really know the extent to which this current strain has been going undetected and how far it has spread. We know that neighboring Uganda, which a number of people cross the border there in northeastern Congo, where there is quite a bit of activity as far as mining goes, cross-border trade goes, there could be a number of people who have been exhibiting symptoms, and because there is no vaccine at this point in time and similar symptoms to other illnesses out there, people could be walking around, and we just don't know yet the extent to which this current strain is walking around in this area. And so, yes, as you mentioned, we did hear from the WHO declaring this public health emergency on Sunday. That is to accelerate funding. And now the real question is, what are we going to see over the next few days, potentially the next few hours, in this part of northeastern Congo and East Africa? And will we continue to see cases climbing, and what then that means as far as more funding to be deployed and potentially more measures to come from some of the countries that are affected at this point in time.
Jen, thanks very much indeed for the update. Certainly one we're going to be watching very closely. Jennifer Zabasaja, our Chief Africa correspondent. correspondent.
Let's take a rundown of some of the things we'll be watching more from a markets perspective this week. And G7 finance chiefs are meeting in Paris. More on that in a moment. We get a Japanese reading on Q1 GDP. That's interesting given what JGBs are doing and the role that they play globally right now. Nvidia earnings, perhaps that's the highlight, but also global flash PMIs. Are we turning? Is the inflation worry turning into a growth worry at all? And we get UK retail sales on Friday. Let's get more on that G7 meeting. As I mentioned, that's taking place in Paris. The US Treasury Secretary Scott Bessent has been speaking to reporters this morning, calling on G7 nations and others to increase sanctions on Iran. Let's bring in Oliver Crook, Bloomberg's chief Europe correspondent for Bloomberg TV. He's in Paris for us. What's been the response then we've seen to Bessent's comments around Iran and what Europe and other G7 members should do then, Ollie?
It's interesting to hear from the Americans to be very explicit in their call and what their expectation is from G7 partners that apparently now, according to the U.S. Treasury Secretary, who is in Paris here for those meetings of finance ministers of the G7, that he would like to see additional sanctions from G7 partners to add pressure on the Iranians. There's a real question about whether or not the Europeans and others will be willing to sort of join in that. As you know, from the very beginning, from the military standpoint, there's been very little appetite for the Europeans to get involved. They've also wanted to stay sort of neutral, third party to potentially be involved in some sort of diplomatic accord, and on the day after, potentially if there is a military component to the Europeans to help with passing ships through the Strait of Hormuz after the fighting has ceased, they really would like to still be seen as sort of neutral figures. So there's a question of potentially this opens up a window for some G7 partners to get on team Trump in terms of actually doing something on Iran, because of course we know the Trump administration has been very upset with a number of the partners within the G7 for not acting militarily. Does this create a window to do that? And what kind of sanctions potentially could we be talking about? Iran is already heavily sanctioned, not just by the United States, but most of the G7 partners. So certainly gives us something to sort of discuss and kind of have a debate here around the table for the G7 partners with this U.S. Treasury Secretary coming into these meetings today. But of course, the main sort of conversation, I think, is going to be sort of distracting, not just from the military action, but increasingly a new protagonist in this story about the energy shock and the growth shock, and that is the bond market.
Yeah. So how does that get folded in? How nervous are they going to be? And what else are they going to be talking about?
So I think that so far, from many of the European ministers that we've spoken to over the last couple of weeks, they've been pretty tranquil in terms of the effect of the Iran energy crisis in the impact on the European economy. Again, they point to the fact that the supplies, the actual volume coming from the Middle East isn't so big when it comes to the Europeans. But again, the pricing pressure has been very, very real, as we've been discussing, and increasingly the growth story is coming into focus. The French economy is a perfect example of this. There was supposed to be a subtle amount of growth in the first quarter. We got the GDP figures. We came in completely stagnant, completely flat. Inflation is rising in France. We're actually seeing unemployment tick up in France. And I think that now, when we have these compounding crises, beginning with the Ukraine war and the energy crisis that happened after that, now with this additional energy crisis, everyone has been more or less serene. And now it comes for the bond markets coming, pushing those yields up across Europe. I mean, we look at the French 10-year yield. You had a slight spike earlier in this year we're still a little bit below that. But we haven't seen yields at this height since effectively after the financial crisis in France. We've been talking about yields in the UK, in Japan. We see it around the United States, yields ticking up. This is increasingly a story that can't really be ignored at the G7 level. The real question is, and again, the G7 format was really founded, in the 1970s to deal with things like oil shocks and extreme crises, but at a time when the United States was really playing cheerleader for multilateralism and coordinated action, much less clear whether or not you can get that level of coordinated action. But again, maybe if you can get on the same team with the U.S. administration, some sanctions on Iran, potentially there'll be a more constructive conversation among these G7 partners.
Busy week. Ollie, thank you very much indeed. Our Europe correspondent, Oliver Crook. Let's get back and talk a little bit more about markets and what we're seeing there. Oliver was just mentioning what is happening with this bond market story and how that's going to ripple through this Paris conversation. Let's talk about the market conversation. Adam Linton joins us now from our M Live team. High yields.
Yeah.
Now what?
Well, in terms, from a cross-asset perspective, obviously a lot of the focus is what's going on in the equity space. I mean, as I think as Mark said earlier, we will get buyers emerge somewhere along the US curve. But in terms of the immediacy for bond yields, the risks clearly point towards the upside. With Hormuz close, that increases energy prices. Yep. And, this kind of US rates catch-up that we're seeing via more potentially hawkish Fed seems like it could have a little bit more room to go, particularly if you get a hawkish FOMC release on Wednesday. They debate about the removal level of the easing bias, we get more colour on that. I mean, there's been Bloomberg survey data which has suggested that the top risk for stocks is 30-year yield holding above 5%. Well, we're above that comfortably so, and we're holding there.
Yep.
And then, my colleague Tatiana, she's done some great work, shows that the S&P 500 correlation with the MOVE index, that's its strongest negative since 2020. So if we are to get higher yields, more bond volatility, this will filter through into the equity space. And if you look at, small caps, for example, in the US, they're up around about 20% since late March. They're relatively vulnerable to higher rates. So definitely from an equity perspective, this is clearly a concern.
Let me ask you about what's going on in the bond markets, specifically in the UK then, Adam, because actually we see bond yields are down today, and now the context here is important. Friday's session, we were up 17 basis points, I think, on the 10-year yield. So the fact we're down by 2 today doesn't take us back to where we started. But it is interesting to see that the market is a little calmer, at least today.
Yeah, it's definitely steady, and obviously, I don't want to get, too carried away in the appraisal of this, but, obviously we saw that underperformance in UK assets last week, which obviously makes sense. The UK has a higher sensitivity to events in Hormuz and the energy effects, but of course there's clearly this political risk premium. I think the question for now, it's may not something that gets resolved this week, it's more of like a medium-term kind of issue. Is the market kind of pricing in something more extreme than it necessarily should do? I mean, obviously there is concern about Andy Burnham. He clearly sits to the left of where people will think Keir Starmer will be. There's been his comments, about being hawked to the bond market. But, these kind of calls for like Liz Truss 2.0 may potentially be over-egging things a little bit. And, we've actually seen from Burnham over the weekends that, he's going to have fiscal restraint. He wants to rein in debt, and he wants to get growth going. So potentially, obviously there are risks that he may need to lurch to the left in order to win the grassroots support of the labour market. But potentially, the market is pricing in something a little bit more extreme than it should. And also as well, you've got to think about what is the alternative at the moment. Starmer and Reeves, they are the market's, kind of preferred double act at this point. But ultimately, Starmer's heading up a government which he doesn't really have parliamentary control, not really able to make any decisions, and there isn't really any growth plan. So, if Burnham is to kind of reassure markets and then provide some sort of growth perspective, some of these extreme prices and calls for like UK 30 yields above 6% may not prove to be given.
That would be interesting then, if Burnham and the gilt markets could find a place of peace. We'll see.
I think, I'm not going to read too much into this weekend and kind of what is said at this point. Megan Green, interestingly enough, making some comments over at the MPC, have to worry about wage and price settings. So she's certainly keeping her eye on the inflation narrative. Just finally, we're going to see a fairly substantial IPO about to hit the market, SpaceX. How does that affect the overall tone and tenor of equity markets globally? Do you see this kind of huge lump arriving in the form of that IPO?
Well, yeah, I mean, obviously, SpaceX is kind of, is kind of his own thing in the sense that there is kind of the Musk effect, and he is an incredible attractor of capital into markets.
Does it pull money in from elsewhere? Is it a negative for other asset classes?
Potentially. I mean, that remains to be seen in the context of what, happens in the bond market, as you kind of said earlier. If bond market yields are kind of rising, then that's going to be the main narrative. Right. If we get a Hormuz blockade, that's the narrative. And, SpaceX may be a bit more of a peripheral asset to that. But like I said, it's definitely something to keep an eye on.
Okay, thanks, Adam. Really good to speak to you. Have a good week. Adam Linson, Bloomberg Markets Live strategist. We get NVIDIA numbers in the middle of this week, of course, and so I should tell you that we have an interview coming up. Jensen Huang and Michael Dell at 7:30 p.m. London time. That is one to tune in for on the Technology Beat. That is it for the opening trade. European stocks very much on the back foot. The CAC 40 down by 1%. US futures also negative. E-minis down by 0.5% right now. Have a good day, everybody. This is Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour, only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West, only on Bloomberg Television. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
The U.S. and Iran remain far apart on a deal to end the war, triggering a rout in global bond markets and increasing the pressure on President Trump. G7 finance ministers gather in Paris following last week's summit between Presidents Trump and President Xi in Beijing. Plus, UK investors on edge as Labour leadership candidate Wes Streeting calls for Britain to eventually rejoin the European Union. So there is a lot going on in the markets. Of course, a lot of the focus, it's what's happening on global bonds. I'm also looking at stocks falling a touch. So stocks are falling, bond yields testing fresh multi-year highs as a stalemate between the U.S. and Iran keep driving oil prices higher, fueling wagers that central banks will hike interest rates to curb inflation. We did have a big move on the Japanese 30-year, which we'll get to in a second, but a lot of research is saying that the Fed may need to catch up with bond markets or actually risk losing control of borrowing costs, as it seems that investors are increasingly worried about inflation. Euro dollar, you can see 116.34, and then what we're looking at here in Europe is a little bit of pressure still on those stocks, with the FTSE, the one unchanged, but the CAC 40 down some 0.9%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, global finance ministers gather in Paris this week, looking to address the structural imbalances undermining world growth following Trump and Xi's summit in Beijing. Well, Bloomberg's chief Europe correspondent, Oliver Crook, joins us from Paris. Ollie, good morning. I know it's a beautiful setting, but they have to get to work because there's a lot on the agenda. What will they mainly focus on?
Absolutely, Francine. I mean, I think the thing that they're going to mainly focus on is the elephant in the room, the great economic story of 2026, and that is the war in Iran, the consequence that has had not just for energy prices, for inflation, and of course for growth. And this conversation that we just can't get away of, this conversation about stagflation. So we just had a conversation with the French finance minister. The French economy obviously stagnated in the first quarter. We're seeing inflation ticking higher and higher and higher. But I think now we're getting into a moment where the bond market is sort of catching up to some of the very negative narratives we've had on on growth, on inflation, and that is going to be one of the main conversations for these finance ministers and, of course, central bank governors here. And there's going to be a real dialogue between those two sides of things, where fiscal policy is in responding to this energy crisis and what the assessment is from central banks in terms of what they're seeing and how contagious this is in terms of the inflation conflicts. If there's just headline inflation to the energy prices, that's something central banks maybe can look through, but increasingly that is not being seen as the base case. We also heard from Scott Bessent, who is in attendance here, the U.S. Treasury Secretary, calling on G7 partners to raise sanctions on Iran. This may open a window for some partners here to get on the good side of the Trump administration. There's been a lot of objection in terms of their not having a military role in this question in Iran. But if we're talking about more sanctions on Iran, that is a longer-term story. That does not sound like a war that is about to end.
Yeah, very quickly, Ali, how will these Trump-Xi talks impact the week's meetings?
Yeah, so for the French finance minister and many others, they want to get a debrief from the Trump administration to see what progress was actually made between the Chinese and Donald Trump in those conversations in Beijing. But another big part of this, and this is going to be more officially on the agenda, you may see reference to this in the end communique here. This is a question of critical raw materials. The United States is trying to build a coalition for the sort of digital world of the future that goes into semiconductors, into critical raw materials, and they really need the G7 to be part of that coalition. So that will feature very prominently in these discussions here.
Ali, great work on the ground. Of course, I'm looking forward to a lot of interviews. Our Chief Europe correspondent, Oliver Crook, will have that interview, of course, with the French finance minister a little bit later on in the program. Now, a sell-off in global bonds extends as the deadlock over the Iran war drives oil prices higher, therefore fueling inflation concerns and raising bets that central banks will need to keep tightening policy. Joining us now, Kim Crawford, Global Rate Portfolio Manager at JP Morgan Asset Management, and Laura Cooper, Global Investment Strategist and Head of Macro Credit at Nuveen. So thank you both for joining us. I mean, for Monday to get us started, there's a lot to talk about. It does seem, Kim, that actually the focus is really now on, look, inflation is here to stay and central banks need to do something about it.
Yeah, I think the length of conflict just hasn't been helpful. It's really, in our view, has structurally raised the floor for bond yields. So the longer the Strait of Hormuz remains closed or impaired, the more global inflationary pressures build, the higher the risk of second-round effects, and also the longer it all takes to eventually normalize, right? Because bottlenecks, they don't just pause, they really compound. I like to think of it like you're in a traffic jam, and the longer you're there, the bigger the tailback, the longer it takes to clear. And then if you look at crude oil prices, there's also a bit of a false comfort if you just look at them, because I think the real problem really is downstream. If you look at product prices of things that are refined from crude, like gasoline, jet fuel, diesel and distillates, they are all, the prices there are rising about 1.5 to 4 times faster than oil itself. So you're really seeing that propagation downstream. And then finally, we can't not put AI into this as well. You have this classic supply shock that's meeting this dynamic in AI, the boom, where you could say that competition for these same resources are. And I think the demand there is also probably less price sensitive. So you put that all together and it is looking pretty fragile.
Yeah, it's quite a concoction. Laura, I mean, I guess if you're a central bank, and we've heard from central banks that keep on saying, well, they don't really want to do anything on rates because you could see a situation where they have to hike and then cut very quickly if the economy is bad.
I think that's certainly going to be the case for someone like ECB, where they're already pricing in 3 rate hikes, and perhaps in order to contain inflation expectations, they're going to have to follow through on those expectations. I think the Fed is an interesting case because at this juncture, they still have their easing bias, and they've telegraphed that they're going to have to take away that easing bias, could then have signaling a hawkish tilt before they even embark on rate hikes. So increasingly, as this shock persists, they are getting further behind the curve. We are seeing a tightening in financial conditions with markets pricing in those rate hikes. But the question is, when will the Fed potentially pivot to try to showcase that they're going to really try to curtail this inflationary pressures?
Yeah, and Laura, we have a new Fed chair, and actually, you know, maybe there is a bias towards cutting because of the politics, but it's also because the way he explains is that AI is deflationary. I mean, is that an assumption that we don't have to challenge anymore?
I think it's all about timelines. Yes, it could be deflationary, but this is a case of whether it's going to be deflationary in the next 3 to 6 months. Very unlikely. These productivity gains will take quite some time to materialize. So I think at this juncture, it's going to be very difficult for the Fed to cut rates in an inflationary shock. If anything, they could have an extended policy pause, because barring a persistence of this price pressures coming from energy, we already saw disinflationary pressures materialize, and perhaps that will still lend themselves to the next move being a cut. But I think they may have to shift their tone in the coming months.
Kim, does the Fed actually just need to catch up with bond markets?
Yeah, I agree with Laura that they need to shift away from this easing bias. There's just nothing in the data that's pointing to them needing to cut. And, we do agree with the productivity story of AI in the medium term. But if you're looking at the near term, I think the narrative at the start of this year was that maybe AI would be detrimental for the employment figures. But I think the burden of proof has shifted on that now. So, yes, you are seeing contraction in some industries like marketing, customer services, consulting. But then that's currently at least being more than offset by gains in industries which are more linked to the AI build-out, like data centers and electronic equipment. So that burden of proof has shifted. And then also on the inflationary front, like the demand for the inputs, I think the US is almost looking a little bit more worrisome than other markets, because the AI story is much more heavily focused on the build-out and not just adoption like in Europe.
So what happens to bonds from this point? I mean, we're looking at the 30-year in Japan, which I think is at a historic record.
Yeah, I think the value in bonds from here, and I do have to say a lot of value has been created. We're now pricing 3 to 4 hikes for the ECB, but the value comes in either a swift resolution, which isn't looking so likely at the moment, or more evidence that there is going to be enough demand destruction. And we're not seeing that in the data yet, which is then not giving us enough confidence that in the peak in inflation is going to come yet. So if I just look at the growth data, manufacturing firms, they have front-loaded purchases. The services sector is a bit more subdued. But again, if you look at global flights across the world, they are still rising. They are lagging their seasonal patterns, but they're still rising. Vehicle traffic still pretty stable. And then consumer confidence has been hit. But if I look at the US, I think the picture is a bit more nuanced. It looks a bit like the tax refund story is supporting the consumer for now. And then the AI story as well, I think, is helping keeping financial conditions a bit looser than you'd otherwise expect. So you put all of that together, and it's still not a weak enough demand story to really bring inflation down yet.
Laura, I mean, it's difficult to see also how the Middle East ends, right? Because we're kind of in a limbo, and even when we had hope, then it goes back. I mean, are you expecting a kind of large market correction because they were just too optimistic?
I think what we're watching for is certainly around the timeline that we've seen economies kind of, they've really looked to alternative sources of supply to try to mitigate the shock. We've seen China, we've seen India, Southeast Asia countries actually pivot more towards coal. Instead of oil and gas, we've seen a sharp increase in coal imports there. But as well, countries like Europe have actually sourced alternative supply. But these are very kind of temporary stopgaps. It extends the runway, but I think once we reach the crucial point where those supply constraints will really start to materialize, that's when I think we could see markets reprice to some of the growth effects. And as well, we are still seeing this resilience in economic data. If we start to see that materialize in the hard economic data, I think that's, again, where we could see some of those growth expectations reprice, given the second order effects. Markets have been so focused on the inflation dynamics, but really we've seen, stocks remain quite resilient. I think that's abetted by the growth dynamics.
I mean, two specific stories we're also focusing on. So one is China, where the economy has significantly slowed down, and now there's talk about possible stimulus. And then, of course, we also have to mention the UK. But on China, your take, Laura?
I think China is actually proving to be, better than expected in terms of their resilience to this economy, to this shock. I mean, yes, we saw the data this morning, but it's really more of the domestic story that's been struggling. I think going forward, though, we still expect ample stimulus. I think this key kind of guidepost that we're watching for is how much fiscal stimulus will come through across developed markets. We're hearing anecdotally of it even coming through the UK. They just don't have the fiscal capacity to absorb any support for cost of living to households. Whereas Japan, we're seeing them bring forward that supplementary budget. There is more fiscal space there, so maybe the bond market can absorb it. I think the UK is really going to be a tricky dynamic going forward.
Yeah, what happens to gilts from here?
Yeah, I think the The politics don't help the situation where you already have the UK with an inflation problem to begin with, or one of the sticky inflation problems. You layer politics on top of that. But I have to say gilts markets have actually traded pretty well in the last 2 weeks. If I look at the 10-year yield, it's only moved up by the same amount as the US. It's done about 10 basis points higher than Germany. So considering everything that has been thrown at it, I think it's trading pretty well. Having said that, I don't think we're out of the woods yet. So I do think in the coming weeks there's going to be a difficult conversation between bond investors and politicians. Our view is that, underlying view is that in the medium term, sensible heads will prevail. And the right policies will be chosen, but there may be potentially an attempt to see what they can get away with first. So, investors like us, we do fund the UK government. What we would like to see is respect for current fiscal rules, or at the very minimum, additional spending that actually increases the potential output of the UK economy. So things like R&D incentives, skills and workforce development, investment in energy security. Because I think, like Laura said, the fiscal room for the UK is so small. So every additional pound that's being spent really has to increase productive capacity rather than just support today's consumption.
Yeah, and the other story, which we were even talking about before, is actually the rate differential between, for example, an ECB and the Bank of England. I guess at the best of times was hard to justify. So what does the BOE do next?
I think the Bank of England faces a very tricky balancing act, but I struggle to see them being able to hike rates in this backdrop where we're already seeing a deterioration in the economic outlook. Looking at the labor market figures, they have kind of shown unemployment has been, elevated. We're seeing job market looseness come through. So I think the BOE will be forced to keep an extended policy pause. And if anything, the markets are already doing a lot of their heavy lifting for them, pricing in those 3 rate hikes. I suspect, though, that's a pretty consensus trade to not kind of go into the BOE hiking 3 times. The ECB perhaps is one where if they do hike rates in the near term, they probably have to kind of cut rates subsequently because of the growth shock that will materialize.
Thank you both for joining us. What a terrific way to get started on a Monday morning. Kim Crawford, Global Rates Portfolio Manager at JP Morgan Asset Management, and Laura Cooper, Global Investment Strategist and Head of Macro Credit at Nuveen. Coming up, as President Trump renews pressure on Iran to reopen the Strait of Hormuz, we'll talk to Azadeh Zamirirad from the German Institute for International and Security Affairs. We'll look a way forward for diplomatic efforts. That's next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We've got
about 80% of our jet fuel hedged at $668 a metric ton, which is down from $760 a metric ton last year. Those hedges run out to the back end of March 2027. So we're in a very, very strong position. We plan to grow by another 4% to 216 million passengers, having got the last of the game-changer aircrafts in.
Well, that was Neil Zorahan, the Ryanair Chief Financial Officer, who told Bloomberg it's too early for any meaningful profit guidance given the conflict in the Middle East. Now, President Trump has once again warned that the clock is ticking for Iran, with the two sides still far apart on any deal to end their war and reopen the Strait of Hormuz. Well, this comes as authorities in Abu Dhabi say a drone attack sparked a fire at a nuclear plant on Sunday. Well, joining us now in London is Jumana Bersecci, Bloomberg's Horizons Middle East and Africa anchor. First of all, it's great to have you in London, so welcome.
Good to be here, Fran.
Where do the U.S. and Iran actually stand on a possible deal?
Yeah, well, you know, we're back to where we were a couple of weeks ago. And remember, before the Trump-Xi summit, everyone was hoping that maybe we'd get a diplomatic breakthrough, that somehow China could exercise their influence and bring Iran back to the negotiating table, get them to make some concessions. That has not been the case. And if anything, the rhetoric once again has worsened. We've seen this Truth Social post from President Trump overnight warning that there's literally a ticking clock right now. And threatening Iran to come back to sign a peace deal. Now, Iran, over the course of the weekend, various Iranian media outlets have put out notes saying, comments saying that what the U.S. are demanding is too maximalist. Many of the demands are demands that they simply will not subscribe to. And so there is talk once again of a potential resumption of hostilities, a potential return to kinetic action. And it seems as though President Trump, as we were discussing a couple of weeks ago, has to make a decision now. Do they go down the route of, once again, another military escalation, targeted strikes, targeted operations to extract that highly enriched uranium, or continue with this blockade that would put, in theory, a lot more economic pressure on Iran, hopefully with the view that then they would be more amenable to some of the demands that the U.S. is asking out of them.
And Jumana, talk to us about this drone attack on Sunday.
Yeah, that was a big deal, Francine, because there was a drone attack at a civilian nuclear plant in Abu Dhabi. It caused a fire. Now, thankfully, no radiological incident, no injuries, but still very marked escalation from where we were a couple of days ago. And of course, you know, we are in the middle of a ceasefire, and the fact that these attacks are still happening on the UAE is significant in itself. And by the way, it wasn't just the UAE. Saudi Arabia overnight also intercepted 3 drones. But they also say that they were fired from Iraq, not from Iran. And so one of the other questions that people are beginning to ask here is exactly how much influence does Iran have over its proxies in the region? And is there a real fear that other proxies are acting independently and causing so much trouble, in which case, you know, you could see, again, once again, a broadening out of this conflict.
Jumana, thank you so much. Jumana Bersecci, that was the very latest, of course, on Iran and the U.S. Now, for more analysis on Iran, let's also bring in Azadeh Zamirirad, head of Africa and Middle East research at the German Institute for International and Security Affairs. Azadeh, thank you so much for being with us. How far away do you think we are to a diplomatic solution?
We are pretty far away to any kind of diplomatic solution. We've seen an exchange of different suggestions with regard to negotiations. We've seen an exchange of different conditions, preconditions for even being willing to enter any kind of new round of negotiations. So we are worlds apart when it comes to that. And all the kind of conditions that we've heard so far from each side are basically mutually exclusive and just simply incompatible. So what we see now is a very difficult situation. That is that we are thrown back to a couple of weeks ago before a ceasefire was announced, where back then there was hope on both sides that they could use this time of the ceasefire to find some kind of negotiated solution. And now we have to fall back onto options that were previously discussed. And these are mostly military options. But still, I think both sides are trying to push forward with their brinkmanship, trying to put pressure on the other side so it doesn't come to this next round of escalation, but we might end up there anyways.
But what kind of proposal, I mean, at the moment, as you rightly say, the proposals between, you know, Iran and the U.S. are miles apart. Is there enough common ground to think of a way forward? Or are we going to have this status quo unless we have military intervention?
I think unless there's some willingness on both sides to make more concessions, more major concessions, we will end up in a new phase of escalation. We have a number of issues here when it comes to these incompatible negotiation stances. Some are about sequencing, some are about substance. When we talk about the nuclear file, I think there is some space for common ground when it comes to highly enriched uranium. I think compromise could be reached there. Iran, for instance, has suggested to downblend part of its highly enriched uranium, and part of it is willing to ship abroad. The United States wants all of it to be shipped abroad. Iran says we're not going to do that. If we do that, we want some sort of guarantees that we could retrieve that uranium in case the United States would violate any kind of deal. So there's some room here, there's some base here where we could find ground for compromise, but there are other areas where it's far more difficult, and it has a lot to do with sequencing. So who starts first when it comes to lifting a blockade? So should Iran go first when it comes to allowing transit? Should the United States go first and stop its blockade of Iranian ports? Even here, I think confidence-building measures could move things forward by having, let's say, a 30-day period where both sides would be inclined and willing to step back. But again, we're still so far away from it because the list of demands on both sides is just too long.
Azadeh, talk to me about China. Where's China in all of this?
I mean, what we've seen here with the Trump trip was that we cannot really expect China to be a way out of this war at this point, at least not on U.S. terms. I think there were two things that Trump was hoping to get out of Beijing. One was China's willingness to stop purchasing Iranian oil, and the other one was Chinese support for reopening the strait. And Trump essentially got neither. So what we see is China being uncomfortable with the situation, not wanting to continue with this type of blockade and disruption of critical energy flows through the Strait of Hormuz, but at the same time unwilling to publicly at least put this kind of pressure that the Trump administration was expecting or hoping for on Tehran. And we haven't really seen any clear formal or public commitment to playing a mediating role, a more active role. So I think we might expect more efforts from China, more involvement down the road. But if it's going to come, then it's going to come on its own terms, and certainly not after a visit by Trump and not on U.S. terms.
Azadeh, how weak do we understand Iran, or how strong do we understand Iran to be, both economically and militarily?
I think on the economic front, Iran has been struggling a lot. We see fuel shortages. We see the domestic pressure rising. At the same time, Iran speculates that it has a higher tolerance for this type of economic pain than the average American voter. It sees that midterms are on the horizon. It can see how the domestic pressure is also rising in the United States due to increasing fuel prices. It also speculates that internationally pressure is rising economically fast, and faster than pressure is rising in Iran. So that's on the economic front. When it comes to the military front, I think what we have seen in leaked reports of U.S. intelligence suggests that Iran has been able to retain around 2/3 of its missile capabilities, that it has apparently also been able to access around 90% of its underground missile arsenal, which is a huge problem for the United States, because it essentially means that Iran has still the capability to reach neighboring countries and to destroy, or at least target, badly damaged critical infrastructure, including energy infrastructure. And it also means that Iran still retains the capacity to disrupt transit and passage through the Strait of Hormuz. And this makes the situation so much more difficult. It very much looks like Iran has the economic and military capacity to drag this along, to continue for months to come. And it, again, speculates that the other side doesn't have that much time.
And so how do you think this ends?
Well, I think unless there's some kind of understanding in both Washington and Tehran that some concessions have to be made, we will unfortunately enter a next round of major escalation. It's unclear yet what this escalation will look like, because all the options that we can talk about these days are pretty unattractive from the U.S. point of view. They could go for ground operations to try to retrieve the highly enriched uranium, or try to seize a strategically important island in the Persian Gulf. They could also just go for stronger military strikes against Iranian infrastructure, military sites, but also energy infrastructure. But then again, they would risk massive retaliation from the Iranian side on two fronts. One option for Iran would be to retaliate against Gulf energy infrastructure, which would be huge because it would mean essentially doubling energy prices potentially in the Gulf. Or Iran could even take the conflict to the next arena, which would be this Bab el-Mandab. So a lot of bad options on the table now.
Bad outcomes. Azadeh Zamirullah, thank you so much for joining us. This is Bloomberg.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they're at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show, we've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. The U.S. and Iran remain far apart on a deal to end the war, triggering a rout in global bond markets and increasing the pressure on President Trump. G7 finance ministers gather in Paris following last week's summit between Presidents Trump and Xi in Beijing. Plus, UK investors on edge as Labour leadership candidate Wes Streeting calls for Britain to eventually rejoin the European Union. So let's get more on the political uncertainty in the UK with Joe Mays, Bloomberg's UK government reporter, who's also in Paris for the meeting of G7 finance ministers. Good morning, Joe. So could a return to the Brexit debate hurt Keir Starmer's leadership rivals?
Yes, so it could. Wes Streeting coming out and saying he supports the UK ultimately rejoining the EU does actually put some pressure on Andy Burnham, the other big leadership rival in this story, who we know has to win a by-election in Makerfield, and that's a seat in the north of England that voted to leave the EU, and that put pressure on Burnham to really reiterate his stance, which is that he also supports the UK in the long run rejoining the EU, and that could hurt his chances in that seat given the historic Brexit vote there was there. So we already have this game playing going on between two leadership rivals at a time where we nevertheless have a Prime Minister, Keir Starmer, still in post, but often it feels like he's in office but not in power at this point.
Joe, what does this political uncertainty mean for UK assets?
Well, we've seen this quite consistent trade where any time it looks like Keir Starmer is threatened or perhaps on his way out of office, then the pounds, gilts suffer because there's this perception that whoever comes next is likely to spend more, perhaps borrow more, because they have to win Labour leadership contest and win over the support of party activists who are seen as more to the left than your average voter. So we could see those spending promises, spending commitments in a direction that gilt investors, pound investors are pretty unsure of in terms of the potential inflationary effects, how interest rates might have to rise, and so on. So really there's a risk here around UK assets because of this political uncertainty.
Joe, just finally, I know Rachel Reeves is there at the G7. There's also Andrew Bailey from the Bank of England. But is there anything that could save Keir Starmer right now? I don't know whether it's a cabinet reshuffle or something more drastic. But what are you hearing?
Well, I think the big thing immediately would be if Andy Burnham does not win the Makerfield by-election, does not win a seat to return to Parliament, and then suddenly Keir Starmer would have one less big rival trying to take his position. That would help him a lot, but we have this 6-week period now, or even a month period, where we're waiting to see what the result of that by-election is. So, every day that passes, Starmer's still there, he could remain, but he needs his leadership rivals to suffer.
Joe, thank you so much. Joe Mays there in Paris for the G7. We'll have plenty more, of course, throughout the day from Paris. Now let's get more on the UK political outlook with House of Lords member Jim O'Neill, former UK government minister, former chairman of Goldman Sachs Asset Management. Jim, as always, thank you so much for joining us. Look, I don't know where you see the UK going next, but what are investors thinking? I guess if you're a big investor, maybe American investor, kind of thinking about what you do with your money in the UK, what are the 1, 2, 3 priorities that you need in the next couple of weeks?
I think a lot of investors are thinking pretty similar to a lot of sane human beings, that what on earth are we doing to ourselves in this country? It's just picking up on some of the previous chatter. It's like 10 years of this, and it seems to show no end. So what we need is, I guess it's tricky, a tricky combination of some bold and clear leadership to get us sustainable growth without any inflation. Secondly, linked to that, in my view, we need a leader that's going to stop being so obsessed with social media and sound bites and actually have a clear strategy of what matters and stick to it. And thirdly, it's got to be financially credible in what is a world full of seemingly never-ending shocks and challenges from various parts of the world, not least the United States, but also obviously linked to that, the Gulf and God knows what else.
But, Jim, I mean, would you say that, it's unclear, Keir Starmer is not inspiring. I don't know whether he's done anything really wrong. But is it the right time to replace a Labour leader now, or is it just the party kind of making waves because the political landscape is changing with the Greens and Reform?
I mean, to some degree, like I sort of joked about, but more, it's almost like the country's in some kind of game show where the tolerance of voters for whoever they give a chance to is extremely short, and if there isn't some miraculous solution within a few months, out they go and in comes somebody else. And then sort of sucked into this game is the whole sort of Whitehall, Westminster mile, where there is, and in some ways, this sort of focus over the weekend about the EU rejoining topic epitomises it. In my view, we need people that are really going to be more honest and open with the country and have bold leadership ideas and stick to them. And I don't know when it's going to come, but at some point, and it could be out of this contest, and I'll come back to your specific question in a sec. That's what we need, and the country will respond to that instead of just being dragged around in this sort of strange, persistent, almost self-damaging game. On the leadership of Keir Starmer, I mean, he had a huge majority, although it was a weak mandate from the public. But the reality is he appears to have lost the support of his own party with this big mandate. And so within this game, people want change. And if Andy does win Makerfield, then the momentum behind Andy to replace him will become huge. But whether he wins that or not is obviously a huge issue.
Jim, you know Andy Burnham pretty well because of all your work around Manchester and, tried to revitalize also the North. I mean, investors today view potential Burnham premiership as a risk to fiscal discipline. Do you think that, it is a risk?
Well, I think it's pretty important. I noticed that wasn't mentioned by the others. Over the weekend, and I think in some of the media this morning, Andy's allies have, I think, gone out of the way to say that they would stick to the current fiscal rules. And so far, at least this morning, the gilt market is a bit calmer than it was on Wednesday through Friday. And I think that's important. And it goes to the three things I said. We need some clear ambition and focus and things that are really going to get us into sustained growth, but at the same time, financial stability. And I think what the market's worrying about the last 3 days of last week is that we'd get an end to these fiscal rules and all sorts of promises to further spend government money, but without any clear framework for how that would be keeping financial markets happy. And on top of the fact we've got oil prices still so strong and again rising this morning and bond markets elsewhere, the UK's got to get real. We have to have a proper framework. There are so many things that are chipping away at our finances, and luckily it seems as though Andy's colleagues have got that message over the weekend and are putting that out this morning.
Jim, talk to me about, who's the right person for the leadership? And is it the same person that can, unite the country, that can also unite the Labour Party?
Well, I have to emphasise, Fran, as you know, but I am a crossbench member of the House of Lords, so I have no political skin in the game with any political party. But that said, I'm also kind of free to speak my mind, as I tend to do anyhow. The country needs somebody that's got proper ideas and ones that can get the support of people. Nigel Farage appears to be doing that in his own sort of, in my opinion, slightly odd way. And indeed, if the financial markets really start to believe he might be the next Prime Minister, then they'd be pretty upset, to put it mildly, in terms of bond markets as well. But what we need is somebody that's got some proper plans. What Andy has inherited and taken to another level in Greater Manchester is very exciting. It's the best economic story in this country, and Andy's sitting on top of it. So he can bring that energy and enthusiasm, but he's got to have a proper framework for dealing with these other issues. And there are so many sacred cows, whether it be the triple lock on pensions or misplaced welfare payments or the never-ending rise of NHS spending, the inability to reform the housing market. All these things are, any politician, whether it's Farage or anybody else, they're petrified of dealing with them, and they seem to think the things that would cause harm. But in my very strong opinion, and I'm in the process of trying to publish something about it, dealing with some of those things would transform the view of investors about the UK and make people think that we can have sustained positive growth again in the future, irrelevant of which political party they're coming from. But somebody is going to have the self-belief and confidence to do that, and hopefully the sooner the better.
Jim, you're still, of course, known as the man who coined BRICS, and I know you're working on a platform. There's the G7 finance ministers meeting in Paris today. For a G7 country like the UK, what do they need to work maybe closer with BRIC countries? I know you're putting out a platform, but is there something that's low-hanging fruit that would really help the UK?
Well, thanks very much for asking that. Indeed, hopefully today this new platform, at least its website, will go live. Trying in this sort of divided world, the whole purpose and DNA of it is to, instead of it being us versus them, or let's call it the G7 versus the BRICS, its whole purpose is to try and promote in this still globalized world on so many issues, that we can't solve them unless it's talking with each other as opposed to at each other. And in that regard, there are many things that the G7 and countries, particularly with our history of the UK, can be a lot more outward looking at, whether it be global climate change, infectious diseases. We've got an Ebola outbreak in Africa again overnight, sadly, and issues to do with international financial stability. And at the core of this right now with the Iran war and oil price increases. There is no way that's going to get solved unless some of the BRIC countries get more skin in the game to try and help solve, which obviously Trump has probably tried late last week on his visit. But as with every other genuine global crisis since the Asian crisis in '98, the idea that G7 leaders or finance ministers can solve these things on their own is just basically bonkers. And so, yeah, we got to start thinking more on this topic, as we do here domestically in the UK, more seriously and with true awareness and boldness, rather than living in sort of weird, historic, narrow-minded caves.
Jim, don't hold back. It's always great to speak to you. You'll have to come back on Bloomberg when you properly launch the project. Jim O'Neill, House of Lords member and former UK government minister. Now, as we were talking with Jim, G7 finance ministers are meeting in Paris against a volatile global backdrop. The French finance minister, Roland Lescure, spoke about the stagflation dynamic in Europe with our Oliver Crook.
I think the economy is proving quite resilient. As you know, the European economy is not that exposed to the volume part of the shock. It's a price shock, for sure, on oil, on gas, and other commodities. But so far, there's a slowdown. But there's no recession, so no stagflation. And inflation is on the rise, but we haven't seen, thank God in a way, any second-round effect either. So less growth, more inflation. But so far, we're not in a recession, and we're not in a high inflation. It has to be monitored. Central bankers are going to be here today and they're probably going to be telling us that, but so far so good.
And one place where things may not be so far so good, we're starting to see indications of is within the bond market. Global yields rising, across the world. We're seeing a lot of different sort of red indicators. You've obviously worked in the world of finance, so you're looking at the bond market. What is the bond market telling you right now?
Well, it's telling us that there's a high uncertainty on both fronts. Well, on three fronts, actually: growth, inflation, and public finance. And this is the main reason why we in France decided to be very nimble with our budgetary response to the crisis. We've put money, not much money, very targeted on the sectors that are highly on the front line: farming, fishing, transportation. But for all of that, for all of the other sectors, we feel that we are better protected because of our energy mix, we're less exposed, and therefore we should make sure that we're nimble with our public finance. The public euro is rare, so it should be used scarcely. And I think this is probably, in a way, the signal that the bond market is telling us. Guys, make sure that you react without going too far down the budgetary line, because we know it's a supply side shock. You cannot deal with a supply side shock by subsidizing demand. That doesn't work.
But looking at the sort of dashboard of all the sort of data, obviously we have two wars going on that have massive impacts on the global energy markets. We have yields and we have interest rates likely going to rise in Europe and across the world. In part as a consequence of that, you have at the same time, borrowing costs rising. You have at the same time fiscal space is just not where it used to be. Don't you see the potential here for all of the ingredients for something disorderly to happen, and at the same time equity markets vertical in the United States?
Thanks for lifting my spirits. But this is exactly why we're here. This is exactly why we need to engage and discuss all of that, to make sure that we exchange on the best practices and the things we shouldn't do, to engage with the central bankers so that they can tell us what they're going to be looking for in order to avoid second-round effect. I mean, this is a time where, as you said, risks have risen. And when risks are rising, we need to make sure that we, as drivers of the global economy, we're not the only ones anymore, which was the case in the 70s when this was created. We have our eyes on the ball and making sure that we're doing the right things, because we can't do the right things. Coordination, engagement, nimble public finance, targeted help, and obviously, hoping that the resilient economy will still proven. At the end of the day, the main challenge is to reopen the Strait of Hormuz. We know this. Hopefully it's going to happen soon.
So what do you need to know from Scott Bessent, who I understand you spoke to yesterday, you'll be speaking to obviously over the next couple of days? What do you need to know from the U.S. administration?
How did the China trip go? Obviously, we're very interested in the way the conversation between China and the U.S. is. I think he's convinced, at least the conversations I've had with him have tended to show me that this is open, this is important. What's happening here? The fact that we can engage on global imbalances, on raw materials and critical minerals, on the help that we can provide with developing countries faced with that crisis, and on the crisis itself. We can engage, we trust each other, and I think we've built over the last 6 months a good enough relationship that we can say that. We're going to see, hopefully we'll have a communique that's going to send a signal to the world and to the markets. And then, we need to keep on working. We need to keep on working because the job isn't done yet.
Well, that was the French Finance Minister, Roland Lescure, speaking with us on the sidelines of the G7 meetings in Paris. Coming up, the World Health Organization declares a global health emergency after an Ebola outbreak in the Democratic Republic of Congo spreads to Uganda. We'll have the latest next, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West, only on Bloomberg Television. Context changes everything.
The World Health Organization has declared a public health emergency of international concern after the Ebola outbreak in the Democratic Republic of Congo and Uganda. Well, Bloomberg's Jennifer Zabazaja joins us from Joburg. Jen, what's the situation like on the ground?
Yeah, Fran, this has been quite an escalating situation. What we do know, the WHO, as you were just mentioning there, declaring this a public health concern on Sunday, and that is because really this disease seems to have gone undetected for a number of weeks. What we know at this point in time is that there are just about 350 suspected cases, just over 91 deaths reported in northeastern Congo. What you just mentioned there, neighboring Uganda has just about 2 confirmed infections and 1 confirmed death as far as we know. But really the concern here is this disease has a very high infection rate, just about 90%. And for many governments, they consider this a threat to national security. Ebola is highly infectious, and because this has gone potentially undetected for quite some time, this could have been this could be more widespread than actually anticipated. And unlike previous Ebola strains, the last Ebola outbreak that we had reported on and we had seen in this part of the world, in West Africa, the Zaire strain. This is a new strain. It does not have a vaccine. And so this is really the cause for concern at this point in time, and why we're really hearing from a number of governments and also health officials about what we're seeing in this part of the world.
Jen, how might cuts to also U.S. foreign aid impact the response?
It's really, it's complicating it, Fran, at this point. And we're hearing from the WHO because what we've seen in the past is that the funding and the support that we have seen from USAID and also from the CDC has supported things in the past like training epidemiologists. We've also seen expanded laboratory capacity, supporting vaccine deployment. Of course, we know that last year President Trump decided to decrease and cut USAID funding, and so that could severely impact the response to this particular strain of Ebola. We've also heard from U.S. officials that potentially this could impact disease surveillance and also emergency response capacity in fragile states. And we're talking about this happening in countries where they're already seeing increased pressure on infrastructure and on their own health programs. And so the fact that we have seen decreased health funding over the past few years just complicates potentially what the response is going to look like, what detection is going to look like, and ultimately, potentially, what vaccine deployment is going to look like. So it's really a complicated fact here. And Fran, just one point that we actually have been reporting on quite extensively, and that's a study that was published in Science Journal back in May, actually found that the U.S. aid funding withdrawal last year actually contributed to increased conflict in heavily aid-dependent parts of Africa. So potentially that adding another increased complication to what is increasingly becoming a concerning situation as far as the health situation in Africa right now.
Jen, thank you so much. Jennifer Zabazaja there with the very latest, of course, on that outbreak. Now, authorities in Moscow say the city and surrounding areas were hit with a record wave of drone attacks over the weekend. Around 80 strikes killed at least 3 people and injured more than a dozen. Russian authorities say an oil refinery was also hit, while the Ukrainian President Volodymyr Zelensky describes the operation as retaliation following last week's Russian drone attacks on Kyiv. And Spain's ruling Socialist Party has suffered its worst result ever in Andalusia, the country's biggest region. Now, the opposition People's Party held on to power despite losing support as well. And The Information is reporting that BlackRock is looking to invest $5 to $10 billion in SpaceX's initial public offering next month. Well, Bloomberg has previously reported that SpaceX has confidentially filed for its IPO and seeks to raise as much as $75 billion at a valuation exceeding $2 trillion. Now, for more on SpaceX's IPO plans, let's bring in Bloomberg's Charlie Wells. Charlie, always great to speak to you, so thank you so much for joining us. Now, public filing may actually has come as soon as this week. So what do we know about this potential IPO?
Francine, they're getting ready for takeoff, and everyone's been waiting for this, right? This is the most hotly anticipated IPO. It will be the largest IPO of all time if all goes according to plan. And what we're starting to get is this timeline coming into focus. Everyone's been waiting for this. So what we're seeing is this potential filing as soon as Wednesday, and then official marketing would take place starting from June 4th, according to people familiar with the matter, a pricing on June 11th, and then the next day, that listing. So this timeline really starting to come into focus.
I mean, it's they need so much money. And so there was this BlackRock, story reportedly wanting to relatively, up its relatively small exposure. Does that mean others could do the same?
It's fascinating, Francine, because this is the world's largest asset manager. And what we know, according to this report in The Information, is that they hold actually a relatively small stake in SpaceX right now compared to the likes of, say, Franklin Templeton. So an indication of high demand.
Musk says he's not selling his shares. So what does that mean?
He's got diamond hands, right? We've heard this when he talks about Tesla. We know that he really kind of is the chief marketer for this, and really, I think, really wants to make sure that this is a success, that this is an IPO pop as opposed to an IPO flop.
I mean, this is a huge deal. Are people excited? What are you hearing from, investment managers? I'm excited.
Huge moment. I mean, look, we see on the institutional side the likes of BlackRock saying that they want to get more involved. And we know from the retail side, there is so much excitement. There have been a lot of retail investors trying to get in through, funds, through sort of private investing in ways that they've never before. And that just speaks to the demand, to the interest here. But this is not risk-free, right? We're coming at a time of volatility.
Yeah, and also, I guess, the personality of Elon Musk is hit and miss.
he is a key actor, and we know that in a lot of ways that is a benefit, but we also know from the past that that is definitely a risk. There's that key man issue here, but as he has made clear, according to his recent statement, he's going to hold on to these shares. And I think that's one of the key concerns. Is there too much excitement about SpaceX? You know, we have this huge potential for valuation. I think they want to make sure to indicate that there's a lot of demand going into this.
Charlie, as ever, thank you so much for joining us. Charlie Wells there with the very latest on this SpaceX IPO. Now, stocks falling again because of the stalemate between the U.S. and Iran that is driving oil prices higher. That is fueling wagers that central banks will probably have to hike interest rates to curb inflation. Some looking at bond yields climbing to multi-decade highs on this oil-driven inflation risk, but also fears that, governments will ramp up borrowing to cushion rising living costs. Up next, it's Bloomberg Brief, and this is Bloomberg.
What happened was you were out.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited, finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
In New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Bond yields from Japan to the United States extending their rally, with markets pricing in a move towards a Fed rate hike here in the United States. This all as oil prices rise, with Washington and Tehran stuck in gridlock over any deal. And the White House announcing a farm goods agreement with China following the Trump-Xi summit. Let's get a check on markets around the world now. First, let's go to Winnie Su in Hong Kong for the latest from Asia. Winnie.
Good morning, Bonnie. We're seeing Asian stocks under a bit of pressure today, with oil rising for a third day on these inflationary concerns. Now, we did have a set of numbers from China coming through, which all turned out to be quite disappointing, from fixed asset investment to retail sales numbers, all missing estimates and pointing to a slowdown in the economy. Now, bucking the trend, you're looking at South Korea's Kospi Index actually rising after Samsung Electronics said that they are in negotiation with its biggest labor union in. Now you flip the board and take a look at Asia bonds, as you mentioned, tracking those declines globally, especially with Japan's 30-year bond yield here hitting its highest level since 1999. Also goes to show how you still have these concerns around fiscal policy, with Prime Minister Takaichi now announcing an extra budget due to these concerns around the impact from the Iran war.
Winnie, thank you so much. Winnie Su there in Hong Kong. Now let's get over to London for a look at Europe. Here's Charlie Wells. Charlie.
Good morning, Vonnie. Well, it's those bond yields across the continent that really are in focus this morning. So we're seeing a little bit of easing in the UK, and that's after a lot of concerns here, a lot of elevation over the past few days. But you had some comments coming from Andy Burnham, the front runner in that potential leadership contest here in the UK, talking over the weekend how he supports fiscal rules. So that could actually be giving just a little bit of easing here, despite a lot of the uptick that we've seen, especially relative to the other yields across the continent. Let's flip and talk about sterling, because we're seeing a little bit of a similar story here. We know that sterling had been flirting with some of its lowest levels so far in 2026. But we're seeing a little bit of easing this morning, potentially on the back of some of those comments over the weekend.
Charlie, thank you so much. Charlie Wells there in London. Well, here in the US, let's keep the Strait of Hormuz in focus. It is still closed. Brent crude trading above 110. And in fact, the December contract for both Brent and WTI hit records today, having an impact on futures, although we have now turned positive barely on NASDAQ 100 futures. And if we flip up the word and look at bond yields, that's where we'll get most of our market signaling today, right? Again, we're easing off the extremes. We actually topped 410 on the 2-year earlier on. We're now at 4776. The 10-year 459.34, and the 30-year yield also coming back a basis point, but we had topped 513. Ed Yardeni talking about perhaps the market sending a little message to Kevin Warsh, the now new Fed chair, and saying that it will have to pivot the FOMC to lacking an easing bias, that by April, and that perhaps by July we'll actually get a rate hike. But the market is very concerned that Kevin Warsh will tolerate inflation for longer. All right, let's get to some individual stock movers now. Here's Chloe Melly in London.
Good morning, Vonnie. Let's start with some M&A this morning. The French advertising company Publicis is buying LiveRamp in a $2.2 billion deal, and that is leading to a massive rally in those LiveRamp shares this morning, more than 26%. And we are also seeing shares in Publicis rise in Paris this morning because it's a transaction that will really boost its AI capabilities as well. So we're seeing this deal be reacted to very positively on both sides this morning. Moving on to another M&A story, and Dominion Energy is also rallying this morning. It is up more than 10% as NextEra Energy is said to be discussing a deal that would value Dominion at $66 billion. So that would be the largest power deal on record, and we're seeing that reflected in those shares this morning. And finally, United Health is down. It's a little bit weak this morning after Berkshire Hathaway exited its stake in the company. The portfolio changes also included shedding companies like Amazon, Visa, and MasterCard, but we're seeing United Health in particular see that weakness this morning, down about 5% on the back of that.
All right, Chloe Melly, thank you so much. She'll be back later in the hour. Also coming up this hour, more on this market with Sharon Bell of Goldman Sachs, and a closer look at the US-China trade deal with Jude Blanchett of RAND China Research Center. Oil then rising for a third day as President Trump keeps the pressure on and grows impatient with Iran, posting on Truth Social, quote, "The clock is ticking, and they better get moving fast or there won't be anything left of them. Time is of the essence." Bloomberg's Jumana Brzezinski joins now for more. So once again, this pressure on Iran, rhetorical pressure. Jumana, are we seeing anything physical or kinetic?
You can see it in global markets today, reacting to the real possibility of a resumption of hostilities. And also, Vonnie, I think it's important to note that we are in a very different environment in terms of sentiment, expectations than we were a couple of days ago before that Trump-Xi summit. A lot of people were placing hopes on some form of a diplomatic breakthrough after the two leaders met. And instead, we got a lot of platitudes out of the Chinese president and Chinese foreign ministry, but nothing really that would suggest that they're going to actually exert any influence in terms of bringing Iran to the negotiating table. And if anything, the sentiment has taken a way turn for the worse overnight. That True Social post, as you were saying, another threat coming through from President Trump, suggesting that the clock is ticking and Iran don't have a lot of time anymore to come to the table and agree to that peace deal. Now, over the course of the weekend, we've also heard back from the Iranian side, Iranian state media suggesting that what the U.S. are asking for is still too maximalist. They say that these are not demands that they can consider yielding to or making concessions to, and so still very, very far apart. At the same time, we speak of even more activity in the region. Yesterday, on Sunday, a drone struck a nuclear facility in Abu Dhabi. This is a civilian nuclear facility, accounts for about 25% of the electricity generation in Abu Dhabi. It caused a fire. Thankfully, no radiological leaks. But again, another reminder that Iran can continue to cause damage on energy infrastructure. Equally, overnight, Saudi Arabia's Ministry of Defense saying that they too had intercepted 3 drones coming through from Iraq. So once again, we're in a situation where ultimately President Trump has to make a decision. Do you go down the path of another round of kinetic military action, or do you continue with the economic blockade? Because as it stands right now, we are still in a state of impasse.
All right, Jumana, thank you so much. Jumana Brzezinski there for us in London today. Over in Washington, the White House announcing China has agreed to buy at least $17 billion worth of agricultural products from the U.S. through 2028, as well as to establish boards of trade and investment following last week's summit between Presidents Trump and Xi. Joining us now is Bloomberg's Brendan Murray. Put this figure into context for us, Brendan. What is it annually, and how does that compare to what China used to usually buy from the U.S.?
Yeah, so $17 billion in agricultural products, and those are U.S. exports to China, would really just put put China back to where it was a couple of years ago. It would import about 20 to 25 billion, and so and they stopped those essentially over the past year during the trade war as Trump rolled out all of his tariffs. So really, this is just resetting the relationship on the ag front back to where it was, and you can see that in the price of corn and soybeans and wheat today. They rose a little bit, but they didn't retrace all of the losses that were posted last week when the summit yielded somewhat disappointing results for American farmers.
Brendan, thank you so much. That is Bloomberg's Brendan Murray, our Trades Hour. G7 finance officials meeting in Paris, meanwhile, amid that global bond sell-off and, of course, the stalemate with Iran. U.S. Treasury Secretary Scott Bessent asking the G7 nations and others to, quote, follow the sanctions regimes so that we can crack down on the illicit finance that is fueling the Iranian war machine and get this money back to the Iranian people. Bloomberg's Oliver Crook is live from Paris, where the officials look to be taking a family photo right behind him right now. So, Ollie, will anybody listen to the Treasury Secretary and do his bidding?
Well, that's a big question, Vani. I think that for some of the Europeans in G7, potentially it's an opportunity to get on Team Trump on some of these issues on Iran, where they've been really reluctant to do so in any sort of kinetic or military fashion. And we've heard a lot of dissatisfaction from the President of the United States, being very critical of G7 nations for not participating in the war in any sort of active way. So potentially, potentially additional sanctions on Iran is something that the Treasury Secretary has sort of floated and put out there. Is there some way that maybe rhetorically, in some way, the G7 can get on board with that to try to get onto a sort of more of the same page with the Trump administration? But again, if we're talking about additional sanctions on Iran or enforcing the sanctions on Iran, sanctions are a very sort of slow-burning impact that you have on the Iranian economy. That does not sound like a war that is about to end, and that is the main concern for finance ministers and central bankers gathered over here, is to see what the impact is going to be economically, not just on inflation, but again, on this economic side. The French economy is a very good example, who's hosting this meeting today. They stagnated in the first quarter, and this conversation about stagflation is getting louder and louder and louder, and it is now spilling into the place where it really matters, Vani, and that is the bond market.
Absolutely. I mean, these are finance ministers for the most part, Ollie, but how much is the conversation around central banks coming up, given this move to higher bond yields globally?
It's a very active conversation. I think for the finance ministers, there's going to be a lot of conversations between them and the finance ministers. You'll see behind me there, Christine Lagarde is there. So are the heads of the other G7 central banks, with the exception of the Fed, obviously, because there's a transition happening there. But we're going to have this conversation about the read-through, right? What kind of fiscal policy can you have, can you implement to dampen the energy shock while not stoking inflation? I think it's going to be a very active conversation for everybody in the room behind us. And also the nature of this inflation, Vani. As we've learned over the last few years, all inflation is created differently. Is this inflation that is going to stay segregated into the energy sort of side of things, or are we going to talk about an extending to other parts of the inflation complex? And that is the big concern for finance ministers who are gathering here. And we'll have a very interesting conversation with the head of the Bundesbank and the French Central Bank tomorrow, and we'll ask them exactly that question.
Cannot wait for that. Ollie, thank you so much. That's Oliver Cook in Paris, where, again, there's a family photo happening behind him with the G7 ministers. So don't miss Oliver's exclusive interviews. He's got the Bank of France Governor François Villeroy de Gallo and the Bundesbank President Joachim Nagel. They're both coming tomorrow. Now to other top stories trending on the terminal this morning. Elon Musk says he's back in Texas working on plans for a SpaceX IPO. Musk spoke virtually at the Smart Mobility Summit in Tel Aviv. Sources say the IPO could happen as soon as this week. The company is looking to raise as much as $75 billion on a valuation of more than $2 trillion, making it the largest IPO of all time. China's growth slowed across the board in April. Investment resumed declines, consumption deteriorated, and industrial production grew at its weakest pace in nearly 3 years. The slowdown is renewing calls for more aggressive stimulus. Hedge funds and asset managers piled into bearish sterling option bets last week after Andy Burnham secured a pathway to challenge Keir Starmer for UK Prime Minister. The bets signal fears a potential Burnham premiership could mean looser fiscal policy. Coming up, stocks falling as oil climbs. More with Sharon Bell of Goldman Sachs. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
You've seen the bond market very concerned about the conflict, what the impact to inflation is going to be, how central banks are going to have to respond, and yet the equity market has been able to look through it and really focus a bit more on the tech side and continued underlying macro strength in key parts of the world. There is a risk that if the conflict extends and you see this continued rise in oil prices, then the bond yield side then becomes something that the equity market can no longer ignore. So it's almost a key transmission for the equity market to really sit up and take notice of the risks around the geopolitical crisis.
All right, that was Seema Shah there. Stock futures lower here in the United States after the S&P 500 snapped its record rally. Oil climbing higher as well. We did hit that record, though, of 7,501, and it's just a little bit off that right now. Joining us is Sharon Bell, Senior Equity Strategist at Goldman Sachs. Sharon, you concentrate more on European equities, and that's not been quite the case with European equities. Does this global bond sell-off really impact things further in Europe, or can Europe look through some of that, global bond sell-off as well?
Well, I think a lot of the global bond sell-off centres in Europe. I mean, Europe has got inflation concerns. It's an energy importer. It's got weak economic growth, which doesn't help it at the moment because it's also got quite constrained fiscal positions in many countries, France, for example, but also the UK, where there's also political concerns too. So I think definitely it's a restraint on European markets.
So investors are getting less compensation for owning stocks over bonds in Europe at the moment. I mean, in that situation, what do you do? Do you just get out of stocks completely?
Look, I think that it is fair to say that the European market, it may have underperformed the US and Asia this year, but it's still done okay, and it would have still outperformed bonds. And I guess the advantage of equities over bonds at times like this is equities are, to some extent, and the corporates behind them are some of the reason for the higher inflation. They're passing on the higher prices and therefore making more money in nominal terms. Equities provide you some sort of hedge to higher energy prices because, of course, Europe also, although it isn't a big energy producer, there are a lot of energy companies within the context of the index. So I do think that somewhat European equities hedge some of these risks, but not completely. And you could see both bonds and equities sell off at the same time.
Which is what we have been seeing, from time to time, regularly, in fact, in the United States. The thing is, we just had a blowout earnings quarter in the United States. What's the outlook for earnings across Europe and margins in particular?
Yeah, it's a great question. So I wouldn't describe the earnings season in Europe in quite the same wonderful terms as you had in the US. I mean, in the US, the consensus now expects over 20% earnings growth this year in the S&P. I mean, for Europe, it's pretty good. Double-digit earnings growth expected by the consensus this year as well. And you might think, well, where is that coming from, given that European economic growth is quite weak? European companies are global in their exposure. And yes, we don't have the same proportion of tech companies in the index, but we do have a lot of commodity stocks in the index. We do have some tech companies in the index. We have industrials in the index. We have utilities in the index, all of which are growing pretty well. So actually, yes, there is a contingent of the European market, which is also gaining and seeing good earnings growth out of this, but not as good as the US. We saw an upside surprise to the earnings season, but more like low single digits rather than the surprises that we had in the US, which were much bigger.
We had a really outsized move in gilts, obviously, with all the political turmoil in the last couple of days. How many hikes from the Bank of England do you see this year, and will that calm the UK bond market?
Well, I don't think it would calm the UK bond market if they're being driven by higher inflation. And of course, the bond market is also worried about political risk as well. So it doesn't seem to me that hikes would particularly calm the market on either of those fronts. But we're not looking for hikes, actually, and we're very different from the market in that context. We think the Bank of England's more likely to pause rather than raise rates because, yes, we do see inflation being sticky and higher now, but we see weak economic growth and we see a weakening labour market as well. So there's a balance for the Bank of England to think about here.
That would be quite the eventuality if the Bank of England doesn't hike at all this year. In that scenario, then, what would you be looking to get into in terms of equities if there weren't to be any hikes? What would look attractive right now?
Well, I would base my view on equities and where to go within the equity markets, less on the hiking chances, but more on where can you get growth in Europe. It is quite tricky to get growth in Europe. I mean, I think there are places, though, that you can look at. Banks are doing quite well. Higher interest rates generally across the board, higher yield curve, steeper yield curve as well, that we're seeing at the moment. It's not such a bad place to be in the banks, provided you don't see a recession. An environment like that obviously would cross them. Tech stocks in Europe, a little bit cheaper than elsewhere, still have a lot of growth in them. Renewables companies in Europe, we need a lot of energy, maybe aerospace and defence as well, given that Europe needs to step up its spending there. So that's where I would be homing in.
Sharon, at what point does Brent crude become, much more of a problem for European companies? Are you surprised that they've been managing to hold up so far? I mean, we're at 111 a barrel now on the front month contract.
Yeah, I think we are surprised. The whole market's surprised in a way. We went into this, we would have expected probably higher oil prices than we actually have, given how long the Straits of Hormuz have been closed. But anyway, even with oil prices in the early hundreds, we're not seeing necessarily the damaging impact on growth that perhaps people may have expected. We've just had a conference here in London, and consumer companies speaking there were saying that actually they're not seeing it so badly hit their first quarter. That being said, they probably will start seeing hits as we go through this year, as consumers are digesting an environment of a weak labour market, therefore not the wage growth that they had in 2022 or 2023, and at the same time having to digest higher inflation. So, yeah, I do think it will be a nasty mix for the second half of this year.
All right, Sharon, we're looking forward to having you back. Sharon Bell of Goldman Sachs there, calling for no hikes from the Bank of England this year. Coming up, President Trump's latest construction venture, a helipad. A look at that and what else is making headlines in your front page news. That's next. This is Bloomberg.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving something.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Financial Times reporting defense companies are pushing Washington to delay a ban on Chinese rare earth magnets. The FT says some defense groups want more time to comply with the prohibition on sourcing certain rare earths that go into fighter jets and weapon systems. That ban is due to go into effect January 1st. Next up, the Washington Post reporting President Trump plans to build a helipad at the White House. The Post says that, unlike some other Trump construction projects, a helipad has been under discussion for years. The Marine Corps has been unable to deploy the new Marine One helicopters at the White House because they burn the White House lawn. And finally, Wall Street Journal reporting activist Elliott Investment reporting a stake in Biorad Laboratories and planning to push the company to boost its stock price. The Journal says Elliott is also a large investor in Sartorius, the German supplier of pharma and lab equipment that Biorad has a $5 billion stake in. All right, those were your front pages. Let's take a look at the market as we head into a new week, a fresh week of trading. We're not seeing any change for bonds. Bond yields are higher. We're off where we were earlier on today, but the 10-year yield very close to 4.60. The 2-year yield was about 4.10 a little earlier this morning. We do have NASDAQ futures now pointed lower once again, and Brent crude topping $110 a barrel once again. Coming up, the new Fed Chair, Kevin Warsh, stepping into his first full week as inflation fears grow.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Bond yields from Japan to the United States extending their rally with markets pricing moving towards a Fed rate hike. This as oil prices rise with Washington and Tehran stuck in gridlock over any deal. And the White House announcing a farm goods agreement with China following the Trump-Xi summit. So let's take a look at those markets then. We have Brent crude trading above 110 a barrel. The December contracts on Brent and WTI are at records today. S&P futures, as you might imagine then, pointed lower. That's after Friday's decline as well. But nevertheless, we had 7 straight weeks of gains. Even with that decline on Friday, it wasn't enough to erase the weekly gain. NASDAQ 100 futures also pointed pretty fractionally lower. Mark Chandler of Brown Brothers Harriman saying this global bond rout is edging towards dangerous territory, and we're seeing that around the world today. But if we look at the United States, Treasuries are sort of off their lows. We have the 2-year yield at 408.18 now. It had topped 410 earlier. The 10-year yield had topped 460. We're back below that level. Same with the 30-year yield. We were about 2 basis points higher earlier, but still, we're basically in a new range at this point. It is fascinating to watch this global bond move. As Ed Giardini says, the bond market giving the new Fed chair a big Bronx cheer on Friday. We'll see if that continues. Let's get to some individual movers now. Here's Chloe Melly. Chloe.
Good morning, Bonnie. It's a massive rally for LiveRamp this morning, up more than 26% as it is getting bought by the French advertising company Publicis in a $2.2 billion deal. And we've actually also seen Publicis shares move higher this morning in Paris because it is a transaction that will really boost its AI capabilities. And so we are seeing this deal being seen very positively, very much across the board this morning. Moving on to Dominion Energy, another M&A story. Dominion is up this morning in pre-market trading about 11% as Next Era Energy is set to be considering a deal for that company that would value Dominion at about $66 billion. That would be the largest ever power deal. And so we are seeing that reflected in those shares this morning. And finally, Regeneron Pharmaceuticals is down. It's seen a bit of weakness this morning in pre-market trading, down more than 10% after some disappointing trial data on a skin cancer drug, with analysts saying this is yet another disappointment in terms of R&D for that company, and it's piling even more pressure on that stock.
Chloe, thank you so much. That's Chloe Melly there in London. Let's get back to the bond market now. The sell-off easing just maybe a tiny little bit, at least in the United States. Still, yields elevated around the world as oil prices rise, and this new scenario is emerging. Let's bring in Bloomberg's Ven Ram for more. Ven, is this just a repricing to reflect reality, inflationary reality, or are we getting into what Brown Brothers Harriman's Mark Chandler is calling a danger zone now?
Well, it's definitely in the danger zone if you're talking about the longer dated yields, Vonnie. I think that the 30-year yield at 512, it sounds like an opportunity of a few years, because you've got to understand what's going on with the rate setup. As you mentioned, inflation is becoming a big entrenched problem, and my suspicion is that the front end of the curve is underpricing the risk. The long end has woken up to the risk of inflation staying higher for longer. But if you look at the front end, the 2-year yield, it was below 4% until a few days ago, and I had been calling for a long time that was unsustainable. Now we have seen a move towards 410. I think that we are going to stay in a 410 to 420 range broadly here until we know which way Kevin Walsh is going to be inclined. Of course, we haven't heard very much from him since he was nominated to office, but we will see in the coming weeks. I think that they will have to revise up their summary of economic projections to acknowledge that inflation is on the upside, and their core PCE forecast of 2.7% for 2026 looks completely diminutive and out of date.
Yeah, and I mean, this bond market is basically saying, come on, you need to hike, at least with levels that we're seeing now. How long would the new Fed chair tolerate no hikes, assuming that's what the FOMC will allow him to do or come to a consensus on then?
Well, I think that, the markets may be reading Kevin Walsh wrong. I think, but if you look at all his previous pronouncements before he wrote that piece on Wall Street Journal about how rates can go lower, all his inkling was a more hawkish leaning than someone of a dove. And I think that he may well surprise the markets by saying that, look, you know what, this war doesn't lend itself to an environment where rates can go lower. So I think that he may at the most stay put on rates for a couple of months before having to raise rates.
Yeah, Ed Giardini saying July, if not June, we will need to see a rate hike. Ben, thank you so much. That is Bloomberg's Ben Ram joining us. Rising fuel prices hitting the airline industry, with the Ryanair CFO warning of higher costs due to jet fuel prices earlier on Bloomberg. Have a listen.
We've got 80% of our jet fuel hedged at $668 a metric ton, which is down from $760 a metric ton last year. Those hedges run out to the back end of March 2027. So we're in a very, very strong position. We plan to grow by another 4% to 216 million passengers, having got the last of the game-changer aircrafts in.
Joining us now with more is Bloomberg's Kate Duffy. So Ryanair hedges a lot, but some other airlines don't. We've already seen Spirit fail. What's next for the industry?
Well, it's yet to remain clear what's yet to happen. But in terms of Ryanair, I mean, what's loud and clear in these results are that there are increasing costs, and it's not likely that they're going to come down anytime soon. They're complaining about crew costs going up. Also, aircraft maintenance are on the rise with older jets and with older engines under the wings of those aircraft as well. And on top of that, there's the rising fuel bill. And when I was speaking to the CFO this morning, he said that the fuel bill will increase by a few $100 million. But in comparison to other airlines, they're in a pretty good position. IAG, Lufthansa and Air France are all reporting fuel bills higher than 2 billion euros, or around about that mark. So in the grand scheme of things, Ryanair is pretty well positioned in comparison to other European airlines.
And the board very happy with Michael O'Leary already discussing extending his contract to 2032. But he has said in this earnings post call that some airlines may go bankrupt, Kate, and I guess there could be a lot of consolidation in the industry as well. You know, what are we looking at here? Is Europe going to be worse hit than the United States?
Well, what we're seeing is a huge divide between how well the airlines are faring in this quite tricky environment. As we've discussed, costs are going up. So the airlines such as Ryanair, who have got quite thin margins but are making a lot of money, are doing well. There are other airlines that maybe are faring not so well. They're struggling with the increase in costs across the board. And so this leaves a lot of opportunities for airline groups such as IAG or Air France or Lufthansa to come in and acquire these airlines. At the moment, we're seeing Air France and Lufthansa in the race for TAP, the Portuguese state-owned airline. IAG has pulled out of that race, but has said recently that it's open to opportunities in the market. So it yet remains to be seen as to what exactly they would be interested in buying, but there is a huge separation between the various airlines at the moment financially.
Kate, thank you so much. That is Bloomberg's Kate Duffy. And do tune into our interview with Ryanair CEO Michael O'Leary. That's on Surveillance at 8 a.m. Eastern. Now to other top stories trending on the terminal this morning. Elon Musk says he's back in Texas working on plans for a SpaceX IPO. Musk spoke virtually at the Smart Mobility Summit in Tel Aviv. Sources say the IPO could happen as soon as this week. The company is looking to raise as much as $75 billion on a valuation of more than $2 trillion, making it the largest IPO of all time. China's growth slowed across the board in April. Investment resumed declines. Consumption deteriorated. And industrial production grew at its weakest in nearly 3 years. The slowdown is renewing calls for more aggressive stimulus. And it's the first workday since the Long Island Railroad stopped service Saturday. Workers walked off the job following a stalemate on labor deal negotiations. The MTA, which runs New York City's subways, buses and commuter rail lines, is advising people to work from home if possible. Coming up, Jude Blanchett of Rand China Research Center joins for a closer look at the US-China deals. That's next. This is Bloomberg.
Technology is embedded in every aspect of our lives. and laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. The clock is ticking. President Trump renewing his rhetorical pressure on Iran, posting on Truth Social, they better get moving fast or there won't be anything left of them. Time is of the essence. Iran responding earlier that it knows how to respond to the president's latest threats. Bloomberg's Kasia Klimashinska is live from Washington. Kasia, is there anything to suggest that the president will, do anything physical after this latest threat? I mean, he's threatened this kind of thing several times in the past.
So the two sides remain far apart, as we saw from this Truth Social post from President Trump. He urges Iran to make a decision to accept the proposal that the U.S. has put on the table. And yes, he is renewing his threats to resume the military attacks against Iran. I think we have to be ready and keep in mind that this is a possibility. I think this is why oil remains elevated, although the gains are not too high, because as you said, President Trump has issued such threats before. Over the weekend, we have also learned from the Iranian side more about what exactly it is that the U.S. is demanding. Of course, President Trump wants the Strait of Hormuz to be open. He also wants Iran to agree to transfer all the enriched uranium to the U.S. And also, he doesn't want to pay any reparations. He doesn't want to compensate Iran for the war. He would only agree to unfreeze maybe about a quarter of the funds that the U.S. is currently keeping from Iran. Iran wants to get all those assets back, and it wants the U.S. to pay reparations. Iran also wants the U.S., of course, to open and lift its blockade of the Strait of Hormuz, while also allowing Iran to keep some sort of control over this key waterway into the future. So it doesn't look like there was any progress over the weekend. We remain where we have been now for weeks in this kind of limbo that, again, keeps especially the energy prices elevated.
Yeah, it doesn't look like either side is moving on their red lines, right? There's no negotiation, in fact, happening. When it comes to China, so China is agreeing to buy farm goods now, but as we heard from Brendan Murray earlier, we're really back to where we were before the whole trade spat happened. Not too much more that China is agreeing to do. Also, this investment board, though. What do we know about this investment board?
That sounds about right. So the two sides agreed to set up two boards for investment and for trade of goods. According to Chinese side, this could lead to some lower tariffs on some goods that the two sides see as non-critical. There has been also an agreement on purchase of agricultural products. China will buy, for example, more of U.S. beef, perhaps more of U.S. poultry, and that comes on the top of soybean purchases. But you will have the NVIDIA CEO interview later today. We'll find out whether anything regarding AI and the most sophisticated chips has been discussed. The two sides also talked about Iran and oil. As we know, China is a key buyer of Iranian oil and therefore helping Iran fund this war effort. China has asked President Trump to lift sanctions on some of the Chinese entities that are buying Iranian energy, and President Trump said that he will think about it and that he will make a decision on this soon.
Meantime, Treasury Secretary Scott Bessent calling for other countries, plus G7 countries, to impose more sanctions. Kasia, thank you so much. That's Bloomberg's Kasia Klimashinska. Joining us now is Jude Blanchett, Director of the RAND China Research Center. Jude, what did this summit really bring us beyond the idea that we're sort of back to China purchasing more agricultural goods?
Yeah, it's a great question. I mean, obviously, the summit didn't deliver a whole lot in immediate outputs. I think this was the expectation going in. This was deemed to be a fairly low output summit, and it met those expectations. I think both sides got a stabilization on their own terms, so to speak. I think the Trump administration gets some breathing room from more intense China competition as it's dealing with a whole host of issues. You just talked about some of these with the previous guest. And for China, they get this new framework of a constructive U.S.-China relationship of strategic stability, which for them essentially tries to lock in the U.S. for the next few years and give them the space to say any new competitive action from the U.S. violates the terms of the truce.
Yeah, I mean, did Beijing gain any leverage with this summit, for example, on arms sales to Taiwan or in other areas?
Yeah, I mean, coming out of the summit immediately, I would have said no, but then, of course, we've had remarks from the president on Air Force One and in an interview with Sean Hannity, but especially the Air Force One arguments did seem to give us a whole new challenge to wrestle with, which is the president said openly that the arms sales was a key point of the discussions, that he hasn't made up his mind, he doesn't want a war right now, and that he'd have to think about it, essentially. That was pretty striking, and you saw Ambassador Greer, U.S. Chair Greer, tried to, I think, sharpen the remarks a little bit on the talk show circuit yesterday. But look, that's a pretty big statement from the president, and certainly has, folks in Taipei, probably folks up on the Hill, pretty worried right now about what the president is going to do ultimately on this arms sales package.
Right, because if he didn't dismiss it out of hand, and if he basically said there was a lot of discussion about it, then that puts it in play for China. As you say, if the U.S. breaches what China now considers to be maybe some kind of an agreement, even if it wasn't publicly spoken, then China has leverage, right? I mean, what would happen if the president delayed arms sales to Taiwan? Would that be a huge signal to the world?
Look, it's tricky now because I think to some extent the administration has created a bit of a box for itself, that even if it was already considering, the arms sales package is already, quote unquote, delayed. I think the question was it going to go forward in the full package? Was it going to be split up and sort of drip fed through as a way to get Taiwan the arms they need, but not create a political spat with China? Now, kind of whatever the action that Trump ultimately makes, it will be seen in light of his comments. So this has created a bit more political trigonometry for the White House. Previous administrations, look, these are always inherently geopolitical decisions that have been made by previous administrations. So of course these considerations have always come in, but never have we seen the thinking of the president so clearly laid out that he says, look, I heard Beijing's message. Xi Jinping talked about this a lot, and I hear it. So, and the final point I'll just say is if you look at Chinese state media over the past 24 hours, it is trying to sort of take the ball and run with it, that irrespective of what Trump does, state media is saying, yeah, look, the president got our message. He knows that, that this is a red line for Beijing.
Jude, what happens with rare earths? So we have this investment board, you have this trade board, we have, maybe a little bit of, a détente in terms of trade, but do we get the rare earths we need?
Yeah, I honestly thought Beijing, as a relatively low-cost giveaway, was going to more formally extend the quote-unquote truce. In other words, it was going to more formally indicate that export licenses for companies would be freely flowing. Beijing withheld that, and if you look at the U.S., the White House statement yesterday, the readout, the language on rare earths was pretty ill-defined. Just said China was going to basically take U.S. concerns seriously. This is one of the greater points of leverage China has. It knows it has a carotid artery that if it needs to push it, if it sees the United States as misbehaving, it can deny licenses selectively or more wholesale like it did last October. So China wasn't willing to budge on that. It doesn't sound like we got a lot. So I think that sort of Damocles hangs over there for firms who really need those specific export licenses moved through quickly on rare earths and permanent magnets.
Well, and is that the sort of Damocles back over other countries again? I mean, what about Greenland? Does that suddenly come back into focus?
Yeah, I mean, look, that's a separate issue. Your guess is as good as good mine on Greenland. But I'll just say that the United States and Europe and other advanced democracies remain in a strategic bind here of we're still sourcing the overwhelming bulk of rare earths and permanent magnets from China. China has used these as political leverage and a weapon, and that hasn't changed meaningfully structurally as of May 2026. This is going to be a long-term effort by the U.S. and its allies to wiggle free from this chokehold.
Separate from this summit, Jude, I'm just curious as to what you make of China's economy right now, the slowing, and whether we will see quote-unquote aggressive stimulus or any kind of stimulus at all.
Yeah, so first of all, from Beijing's point of view, great that these numbers came out today and not in the middle of the summit. I think that would have deflated the confidence bubble a little bit. Look, China, for all the headlines we're reading about the sort of new productive forces and China's high-tech advances, it remains the case that the Chinese economy is really riddled with pathologies. So Beijing is wrestling through those. I think past performance is in this case a decent predictor of future behavior. Beijing is very stimulus shy. I don't think the Xi administration feels like it is that in that dire straits. This has been a running commentary for years of will they, won't they on a major stimulus. They've been saying pretty clearly they're going to keep their powder dry until they feel like it's existential. I see no indication that even the relatively dour numbers coming out today really fundamentally shake Xi Jinping's confidence in the growth model he is pushing. And he's saying, look, folks, there's going to be pain as we shift gears here on the growth model. So let's stay the course. So I don't see any significant change on the horizon.
Jude, thank you so much for joining us this morning. That is Jude Blanchette of the Rand Center Research for China. Coming up, NVIDIA earnings front and center. We'll get you set up for your week ahead. This is Bloomberg.
Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final. The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Now look at what's ahead this week. First up, the main event, NVIDIA earnings coming on Wednesday. We also get the latest Fed minutes due Wednesday, plus another round of jobless claims data and PMIs on Thursday. Let's take a look at some movers before the bell now. Dominion Energy is higher by almost 12%. Next year is said to be in discussions for a deal that would value Dominion at $66 billion. Then we have LiveRamp up 26% this morning. This, of course, on a potential acquisition. Publicis looking to buy the data collaboration platform in a $2 billion AI deal. And space stocks rallying as Elon Musk says he wants to get the SpaceX IPO underway soon. Here is your macro picture for the day and the week ahead. NASDAQ 100 futures pointed lower, bond yields holding on but generally higher.
cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now. It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance. Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
What continues to drive the market higher here is the tech and the AI narrative.
We are starting to enter the middle game of AI.
It's not bubble-ish valuation.
This is an AI revolution.
The underlying inertia right now looks like it's pretty set to continue for the foreseeable future.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Monday, the bond market looking for an anchor. Global bonds breaking down, sending yields to multi-decade highs. Tension in the Middle East underpinning the outlook for higher prices, leaving Wall Street beginning to question just how long the Kevin Walsh Fed can avoid tightening policy.
This is what Ed Yardeni was talking about over the weekend in a note where he came out and said if the Fed avoids eliminating the easing bias that they currently have with respect to policy, investors will conclude that the central bank is falling behind the inflation curve and will demand a higher inflation risk premium. The question I have this morning is how much is that already being baked in? The idea that Kevin Walsh is going to come in and be dovish, and right now we're seeing the bond vigilantes getting really excited, sharpening their knives and saying, let's have a crack at this one.
It felt a bit unhinged at times over the last couple of days, particularly overnight in Japan. At one point, the long end of the Japanese curve with a move of 20 basis points. That's a struggle. Japan's got its own problems. The global bond market has got a lot of problems right now across the UK, Japan, Germany, the US too.
Part of the problem is exactly the Kevin Walsh issue is something global. We don't have a sense of how much determination there will be by monetary policymakers to take the pain, to hike rates. This is a concerning moment where you have potential threats to growth at the same time that you have inflation. And right now, the political pressure is to emphasize growth, is to emphasize fiscal stimulus, is to emphasize trying to make things better through the delivery of something, not necessarily the taking away of something. And that is the reason why people are pushing back.
Well, when it comes to the politics of this, the president actually might give Kevin Walsh some more time. Just hours ago, Fortune released an interview they had with the president. They sat with him the day that Kevin Walsh had a key hurdle that he was able to get over in terms of the Senate. And they said with rising oil costs from the Iran war driving up inflation, the president seemed resigned to the fact that he may have to wait for more cuts. Quote, you can't really look at the figures until the war is over. Is he giving Kevin Walsh some more space and time before he puts some pressure on him to cut rates?
That's where the problems start. In the energy market, you see it in crude again this morning. Brent and WTI, Brent around 110. The move in crude, fueling inflation and the outlook for higher prices, that's raising questions about fiscal space, highlighting issues around leadership in places like the UK, and leaving central bankers confronting the prospect of hiking interest rates. I tell you, things have changed. A month or so ago, we had people in fixed income come on the program and say, we're creating value in the yield curve. I'm interested in the belly of the curve. I'm interested in tens, maybe even going further out along the yield curve. 6 weeks later, I don't hear that at all. 6 weeks ago, this market refused to internalize the prospect of higher interest rates further down the road. Things have changed a lot in 6 to 8 weeks.
What's changed is 80 days. That is the number of days that this conflict has been going on between the U.S. and Iran, and the Strait of Hormuz has been closed for that duration. Now the question is it better that we're in a ceasefire? There's no escalate to de-escalate, and there isn't the appetite to do that. So we're just in this quagmire where you're not seeing traffic go through. At what point do people start seeing the step change in terms of just the pure supplies of oil that start to really pressure prices in a more material way?
Brent crude 110, WTI this morning around 106. Coming up this hour, we'll catch up with Rob Rowe of Citi as equities extend losses, Terry Haynes of Pangea Policy as President Trump warns the clock is ticking for Iran, and Kelsey Barrow of JP Morgan Asset Management as bond yields test multi-decade highs. We'll begin this out with higher bond yields putting pressure on equities. Rob Rowe of Citi maintaining an S&P year-end target of 7,700, writing this on the bond market and fixed income. The market is now pricing in about 35 basis points of rate hikes, which seems challenging to realise as the recent dissenters will not be voters in 2027. Rob joins us now for more. Rob, good morning. Good to see you.
Good morning.
We got a lot to work through. Let's start with the bar for rate hikes. How high is the bar for rate hikes at this Federal Reserve?
You know, I actually think that we've seen a cautionary tale with the central banks. We would be hesitant to be raising rates here because you're facing a more stagflationary scenario. When inflation is demand-driven, that might be a motivation to raise rates. It's hard to raise rates here right now. We do think, though, that the narrative on inflation will continue into probably June or into the summer, and that inflation will continue to tick higher, which will put pressure on the central banks to raise rates. Mind you, the U.S. has a dual mandate, which I think is an advantage here, especially if we think that we'll see a more softening of employment, and we'll see higher unemployment going into the summer.
Well, let's get to that word you used, stagflation. So we've seen tons of inflation in the energy market, CPI, PPI. Struggling to find a stag right now. Where do you see it?
Yeah. Well, there is growth in certain parts of the economy, but when you see ag prices going up too, and we see other prices going up and they're driven, you're starting to see a slowdown in other areas and other sectors.
Is the bond market pricing in a reacceleration, essentially, that the stock market is also banking on? In other words, are they sending the same story, which isn't one of stagflation, but just inflation?
Inflation. The bond market, I think, is definitely, the narrative is driven by inflation right now, and I think that will continue for the next couple of months. We have a bullish call on oil right now that's probably around 120, so at least for the next 0 to 3 months. If that were to continue into the second half of the year, then we would have to start to ratchet down our call on global economic growth and also U.S. economic growth.
So can you square $120 oil with your 7,700 call for the S&P at year end, paired with a 3.75% 10-year at the end of the year, even though you have inflation that seems to be predicated on where oil prices are?
Right. I mean, get ready, because we think there'll still be 3 Fed cuts at the end of the year.
Yeah, I'm trying to wrap my head around that right now.
We think that unemployment will pick up in the later half of the year. Certainly, if inflation gets higher, that will be an even worse situation for the economy, and that's why you would start to see more of a downturn and a pull away into more the market pricing in cuts instead of hikes going forward. So if you think about oil being up that high, we already ratcheted down our growth forecast on global economy to about 2.6%. That could go as low as 2 to 1.5% if we saw $120 a barrel continuous into the second half, especially with the U.S. We would have to ratchet up our inflation expectations to about 3.4% for the year. Now, with the equity markets and the 7,700 call, what we are seeing is the AI momentum continues to move forward. We're still seeing very strong earnings. We're seeing a bifurcated S&P 500 for sure. So we're seeing a very strong AI-driven growth. PEG ratios still remain relatively reasonably valued, so we don't think that they're priced too high. But on the other hand, some of the other sectors are starting to get affected by inflation.
Do you need to rethink 3 cuts this year, given the fact that even the president is conceding that Kevin Warsh might have a little bit of a harder time convincing this deliberative body to take that move?
Well, my song on my wedding was "What a Difference a Day Makes," and so I think when we get to the second half of the year, you never know what you'll see. You will see a higher unemployment because we start to see, just from a seasonal standpoint, we'll start to see jobs slow down, and we'll also see a new workforce coming in as grads come into the workforce. So we will start to see higher unemployment, and I think that could give breath at least to hold rates where they are, for the third quarter. And then it's not until the fourth quarter that we would start to see rate cuts.
When you sit around the table with Max Layton and Andrew Honhorst, do they throw things at each other? do they fight it out right now? How does this work?
We've had a lot of arguments about those calls.
Let's get to the yield curve right now. Some of the numbers we see on the screen, 10s around 460, 30s north of 5%. Can we live with those kind of numbers? At some point, usually in the bond market, things become self-limiting. The bond market goes so far, starts to bite into growth, and then things reverse. Can we live with this?
For the time being, yes, but I think we're actually going a bit long duration, but only in the 5-year. So we're not bold enough to go into the long end of the curve quite yet, not into 10s quite yet, because we think that narrative on inflation will continue.
So what do you say to people who argue that at these levels, these valuations of yields, that crimps the overall multiple to such a degree that it doesn't justify further gains from here, especially in some of the high-flying stocks. Why do you disagree with that?
Well, our big driver were PEG ratios. So if we look at that, if we look at the price versus growth, everything still looks valued really well.
Going forward, what are you looking for this week? Is it more going to be the Target earnings and the Walmart earnings, or more the NVIDIA earnings? Which is more important to you right now?
More important to me will be the NVIDIA earnings for our 7,700 call, for sure.
A big report coming later this week. Rob, it's good to see you, sir.
Thank you.
We appreciate it. Rob Rowe of Citi. NVIDIA reporting later this week. We hear from Target as well. A read on the consumer, important for the economy. A read on NVIDIA, important for the market. Two different ways of looking at things right now.
What's interesting is you note that the economy might not be as important to the market as, say, NVIDIA, and it gives you a sense of how detached these two have become. At what point does actually pain in the economy lead to rate cuts that actually will only boost the multiples in the AI stocks?
Equity futures on the S&P this morning, pulling back just a touch. We're down by 0.5%. Some big moves in the bond market Friday, spilling into the Asian session already through Monday morning. Let's give you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Good morning. President Trump warning that the clock is ticking for Iran. The two sides are still far apart on any deal to end their war and reopen the Strait of Hormuz. In a Truth Social post, Trump saying Iran better get moving or, quote, there won't be anything left of them. New details emerging about President Trump's meeting with Chinese President Xi Jinping. China agreeing to buy at least $17 billion of agricultural goods annually through 2028. The Trump administration also saying the country will set up boards of trade and investment with the U.S. 3 people were killed in Moscow and over a dozen were injured in Ukrainians' largest ever drone attacks. Moscow's main oil refinery was targeted and a number of residential buildings damaged. Ukraine President Zelensky is saying the strikes were, quote, entirely justified. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for the update. More from Vonnie later this hour. Up next on the program, the president's nuclear red line.
I don't think about Americans' financial situation. I don't think about anybody. I think about one thing. We cannot let Iran have a nuclear weapon.
I have a feeling that first line is going to be repeated again and again going into the midterms. Up next, we'll catch up with Terry Haynes of Pangea Policy, live from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
A very important week ahead for earnings in corporate America. Check out the calendar. Wednesday, the main event, NVIDIA coming after the closing bell. Look out for that. In the week also, earnings from Target, earnings from Walmart. How's the consumer doing? But it's also not just about the backdrop. I think it's really important to point out. Lisa's done this a number of times. This is also about execution, and the winner on execution is Walmart over Target every single time for quite a while.
Building on that, how much are they deploying artificial intelligence in a really concrete way to try to increase efficiency? They did announce some job cuts not so long ago. How much do we hear more about that, and where they are seeing a value creation given some of these investments, how that paints the road ahead for a lot of different retailers?
Look for that through the week. Right now in the equity market, check it out. What a really interesting session on Friday. Again, spilling over into Monday. Equities down by 0.4% on the S&P. On the Nasdaq, down by 0.3%. On Friday, the biggest one-day loss since the end of March. We've had a massive run since then, pulling back just a bit compared to the huge rally we've seen over the last month or so. Switch up the board and get to the bond market. New numbers to talk about. 460 on 10s. Yields up a single basis point. Last week, up more than 20. On 2s, comfortably through 4% now. And on 30s, numbers we haven't seen since 2007 on a closing basis. Your 30-year yield, 5.13.
And if you think that maybe just shifting things around at the Treasury can change this, the problem for any central banker and for any government central bank is the fact that this is global. You're seeing over in Japan the highest rates in 30-year bonds going back to 1997. Over in Germany since 2011. In the UK since 2008. And this is really giving a sense of unease globally that's going to be very hard to push back.
Fueled by this isn't helping. 110 on Brent. Front end of the futures curve, elevated again, up by about 1% on WTI 106. This has become prolonged. I saw a note from Jim Reed at Deutsche Bank earlier on this morning. The ceasefire is now longer than the kinetic phase. The issue is now that this is just prolonged. And it's very, very unclear what's going to stop, what's going to really address the deadlock down in the Middle East.
We're living in paralysis, really, between Tehran and Washington. The president yesterday said that the clock is ticking. He met, according to Axios, his national security team, J.D. Vance, the vice president, Steve Witkoff, Marco Rubio. And basically, it sounds like they are weighing if they cannot make any sort of progress forward when it comes to deliberations on a nuclear deal, then potentially this administration would go back to strikes.
Crude this morning up by close to 1%. Under surveillance this morning, the president's nuclear redlined.
The only thing that matters when I'm talking about Iran, they can't have a nuclear weapon. I don't think about Americans' financial situation. I don't think about anybody. I think about one thing. We cannot let Iran have a nuclear weapon. That's all.
So here's the latest this morning. President Trump issuing a warning to Iran, saying the, quote, clock is ticking for Tehran to make a deal. Bloomberg's Tyler Kendall joins us now from Washington for more. Good morning, Tyler.
Hey, John. Good morning. Well, at this point, the ceasefire remains highly fragile as both sides don't appear any closer towards reaching a deal to end the conflict or reopen the Strait of Hormuz. In fact, we saw escalation over the weekend as the UAE confirmed that a drone had hit a power plant, and Saudi Arabia says that it intercepted multiple projectiles over its airspace. And while several energy shipments have made their way through the Strait of Hormuz in recent weeks, new data analyzed by Bloomberg News and out this morning shows that 23 tankers have clustered near Karg Island, marking the single largest bottleneck there around the export hub since the U.S. began its naval blockade. As all of this contributes and compounds higher prices for Americans and eats into those benefits of higher tax refunds, President Trump has brushed aside the idea that rising costs will hurt Republicans at the ballot box this November, pertinent to the conversation this week in particular as several states hold primaries. Instead, President Trump is saying that this will be a short-term disruption, adding in an interview over the weekend, in part, quote, "I'm not going to let the election determine what's going to happen with the war in Iran." But escalation at this point remains very much on the table as the White House's patience wears thin, and Axios is now reporting that President Trump is set to convene his national security team tomorrow to discuss potentially resuming military action. John, over the weekend, Iranian state media had reported that there were some red lines in the U.S.'s proposal that it will not accept, including that the U.S. has put forward that there will not be payments for war damages and that less than a quarter of Iran's frozen assets will be unfrozen. So far, the U.S. has not commented on these reports, but the sides appear publicly very far apart.
Tyler, thank you. Tyler Kendall down in Washington, D.C. To build on this, Terry Haynes of Pangea Policy. Terry, welcome back to the program. Let's set the stage. You're a Republican in a tight race, facing down a midterm election. What are you thinking about the messaging coming from the president?
I think the quote's unfortunate, of course, but the context can be built on if I'm that person. The president's ultimate point here is that kind of tightly bound around the quote in question is that you can't let Iran have a nuclear weapon. Republicans are foursquare behind the president in that, so I think you can make that case and push with voters. Number one. Number two, there's only a handful of races, a dozen or more that are genuinely competitive. So the vast majority of those Republicans may see this as an irritant, but not as some sort of an existential setback for their own political futures.
Terry, though, are they potentially at risk of making the same mistakes the Biden administration made?
Oh, sure, always. I think it's much less likely that they make that sort of they make those sorts of errors, principally because they understand better than the Biden people did that they're going to go need to make the economic case, number one, and it's linked to geopolitics, and number two, that people by and large aren't convinced. The Biden people, kind of like to cocoon themselves and talk about how as other administrations did too in the past, that if only people understood a little bit better, and sure they will, and all the rest, and kind of relying on faith. These folks aren't going to rely on faith. I think that's a bit of a difference.
Terry, how are they doing geopolitically? The Treasury Secretary's at the G7 finance ministers meeting, and he came out and he said that they call upon G7 and all their allies and the rest of the world to follow sanctions regimes. At the same time, when the president left Beijing, he said he was going to consider lifting sanctions on Chinese firms that are buying Iranian crude. Which is it?
I'm a big believer in Emerson's consistency is the hobgoblin of little minds when it comes to politics. And in this case, I think it might be a little bit of both. Of course, what the president's doing is carrot and stick, whereas what Besson is doing is a little bit more stick to try to get the allies to stick together.
How important is it that the U.S. clarifies its stance on Taiwan after the president said that he might think about delaying some of the sales that the U.S. has promised to the region?
I think Taiwan's right to be nervous, but I think Taiwan's right to be nervous at least since Biden pulled the United States out of Afghanistan, frankly, because that led to perceptions of a power vacuum in the Asia-Pacific region that are still with us today. So I'm not blaming Biden, I'm not whataboutism here. I'm just saying this goes back years. This isn't a situation the president is creating. So I think Taiwan's entirely right to be nervous. At the same time, I think the president's a little bit less, a little bit more ambiguous, frankly, rather than less, because you got a situation here where there's no change to the bottom line. And number one, number two, what the president's doing is saying what people already knew to be true, that he's considering particular arms sales. So we'll see where this goes. But I point out that there's a linkage here between what goes on in the Strait of Hormuz, China's ability to tell its client state Iran, look, you better cool it and open the strait, and exactly how things proceed, whether it be on Taiwan or trade and tech for that matter.
Do you have a sense who within the cabinet of President Trump is the guiding light right now in all of this, or is it really President Trump? I mean, does anyone have an edge in what the overall goal is or the overall strategy?
I look to Besson economically. I look to Rubio as far as the diplomacy goes. But this is very much the president. With those particular whisperers on board and kind of helping to guide.
Terry, what did we get out of the China summit? I spoke to Ambassador Greer there. He said he gives China a passing grade when it comes to rare earths, but still admitted to what I said we hear from companies, which is that China continues to drag its feet. What did the United States actually walk away with?
I think what they want, I think we don't know yet, and that's why I say that markets need to watch the strait, really, because for trade and tech as much as for oil. China has made much in the past 3 to 4 weeks about saying that they think the strait should be open. Iran is China's client state. You can't put too fine a point on that. And as a result, what you end up with is a situation where either China can tell Iran that it needs to come to some sort of an understanding or not, and that's going to be a directional signal for the entire China-United States competitive relationship, whether it be geopolitically or frankly in terms of whether the summit result is some sort of a continuation of a colder truce that's existed for more than a year, or whether we're going to get to something that's a little more directionally positive.
Terry, are you suggesting there might be an agreement here that's just not been talked about publicly yet?
Oh, sure, yeah. I'm suggesting saying that absolutely out loud. You get a lot of people on your air, other air, from past administrations, John, I'll speak English for a minute, kind of boffins who, work in trade or somewhere, saying, well, it's not like the old days where there used to be agreements and whatever else before the leaders met. Well, that's true, but what's happening here, I think, is a world where the lack of agreements, the lack of progress over periods of years, over trade deals, for example, led to the kind of difficulties geopolitically and geoeconomically that we see today. Leaders of all stripes want to speed that up. And because they speed that up, it's kind of a situation where, their behavior at the summits and agreements at the summits dictate future performance in the markets rather than the other way around.
I'm bilingual, English, American English. Terry, thank you. Appreciate it. Terry Haynes of Geopolicy. Terry, thank you. Any evidence of that agreement taking place?
Not yet. I mean, I think we have to wait to be seen what happens the next few weeks. Terry is right. We'll get more of a readout now, potentially the next few weeks, potentially what happened behind closed doors. One thing that is interesting, Mohammad Ghalibaf, who's one of the negotiators on the Iranian side, was over the weekend appointed to envoy for China. So potentially, and he's one that, he watches Bloomberg surveillance sometimes because he literally steals quotes from people like Jeff Curry after watching our interviews. So he's someone who's interested in the oil market.
Watch this space. We'll stay on top of that story. Up next on the program, we'll catch up with Sarah Kunst of Clio Capital as investors await NVIDIA earnings, and we'll check out NVIDIA in the pre-market. Firmer this morning, down on Friday, following a 7-day run where that stock rallied 20%. Which in NVIDIA terms is about $1 trillion. More on that in just a moment. From New York City, good morning.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. more danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Stocks down again this morning. We're negative by 0.4% on the S&P, down about a third on the Nasdaq on Friday. The biggest one-day loss going back to the end of March, but still just about squeezing out a 7th consecutive weekly gain on the S&P, the longest since December 2023. One name to look at in the pre-market, let's check it out together, Nvidia. Nvidia in the pre-market this morning up by about 0.7%, down on Friday by some 4%. That's about $250 billion in market cap, which sounds like a lot of money. It is. 1 trillion is a whole lot more. We had a 20% move on Nvidia over 7 days heading into Friday. So the move up, way, way bigger than the small move down.
So I love that we used to think that $5 trillion for a market cap for a company was big, because we're actually looking at $6 trillion for NVIDIA based on this $900 billion 20-day rally in the name. People are now waking up to the fact that they're going to be huge beneficiaries of any kind of CapEx cycle. And the earnings that we've gotten so far have exceeded expectations pretty consistently across the hyperscaler board, with the exceptions of a few laggards. How long can this continue? What do they have to deliver? Does it have to be just another leather jacket and some wonderful vibes? Does it have to be some sort of new development? Does it have to be the H200 chip? What can Jensen Huang say to materially change this other than believe the faith, it is changing the world and the orders are strong?
It seems to be in the hands of others, right? Anthropic, OpenAI. It's the announcements that the Anthropics of this world make that have really driven the whole ecosystem in the last 2 months.
Yeah, the race, the existential race to try to remain superior when it comes to some of these skills. How much can NVIDIA really say when it really does lie in the hands of others? And frankly, it's sort of a sentiment driver too. I mean, this is, how do you evaluate whether it's worth $6 trillion or $6.1 trillion? Exactly. Vibes. I mean, how else are people evaluating this?
Vibes of real earnings. The stock is up by 0.7% at the pre-market. The earnings drop on Wednesday. Look out for that. I want to check out the bond market, check out the moves this morning, and think about some of the levels we're at. Twos north of 4%. Big gap opening up now between where the policy rate is and where the market is, at least on a 2-year relative to the policy rate at the Federal Reserve. And a lot more people starting to come around to the idea that, yes, maybe we might have to hike interest rates, but even if we don't, they might have to signal something close. On 10s, this is where things get more interesting. 460, new highs for the year, yields up another basis points. On 30s, up another basis point or two, 513. We haven't seen these kind of levels going all the way back to 2007 at the very long end of the yield curve. And check it out globally. Lisa went through some of the numbers for the 10-year. These are the numbers for the 30-year. For Germany, the highest since 2011. For the UK, the highest since the 1990s. For Japan, at the long end of the curve on 30s, the highest on record, with some big moves overnight.
Which is a reason why it's hard to see the U.S. market really diverging meaningfully and coming down. This is a reason why so many different central banks are contemplating rate hikes, even in Europe, despite the fact that the growth trajectory is that much lower than in the United States. At what point do you have to see rate hikes in order to tame the bond market? And at what point is the bond market pricing in not just stagflation, but reacceleration? Because you cannot have sustainable yields at these levels unless you have commensurate growth as well. Does AI fuel the growth that allows yields to remain high as the rest of the economy really struggles?
Can we live with it? Can we live with those levels? Can we live with this? Crude at about 110 on Brent. WTI around 106, and advance again this morning, higher by some 1%.
Well, it depends who you ask. The American people certainly, if you look at polling, are not liking the higher gas prices. This from AAA. Travelers are preparing to hit the road in record numbers next week, and drivers will be facing the highest Memorial Day gas prices in 4 years. So they expect record number of people paying very sky-high prices when it comes to gasoline.
Brent crude, front end of the futures curve, 110. Just hanging out there this morning, just kind of stuck there, north of $100 a barrel. That's the price action. Let's get you some top stories. On our radar this morning, President Donald Trump issuing a new warning to Iran, writing in a Truth Social post that Tehran better get moving fast or there won't be anything left. The post coming just hours after drones targeted a nuclear plant in the UAE. Elsewhere, China's economy seeing a slowdown in growth across the board. Industrial production slowing to a nearly 3-year low as investors call into question Beijing's reluctance to add to economic stimulus. And finally, the Manchester mayor and Prime Minister hopeful Andy Burnham making a bid to reassure markets. Burnham telling British media he supports the current limits on borrowing and spending, as well as a plan to lower the nation's debt.
Putting this into perspective, the reason why the bond market got very nervous about Mayor Burnham was because he previously said the government's economic approach left the country, quote, in hock to the bond markets. People said, you don't respect us, we will burn you. And now you have him coming back and saying this. Let me say this really clearly. I support the fiscal rules, saying there's got to be fiscal discipline, talking about rock-solid public finances are crucial to any plan. How he gets there still is a question mark. What kind of commitment he has to this. Again, he tends to be a shapeshifter, as I've learned extensively over the weekend in different kinds of reading. Nonetheless, the bond market feels seen, and so there's a little bit of calm.
Well, they want to also make sure that this individual isn't going to be Liz Truss Part 2, which is what some of them are talking about. I spoke to Guy Johnson earlier this morning. He said the market is definitely worried that he could be left of Keir Starmer, will raise taxes on wealthy and increase unfunded borrowing. At the same time, he says, as the mayor of Manchester, he was fairly business-friendly. So to your point, maybe this individual is a little bit of a shapeshifter.
There's two things I'll say about this. One's on the race and two is on the bond market. Let's start with the race. This is not over and done with.
Yeah.
There's still a by-election to take place, and this is a seat that voted overwhelmingly leave back in 2016. And this is an individual who needs to answer a lot of questions about where he thinks the UK should sit with regards to Europe. There's going to be a lot of pressure on him in the next few weeks. So that's the race. 1. 2, the bond market. It doesn't matter for me right now who the Prime Minister is, who the leader of the Labour Party will be, because the hard decisions will never be made until the alternative is worse. And I've said this a few times. What am I talking about? When I say until the alternative is worse, I mean when they have no choice but to make the difficult decisions that will be deeply unpopular with the general public. That alternative will be when this bond market pressure builds and builds to the point that they've got no choice. So you've got two scenarios right now for me in the near term, either slow decay or very fast decay, but ultimately you end up in the same destination. They won't do the hard things, either party, doesn't matter who the leader will be, until the alternative is worse. Now, if you can come up with a better solution to all of this, I'd love to hear it, but at the moment, that's the only one I can think of. The pressure becomes so great in the bond market, they have to do things like cut entitlements, cut spending across the board, mean test things, start to do things that they don't even want to think about because they know they won't get elected.
Right now, the bond market is tending to agree with you. People talk about the Liz Truss moment in 2022. So far, you've seen bond markets at the same levels during that Liz Truss moment. Liz Truss lasted 3 days. Then it was Rishi Sunak, who also got pushed out. Then you've got Keir Starmer, who's getting pushed out. I mean, who is going to actually be able to stay there until there is no other alternative? Right now, the bond market seems to be moving in the same direction. Price down, yields up.
Did you inspire the Bloomberg Morning quote today? Margaret Thatcher, if you can't afford it, you can't have it.
There you go. You know, it's true. It's true. And the line that I've heard from Burnham, Mayor Burnham on the bond market, we talked about this last week. If you don't want to be driven by what's happening in fixed income, don't borrow the money to begin with. Don't borrow the money to begin with.
You can hate the bond market, but when you owe money, it ultimately will rule you, period, full stop.
Let's talk about tech. Much better story. Nvidia shares recovering after snapping a 7-day rally on Friday. The next test for the chip maker due Wednesday with first quarter results. Sarah Kunz of Clio Capital writing, this earnings is unlikely to have last-minute surprises. Consensus is there's still a bit more upward space for the stock. Sarah joins us now for more. Sarah, welcome to the program. What kind of things will you be looking for on Wednesday?
I'm most most interested in what's going to happen on a go-forward basis. I think we know Jensen. We know that he's very skilled right now. He's likely to get that $6 trillion valuation because the market wants it probably almost more than he does. So I'm curious, though, about their forward revenue forecast, because we are seeing a weakening in the overall AI story, and they are a huge chapter of that story.
Sarah, bigger picture, there's a line that stuck out to me in your notes. If we have to start paying what AI costs, we may use less of it. Can you just build on that just a little bit more? How important is that line to your outlook?
So you know, we saw with OpenAI, they closed Sora. What a lot of us didn't realize when we were trying repeatedly to make bad videos last year on it, is that it was costing up to $5 per 15-second video. And if somebody said to you, hey, every time you hit refresh on that video, give me another $5, even if you can afford it, you're probably not going to spend that. And so as the real cost of these things get passed on to consumers, as we see sort of a push up in the cost of tokens, the cost of subscriptions, I think you're going to find that for a lot of people and even enterprise, they're going to use a bit less of it.
Are we seeing any evidence of that, Sarah, given the fact that a lot of big companies are still pouring billions of dollars into even experimental uses of some of this technology of fear of being left behind?
Well, I think it's fear of being left behind, but more practically, it's fear of the stock price being left behind. We're seeing right now this fascinating correlation. People like Microsoft have a leaderboard saying, hey, how much money can you burn, right? And if you give me a big enough campfire, I can burn a lot of money quickly. And so I think as those things decouple, as enterprise leaders start to say, maybe we shouldn't just incentivize our engineers to burn cash, pretty literally, that you will start to see some of that pullback. But I think that that's not going to happen until the market consistently stops rewarding these big companies for spending the way that they are spending. There's no real evidence that we're getting kind of better outcomes, better tech, that even that it's really driving the layoffs. We just know that right now, if you can brag about how many tokens you're using, the market has been rewarding you.
How important is it also that NVIDIA ultimately doesn't have a monopoly, but is certainly has an oligopoly over the market, and it seems like the best consumer, the best provider of some of the chips that are being consumed? Do the competitors have any kind of inroads to make based on pricing?
Yeah, absolutely. And it's not just pricing, it's also, innovation and availability. Availability, I think, is going to be slightly less of a concern as we sort of potentially will see demand weaken. But the reality is that there are a lot of really good chip companies out there in terms of designing chips. The real sort of bottleneck, the real control is at the more Taiwan Semiconductor level, because they're kind of the only people in the world who can reliably make the chips. And NVIDIA has had an incredible run. They're going to continue to be a great company. Do I think that they are nearly as far out ahead in the lead as they were even a year ago? The answer is obviously no. Google is very deep in this space, as are a lot of other big and smaller companies.
Sarah, you write that it's going to be a temperature check on how the market feels post-China trip. It doesn't seem like NVIDIA got anything from this China trip. Is the market potentially going to sell off on that?
I think that that's kind of the point. I will long say that Jensen is the most skilled politician of our age. He's probably the only man who can consistently keep Xi Jinping and Donald Trump on side. And I think we saw some of that politicking with his last-minute fly-in for the trip. I'm pretty sure that he is comfortable with the outcome of it, even if the outcome kind of felt like nothing, because when you're between a rock and a hard place, being able to just sit there might be the best outcome you can hope for.
Sarah, appreciate your take going into a big earnings report. Sarah Kunstler of Clio Capital on NVIDIA. The president and maybe this administration holding one position. It's unclear what China's position is on those chips.
So the H200s, as of now, China has not let firms buy, even though the U.S. since January, this isn't new, since January said China was allowed to buy them. We're still waiting for the central government, the CCP, and Xi Jinping in the end to say, yeah, you can buy these chips.
Stock is up in a pre-market by 0.4% heading into earnings on Wednesday. Let's give an update on stories worldwide this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The World Health Organization declaring an Ebola outbreak in the Democratic Republic of the Congo and in Uganda. an emergency of international concern due to cross-border spread. The outbreak is caused by a rare virus strain which has no approved vaccine or treatment. Treasury Secretary Scott Bessent is calling on G7 nations and others to increase sanctions on Iran. Bessent is in Paris for a meeting of finance ministers and central bank governors. He is wrapping up an international trip that included stops in Japan, South Korea and China. The nation's largest commuter railroad coming to a halt. Long Island Railroad workers striking for the first time in 30 years. The MTA is advising people to work from home if possible, with free shuttle buses and helicopter rides available as alternatives. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Some first world problems. Helicopter rides available as alternatives.
Yeah,
what is Blade offering?
Blade is offering 95 commuter flights.
$95? Okay. It's not bad, is it?
Honestly, it might end up, look, this is a fantastic marketing scheme. When I saw that they were doing $95, because people are going to get on that thing, it's going to take them 5 minutes, they're going to say, I'm going to do this, and they're going to jack the prices up to $500.
I would never get on a helicopter.
Really?
For the record.
Why?
I'm never going to get on a helicopter.
No. Helicopter, not on a cruise?
I would get on a helicopter.
Different reasons.
I was half asleep, and I was actually trying to look at it. I didn't see $95 on that.
Up next on the program, bond yields unhinged.
Bond yields definitely feel like they're getting a bit unhinged. The bond market's actually starting to say, pay attention to all the dynamics that are happening.
Up next, we'll catch up with Kelsey Barrow of JP Morgan Asset Management, live from New York City. You're watching Bloomberg TV.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
trading week, just a little bit softer. Negative, down by 0.4% on the S&P, down by a third on the Nasdaq 100. Yields are elevated across the curve. 2s, 10s, 30s, 2s through 4%. 10s now at 460, up by a single basis point. And over in Japan, at one point, the long end of the curve up by some 20 basis points overnight. That was a messy session over in Japanese debt markets. Under surveillance this morning, bond yields unhinged.
Bond yields definitely feel like they're getting a bit unhinged. The bond market's actually starting to say, pay attention to all the dynamics that are happening. Higher oil prices, the potential impact of debt and deficits, not just in the U.S., but globally, and then the overall picture of this war is not getting resolved anytime soon.
So here's the latest this morning. Bond yields testing fresh multi-year highs. The stalemate between the US and Iran fueling inflation fears. Kelsey Barrow of JP Morgan Asset Management writing, we wonder if parts of the rates market are conflating a commodity-driven inflation shock with a broader inflationary backdrop, something that has not yet been borne out in the data. Kelsey joins us now for more. Kelsey, good morning.
Good morning.
It's good to see you. We've experienced this a number of times. We've talked about it. We had a sell-off back in March. We had sell-offs under Secretary Yellen when she was running the Treasury. Bond market really tested her. How different is this one compared to those?
It does feel somewhat different, particularly compared to last year at this time when we had the sell-off related to Liberation Day, or even the sell-off in 2022 related to broad-based inflation, demand-led inflation. And I would say the big difference that I'm noticing are the flows. So if you look back at last year at this time, when fixed income returns turned negative, you started to see retail flows also turn negative. This year, we're not seeing that. If anything, the demand for fixed income is accelerating at higher yield levels, particularly in credit and also outside of credit, for example, in emerging markets.
Well, let's isolate one part of fixed income when we talk about treasuries. Is that demand broadly even across the curve or specific segments of it?
I think it depends on where you are and what you're looking to hedge and also where you're coming from. So, a few years ago, it was all about talking about moving out of cash. And I still think looking at valuations relative to cash is an important way to anchor yourself in terms of the valuations of the fixed income market. So I look at the 10-year now, and we're approaching 100 basis points of spread on the 10-year Treasury relative to the Fed funds rate. And that is a pretty important level historically in terms of when you're looking at forward returns for fixed income, the return profile does look a bit more favorable when you're at these wide of spreads and these steep of curves.
All of these price actions and the money moving from cash into bonds makes sense if you have a reaccelerating economy. If you have an economy that actually is not in a stagflationary environment at all, but is actually really seeing positive growth and able to absorb the higher inflation. How do you push back against that scenario, which seems to be priced in across bonds and across stocks?
So I would agree. There is a risk premium being priced, and that's the reason that you're seeing the market price in hikes. Because if I think about a true hiking cycle, if the Fed's going to restart a hiking cycle, they're not just going to hike once or twice. They're going to hike multiple times. And it's going to be on the backdrop of a stronger economy, one where the inflation is not just narrowly based in commodities, but spreads to a broader part of the economy. And I think to make that conclusion at this point, there really isn't enough in the data to make that conclusion. So when I looked at the CPI and the PPI numbers, yes, face value, they're not good. They're not good for central banks. They're also not good for consumers in terms of what that means for real incomes. But then when I break it down in terms of the components within the PPI, the big upside surprise came from transportation, which is a function of commodities. And when I look at CPI, again, it's really coming from airfares and gasoline. If anything, we're actually seeing that the tariff inflation from last year is rolling out of the inflation data the way that central bankers would have expected them to. So how do we see when that cyclical turn is coming? If it's coming, I would need to see a reacceleration in wage growth. And that's not necessarily something we're seeing now.
Can you see a reacceleration in the economy without the economy participating. And I mean this by the idea of AI and the overlay and all of the spending that has contributed to inflation in a number of different components and potentially for consumers as well. Without the consumers feeling good, without them seeing huge wage increases, without them really increasing their spending materially.
Yeah, so we've been talking a lot about this idea of multiple R-stars. All of this debate around interest rates right now, I think the question people are coming to us and asking is this sustainable? Can the economy really withstand 30-year yields above 5%? And you know, the answer really depends, because if you look at certain parts of the U.S. economy, like the housing market, or look at investment outside of AI, the answer is no. I don't think that these interest rate levels are helpful. If anything, they are fairly restrictive for parts of the economy. But other parts of the economy, particularly the CapEx build around AI, you know, is really not very sensitive to interest rate policy, and that seems to be a fairly immune. And we're seeing it in terms of the issuance patterns within investment grade and high yield, all of the data center issuance that is coming out. It's changing the components of the index, the makeup of the index, and it's generally being met with strong demand, even at, you know, even at higher yield levels.
What do you think the Fed's North Star is?
I would say it's a little difficult to say, and this is the reason why I think there's another reason why yields are elevated, which is we're going through a transition where we need to understand how the new leader of the Fed is going to approach this backdrop. Now, if I were to assume continuity, I would assume that this is still more like last year, in the sense that we faced a shock and it caused the central bank to stay on hold. Not necessarily to start a hiking cycle as a result of commodity-led inflation, but to maintain policy at its current level. But, you know, this is going to be a new regime, and we're going to need to understand, you know, how he approaches these complicated dynamics.
Can I jump in? If he chooses to anchor front-end rates, does it leave the long end vulnerable? What's the relationship between the front end and the longer end of the curve?
Well, I actually think that if he were to be more aggressive in terms of hiking into a commodity-led inflation shock, that would actually result in a curve flattening. So yields in the long end would be capped, if anything, here. So we'll see.
Can I reverse engineer that?
Yeah.
So if he does choose to anchor front-end rates, does it leave the long end vulnerable?
Oh, so if he keeps...
Precisely.
Okay. It depends. I would say what you need to watch there would be inflation expectations. So far, the inflation expectations market is not saying that this is going to be a broad-based inflationary regime. But if you start to see five-year inflation swaps start to move up, 30-year inflation break-even start to move up, that's an indication of a dovish policy error, which is essentially what you're describing.
I wonder how close we are to that. Kelsey, it's good to see you. Lots to think about. Kelsey Barrow there of JP Morgan Asset Management. Up next on the program, we'll catch up with Dan Greenhouse of Solis Alternative Asset Management, Sucharita Gadali of Forrester, and Francisco Blanche of Bank of America. From New York City, the second hour of Bloomberg Surveillance. Up next.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually, will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the trend, the technology trend and the investment is real.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The economic surprises are trending up, not down.
The incoming data in the U.S. has been more resilient.
There's a lot of uncertainty about where this goes. There's more pain yet to come.
We don't think we're at a tipping point, but I do believe that the risks now are heightened.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action looks like this. Equities pulling back once again. We're down by 0.4% on the S&P, softer by about 0.38 on the NASDAQ 100. In the bond market, yields elevated once again, 460 on 10s. Numbers we've rarely seen at the long end of the yield curve in multiple decades on a 30-year, 513 this morning, with crude up on Brent and WTI. Brent crude 110 a little bit earlier in the session. We hold those levels. WTI around 107. Going into this week ahead, stacked with earnings. A read on tech from NVIDIA, a read on the consumer from Target and Walmart.
Which is going to be more important? Well, maybe for the economy and the sentiment survey coming out of the University of Michigan, it's going to be Walmart and Target, potentially, as well as Home Depot and Lowe's, particularly when it pertains to the housing market. When it comes to the market overall, it is NVIDIA, first, foremost, and last. And this is ultimately the story of the moment, which is how independent is the market from the underlying economy in the era of artificial intelligence? Do we have, as you've talked about, a two-speed economy that doesn't listen to interest rates and doesn't listen to consumer spending?
To that point, how resilient is it in the face of these moves in interest rates? 2s, 10s, and 30s elevated across the curve, not just stateside, but worldwide. And a real test starting to build now for the incoming Fed chair, Kevin Warsh.
Absolutely, and I think it was actually interesting that as Kevin Warsh was going through key hurdles in the Senate, the president sat down with Fortune magazine. This is before he went to China, and they released that interview this morning, and this is what the president had to say, basically conceding that it's okay. We might have to wait for the data to come in, and understanding that higher energy costs might actually mean higher inflation. And you said it earlier. That quote the president said about, I don't think about the financial situations of Americans. He was talking about when he was dealing with Iran and nuclear Iran. But at the same time, when you're going to Memorial Day weekend, $4.51 on a gallon of gasoline, that's going to hurt.
You know what they'll do in Washington and across the country. They'll edit out the context and replay the epicenter of that particular comment over and over again going into the midterms. As for the Federal Reserve, things have become much more finely balanced. Just check out the conversation we had with Kelsey Barrow of JP Morgan Asset Management about 10 minutes ago. Really enlightening. Are we on the edge of a dovish policy mistake or a hawkish policy mistake as some of these central banks? And the answer to that, much more finely balanced than it was a month ago.
Maybe the answer is yes. I mean, they are damned if they do and they are damned if they don't. Ultimately, it depends also on the economy, and this is really key, especially when it comes to a place like Europe, where continental Europe is facing a much bigger oil price shock. At the same time, a much lower growth rate going forward. How much are their hands tied when it comes to rate hikes? At the same time, they are signaling rate hikes more than the U.S. Federal Reserve is. So try to square that picture. In the United States, you asked this question, and I think that it is a really important one. A lot of people have been talking about it. How much is the move in the long end because the Fed has not taken away the easing bias that it has? How much is this a market that believes that this is a compromised Fed chair coming in who will be overly dovish and is skewed to the dovish mistake? How much work does he have to push against that?
A lot of work, one. Two, I don't know, to the other question. And I think this is part of the reason you've seen this move in the bond market, just a lack of clarity around the incoming reaction function of the incoming Federal Reserve Chair, Kevin Warsh. And we need that clarity, and you might not get it until the news conference a month away.
Yeah, again, incredibly important. We are going to be hearing from a whole bunch of other Fed officials this week. Do we start to see the importance being reflected in their speeches about removing the easing bias, and will that be enough to curtail the move in the long end?
It's got a free pass, hasn't it? You mentioned the comments from the president. It's got a free pass. Treasury Secretary's backed away on this issue. The president's backed away on this issue, just giving the incoming Fed chair a bit more space to say, sure, drop the easing bias, let's get back to neutral and figure it out through the summer.
They're giving him a lot of room in the beginning, in the first few months, to really just basically get used to being the Fed chair and not having to rush to cut rates. The president knows you might not be able to do it while this war is still ongoing.
5:13 on 30s this morning. Coming up this hour, we'll catch up with Dan Greenhouse of Solis as the bond market looks for stability. Sucharita Gedalia-Forrester previewing this week's retail earnings, and Francisco Blanch of Bank of America as fresh threats to Iran has crude rising. We begin this hour with stocks facing pressure following a sell-off in the bond market. Dan Greenhouse of Solis Alternative Asset Management writing, I'm not as worried as some others. Since 2024, the 10-year has averaged 4.25. We're not that much higher than average. Dan joins us now for more. Dan, good morning. Good to see you.
I wrote that a couple days ago.
Oh, things have changed.
We've moved a bit since then, so
okay.
Yes.
Has your view changed?
No, listen, no, it hasn't changed very much. We're at 460 on the 10-year. We've been here a couple of times over the last few years. If I wanted to be cute, you could argue that around 460, 470, you've had some periods of momentary equity weakness. And today, with the S&P basically at a high, borderline overbought, you could certainly have a 5 or even 6, 7% correction right about now. I think the question becomes, is this a secular shift for investors right now? And I don't think anything new is being priced into the bond market per se. Inflation obviously is turning up a little bit at levels above what the Fed would prefer. This is, I think a lot of people have been arguing for this for a while. The bond market seems to be catching on to it now. But you also have, as I'm talking, I found another point I want to mention. You also have idiosyncratic differences across the globe. You have the political instability in UK, you have the infrastructure bill in Germany, you've got a supplementary bill now coming out of Japan. The US is dealing with some version of all of that. So there are idiosyncrasies across the world. But no, at the 10-year at 460, am I secularly worried for investments? I don't think so.
Well, let's just park equities just for a moment, stay on fixed income and look at these numbers, not just in the UK, but in the US as well. I want us to talk about the US specifically. Typically in bond market sell-offs, they become somewhat self-limiting. You get to a level where people just start to freak out about growth and then things start to reverse. This time I wonder whether you need corrective action from authorities. And by authorities, I mean the Treasury. And I'm thinking back to the sell-off under Yellen. Yellen had to come out and ultimately tighten up duration, bring in a lot of issuance to the front end of the curve. And that kind of corrective action just put a lid on yields and moved the bond market in the opposite direction. Does this fall on the desk of Secretary Besson, or is it someone else's job to do something about this?
No, I don't think it falls on Secretary Besson's desk. You could probably throw 2018 in there also, when the bond market needed the chair to come out and say, maybe we aren't so far from neutral or something like that. Listen, the inflation story is very real. I think something that we've discussed on air, and other people have as well, is the oil story, which is a big part of this, specifically the sanguinity, which isn't a word, but we'll use it,
run with that. I know what you mean.
Of many market participants about what was going on in the Middle East, and the argument I and others have been making is this can only go on so long because the buffers that were in place prior to the war's start are going to run out. We had record oil on water, record inventories. The market was already 1.5, 2 million barrels oversupplied. You see this morning, I think it was the IEA came out and said inventories are being drawn down at a record pace. That we know this. Oil inventories in the U.S. are below 2025 levels, below 5-year average levels for distillates, for gasoline, for crude oil, for just about everything. So you are at the moment where you are really running out of time. And so if you don't get the Strait open, if you can't get the 10, 13 million barrels that are missing back on the market, and even that's going to take some time, there's just a structural upward pressure on oil prices, which has a very high correlation, obviously, with headline inflation. And so I think the story is coming that we've been telling for several months, or several weeks, I should say, is really starting to come to the fore now.
When does this toxic brew paint a negative picture for risk assets, given the fact that they've been divorced from everything?
So, you know, I'm not sure that I would go so far as to say risk assets have been divorced. And what do I mean by that? Well, obviously, the broad indices are at a high, but tech is doing a lot of work right now. And I think one of my favorite stats that I'm not sure people realize, although I'm also not sure that it has much value, is that there are more stocks in the S&P 500 down 20% right now than are up more than the index. So the index, let's unpack that for a second. The S&P is up, call it 8.25% year to date. It's about 170 companies in the S&P that are up more than 8.2% or so. At any given moment, you probably want that to be half and half. Half are beating the index, half are trailing the index. Right now, it's only about 170 stocks. 190 stocks in the index or so are down 20% from the high. So there is underneath the surface weakness that is related to Iran and the higher interest rates and uncertainty in tariffs, et cetera, et cetera.
Yeah, there's bad breath, and people have been talking about this, that it's been a really narrow leadership. Can that narrow leadership continue to outperform if this Federal Reserve signals that it's going to hike rates?
I think so. Well, for a long time I would have said I think so because the AI story has been so interest rate insensitive. But obviously, as we all know and we've discussed, we're shifting into a period where you've got hundreds of billions of dollars of debt issuance coming to market for a lot of the hyperscalers, Oracle being the poster child for this. I think issuance this year is probably going to be somewhere around 225 billion, 240 billion, something like that. So obviously interest rates become more of a story for this. But this is a secular investment theme, whether we like it or not. And by we, I mean bearish people, even though I'm not in that camp. But like, it's happened. It's not.
You're like we, pointing at me. Carry on.
Well, no, it's not me. Good morning, Lisa. There are people who are. Listen, now we can shift into the bubble conversation, but this is happening. Every single company, every conference call, every conference appearance, demand exceeds supply. That's from the hyperscalers to the semiconductor to the comm equipment. You've got names like Lumentum and Ciena joining the party. Ford is an AI stock now. So there's a lot going on here that thus far is completely borne out in the investment and the demand data. And when I say whether we like it or not, I mean there are people who keep pretending like this isn't as big as it appears to be. It is. It's obviously an important secular investment theme. And so again, if interest rates go higher, if the Fed starts hiking rates, I mean, that's obviously going to change the calculus a little bit. Do I think Meta is going to invest less if the Fed raises rates 25 basis points, which I don't think is going to happen? No, I don't think that changes their CapEx at all.
I mean, you also say that valuations for many large companies remain short of the bubble territory for a lot of these companies. So who do you think is in that bubble territory?
Well, I don't know.
Well, you said let's shift the conversation.
Let's. So I don't want to. It's hard to know who's in a bubble because you look at something like Micron, for instance, and I've said 100 times, I will say again, Solus, not a particularly big tech investor, but Micron has gone vertical. The PE ratio is 10, let's say. It might even be lower than that. NVIDIA, every time they report and the stock goes straight up, we comment about how valuation is coming in. In 2000, the NASDAQ was trading at 125 times trailing earnings, something like that. We're nowhere even close as a broad market to that. At the same time, we have to be honest with ourselves. Just because you're not at 2000 bubble territory doesn't mean you're not in a bubble or you can't go lower. And so I think some people take too much comfort in, well, it's not the dot-com bubble. That doesn't do me as an investor much good. The question is, when I buy a stock, a credit, whatever it might be, when I invest in a company, am I likely to realize the expected earnings stream that I'm forecasting? And I think one of the issues that investors have right now, as the market has surged to the highs that it is not only is the first quarter earnings growth number exceptional, obviously, even when you X out the investment income at the hyperscalers, but the next couple of quarters are expected to be exceptional as well. And I just, I don't want to say you're priced for perfection in the stock market. I'm not even sure I've ever uttered those words, but you're assuming a lot of good stuff in the stock market right now that has to come to pass, with, again, the caveat that this investment theme is continuing unabated by all accounts.
I didn't hear bubble in this conversation. I heard inflation repeatedly. When you talk about the economy being supply constrained and all this demand coming into the market, this price insensitive, backed by some of the richest companies on the planet, I just hear inflation, don't you?
Yeah, well, and that's why some of the numbers are what some, I mean, you look at some of the import numbers on the computer and accessories, even in the CPI and the PCE type numbers, some of that stuff is interest rate insensitive, if you will, and that's obviously putting upward pressure. There's obviously the normal stuff, airline fares, et cetera, et cetera. The inflation story is particularly interesting in the sense that obviously inflation is above the Federal Reserve's target and has been for many years, 5 years.
5 years.
We know this. Complete failure in that sense. At the same time, I'm glad Kevin Warsh brought up the alternative inflation measures, because this is something that I have followed or used in my analysis more closely than I think a lot of other people have. The idea that we would simply restrict ourselves, I'm building up to a point, that we would simply restrict ourselves to 2 items, food and energy, when in any given month, any item could be quite volatile. Why is that a better measure than Xing out the top 15% movers in any month, or just using a trimmed mean or median, whatever alternative measure you want to use? I think those are inherently, intuitively better. I know some of the data that we've done and other people have done prove that it may not be econometrically better. It may be econometrically equal, but I think just conceptually, and why I mention that is some of those measures are lower. And so I think when you look at inflation through that prism, I'm a little less worried than some other people, because I don't see inflation as being quite the sort of Damocles hanging over the consumer as maybe.
So I would say in response, the concept is great. I'd agree with you. The optics are poor and the timing's really weak, because this will be dressed up in a push to do the president's bidding to keep interest rates lower than they otherwise would be. And I think that contributes on the margin, I'm not saying it's certainly the bulk of the move, but contributes on the margin to the uncertainty around this particular Federal Reserve and what it means for this bond market right now, and the uncertainty around front-end rates and what it means for the long end. Because if you do get a Fed chair that comes in too early talking about these issues for good reasons, I believe they are for good reasons, you start to get a market that worries about the optics. And the optics are the Fed chair will be unwilling to anchor inflation expectations. Therefore, I, in the bond market right now, don't want to put in a bid. I want to sort of disengage and let 10s run, let 30s run, which to some extent is what has been happening in the last week or so.
Yeah, this is a reason why it's also going to be important to hear what the other Fed officials are going to say and how much they back those measures. I think Chris Waller is actually going to be a really important voice going forward to validate, in some ways, some of these moves. And he's talked about that, the need to change certain things, including the inflation metric.
460 on 10s this morning. Dan's going to stick with us. Dan Greenhouse there of Solos Alternative Asset Management. Let's give you an update on stories worldwide this morning with your Bloomberg brief. Vonnie has more. Hey, Vonnie.
Hey, John. Thank you. Former UK Health Secretary Wes Streeting making a pitch for a potential leadership bid. As part of his proposal, Streeting calling for Britain to rejoin the European Union, saying leaving the EU was a catastrophic mistake. Swatch closing stores and cancelling launches of its Audemars Piguet pocket watch collaboration after massive crowds raised safety concerns. The company shut nearly 20 stores throughout the United States on Saturday and cancelled events in other countries. Shares of Ryanair bouncing back from early losses in Dublin trading. The budget carrier warning of rising costs this year if unhedged jet fuel prices remain at current levels. Ryanair CEO Michael O'Leary joins surveillance at 8:15 Eastern. That is your Bloomberg Brief. John.
Bonnie, thank you. Looking forward to that conversation in the next hour. Up next on the programme, the nuclear ultimatum.
The only thing that matters when I'm talking about Iran, they can't have a nuclear weapon. It's very simple. Iran cannot have a nuclear weapon.
We're never going to let that opponent have a nuclear weapon.
Up next on the programme, we'll catch up with Bloomberg's Tyler Kendall, live from New York City this morning. Good morning.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Stacked week of earnings. Check it out. Tomorrow, Home Depot. Through the week, more on the retail side of things. You'll hear from Target and Walmart. The headline out, though, of course, Nvidia after the closing bell coming up on Wednesday. Equity futures into all of that look like this. Pulling back just a touch on the S&P. We're negative by 0.4% on the Nasdaq, down by 0.4% also. Under surveillance this morning, the nuclear ultimatum.
Can't let Iran have a nuclear weapon. It's very simple. Iran cannot have a nuclear weapon.
We're never going to let that opponent have a nuclear weapon.
The only thing that matters when I'm talking about Iran, they can't have a nuclear weapon. I don't think about Americans' financial situation. I don't think about anybody. I think about one thing. We cannot let Iran have a nuclear weapon.
So here's the latest this morning. President Donald Trump issuing a new warning to Iran, writing that Tehran, quote, better get moving fast or there won't be anything left. Bloomberg's Tyler Kendall has the latest. Hey, Tyler.
Hey, John, good morning. Well, it's clear that the White House's patience is wearing thin here as the ceasefire remains highly fragile, and we saw those renewed regional risks over the weekend as the UAE confirmed that a drone hit a power plant in the country, and Saudi Arabia says that it intercepted multiple projectiles that entered its airspace. Iranian state media the other day outlined that the latest U.S. proposal is considered a non-starter, in part because it includes no payments for war damages and would seek to unfreeze less than a quarter of Iran's frozen assets. Now, the U.S. hasn't commented or confirmed that reporting, but it is very clear that the gridlock is leading to the potential that escalation will be put back on the table, as Axios is now reporting that President Trump will convene his national security team tomorrow to discuss potential military options. It's very clear that recently foreign policy has been front and center with the war in Iran and the president's travel to China, but domestic politics are coming back into focus this week as a flurry of states hold their primaries. And while we can't say so far, actually, that many Trump-backed Republicans are winning their Republican contests, at this point, we do know that the war in Iran is compounding higher prices for voters, which is the #1 issue as we head into November. Now, President Trump says that this will be a short-term disruption in exchange for curbs on Iran's nuclear program, as you heard just there. But, John, at this point, it doesn't appear that we are any closer on getting a clearer timeline on when a deal could be reached. In fact, Iran's foreign minister in a briefing earlier this morning said that Iran doesn't want to talk about the issue of uranium enrichment. It doesn't want to, quote, discuss or compromise on that problem.
Tyler Kendall in the nation's capital. Tyler, thank you. Dan Greenhouse still with us. Dan, let's just finish on this particular story. You alluded to this in our previous conversation, that for many investors, there's a sense that perhaps this story just doesn't matter. Are you on the side of it doesn't matter yet, and we're closer to the yet?
The oil story?
Yeah.
Yeah, I think the problem for a lot of investors is probably that the doomsayers came out immediately saying this was the end of the world, no different than Liberation Day, no different than Brexit, et cetera, et cetera. And so there is certainly a level of disaster exhaustion. When I talk to investors around town, there's a level of disaster fatigue. So people could be forgiven for saying, oh, you told us everything was going to. So with that said, though, there is a math problem. And the inventory story is where it comes into fruition. There is only so much oil to compensate the billion barrels that are missing. There's only so much time that can go on where the 13 million barrels, if you will, that are missing from global supply can be compensated for with those buffers. And I think the problem is people like me who've been talking about this, there's no way to really say for sure because the buffers are hard to iron out. But you are getting to that point. I mean, we can measure the inventory data. Observable inventories, again, are incredibly low. Demand is relatively unchanged. Yes, Pakistan can shut the lights off for a little while. Yes, you can work from home in some Asian countries. But at some point, that those chickens are going to come home to roost. And I think, listen, it's not like nothing has happened. Oil prices have doubled. Before this happened, TI was $50-something. Now it's $100-something. So you've basically already seen a doubling of oil prices. It just hadn't gotten to the $125, $140 level that so many worried about. But it will get there. That is a mathematical certainty if this continues.
Today we have the Persian Gulf Strait Authority now launching an X account. Structurally, hasn't this changed? There's now going to be a toll you have to pay to go through the Strait of Hormuz.
The Emiratis and the Saudis are not going to be okay with that. And at some point, this is like, I'm not a geopolitical expert.
I agree with you, but some traders might want to pay that toll to move product.
Will pay the toll and should pay the toll are two different conversations. I think a lot of people will pay the toll. It's a tax, I got to get my oil through, et cetera, et cetera. I'll defer to Halima Croft and the people who are really on the ground in a sense that I am not. But everything I hear, they do not want to pay those tolls.
Dan, it's good to see you.
Always
Thank you,
my pleasure.
sir. Lots to think about. Dan Greenhouse there of Solis Alternative Asset Management. Crude this morning, 110 on Brent. Bramo, WTI around 107.
Yeah, and really it's the 80 days and the fact that this is bleeding longer and longer, and at what point is it a step change? Not necessarily just a slight change, but a step change in prices that shoot up to 120 and beyond.
Francisco Blanch coming up from Bank of America. What do we hit first?
Oh, Francisco's coming. He knows.
Who knows? What do we hit first? Storage bottoms in the West?
Tank bottoms, problem.
Or tank tops in Iran? That conversation just around the corner. Sucharich Gedalia Forrester looking ahead to retail earnings this week. Tons of them. Home Depot, Target, Walmart still to come.
tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We are coming off the back of the biggest one-day loss since March on the S&P 500, and we have some negative follow-through. We're down by 0.5 on the S&P. We're down by 0.5 on the NASDAQ 100. Similar move on the Russell. The epicenter for a lot of this is in the bond market right now. 2s, 10s, and 30s. New levels to think about. 4.1-ish at the front end of the curve. 460 on 10s and 513 on 30s. Yields higher again across the curve.
Yeah, and this is really stemming from the idea that you've got higher oil prices and a response from fiscal authorities, which is to simply bail out consumers rather than necessarily tighten the screws or figure out alternatives. It's sort of the opposite reaction function that you want to actually curtail demand and ease the fundamental problem. Nonetheless, here we are, and you're seeing yields respond.
I turn to energy. It's fueling the move. Brent crude at about 110. It's the front end of the futures curve. 106, 107-ish. On WTI this morning. This is where the pain started. This was the initial shock in energy, and we've been tracking it as follows: through energy, into rates. Do you see it in growth? Can we live with this kind of level of rates right now in bond markets worldwide without its absolutely hammering economic growth?
I keep thinking about what Morgan Stanley economist said, which is this is the pain point right now for markets because it is not high enough to justify growth for years, but it's not low enough to take the idea of a Fed response off the table. In other words, it creates real inflation that can be tolerated, at least for the time being, based on the fact that consumers are still spending, and there is this sort of existential spending race tied to AI that keeps going regardless of where rates are. You put those two things together, this isn't enough to cause the pain necessary to bring the prices down.
Both those dimensions of this story captured by the earnings for the week ahead. Nvidia coming up on Wednesday, the retailers in between, Home Depot, Target, Walmart throughout this week. That's the story right now in fixed income, in energy and equities. Let's get you some top stories. On our radar this morning, the Long Island Railroad workers striking for the first time in more than 30 years. A shutdown of the nation's largest commuter railroad entering its third day. The MTA advising people to work from home if possible. Elsewhere, the Treasury Secretary, Scott Bessent, urging G7 nations to ramp up sanctions and crack down on funding the, quote, Iranian war machine. This coming as President Trump expresses frustration with the state of peace talks, telling Iran the clock is ticking. And finally, Elon Musk gearing up for a historic SpaceX IPO. Sources telling us here at Bloomberg the company could file as early as this week. SpaceX is seeking to raise as much as $75 billion on a valuation of more than $2 trillion, making it the biggest listing of all time.
Following on the enthusiasm that we saw last week for Cerebras, given that everyone wants to get a piece of this, SpaceX is going to be particularly interesting. Number one, because it's an Elon Musk company, and he always tends to generate a lot of interest. Number two, it is the biggest of the big IPOs that are expected. How much more is the appetite going to be? And three, The race to space is getting more and more interesting as people say we're running out of space for data centers and other sort of AI build out. They want to launch energy up into space, whether it's nuclear energy or anything else. Everybody needs a rocket, right? You're seeing this with every single hyperscaler. They all want a rocket because they're expecting that space will have the materials, that will have the space for energy, no pun intended, and frankly, it'll be the future of exploration.
I spoke to the Blue Origin CEO about this a few months ago, and this is exactly where their head was at, and this is why they're in this race for SpaceX. It's why they're not doing commercial flights anymore, because it is a space race. And not only are they competing with each other, they're also competing with the likes of China. Very interesting that Elon Musk was on this trip with the president. I also found it interesting that we have our reporting in this scoop, but he also said at a summit he was supposed to attend in person, he was virtually, and he said because we got to get the SpaceX IPO stuff going here pretty soon. So he's basically, you know, hunkering down in Texas, working on bringing this company public.
It's funny what you see right now in the economy and what you see in financial markets. In the economy, you see supply constraints everywhere and a series of supply shocks that started with goods, the trade shock, then spilled over to labor. We saw what's happened with migration, immigration in this country. That spilled over into energy. And then when you look in financial markets, all you see is supply, not supply constraints. You see tons of equity issuance. You see lots of debt issuance, fueling lots of demand to go into a supply-constrained economy, which is why when we had this conversation earlier with Dan Greenhouse, I was just sitting there listening and just thinking, all I'm hearing right now is inflation. Tons of demand supported by financial markets going into a supply-constrained economy.
It's a cyclical problem that's overlaid with a secular goal and secular spending. At what point does the cyclical problem curtail the hopes and the ambitions of that secular goal? Right now, the bar is incredibly high simply because the promise for AI is so great and people do view it as an existential race. And that's why you're seeing prices go up, even though they usually would curtail themselves based on how much they've risen.
Some of that demand, much of it coming out of those big names, not price sensitive at all. Let's turn to retail. Walmart and Target among the companies reporting earnings this week, giving a new read on consumer resilience. Sucharita Godali of Forrester writing, Walmart remains the clear retail share gainer, while Target is still in turnaround mode. Sucharita joins us now for more. Sucharita, welcome to the program. No doubt we'll be talking about the backdrop, the environment, the consumer. But I want to start with something Lisa's talked about continuously with regards to Walmart, and that's execution. What have they done so well over the last several years?
Well, they had some pretty massive store renovations over the last several years that have just done particularly well. Anytime you do a store renovation, you tend to see an uptick in overall just sales because consumers like the cleaner environment. Products are easier to find. Usually there is some science that went into improving some degree of the store layout. And that has been a significant part of it. They also have supported their employees pretty well in the last few years with whether it's benefits for AI training or other types of upskilling. So that tends to also reduce some of the churn that you tend to see in retail. And whenever you can reduce churn, you tend to have better employees who can, kind of essentially answer shopper questions and put things where they need to go.
Sucharita, is Walmart still representative of the overall economy?
Well, Walmart is in that it is doing well right now. It is at an all-time high, and that speaks to how the economy is actually also doing as well, which is that even though there is this sense that the other shoe is going to drop at any moment and we are going to enter a recession, the major macro indicators, whether it is GDP growth or whether it's unemployment rates, are actually pretty strong. Retail spend is at an all-time high. And when retail spend is at an all-time high, you can bet that it's usually Walmart and Amazon sales that are also doing well.
The reason why I ask that, Sucharita, is because increasingly the large are getting larger and they're being more successful because they have economies of scale, because they can negotiate better rates, they can withstand these supply shocks that are repeated. And frankly, the likes of both Amazon and Walmart have other businesses. They have data that they can sell to advertisers that more effectively create a product. They have entertainment. They have their online shipping. They have a whole host of other kind of subsidiaries that can bolster their earnings. How much are they stealing share from everybody else? And you're going to see that reflected in the earnings that we get from the other retailers, Target among them.
Well, certainly Target has suffered pretty tremendously in the last few years, but that has been kind of the opposite of Walmart's issue, which is there's been execution, which has been challenged on the negative side. But at the same time, there are other big retailers that are also continuing to grow, like companies such as Costco, as an example. There's a significant amount of growth for the very, very small retailers and merchants as well. We have to remember that some of the merchants that are doing particularly well are some of those e-commerce players, whether they are Shopify merchants or whether they're TikTok sellers. And their growth rates are doing quite well right now. Because a lot of this sense of being able to discover products through social media or other internet channels is prevalent as well. This narrative of the middle being challenged, those mall merchants, the big box merchants, that's not a new narrative. It is something that many of those mid-tier companies have been incredibly challenged by because they, for the most part, sell commodities that are now available typically they're available online. And when you sell commodities and you're not pricing them in a more favorable way, you're not going to gain share. And you also have the added expense of essentially real estate on top of everything.
So, Trita, how difficult is Home Depot going to have it this week, especially given the backdrop, what's going on at rates?
Their issue is primarily an interest rate issue and a housing issue. So long as people are purchasing houses, companies like Home Depot and Lowe's tend to do well. The issue now is that people are pulling back because interest rates are too high for most consumers to actually be willing to purchase whatever is available in their markets. And as a result of that, Home Depot is going to likely have some softness, but they are a cyclical business. This is something that will likely rebound once interest rates are more favorable for consumers.
Sucharita, appreciate your time. Going into a big week ahead. Sucharita Gadali there, Forrester. Home Depot down this year by 13%. Things were set up so well, and I really do feel for anyone that's working in and around residential real estate right now because things were set up so well. Yields were coming down. We were about to get some big tax refunds going into people's pockets, into their bank accounts, which would set the stage for a cyclical upswing. And then all of a sudden, get the energy shock, yields go the other way, financing costs are going north, people are spending that refund on something else, on higher energy prices, and we were about to lubricate the very stiff wheels of the housing market, and then all of a sudden things stiffened up pretty quickly.
Right now, mortgage rates, 30-year mortgage rates in the United States are at 6.36%. That is the highest level going back to September of 2025, before the Federal Reserve cut interest rates 3 times. It raises a question of what the signal it is that is being sent and how much the housing market ends up bearing the brunt of these conflicting economic cycles that are overlaid on top of each other.
And a double whammy for individuals involved in the real estate market. Contractors I've spoken to last year were concerned about tariffs. They said things like wood coming from Canada were going up. All of these home appliances were going up because of tariffs. And now this year, it's the energy story. So really, it's been challenging.
Tough for the builders, tough for Home Depot, tough for Lowe's. See it across the board. Home Depot and Lowe's down on the year so far. Let's give you an update on stories worldwide this morning with your Bloomberg brief. Standing by, here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. New details emerging about President Trump's meeting with Chinese President Xi Jinping. China agreeing to buy at least $17 billion worth of agricultural goods annually through 2028. The Trump administration also saying the country will set up boards of trade and investment with the United States. Elon Musk says he wants to get the SpaceX IPO underway pretty soon. Sources telling us here at Bloomberg the company could file as early as this week. Musk's company is seeking to raise as much as $75 billion on a valuation of more than $2 trillion, making it the largest IPO of all time. Aaron Rai making history at the PGA Championship, becoming the first English-born player in more than a century to capture the title. Rai made 6 birdies over the last 10 holes, taking the lead for good on the 13th hole and securing a 3-shot victory. The 32-year-old finished at a 9-under par, 271. And that is your Bloomberg brief. John.
Vonnie, thank you. Do you want a cool story? More than 20 years ago, I'm on a golf course. And me and my friends, average golf players, some of them much better than me. And there is a small kid playing golf on a par 3, using something like a 3-wood or a 5-wood, and we get talking to the dad. And the dad turns around to us and he starts saying, it's about course management. He's too young to really think about hitting the green from here. I want to think about how he's going to play the hole and take it from there. Kid must have been 6, 7, 8 years old. The mechanics in the swing, though, really, really good. And we started to hear more about him in the years after that. Aaron Rai, PGA champion, yesterday afternoon. That was that kid. How cool is that?
That is very cool. Did you get his autograph? You should have
6
been like,
years old.
What,
if
as a
his
kid?
dad, if his dad is over there planning course management, I'm getting that kid's autograph.
Was he wearing 2 gloves at 6 years old?
I don't remember that. Apparently that's because of the cold. But they've got a great story, fantastic story, and I'm really, really pleased to see it. Just absolutely awesome. Up next on the program, the Iran war weighing on wallets.
The Strait of Hormuz, really all points lead back to that. Gas prices are too high because of that. So as soon as we get that straightened out, we will get back to the kitchen table issues.
Up next, we'll catch up with Francisco Blanche of Bank of America, live from New York City. You're watching Bloomberg TV.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard, oh boy, can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
Just a bit of a turnaround in crude. Check it out. Brent down to about 109, was at 110, north of that level. Similar story on WTI, now down by about 0.4%. As you get that turn in crude, you get this turn in yields. Yields down across the curve, 10's down by a single basis point. And this move in equities, just a slight pop off the low, almost unchanged on the session, now down just about 0.2% off the back of headlines from Iran.
These are very peculiar. Tasnim is reporting that the U.S. is proposing a temporary OFAC waiver until there is a final deal, basically meaning that Iranian crude would get a waiver so they could sell in the open market. Remember, in the middle of March, the Treasury Department granted the Iranians to sell crude that was already at sea. I just find this so interesting because at the same time, Treasury Secretary Scott Bessent is giving the Europeans lip service at the G7 in Paris, telling them they want them to join in on sanctions for illicit funding and the selling of crude, et cetera. At the same time, they're going to the Iranians and saying, if this is correct, by the way, we need to talk to the White House about this. This is coming from Iranian press, but the market certainly thinks this is credible.
We have got the perfect guest around the table to talk about this. Francisco Blanch of Bank of America joined us now for more. Francisco, good morning.
Good morning, John.
You've got a decent understanding on where we are right now. How big is the deficit for the crude market at the moment?
We have a pretty large deficit. We're running around 15 million barrels a day short, 15% short of what we need to see for prices to stabilize, go down to $60, $70 a barrel. So it's a big gap. And obviously, measures like this will help ease market pressures. And of course, we are going into peak demand season, which makes the deficit potentially even greater. So yeah, so I think obviously, look, it's all about the Strait of Hormuz. Can it reopen soon or not? And we've been talking about this now. I guess I feel like we're into the 11th week, 12th week.
Feels like the 11th year.
The 11th year, 11th year, 12th week. I don't know. But I think what's interesting is I think the news over the weekend are very good news. Also, what we heard from on the agricultural side, because at first it felt like the only agricultural discussion was rose seeds, but now it's actually corn and it's wheat, and all of that. I think it's going to provide market relief. So I think it's a sign of goodwill that China wants to cooperate, and I think it's important to understand. I mean, China is the world's largest exporter. The last thing they want is to see a global recession. They need that export market.
Well, let's start with oil, and let's assume a lot of things. Let's assume nothing changes, and the existing strategy of the US is to maintain the blockade, to get Iran to suffer, because they believe we're very close to breaching storage capacity. Given the inventory draw that you're seeing globally at the moment, if I had to ask you, assuming everything else remains the same, what happens first? Tank bottoms in the West or tank tops in Iran?
I think tank tops in Iran are pretty close. Then again, we think that Iran can survive roughly with one vessel a week, a 250,000 barrels a day. That they don't really need that much money to pay their bills. On the other hand, also we've seen Iran basically shutting down exports for about 4 years after the repeal of the JCPOA initially during the Trump 1.0 administration. So I don't really think that the Iranians, because they have to shut down fields, they're necessarily, I mean they've been there before, kind of thing, right? While us in the West, the challenge is that obviously we're going to have a much more challenging summer season, right? And people are not going to be happy. So not only you're paying higher prices, but you may have availability issues, and that can be a problem.
Are we at tank bottoms anywhere in the world right now?
So some of the countries in Asia are really experiencing a lot of strain. If you're a large energy importer with a large current account deficit, say like India or others, you are running into a lot of problems, right? I mean, Japan's seen a collapse in inventories. We've seen a number of Asian countries as well in the same position. This is primarily a Pacific crisis. It's not an Atlantic crisis yet, and that's why we haven't felt as much pain in kind of Europe, U.S.
We're going into Memorial Day weekend, and AAA says that there's going to be tons of people still on the road as these gas prices aren't holding anyone back. We're seeing the highest gas prices in 4 years. At some point, do you expect the U.S. to hit $5 a gallon? At some point, Trump might own, on record, the highest gasoline prices, overtaking Biden.
Well, so it's hard to say. A lot of it's going to depend on some of these measures, whether you can move barrels through Hormuz or not. But ultimately, we are in a situation where, of course, the U.S. consumer is in a better position than most of the world. And remember two things, right? So first, the U.S. is a net exporter of energy. So there's companies in the U.S. making a lot of money on the back of the higher prices. So that's number one. And number two, as I said, countries around the world have, in general, lower incomes than the U.S. So U.S. consumer is a very wealthy consumer, right? The Indian consumer, on the other hand, is a whole different story, right? So the shortages are happening. They're just not happening here because of the income and because of the availability.
There was a sense when we started this, if this conflict went on for 6 weeks, it would be a problem. Then it was 8 weeks. Now we're at 80 days, and people are saying we still can manage it. And it's because the supplies from the U.S. have been more than we have previously expected. There was more supply on the sea. Are we reaching a point of a step change in prices?
We could be, I would say, almost any week, right? So there's three potential paths here. There's the peace agreement, which I think will allow us to maybe average $90 a barrel on Brent throughout the rest of the year. There is the continued ceasefire with a double blockade, which I think eventually will get us higher. And I think we'll probably be 120, 130 over the course of the next few weeks if the ceasefire doesn't end. And then if we go into late June, 4th of July, we could be well above that, right? And then there is the war escalation scenario where things can get a lot more shaky with prices going up pretty substantially. Because the most important thing, remember, is not so much how much oil is coming out of Hormuz right now, which obviously impacts prices, but how does the war impact the forward balances? That's the key, right? So if we end up seeing facilities in the Middle East being hurt again in a meaningful way because there is escalation, that's going to alter not just the gap that we have today that people expect to kind of clear out as soon as Hormuz clears out, but the future gap.
So 2 out of those 3 scenarios are significantly higher oil, significantly above $120, $130 a barrel. Why do you still have the average Brent price being $92.50 for the full year?
Well, because I think President Trump's been guiding us to that this war is almost over. That this, we are going to see the reopening of Hormuz, and I think that's generally what the market believes. I think the narrative has been strongly geared towards the idea that it's in everyone's interest to reopen Hormuz. And again, I mean, today we're just mentioning a small pullback. I mean, it's good news that China wants to collaborate with the U.S. and try to get the world economy back in shape again. But we are drawing from inventory. So I think there's an assumption that this is so big that ultimately the powers that be will coalesce together.
Is that news, Francisco, or speculation? Is it news that China wants to help, or is it just speculation they will?
Well, I mean, if they're buying U.S. agricultural products, presumably that's one step forward, right?
We hope they take a few more. Francisco, thank you, sir. Francisco Blanch there of Bank of America. I think everyone hopes they take a few more steps forward and help us get this thing moving again.
Right. Remember, it's the Chinese that told their firms that they can ignore and shrug off U.S. sanctions. And the president said he's going to consider maybe lifting some of those sanctions when it comes to those Chinese refineries, those teapots that buy Iranian crude. When it comes to agricultural purchases, though, this has been going on for months in terms of a sidebar discussion between the USTR and China to buy more, because that's what this whole trade war was about.
You were there. How strange was this meeting?
It was pretty strange. Yeah.
What was strange about it?
Strange are all the CEOs that just, some of them randomly last minute on a refueling stop decided to join the president. And also, I found it so odd. I mean, China obviously wants to dominate the narrative. It's on their turf. But to come out with a read at why the principals are still in a meeting, I thought was very assertive. And I expected more pushback from the president of the United States.
Pretty incredible. Brent crude this morning, just about trimming that turnaround. We're back to about 109 on Brent. WTI at 105. Coming up, we'll catch up with Liz Thomas of SoFi. We'll talk to the Ryanair CEO, Michael O'Leary. Look out for that conversation. Veronica Clark of Citi on why they still think this Fed cuts rates this year. And Colin Martin of Charles Schwab. The third hour of Bloomberg Surveillance just around the corner.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk
about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What continues to drive the market higher here is the tech and the AI narrative.
We are starting to enter the middle game of AI.
It's not bubble-ish valuation.
This is an AI revolution. The underlying inertia right now looks like it's pretty set to continue for the foreseeable future.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your price action scores look like this. Just off session lows, we're down by 0.25% on the S&P 500, negative 0.2 on the NASDAQ. Just off session highs across the yield curve, 2s, 10s, and 30s, still close to multi-decade highs at the long end of the curve on 30s this morning. 5, 12, 20. Supported earlier on by moving crude, 110 on Brent. Just off those highs now this morning, back to 109.
Yeah, Mike Wilson over at Morgan Stanley said that this is becoming a limiting factor for the stock rally, how high oil prices are and how high rates are as a result. Going on to saying that bond markets need a lasting resolution to the Iran conflict before rates can come back. Right now, this is not about demand destruction. This is purely an inflationary story, and that's how it's being treated in the rates.
Certainly not seeing a solution at all this morning, are we? Through the Strait of Hormuz or in the Middle East. The pressure building on G7 allies to maybe ramp up sanctions on Iran? Or is it the other way around? A report from Iran just moments ago indicating it might be.
Sounds like the United States wants the Europeans to ramp up sanctions while they unwind them during what the semi-official news agency in Iran is saying during the negotiating period. The U.S. basically is offering, according to Iranian media, that they will waive the sanctions. So basically allowing Iranian crude to hit the global market. This would be a huge deal, but also not unprecedented. What did they do in the middle of March? This administration allowed just that.
Help me understand this. Are we negotiating an end to the war, or negotiating the terms to negotiate an end to the war? What phase are we in right now?
Right now, we are negotiating terms to get to the negotiating table to end the war. When you get to a negotiating table, especially when it comes to things like nuclear, you're going to have nuclear scientists on each side that need to come to the table and join them. This is going to take months, and I think obviously bleed into next year.
Francisco Blanche put out 3 scenarios. One of them is that there's de-escalation, things get moving through the Strait of Hormuz, and you get to his call for $92.50 a barrel. The second scenario is the blockade continues, and then you end up in this zone where oil prices just creep higher. It is boiling the frog as the tank bottoms get closer and closer. And the third scenario is another hot war, which could potentially destroy facilities and cause oil prices to spike well beyond what anyone is projecting right now. You put those 3 scenarios together, it is uncomfortable heading into the driving season, as you've mentioned, and at a time where already we're seeing some of the stockpiles get depleted.
I think I can say on behalf of everyone, we all hope we avoid scenario 3. Big time. We don't want to go back to that. Crude this morning, slightly elevated, but off session highs. The week ahead shaping up as follows. Lots of earnings, including numbers from NVIDIA. And on the consumer, this is an important read now. Away from the economic data, what are the companies seeing at the corporate level? Home Depot, Target, Walmart through this week.
Walmart in the last reading said that they were starting to see weakness around lower income consumers and that they could really feel that. Do you see that even more so now? And do you see that reflected in the likes of Target? Home Depot and Lowe's, a slightly different story given the pressure, the cyclical pressure that the housing market has been under. We keep going back to, though, how much is the Walmart of the world going to be truly a read on the consumer versus adaptation of some of the new technology and consolidation of market power?
It's a really important week as well because we're going into Memorial Day weekend, and we're at $4.51 a gallon, and this is going to be one of the highest, most expensive Memorial Day weekends American consumers are facing going back in years. So we're going to get a lot of different reads this entire week on where the American consumer is.
Look out for those earnings reports from the big retailers through the week ahead. Coming up this hour, we'll have a conversation with Liz Thomas of SoFi with stocks under pressure over the past few sessions. We'll catch up with Ryanair CEO Michael O'Leary as higher fuel costs start taking a bigger toll, and Veronica Clark of Citi on why the Fed could still cut interest rates this year. Not once, not twice, but maybe 3 times still the call over at Citi.
There is this belief that the economy is going to turn in a massive way, and it's going to be led by the labor market, and that's been the call over at Citi, and that's been the call at a number of other places. Overtaken by events? At what point does that end up becoming a theme?
I don't even think the President of the United States, who really wants to see interest rates cut more than anyone, I think, in the world, even agrees with that. In this Fortune magazine interview, he's saying you can't really look at the figures until the war is over, basically resigning to the fact that he may have to wait for the Fed to cut.
The 2-year, just around 4.1%. in this morning's session. We begin this hour with stocks inching lower and global bond yields still near multi-decade highs as inflationary fears continue to persist. Liz Thomas of SoFi writing, the fundamentals are still supportive of equities. The AI narrative is in the driver's seat, but moves in yields are finally starting to bite. Liz joins us now for more. Liz, welcome to the program. You have described this as a risk-friendly environment. Does this bond market change things?
I think it starts to change things. I mean, we've got the 10-year well above 450 now, and that's been the level that equities have struggled with for much of this cycle. And we're seeing equities struggle with that pretty in tandem with it moving above that level for the last couple days. So I think what's happened in the last week is we obviously got some hot inflation prints last week in the form of CPI and PPI, and the equity market started to realize, okay, you know what, this war is going to last longer than we'd hoped. It's starting to show up in inflation numbers. It's likely to continue showing up in inflation numbers. The bond market responded accordingly, as did rate cut or rate hike expectations for the Fed. And now we're having a little bit of a re-rating in the equity space. That said, we still have the AI narrative. We have earnings momentum and earnings strength driving most of the bus, and that's what is keeping multiples in an elevated place at the index level. That's what's keeping risk appetite healthy, and I think these two narratives where we've got uncertainty from the war but optimism from AI are going to continue to argue with one another, and right now AI continues to win.
Is there a level at which rates crimp the spending desires of some of the big tech names?
At this point, I don't think that that's going to be a major point of contention. I don't think that they have enough debt yet they could get there, but I don't think they have enough debt yet for that to be something that slows down CapEx. I think what you'd have to see is an economic response in the consumer in particular. And so far, we've seen consumer behavior change. So consumers are making difficult choices based on where prices are, but there hasn't been demand destruction. And you're continuing to see consumers spend on services. So travel has not suffered despite there being such a rise in airfare. Restaurant traffic has not really suffered despite rising food prices. You're seeing things like durable goods slow down, so it'll be interesting to see what Home Depot and Lowe's report this week. But we haven't seen the consumer stop spending. And I've been saying for much of this cycle, too, that the consumer keeps spending because the consumer sees a labor market that is still showing people as employed. And even in the last month, we saw labor data start to pick up a little bit. So I think begrudgingly, the consumer has held on to their spending trends. If the consumer slows down and it starts to take a bite out of earnings more broadly, then you see a capital markets hit, and then perhaps down the road, I don't think anytime soon, but down the road, then maybe a slowdown in CapEx spending. But I want to caveat that with the fact that at some point, CapEx spending, the growth in CapEx has to slow down. It can't continue at this clip, and that doesn't mean that something's broken or something's wrong.
If you do think that people are still spending, and they will continue to, even with the oil prices at this rate and with bond yields where they are, then do you think that it's a good opportunity to go into the more cyclical aspects of the market, the equal weight, given that that's been underperforming pretty dramatically? Or do you want to stay with big tech as the one theme that will be the stalwart through all of this?
It's a good question, and the real question for investors right now is, if it is in fact a bubble, and if we are in fact getting towards, let's say, the middle part of that bubble, nobody knows when it will pop, if it does pop. But in the meantime, you still want to be exposed to that theme that's driving optimism in the market. So the question is, as you have exposure, as I'm going to assume most investors do, you manage your positions at this point. This is about risk management, but maintaining exposure to AI, to tech, communications, and some of those consumer discretionary names that are very AI adjacent. But making sure that as prices rise, you're starting to trim that and manage your exposure to particular names or particular groups, right now the semiconductors, for example, and then taking that capital and redeploying it into areas that I think are set to benefit from AI, but just haven't yet to the same degree. And healthcare would be a place where I would put some of that capital.
Healthcare continues to come up. What other sectors are potentially going to be the first ones to win this race in terms of the benefits from AI?
Well, I think some of the larger sectors like industrials can. Over time, I think healthcare actually ends up being the largest beneficiary. Now, it'll take a while, but I think some of those larger sectors, as I mentioned, industrials, hopefully financials as well. But right now, the cyclicality ratios outside of tech aren't really showing that strength yet. We've got this momentum factor that's really driving everything, but it's not reaching into other sectors. So the broadness that we think we saw earlier before the war has not returned yet. And I'd like to see some of those cyclicality ratios pick back up. So things like consumer discretionary versus staples, banks versus utilities. I'd like to see some life out of those. Transportation come back before I would really deploy into the cyclical areas of this market.
Liz, good to see you, as always. Liz Thomas there of SoFi. That last note is really important. That's the debate right now. Do you catch up or do you catch down? Jonathan Krinsky of BTIG, semis are likely to catch down to the rest of the market as opposed to the other way around. Now, he's a technical strategist, and I have to say, my words, not his, he sounds super bearish right now, just going through his coverage of things over the last week.
Yeah, he's been incredibly bearish in terms of the equal and opposite reaction of what we've seen in terms of a hyperbolic move. He cited Eminem. Oh, there goes gravity when he was talking about what he expects. But at a certain point, you start looking at this and saying, so someone is wrong, right? Either we are underestimating what AI is going to do, or we're overestimating it and this is overpriced. But if we're underestimating it, the scope of change elsewhere maybe is that much more that we have to think about.
The S&P this morning down by a little more than 0.1%. Let's get you an update on stories worldwide with your Bloomberg Brief. It's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. Oil prices reversing earlier gains. Iran's semi-official news organization Tasnim reporting the U.S. is proposing a temporary waiver on Iran oil sanctions until a final agreement is made. Tasnim citing a source close to the negotiating team. A major power deal may be on the horizon. NextEra is discussing a mostly stock deal for Dominion Energy. Sources telling us here at Bloomberg the deal would value the company at about $66 billion. NextEra's shareholders would own about 75% of the combined company. And Ford shares rising in the pre-market. The car maker announcing a 5-year framework agreement with EDF for battery storage systems. The deal could lead to up to 20 gigawatt hours of power to support grid resilience across North America. And that is your Bloomberg Brief. John.
Funny, thank you. That name has become one to watch. Up in a pre-market by 6%. Up next, the morning calls plus the Ryanair CEO, Michael O'Leary, as higher fuel costs begin to bite in the industry. An absolute legend of that industry joins us next in the studio. Looking forward to that. From New York City this morning, good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Interested in what's going to happen on a go-forward basis. I think we know Jensen. We know that he's very skilled right now. He's likely to get that $6 trillion valuation because the market wants it probably almost more than he does. We are seeing a weakening in the overall AI story, and they are a huge chapter of that story.
That was Sarah Kunz of Clio Capital on the program a little bit earlier on, going into earnings from NVIDIA. Those numbers drop on Wednesday after the close. Ahead of the opening bell later on this morning, about an hour and 15 minutes away. Equity futures slightly lower, down by 0.2% on the S&P. On the Nasdaq 100, down by a tenth, coming off the back of the biggest biggest one-day drop we've seen in the last month, going all the way back to March 30th. Some negative follow-through, just trimming the losses in the last hour. In the bond market, yields still elevated, very close to multi-decade highs. The 30-year around 512, supported by this move in crude. Brent, the front end of the futures contracts, 110 earlier on this morning, 109.65.
Yeah, the idea that it was able to shake off that one report gives you a sense of the path of travel. This is boiling the frog. We keep repeating that over and over again as the blockade remains closed for 80 days.
Keeping with that blockade, and it doesn't seem like things are going to change anytime soon.
No, but it's very interesting that the Iranian media is reporting that part of the negotiating process was that the United States would give some OFAC waivers, basically allow Iranian crude to be shipped. This would just get to the table, basically as maybe an olive branch of goodwill to start the process to wind down this war. Very interesting, though, because the Treasury Secretary is telling the Europeans they need to up the sanctions. Yeah, so they're kind of talking about both sides of their mouth. We obviously need the White House to clarify.
That's how the stage is set in the commodity market. Let's get you some morning calls. First up, KeyBank raising its price target on Nvidia ahead of earnings, expecting higher shipments of the company's most advanced chips. Your second call from Bernstein initiating coverage of ARM with an outperform rating, saying the company will benefit from a renaissance for CPUs. And finally, Citi raising its price target on Intel to 130, seeing the CPU market growing 35% annually in an updated model. That stock is just inching higher by 0.1%. Elsewhere, let's talk about Ryanair. Shares rising after posting a record full-year profit. The budget carrier warning of rising costs this year from, guess what? Higher fuel prices. Joining us now, legend of the industry, the Ryanair boss, Michael O'Leary. Michael, good morning. Good to see you. Come on, we've been friends for a while.
You're a legend.
Fart of the industry.
How would you describe yourself? Old fart?
Old fart, I think, yes.
I think it's fair to say...
Aging dinosaur.
You've seen it all, sir. Have you seen something like this before, the situation?
About 5 years ago, the Russians invaded Ukraine. 20 years ago, the second Gulf War, the first Gulf War, 9/11. Yeah, this happens regularly within our industry. That's why in Ryanair, we typically hedge 80% of our fuel. We're 80% hedged out to March 27, $67 a barrel. We're in great shape, apart from the fact our share price has tanked in the last 2 weeks because they're an airline, oh, what the hell. We've just reported record full-year results, 208 million passengers, 2.26 billion euros profit after tax, spitting off cash to shareholders, share buybacks. And with a bit of luck, if this continues, although we can all have a debate how long we think this will continue in the Middle East and with the Straits of Hormuz. Some of the flaky competitors in Europe will get taken out in carrier baskets by about September, October, because they're not hedged on oil and they're borrowed up to their eyeballs in net debt.
Are you ready to buy?
We are certainly ready to buy cheap aircraft, if anybody's got any cheap aircraft. I'm really excited. We are about to get the first 10 of our MAX 10 aircraft, first 15 of our MAX 10 aircraft from Boeing in the spring of 2027. 20% more seats per plane, burns 20% less oil. Like, the technological efficiency of the new engines is remarkable. And we will take, we've ordered 300 of those from Boeing. We priced them during COVID, so we've basically stolen them. And they will transform even our operating economics in Europe for the next decade.
So are you interested, though, in buying a carrier in its entirety, aside from just their aircraft?
There is nothing in Europe you would want to buy. It's all crap. It will go bust, in the not too distant future. Europe is inexorably, moving the same direction the US did 20 years ago. 3 large connecting carriers, BA, Lufthansa, Air France, KLM, they are making out like bandits at the moment because all the long-haul connecting traffic has switched off the Gulf carriers and is going on those legacy guys. Short-haul, Ryanair will continue to dominate the short-haul space in Europe because we have much lower fares and much lower costs. We're the only really low-fare, low-cost carrier in Europe. There's a few other low-fare, not-so-low-cost carriers in Europe, but they're all good too. They're all going to go the same way as Spirit and Frontier in the States.
That's what I wanted to ask. It seems like the model in the U.S. is really struggling. We had Spirit go bankrupt. There's talk of mass consolidation among some of the other low-cost carriers, and this idea that every consumer is expecting higher quality and that is what's generating a lot of the revenues. How does Ryanair succeed in that environment, in that demand backdrop?
I mean, the problem for the last 20 years in the States is there's really been no low-cost carriers anymore. I mean, we copied out this formula originally from Southwest back in the late 1980s when Herb Kelleher was in his pomp. Southwest were charging $10 fares. Now Southwest's average fare last year was $140. It's not a low-fare carrier anymore. If you had a real low-fare carrier here in the States, as Ryanair is in the US, our average fare last year was $40. There would still be very strong demand because the main airlines here, I mean, they've had control of the supply in the market for the last 20 years, and they've been pricing up. The cost of air travel in the States is incredibly high, particularly given that you don't pay for ATC.
Could you expand into the U.S.?
No, absolutely not. We're too busy expanding in Europe and in those countries around Europe. There is so much growth available to us in Europe. You look at it, last year we grew 4%. We're the biggest airline in Europe. We grew 4% to 208 million passengers. This year I grow another 4%, 216 million passengers. And in the next decade, with these MAX 10 aircraft, I'm going to grow to 300 million passengers, all in Europe. I mean, Europe is the best playground for low-cost airline that you could possibly imagine. A couple of big, useless legacy airlines charging more, charging annual salaries for their long-haul travel, but nobody able to do the low-cost stuff. We do the low-cost stuff well. We're cheap Irish guys, And so we do it well with the with an order for 300 really fantastic aircraft
now
coming
too.
from
You used
Boeing.
to be so mean back in the 90s.
Which?
You used to be so mean. It was brutal. Do you remember that?
Yeah.
Well, we were never brutal.
Tough.
We were cheap and we were cheap and mean. Now we're just cheap and cheerful. New aircraft, on-time flights. Huge, I mean, last year we were record customer service metrics. Customer service satisfaction went up from 86 to 89%. I never thought I'd see the day when I got more than 50% customer satisfaction, but hey, who knew?
Can I ask you, where are Europeans traveling to this summer for vacation? Do they want to come to America anymore?
No, sorry, that's not true. Yes, they do, but the problem is that the cost of long-haul travel has got very expensive. So there isn't much competition across the Atlantic between the European legacies and the US majors. The Gulf carriers were the real disruptors for the last 20 years, and they have, their capacity's been halved in recent months. So a huge amount of Europeans will holiday at home in Europe this year, in Portugal, in Spain, in Italy, in Greece. A lot of Americans are still coming to Europe, for the quality, for the sunshine, the culture, and the alcohol, and long may they continue to travel. But I think there's a real sea change this year of people who would historically have gone to the Middle East or using the Middle East carriers to connect to long haul, probably going to stay at home in Europe this summer.
When will Europe run out of fuel?
Jet
fuel.
It won't. There was a real concern, I think, back in April. There was real worries over supply, jet supply. The jet supply has now, and we met with all of our fuel suppliers in Paris last week, there's no issues over jet fuel supply right now through till the end of September. There's one issue in the UK, Kuwait, which is the subsidiary of the state of Kuwait, have about 30% market share of some of the airports in the UK. Even they now are resourcing that supply. Most of Europe's Jet A1 supply comes from West Africa, the Americas, Norway, and the lifting of Russian sanctions has also eased the supply of Jet 1 into Eastern European countries.
So you don't seem concerned with what's going on right now with the conflict in Iran?
I'm very concerned about the price of oil. But I don't believe the conflict in Iran will have any disruption on European jet supplies. The question for us is, how long will the Straits of Hormuz remain closed? I mean, we gave guidance this morning. If it remains closed till March 2027, our unit, because of our unhedged 20%, our unit cost might rise, mid-single digits this year. Nobody believes.
What are you hedged out to? Can you just explain your current hedging strategy? What are you hedged out to?
Jet fuel. We've bought 80% of our jet fuel requirements, John, out to March 2027 at $67 a barrel. So we're sitting, we're in great shape. Great position. But nobody really believes that the Straits of Hormuz are going to stay closed until March of next year. It's just we don't know when they're going to reopen. Iran is going to starve if they don't get it ready. The Straits of Hormuz reopened in the next couple of months. The midterm election season kicks off on Memorial Day at the end of May. Trump is going to lose the House and the Senate if he doesn't get this resolved and reopened. But the timing is, none of us know when the timing will be. But, I hope it's sooner rather than later. But if it becomes later, say it's, if something happens that none of us expect, the Straits stay closed till September, October, November, then we are looking at, our unit costs will be up about 5%, but you'll be looking at kind of airlines failing all over Europe on the way out.
Who's failing?
Well, I can't really name them, but, some of our low fare but not so low cost competitors.
EasyJet, Wizz?
I don't think EasyJet will fail. I don't think they'll make any money this year. Wizz could well be a candidate for failure. Air Baltic, which was recently bailed out by the Latvian government, gave it a 30 million loan to get them from June through to August. But they have to repay the loan in August. I mean, good luck with the Latvians trying to get that repaid at the end of August. So I think there will be casualties. But again, a lot depends on how, you know more about this than I, how long the Straits of Hormuz remain closed. When can Trump declare a victory and, kick off the midterms? And I suspect it's probably going to be the end of May, maybe early June. But what the hell? I mean, if my predictions were any good, I wouldn't be working in the airline business.
Doing something else.
I'd be working in a proper functioning business like Bloomberg.
I'll get it right
with
this time.
With your rock star salaries.
I'll get it right this time. Michael O'Leary, old fart of the airline industry. Boss of Ryanair. Michael, good to see you, buddy. Thank you,
Good to see you, John.
Thank
and
you.
ladies, thank you.
Up next, Veronica Clark of Citi.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up to the minute news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Michael O'Leary should just guest host the programme. Maybe you just host the programme.
I was about to say, he can take my
watch.
spot. Everyone's Exactly. messaging, this guy's hilarious.
I'm humble enough to say I could do better.
I'd happily watch that programme. Equity futures on the S&P this morning, firmer by 0.1%. Off the lows, we're still negative by 0.15%. On the Nasdaq this morning, we're down by 0.1%. On the Russell, negative by 0.1. Things have turned around in the last 90 minutes or so. With this move in the bond market, off the highs, yields at the moment on 30s, 512.82, still up a single basis point, 10 still around 460. Bit of an unwinding crude as we came into work this morning here in New York around, what, 4 a.m., 5 a.m.? That's sad, isn't it? Brent crude was north of 110. 109.42, 43-ish right now, up by 0.1%. Some news coming out of Iran that maybe the US is prepared to do something on sanction waivers to get talks going again, which is hard to get your head around.
A temporary waiver on Iranian oil sanctions until there is a final agreement, which how long could this final agreement take? So basically a way to push the Iranians to the table. Potentially, this is coming out of Iranian state media. I find it just fascinating because it's mere hours after the Treasury Secretary in Paris at the G7 finance ministers meeting. It's giving the Europeans a little bit of a smackdown about how they need to be tougher on Iran when it comes to sanctions, when already this administration in March gave a waiver for Iranian oil at sea. So, talking out of both sides of their mouth.
You said it earlier on. Are we negotiating terms to end the war or negotiating terms for negotiations to end the war? And it feels like we're in a much, much earlier phase of negotiations based on some of the evidence we're seeing so far.
Yeah, where's the progress? And ultimately, people aren't seeing it, which is why the blockade has gone for 80 days and why people don't see an end to it. That was the sea change over the weekend, is that China's not going to stop it, and people aren't seeing the exact end other than either an escalation or some sort of sea change that we haven't just seen yet.
What a difficult moment for the incoming Fed chair, Kevin Walsh. Yields at multi-decade highs, energy at multi-year highs, pressure building to cut interest rates from the president at least, and maybe that has cooled off somewhat, and a committee that's very, very fractured. That's a difficult meeting a month away.
You know, I think it would be a good time to get laryngitis. I think just say, you know, honestly...
Right, can't do the presser.
Yeah, it's really tough, I'm sorry.
Havanta virus.
That's something else. Don't wish that on anyone. Don't wish that on anyone.
Well, then he really can't show up, though. Right. That's all I'm saying.
Okay. That news conference a month away with Kevin Walsh. Policymakers facing a growing divide of the Fed's approach to interest rates. Wednesday's FOMC minutes expected to show divergence over the central bank's easing bars as the Fed prepares to enter a new era. Bloomberg's Enda Curran joins us now for more. Enda, welcome to the program. Kevin Walsh, at a really difficult moment. Just how divided is this committee?
Well, I think the minutes on Wednesday will reinforce how divided the committee is and how difficult it will be for Mr. Walsh, John. Like you say, we know at the at the last policy meeting there were 3 dissents over the language in the statement itself. That was, and when you include Governor Myron's dissent against the decision, it was the most dissent since 1992. The point is that the Fed policymakers are trying to move away from this idea at all that the next move in rates might be a cut. They want a message getting out there now that, number one, at the very least, they're on hold for as long as, for the near term to medium term at least. And then beyond that, we might get a hint from the minutes in terms of just how hawkish some people are. I mean, nobody yet is saying a rate hike is their base case, but certainly it's starting to come into market pricing. We're starting to hear policymakers warn about it. Governor Barr last week saying his biggest concern at the moment is that inflation won't behave, for example. So when we get these minutes on Wednesday, it will just reinforce, A, the Fed is not cutting near term. They're on hold. It will then, though, spark a conversation about what might just tip them over the edge towards the hiking territory that other central banks are in.
And do you sense that the pressure is coming down just a bit? And I'm talking about the pressure coming from the White House and the president. Anne-Marie talked about an interview released overnight, just showing the president maybe understanding why they wouldn't cut interest rates through this summer. I've heard similar noise coming from the likes of Secretary Besson, from the NEC director as well, that maybe they've just dialed down the pressure just a touch.
It's a really interesting observation, John, and I think it's one that everybody's going to be watching closely. I mean, we have had mixed signals on that, though. If you remember, maybe a month or two ago, Treasury Secretary Besson was making the point he would understand why the Fed would be on hold. But then you have people like the NEC director, Kevin Hassett, saying there's plenty of scope for the Fed to be cutting rates. And at one point, of course, President Trump as well said he would be disappointed if they don't cut rates. But I do think it will be very interesting to see if once Mr. Warsh is sworn into office at some point soon, if the language does change critically from the top down. I think if President Trump consistently starts saying, look, we're in a situation now with yields where they are and with oil prices where they are, etc., that the Fed needs some time out, well, obviously that will be a very important observation to keep an eye on. But I don't think we're there yet. John, it seems to be mixed signals from the administration at the moment.
Enda, thank you, buddy. It's good to hear from you. As always, undercurrent down in Washington, D.C. Can this Fed cut rates? Not once, not twice, but maybe 3 times this year. Veronica Clark of Citi thinks so. Gradual weakening in demand will lead to a rising unemployment rate in the summer months. Veronica joins us now for more. Veronica, good morning.
Good morning.
Each passing day, this sounds more and more contrarian. Just lay out your argument for us.
No, it definitely, to get 75 basis points cuts, to get any cuts at all, it does have to start with the labor market data, right? And right now, nothing really looks like it's breaking in the labor market. We even had a stronger jobs report last month. I would take the payroll numbers with a bit of caution. They are very volatile now, and I'm not really encouraged by what you see in the unemployment rate. We've had this big slowing in labor supply. Labor force participation rate has come down, and the unemployment rate is still stuck at 4.3, 4.4%. That means that demand got worse, and that's ahead of the summer months when you usually hire a lot of people, when you get students entering the labor force, new graduates, and it's been the summer when we've seen the unemployment rate rise the last couple of years. There's a reason the Fed has cut in September for the last 2 years. It's when we see the summer data.
You've got unemployment going up then?
Yeah.
Where have you got inflation?
It needs to look better, right? So the inflation focus right now, it's still uncomfortable, right? So even the May data, I think, will look uncomfortably strong. But I think if we see monthly inflation readings for June, July, August, data that we'll have before that September meeting, if those monthly reports look better, annual inflation will still be high. But you do need inflation, at least on a monthly basis, slowing for the Fed to be comfortable cutting.
What would you have to see to change your view?
Stickier inflation for longer, not seeing the seasonality in the labor market data. Really within the next couple weeks, that seasonality starts to first play out in initial jobless claims. Once you get around the start of the summer, Memorial Day holiday, around mid-May, certainly by June, you do see claims starting to trend higher. So that's the first thing I'm watching for. If that doesn't happen within the next month or two, then okay, maybe the labor market has durably gotten better.
Isn't there a bit of a stress on this entire equation because it might not be as hinged to the labor market as it has been in the past, that inflation could be stickier even without the participation of the labor economy, just based on all the spending coming from hyperscalers?
Yeah, I mean, I'm certainly worried about that AI-related inflation. That actually does get a big weight in core PCE, some of those computer software-related components. So yeah, we are getting inflation there, but the demand-driven, tight labor market kind of inflation that the Fed would be most reactive to, that's what we really don't see. And I do wonder if having the dual mandate kind of forces them into caring about that kind of inflation. Even last week, we got an update for the Atlanta Fed wage tracker. That's like the monthly proxy for an ECI, Fed's preferred wage measure. It's very low again. It fell a lot. So you definitely don't see that labor market tightness kind of inflation.
Do you think that this Fed is going to have to tacitly accept 3% inflation in order to continue on the path that you see?
Yeah, I mean, on an annual basis, core PCE is going to look more like 3 for most of this year, right? I think most officials will be really cautious on that for now. But it was interesting to hear, new incoming Chair Warsh talk about other measures of inflation, right? The trimmed mean PCE, even CPI is running softer than core PCE right now. Maybe they can, adjust a little bit in what they're caring about.
The president thinks potentially you need to wait until there's the proper figures, look at them after the war is over, almost signaling that he will give Kevin Warsh a bit more of breathing space. So when would these 3 cuts actually happen?
Yeah, well, it would happen later in the year after if we see the weaker labor market data. But yeah, for right now, I don't expect that he can be particularly dovish going into that June meeting, especially if markets perceive that we're not taking inflation seriously, then it's, we get yields higher.
John has brought up a lot that this is the man who said in his Senate hearing, inflation is a choice. So how hawkish do you think verbally he's going to be?
Yeah, I don't know. It's really tricky. He's definitely been more hawkish when it comes to things like the balance sheet and trying to offset that with sounding more dovish on policy rates. But it is really hard to know what his views are going to be coming in. He is more traditionally hawkish. Is there going to be a 180? I don't think so. But yeah, we'll have to see.
Initially, inflation as a choice sounded hawkish, and then in the actual hearing, it started to sound increasingly dovish because you get to choose your index.
Yeah, exactly. Yeah, yeah. We don't really know where this is going to go. Yeah, we have not heard.
The optics aren't great, are they? They've missed their target for 5 years, and they're talking about changing their preferred index.
I don't think they will.
Time is not good.
Yeah, I don't think other Fed officials are going to be comfortable with that. But I mean, it is an interesting signal that what you were supposed to care about is the strongest of the core inflation measures right now.
I was reading some research from BNP Paribas, and they've got a different view on things for the path ahead. Everyone's entitled to their own forecast, of course. They think on the hike, and the way you discuss the potential for one, is to start reflecting on the insurance cuts you took a year ago and the year before, and emphasize that they were just insurance cuts, and talk about taking them back.
Yeah.
What would you think of that kind of move?
I mean, the market's already done that a little bit, right? And I think most Fed officials will still see that rates are on the restrictive side of a neutral range. So if you do start to see any wobbles in the labor market, then suddenly you don't need rates even more restrictive, of course, right? And I would kind of agree with that restrictive assessment just because of what we see in all the wage growth slowing, home prices that are pretty weak. Yeah, we'll see.
How messy is the SEP going to be next month?
Oh, yeah, pretty messy. Maybe at some point we even get some changes to it, right? Warsh was talking about scaling back some communications potentially. Maybe that's an easy out, right? You just say very little in June.
Veronica Clark of Citi. Veronica, thank you. 1 cut, 2 cuts, 3 cuts for the year ahead. And a base case is that you get those 3 cuts because unemployment goes higher. The view from Citi this morning.
This is the idea that the economy is going to ultimately matter. I'm sorry to sound a little skeptical here, but it's sort of, we've talked about the 2-speed economy. You have essentially rank and file individuals who are not seeing their pay increases that are necessarily matching, offsetting inflation. At the same time that you have price-insensitive buyers on the side of AI, and potentially, if you cut rates, that only fuels what some people are seeing as elevated valuations or bubble-like conditions over in the one side, even as it helps some of the people on the other side.
Let's acknowledge what the market is pricing, the risk of a rate hike. But I also think we should highlight what we're hearing from the so-called hawks on the Federal Reserve. And let's take Neil Kashkari, for instance. Listening to his dissent, it sounded like his dissent was more of a performative communication exercise than it was really a display or willingness to hike interest rates anytime soon. What he was talking about was removing the easing bias so that financial conditions would tighten so they wouldn't have to do more later. I still sense a reluctance from many of these officials, even those that want to remove the easing bias of the Federal Reserve, a real reluctance to really hike interest rates.
This is why a lot of different bond investors say it's not going to happen. So stop even pricing that in because that's an unlikely outcome. That said, if they don't remove that easing bias, and this is what Ed Yardeni was talking about.
Then you've got a problem.
Then you've got a problem. And then you potentially leave long end rates unmoored. So how much does this market have to believe them that they are willing to do that in order to get long end rates under control? It's this whole kind of kabuki theater experience.
The communication theater, right? Communication exercise. That's where we're at. Futures right now, the S&P 500 just turning positive going into the opening bell. Let's give you an update on stories worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. A little more context around that Ed Yardeni call. Ed Yardeni out with a warning for the Fed. Catch up with bond markets or risk losing control of borrowing costs. Yardeni says the Fed should remove its easing bias at its June meeting, given that it is, quote, no longer appropriate in the current market environment. President Trump warning that the clock is ticking for Iran. The two sides are still far apart on any deal to end their war and reopen the Strait of Hormuz. In a Truth Social post, Trump said Iran better get moving or, quote, there won't be anything left of them. The nation's largest commuter railroad coming to a halt. Long Island Railroad workers striking for the first time in 30 years. The MTA is advising people to work from home if possible, with free shuttle buses and helicopter rides available as alternatives. And that is your Bloomberg Brief. John.
It's the kind of New York conversation, and Bonnie, thank you. The kind of New York conversation that Mum Downey would seize on, right? That we have a problem with the train and we start talking about helicopters as an alternative.
Fair point, especially given the fact that, yes, Blade is saying $95. Some people have done market research and found that it's actually in practice about $2,000. That said, it does highlight the necessity for us to have public transportation that is financed fully and that, frankly, is also affordable, because that also is a problem with respect to the budget.
Helicopters aren't really an alternative. You know, when I first heard 95 and I said that's reasonable for a helicopter, I don't think 95 is reasonable for many other people.
I almost want to do it just for like the joyride, because helicopters are cool.
You should bill it to work expensive, film it or something like that. Just a suggestion, clear it with management first. Up next, Colin Martin and Charles Schwab with global bond yields near their highest in decades. Their conversation up next.
Wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Nobody really believes that the Straits of Hormuz are going to stay closed until March of next year. It's just we don't know when they're going to reopen. Iran is going to starve if they don't get it ready. You know, the Straits of Hormuz reopened in the next couple of months. Trump is going to lose the House and the Senate if he doesn't get this resolved and reopened.
Bloomberg TV anchor Michael O'Leary there. Ryanair boss could be an anchor. It's fantastic, fantastic. A little bit earlier on the airline industry and the situation in the Middle East. Let's talk about that situation because equities are turning around just a bit. We're positive by 0.2% on the S&P, up by 0.5% on the NASDAQ. The why? Some of that is in the bond market. Earlier on today, we were at 112 and positive 2.5%. And now in the commodity market, we are down by about 1.5% at 107. So Brent crude down to 107 from 112. That's a 4-5 percentage point trading range already, so near session lows, taking bond yields a little bit lower compared to where they were, 2s, 10s and 30s. So getting some support from fixed income and commodities off the back of some headlines in Iran from about an hour, 2 hours ago.
Saying that the United States is proposing a temporary waiver on Iranian oil in the middle of this negotiating period, which would mean we could see more Iranian oil hit markets. It's very interesting. Want to see the United States, what the White House has to say about this, the credibility of this report. But would it show that behind the scenes, maybe there are more olive branches the U.S. is willing to extend, but you have to think they're in a very difficult spot, especially going to Memorial Day weekend with $4.50 a gallon.
This
gasoline.
market's just itching to fade this story, isn't it? Just any time you get a headline, it's just itching to move on.
Look through the geopolitics, always. This is the problem, though. We aren't moving on. It's been 80 days, and Mike Wilson is saying that ultimately the fate of the rates market is going to rise and fall on the Strait of Hormuz. And right now, given the levels that we're at, so too go risk assets.
Week ahead looks like this right now. Heading into all of that, we're going to get this. The G7 finance ministers meeting in Paris taking place today with some pressure, according to Secretary Bessent, that he wants them to ramp up their sanctions on Iran.
Lip service to the Europeans.
As we get headlines out of Iran suggesting completely the opposite anyway. Through the week, also lots of Fed speak, tons of earnings too. Nvidia on Wednesday. We get Walmart on Thursday. Target, Home Depot in the mix as well. So look out for all of that. In the bond market, multi-decade highs and long-end yields coming into this trading week. The 30-year at 5.10 stateside. Colin Martin of Schwab writing the sell-off is driven by a confluence of factors including oil prices, inflation, and shifting Fed expectations. An extended pause on rates is our base case. Colin joins us now for more. Colin, good morning. Good to see you.
Good to see you.
I'm going to throw this quote at you. It comes from Torsten Slock of Apollo. He says, renewed inflationary pressure, large government deficits, the end of QE, increased geopolitical fragmentation. He thinks that means rates will stay higher for longer. Investors should plan accordingly. Do you agree?
Yeah, that sounds about right. You know, our case right now is for the 10-year yield to kind of stay in a range. We probably think there's probably more upside than downside, but we don't see too many factors that are going to pull Treasury yields significantly lower anytime soon. To get the 10-year back to, say, 4% or so, we need to see much slower growth, recessionary risks rise, and that's really not the case right now. And with the Fed on what we're calling an extended pause, you know, two-sided risks, who knows where we'll be in the next, say, 9 months, 12 months, but the case can certainly be made. One thing that you said there that Slock mentioned is, you know, term premium, QE, balance sheet things. The term premium is something that we've been focusing on. We're still at a relatively low what's the level where, you know, maybe investor demand comes in. We saw the 30-year auction last year, the 5% handle. Wasn't the best auction, wasn't terrible, but it came in, it tailed a little bit, and it was the first, you know, 5% handle on a 30-year since 07, I think, and it's not like we saw a lot of demand jump in there.
Are you concerned about the non-tech issuers in the credit market, given the fact that you've got mass crowding out when it comes to the hyperscalers issuing billions of dollars of debt, the Treasury issuing billions of dollars of debt and offering yields that actually are giving people some income?
Yeah, so worried about that investors might not be too interested in lending to them because there's everything out there. Not really. We're okay with most of the non-tech, you know, IG space at least. Credit quality is really strong. There still appears to be a lot of demand, and the demand keeps picking up. I mean, the numbers we're seeing really are staggering. But from a fundamental standpoint, especially non-tech, we're looking at, you know, improving credit quality in IG. I mean, we're seeing AAAs get upgraded to single A space. So I think the spreads you're seeing, yes, they're low, but I think they're indicative of a resilient economy and companies with strong fundamentals.
The resilience of this market questions how we're possibly restrictive. Is this a restrictive rate? If the economy seems to be humming along, if you're seeing issuance go to record levels, and if you see performance continue to withstand without some sort of huge surge in defaults?
Yeah, it's probably not very restrictive then. I mean, neutral at best, maybe a little bit accommodative. I mean, this has been our thought for a while. Even if we go back prior to the spike in oil, you can look at any number of things in the economy and we'd say, well, why do we need to be talking about rate cuts right now? And we were projecting rate cuts, only one or two, prior to the conflict, on our, on the trend of inflation moving gradually lower. But when we look at where we stand right now, that's not really the case. The stock market continues to hit all-time highs. Credit spreads are very low. Consumer sentiment is down, but we're not seeing it in spending numbers just yet. So arguably, we are not restrictive right now.
The Fed just moves so slowly. If you think back to the experience coming out of the pandemic, it took them months to even begin talking about winding down QE, and then months to wind down QE before they could really start talking about hiking interest rates. And it's that I think is sort of paralyzing them right now. That maybe the leadership of the Fed felt like it was too soon just to adjust just a few words in a statement. That's really what this so-called easing bias is. It's a few words. And if you ask anyone outside our industry to find them, they wouldn't know what to point to in the statement that actually articulates the easing bias. It's that vague.
Well, that said, if this is not a Fed that drops the easing bias come June, how much does the market push back massively?
That's the
because
problem
right
they've
now,
got.
the market is screaming, please drop the easing bias. Acknowledge what we're telling you, which is that inflation is presenting you with a very complicated and difficult situation.
They're stuck between a rock and a hard place. If they talk about hikes of the ECB, we're talking about a hawkish policy mistake. If they talk about maintaining an easing bias of the Federal Reserve, they anchor front-end rates, they leave the long end vulnerable, we start talking about a dovish mistake at the Federal Reserve. There's no winning this summer until this issue is sorted out in the Middle East.
Yeah, and that's the reason why a lot of people are saying until that is sorted, this is going to be a persistent pressure pretty much globally. And that's the reason why rates continue to climb higher in the face of higher oil prices, even though in the past they've been self-limiting.
Colin, it's good to see you. Thank you, sir. Colin Martin there of Charles Schwab. It's a bond market without any anchors at the moment, without a solution in the Middle East. We used to have anchors. We used to have what was called the Japanese government bond market and the German debt market, and they just used to sit there holding yields down, and those anchors have been away for a long time now.
People are contemplating a new inflationary era where suddenly we have to build things, and that is a very different proposition where income isn't enough to get the job done.
Futures positive. Let's see if these gains hold. We're up by 0.2% on the S&P 500 from New York City this morning. Good morning to you all. Thank you very much for choosing Bloomberg TV. Looking forward to covering the week with you. This was Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you're good at your job, bro. Like, it's just actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. 30 minutes till the start of the cash trade to kick off the week. I'm Matt Miller. Danny Berger is off. Bloomberg Open Interest starts right now. Coming up, futures turn higher, but global bond yields remain at multi-year highs on inflation fears. And NextEra buys Dominion Energy in the biggest power deal ever as utilities scramble to meet the AI-driven demand. Plus, SpaceX's mega IPO is putting a price tag on Wall Street's fear of missing out. In terms of the stocks that we're watching this morning, you see NextEra right now down just about 1% in the pre-market after buying Dominion for $67 billion. An all-stock deal to create one giant utility company, NVIDIA, higher as well ahead of earnings. Those are finally this week as the company closes in on a record $6 trillion valuation. Now, global bond yields are hovering at multi-year highs as rising energy prices stoke inflation concerns. 30-year Treasury yields above 5%, as are the 20 years. We saw the 10-year up over 460 for a while. That's come back in a little bit, and as a result, futures are moving a little bit higher, and let's talk about that right now. We've got MLive stock strategist Michael Ball here with me on set, and you know, Michael, it's interesting that even at around 460 on the 10-year, at 511 on the 30-year, we're still able to see futures rally higher. What's going on in this market today?
Yeah, so we're getting some positive news out of the Middle East, which obviously is where the sensitivity is because oil's coming off of recent highs. The news so far is somewhat unconfirmed, but it looks like the Iranians have come back with some more manageable proposals on their end of how they want to see things go forward. Also, we noticed again that the U.S. is lifting sanctions on Iranian barrels to China. This is probably coming off of the meeting last week as some sort of, way to keep things going and get China back involved. I think China has a lot of leverage in this situation, and the U.S. is trying to lean into them on that.
You know, the question has been, at what point do higher yields really start to hit earnings? And the concern had been 4.5%. We blew past that on the 10-year. And now I'm starting to hear people in the market say, well, at 5%, that becomes an issue. What are you hearing, and where are we headed?
Yeah, I mean, look, no one has an exact level. Clearly, as real yields rise, and this is now being primarily from real yields, not break-evens, then things tighten financially. And this isn't just happening in the U.S. in isolation. It's happening globally, and we're so in other places, especially in the U.K. and somewhat more now in Japan. And that is spooking risk sentiment. But overall, we're all still in this kind of one trade, which seems to be a little more insulated, which again, of course, is the AI secular build-out. And as a result, the indexes have held up well, even though the components of the indexes aren't always doing great. So breadth is pretty bad, and as we know, dispersion is pretty high. And that's exactly what you would expect right now in an environment where we're pricing in now, again, renewed inflationary pressures.
How important are NVIDIA earnings this week? You know, Danny was looking at some functionality on the Bloomberg and saying we could see the shares move 7 or 8%, which is insane for a $6 trillion company.
Yeah, look, call skew right now, from what I read this morning, is at 99 percentile in like a 5-year window. So it's going to take a lot for that to actually materialize into expectations, meaning everyone's really expecting things to go well. But we've seen so much results now on the whole AI build-out that we're pretty confident that they're going to hit their numbers. Question, of course, will be guidance. I don't think we have too much of an X factor in things like China, meaning what their sales in China will mean. So overall, I expect it to be a vol event, more pocketed into NVIDIA, not necessarily overall for the AI trade, and certainly maybe not for the index trade. We just had an OPEX on Friday that's cleared out some of this long positioning, so things should be more stable around the 7,400 level.
All right, cool. Michael Ball writes for the MLive team. You can check out his work and the work of his team by typing MLIV Go on your Bloomberg terminal. Now, speaking of the AI build-out, NextEra is going to buy Dominion Energy in an all-stock deal to create the largest publicly traded utility business in the world. Bloomberg energy reporter Emily Forgash joins us now to discuss. And Emily, this not only is it a big deal historically, right, the biggest ever in the energy industry, but it also looks like a huge power source now for the data center build-out.
Yeah, this deal gives NextEra access to Virginia's Data Center Alley, which is Dominion's area right now, and that's a really big deal because the demand there has skyrocketed. It's become a focal point in this AI boom when it comes to energy demand, and now NextEra has a chance to try to supply a lot of that energy to these hyperscalers.
What does the supply-demand imbalance look like right now? I mean, how much energy is being demanded of Dominion, and how long is it going to take them to build up the supply to meet that?
Yeah, it's going to take years, and years is something that hyperscalers don't have, and utilities across the country are pledging to spend trillions of dollars on this build out in the next 5 years, and that's why these utilities feel the need to keep getting bigger and bigger, because they are needing to spend billions of dollars on projects to get to meet this demand, and their market caps are just getting bigger and bigger to try to meet that.
How likely are they to face regulatory pushback on this? Because I was looking at a list of the agencies that need to approve it, and it's much longer than you normally see, right?
It is long, and so that's why it's hard to predict. But I will say some of the analysts that I've spoken to have spoken pretty positively about getting this passed, at least in Virginia. I think they are saying that Virginia needs this boost, and that Virginia regulators will be really willing to have this massive utility. NextEra is already the biggest utility in the U.S. by market cap. Come in and bring its renewable generation that it has, and try to juice up that state even more.
All right, Emily, thanks very much for your coverage. Emily Forgash covers the utilities for us. Now, the other market driver this week, well, there are many actually, but you've got the M&A picture, you've got the SpaceX story, the IPO story that we're going to delve into, and then most importantly this week, you've got NVIDIA earnings coming out on Wednesday. Goldman Sachs expects a beat and raise quarter with investor focus on any updates for its trillion-dollar data center revenue target. Let's discuss with the Bloomberg Tech co-host Caroline Hyde. She joins me here on set. So, I mean, this is the big daddy. This is what we've all been waiting for, right? And it comes, late in earnings season. They have to beat and raise.
And even when they do, sometimes the stock still falls because everyone's already kind of looked at what the hyperscalers are spending, understanding that $725 billion capex for the rest of the full year, and can just see a wall of demand coming NVIDIA's way. We want to get a little bit of context of how much like TPU over at Google or some of the basically the ASICs, the bespoke chips being made by the hyperscalers, whether that's eating in at all. But look, this is a $5.4 trillion company that is posting more than 70% revenue growth. This is inexplicable in many ways from the exponential nature of the company, but we want to hear about how they continue to ramp. Yes, you know that Blackwell is doing really well from an architecture perspective. How is Vera Rubin doing? How is the CPU trend doing? How are some of the purchases talking of M&A? Remember, they bought in this rather odd acquisition Grok with a Q, not a K. How is that working in terms of the inference needs that they're getting? That's sort of some of the intricacies we want to get to grips with. But this is a stock that is relatively cheap, remember, in terms of its forward guidance. The PE ratios are like 24 in the forward 12 months. So people still think it's still relatively available to buy at this level.
Amazing at this size. And the fact that it moves so much. I mean, on Friday it was down more than 4%. On Thursday it was up more than 4%. So we're talking about billions of dollars, on some days, hundreds of billions of dollars moving around.
And that element, what sent it down on Friday, is China. And the fact that maybe we won't see suddenly that, what was it, $50 billion worth of TAM that he saw in the near term coming from China demand. He still can't get his H200s in there, Jensen Huang. So that's going to be we want to hear a little bit more detail of how he's feeling about the potential demand coming from China.
He can get them in there.
China
they just don't want to take them, right?
Yeah,
so
US is saying go for it.
Yeah.
But meanwhile, China's like, no thanks, we want to build internally. We're dependent on Huawei and the likes. And so we heard that from President Trump. we're going to hear what Jensen Huang thinks about it as well.
All right, Carolyn Hyde, co-host Bloomberg Tech. That kicks off at 11 a.m. weekdays. Today, by the way, at 2:30 p.m., Bloomberg has an exclusive interview with NVIDIA CEO Jensen Huang and Michael Dell from the Dell World Conference. And don't forget, we've got SpaceX. A lot of SpaceX news about the IPO, the timing of the IPO, the size of the IPO, and they have a rocket launch coming on Wednesday night as well. Check on markets this morning. We're looking at now positive futures, 0.2% on the S&P 500 after a down day on Friday. The NASDAQ up 0.5%. The futures on the NASDAQ up 0.5% right now as 10-year yields come down a bit. You can see we're off almost 2 basis points at 457, 458. When I woke up this morning and looked at the trade, it was at 463. So it's been a substantial move in yields. Brent crude also, when I woke up, was over 111, and now we're back down to 107.80. So you've had a softening of yields, a softening of the oil price, and that has helped the markets, the broader markets. Take a look at the single stock stories on our radar. Bio-Rad Laboratories higher as activist investor Elliott has built a sizable stake in the company to boost the firm's underperforming stock price, according to the Wall Street Journal. Ford shares are surging after its energy unit struck a 5-year energy storage deal with EDF Power, and that has been really the story of the car maker, these big, gigantic batteries that it makes, or will make. Rocket and satellite stocks are higher as SpaceX prepares its IPO roadshow. We're expecting an announcement potentially on Wednesday before the all-important launch of its Starship heavy booster and rocket. Coming up, we're going to take a deep dive into that SpaceX IPO, which is already creating FOMO on Wall Street. This is Bloomberg Open Interest.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Let's get to high interest now. Look at what's making headlines around the world. President Trump is warning Iran the clock is ticking after drones targeted a power plant in the UAE, escalating fears the fragile ceasefire could collapse. Saudi Arabia also intercepted drones entering its airspace. Brent erased most of its gains after Iranian media said the U.S. proposed a temporary waiver of oil sanctions imposed on the country as part of talks aimed at ending weeks of war. You can see today we've been up over 111, and right now we're back down under 108 on Brent crude. Long Island commuters are bracing for major delays as the LIRR strike enters its third day, shutting down the nation's busiest commuter railroad. The MTA is offering limited shuttle buses and urging people to work from home while negotiations resume Monday. Even if a deal is reached, officials warn service won't restart immediately. And Elon Musk says SpaceX is preparing for an IPO that could value the company above $2 trillion, making it the biggest public listing ever. Musk told a conference in Tel Aviv that he's working on the IPO as SpaceX grows its defense business and its AI projects linked to President Trump's Golden Dome missile shield program. Joining us now to discuss is Bloomberg's Anthony Hughes. And Anthony, let's talk about first the TikTok of this, because there's always a confidential filing that we always somehow know about anyway. Then there's a public filing that's expected on Monday, and then we're expecting pricing on, I think, June 11th, and then maybe trading on June 12th?
Yeah, so, the timetable for IPOs is somewhat dictated by the SEC review process, but really we've been reporting on this all year, but, in late March, we reported that SpaceX actually filed confidentially, and there's been various reports about what's in that document, but on Wednesday, or sometime this week, it may not be Wednesday, it may be earlier, or maybe later, these things can move over time, so you have to put a little bit of a caveat.
Much like a rocket launch,
yes.
Which is why I think it's so interesting that Wednesday is the date. I mean, Bloomberg and Reuters and others are reporting the public filing will come on Wednesday, but they're also scheduled to launch their all-important Starship rocket on Wednesday afternoon, and this is a rocket that last time exploded on the pad. So, you want to think it's going to go well for the IPO.
Yeah, well, I think things like that will be important, but I think once we get through this process, which is really going to accelerate now, we're really going to people are going to look at other parts of the business as well. I mean, there's a Starlink part of SpaceX, which is really where a lot of the revenue and cash flow is coming from. And also there's Elon Musk's AI ambitions, which are really sort of, that's where all the interest in the market is at the moment. And so SpaceX is going to tie into that as well. So, the space launch business is going to be obviously a great and interesting part of the business because they have such a dominant role in that business.
So those are the big Starlink, the money maker, right? The cash flow generator. This rocket launch business is one that isn't going to have huge expanding margins or amazing growth, although it is very big and interesting to look at. What are these valuations based on? How do they get to $2 trillion? And has Musk downplayed that a little bit?
He hasn't really said that much during this process about the valuation. I think, he's made a few cryptic comments on Twitter, I think so. But it's not really until, the start of June here we're going to see the actual valuation. And sometimes, the reported valuation can be higher or lower than what it actually turns out to be on the day. And the other thing that's going to be interesting here is that, they might want to start off with a little bit of a lower valuation. And as momentum for the IPO builds during the process, they may look to upsize or increase the size of the offering. So, the process is going to evolve over time here, but it's all accelerating now through the next 2 or 3 weeks. And obviously there's going to be a lot of excitement, but the point at which people are going to really be thinking about investing in SpaceX is going to be, early June. And that's when, obviously institutions, there's been reports that institutions have already showed a lot of interest. So, there's obviously a huge amount of momentum already, but retail investors will really get a look in early June.
And of course, they're going to want to get hold of it. Maybe we'll see something like we did last week with the company that goes public at 185 after shopping shares at 160, and then all of a sudden, boom, jumps to 380 on the first day of trading.
Yeah, so interestingly, with that IPO, Cerebras, they included a novel sort of lock-up structure, which also, helps them have a smoother debut. But obviously, the price that SpaceX starts with when they show the terms in early June is going to be interesting. But it might change over time. It'll probably, if it's a smooth process, the valuation should go up over time, and as to ensure there's good momentum through the process, and you have a good successful outcome for everyone. But there's lots of things, a lot of water to flow under the bridge yet.
Right. Anthony, thanks so much for joining us. Anthony, he is reporting on the IPO of the much-awaited IPO of SpaceX. We may get a filing Wednesday. We may get pricing in mid-June. Coming up, JP Morgan's Sitara Sundar on the market mood shift as inflation and rates begin to actually worry traders. It was a brief moment on Friday and this morning, and we bounced back from that, but we'll ask her what her take is on the rest of the quarter and the year. This is Bloomberg Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
All right, traders had been pumping the brakes on the market rally as yields continue to hover around multi-year highs after a surge at the end of last week. But Wall Street strategists have been getting more bullish. 6 out of the 21 strategists polled by Bloomberg have raised their targets for the S&P 500 over the past month. The average is now 76.12 for the close of the year, with EPS at $316 a share. Joining us now is Sitara Sundar, JP Morgan Private Bank Head of Alternative Investment Strategy. And it's interesting to see these two things happen at the same time, right? Because we got up over 460 on the 10-year, the 30-year at 511, and we had a substantial drop, more than 1.25% on the S&P Friday. But the bulls are not concerned about higher rates and really inflation concerns.
Yeah, I think that there's this push and pull, bull-bear dynamic happening between what is going to happen with inflation and what does that mean for rates, but both at the short end and the long and ultimately what that means for valuations versus what has been an extraordinarily strong earnings season. I think with all the headlines related to what's happening with the conflict in the Middle East and inflation prints being a little bit hotter than people were anticipating, you forget that at the same time, fundamentals from a corporate earnings perspective have been extraordinarily strong. When you think about where we are in this earnings season, on a year-over-year basis, earnings is tracking at above 25%. And even if you take off the one-off step-ups in the private company valuations and what that meant for the hyperscalers, you're still at 18.5% earnings growth, which marks the 6th consecutive quarter of double-digit earnings growth. And that type of trajectory is not something that we've seen since post the global financial crisis.
Does that continue? I mean, I was surprised to see 316 as the estimate for the S&P earnings. I looked at it like 2 weeks ago, and it was 308. And by the way, the high of all the strategists we surveyed is closer to 360, like just massive earnings growth. But at the same time, we have WTI and Brent over $100 a barrel, and I imagine that's got to impact earnings of S&P companies, which also, by the way, sell, I think 40% of their revenue comes from overseas, right? Yeah. And, you know, areas in Europe and Asia are much more strongly impacted by the scarcity of oil.
Look, the underlying question is when it comes to oil prices and the feed through to economic growth or spending and things like that is how long and persistent are higher oil prices going to be. If we saw, like we had done this analysis and the scenario analysis on thinking through different oil prices, if we saw oil prices above, you know, $140 a barrel for 3 to 6 months time, that could lead to detrimental impacts from an economic growth perspective.
140. We're still way off that.
We're not there yet. And I think the other thing to think about is the areas that will get impacted from higher input costs or higher commodity prices, but there are also areas that are likely going to benefit. And even in this past earnings season, we've started to see energy earnings kind of pick up. And then the final thing that I'll mention is the whole notion of markets not being the economy is something that we're really focusing in on, especially this quarter, but even more broadly than that, because we still need to remember that the S&P 500 and even global markets are very tethered to artificial intelligence right now. So we're obviously very cognizant of what's happening on the inflation front, but we're probably even more so paying attention to what we're hearing from CapEx spending, from ROI, because this is going to have to be the year of ROI for artificial intelligence. And that's more where we're focused on, because if anything starts to go in the opposite direction on the AI front, that would make me more worried about markets than just inflation alone.
I mean, we are though still seeing relatively tame valuations. Caroline Hyde was just here on set saying that NVIDIA is trading at only 24 times forward earnings, like 12 months out.
Because the earnings have followed.
Yeah.
Right? Like we've seen meaningful, it's so interesting that a lot of the valuations for the hyperscalers, the areas that have been driving the market over the past 3 years, the valuation of that cohort is actually cheaper than where we started. And the result and the reason of that is that we've seen meaningful demand for all of these components that of the infrastructure trade, and from chips to utilities. We're still, despite being 3 years plus into this cycle, we're still in the early innings, and we're still in a compute-constrained economy.
Let's talk about that, the constraints and the valuations. When we come back, Sitara Sundar is sticking around through the opening bell. Futures are higher ahead of the bell this morning after a 1.25% drop on Friday.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market. Let's go to Scarlet Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslada Amin in Davos, Switzerland, and this is Bloomberg.
Moments away from the start of trading on this Monday morning. This is Bloomberg Open Interest. I'm Matt Miller. We had a situation where futures were down on concern about rates and inflation, and then maybe some positive impetus from the clock is ticking Iran deal. S&P futures now up, although marginally, just 0.1%. NASDAQ futures gaining a little bit more, about 0.4% this morning. We had some big deal news, but that's in the energy sector, and we're awaiting, of course, NVIDIA earnings, SpaceX IPO, a rocket launch, Pelagos, I'm going to say Pelagos Insurance Capital ringing the opening bell. Their stock is up 65% over the past 5 years. That's just the price appreciation, doesn't count reinvested dividends, which is probably very important for an insurance-related stock. Another insurance-related stock at the NASDAQ, Enact. Their stock, for example, is up 125% over the last 5 years, but if you reinvested dividends, it's up more than 180%. So much better than a stick in the eye. In terms of the movers that we're watching, Next Era Energy is buying Dominion in an all-stock deal, $67 billion, the size of that right now, to create one giant utility company with plenty of exposure to data centers, the biggest, I think, in the world. So Next Era shares are down 2.5% in the early trade. Dominion Resources up 10. NVIDIA up 2%. Remember, NVIDIA is coming out with earnings this week as the company closes in. It's like $5.5 trillion now, even after a 4% drop on Friday. And we'll see what happens when the shares react to earnings this week, because we're expecting it could be a big 7 or 8% move. Let's bring in bring back JP Morgan Private Bank Head of Alternative Investment Strategy, Sitara Sundar. And Sundar, the NVIDIA earnings are so important. I keep sort of looking at the stock and thinking it was a dog, but it's steadily increased over the past, I'm talking about the last quarter, right? From $4.5 to $5.5 trillion in value. I mean, what do you expect from NVIDIA? How important is it?
Look, I think usually when we think about tech cycles, and bear with me because I'm going to talk a little bit about history, usually when we think about tech cycles, the infrastructure is built first and then the applications built off of that infrastructure come second. And what we've seen is, so far over the past 3 years, the infrastructure side, and I mean the utility players on both the public and private markets, as well as the chip manufacturers, both advanced and normal, from CPU to GPUs, and some of the advancements that we're going to see there, that's what has been dominating growth over the past 3 years. Now, the ultimate question for us as we think about this week and some of the category leaders on the public markets and some of the growing innovation that we're seeing on the private market side as it relates to chips is what is going to be the ultimate driver of growth moving forward. And from our perspective, is demand still outstripping supply? And the fundamental answer to that is yes. So from an earnings growth perspective, we still expect to see a step function higher in earnings growth for some of the bigger players within the public market landscape. But then even on the flip side, we're starting to see a lot more innovation as it relates to memory, as it relates to chips on inference versus training. And a lot of that is starting to come on the private market side and even some of the bigger IPOs that we saw last week.
I actually wanted to ask about that because do alternatives really matter? I mean, if you can get this much juice from public markets, I mean, 24 times earnings is really low for such an important company in such a key nascent industry that could change like the growth rate of, economies. What's the point of alternatives, private markets?
The answer to that question lies in like having to fundamentally believe two things. One, that the value creation that's going to happen in the entire AI value chain starts to migrate towards the application layer. So either the foundational models or the businesses that actually end up incorporating artificial intelligence to build and grow margins in different types of services industries. And what we've seen is that a lot of those companies within the applied AI side exist within private markets, one. Two, the amount of value that is being created on the private market side is not something that I would discount. And even, I think a lot of people will talk about companies are staying private for longer, and like sometimes I say that myself and I roll my eyes at myself saying it. But the reality is that the median age of a tech IPO now is 12 years old. And during the dot-com era, it was 8. And the amount of sales that are being generated at IPO at this point in time is 5 times larger than it was in the dot-com era.
So they're much more mature companies.
Much more mature companies that by the time they either entered the public arena, they are either profitable or a lot of the value has already accrued to a handful of different players on the private market side that you're going to be missing that action if you wait until that company goes public. And then even on the flip side, the exit opportunities for a lot of these private companies has now moved beyond just the public market landscape. Because I think the public markets have also increased the threshold of what they're willing to accept from a growth perspective, from a profitability perspective, especially post-2022, given that we're in a very different rate environment. If you're not like a $100 billion valuation company that is growing your customer base and already generating profit, you're probably not going to want to participate in the public markets where the scrutiny is going to be so much more, the regulatory impact is going to be so much more. So there's a lot more activity that we're seeing on exits, either selling to other sponsors, selling to other strategics, M&A activity, where there's a lot more activity happening within the private market landscape. And I would even argue that private equity is more indicative now of the real economy than even the public markets are.
Of course, they all need an exit eventually, and
Correct.
we're starting to see big animal spirits flow around these. Like Cerebras gets what, 1/4% of the revenue that NVIDIA does, and it was like the center of the universe at its IPO. And SpaceX, of course, is going to dwarf that. How important is the SpaceX IPO?
Look, I think that it's important for a couple of different reasons. One, whether it's SpaceX specifically or some of the larger IPOs that we're likely going to see over the next 12 to 18 months, the public markets have been starved for new blood to come into the ecosystem, fresh meat to come into the ecosystem, one. Two, a lot of the potential IPOs over the next 12 to 18 months tend to focus either on artificial intelligence and the foundational model layer, or the space economy and what that means in terms of not just satellites, but this new definition of security, not just being a terrestrial conversation, but also an orbital one. So I think that if we end up in a situation where it's oversubscribed, pricing performance tends to be good, and like the market actually ends up absorbing that type of liquidity that's going to come into the market, That we think is going to be market constructive from a sentiment perspective, not just within the public market landscape, but on the distribution side within the private market landscape, because one of the other things that we know to be true within private equity, venture capital, and growth is that it's been a distribution-starved ecosystem. So if we end up getting good IPO activity and good price performance and acceptance of that, that could open the spigot for distributions across the board.
All right, Sitara, great having you, and thanks so much for joining us. Sitara Sundar there, JP Morgan Private Bank, Head of Alternative Investment Strategy. Let's get a check on what's going on in the markets to kick off the week. The S&P 500 doing a whole lot of nothing right now. We did see it, futures down this morning before rising just briefly before this program kicked off. We're seeing more stocks up than down, right? 3-2 in terms of the breadth here. On the upside, you've got Google right at the top, Micron, NVIDIA, Amazon, AMD, Intel. So you've got all of these hyperscalers and chip stocks. And then Dominion Energy on the back of the $67 billion takeover. And some have said it's going to be really next era, kind of cornering the market on hyperscaler power providers. Broadcom leading the losers here, as well as Microsoft, Apple, and Tesla, which is interesting to see Tesla there. Meta also on the downside in terms of the Mag 7 stocks that are losing ground today. But they're not taking too many points away, 2 points each for all of those, which doesn't compare much to what we see NVIDIA typically moving the market around. Here you see the industry group breakdown, and the hyperscalers are leading the gainers early in the trade, real estate, utilities, and staples. So a defensive play here in terms of what's gaining on the downside. Energy, healthcare, and industrials also would be fairly defensive. Energy, as we see Brent crude coming down a little bit today after hitting more than 111 overnight. Coming up, how the next era Dominion deal impacts energy competition and the data center outlook. This is Bloomberg Open Interest.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Time now for your top calls. Some of the analyst action in focus this morning. First up, Morgan Stanley is upgrading Lam Research, saying it sees better growth ahead for the part of the chip industry that's tied to data storage chips after previously favoring companies tied to AI memory chips. As part of the shift, the firm is downgrading Applied Materials. Citi is opening a positive 90-day view on Constellation Brands ahead of the earnings and the World Cup, expecting stronger summer beer sales driven by easier comparisons and demand for watching soccer. You got a drink for that. And finally, B of A is reinstating Salesforce with an underperform rating, saying the company faces an AI-driven reset. The firm flags three core concerns: slower new customer growth, limited room to upsell existing customers, and uncertainty around AI monetization. Next Era will buy Dominion Energy for $67 billion as AI sends power demand surging. If approved, it's the biggest power deal on record and creates the world's largest publicly traded utility company. Let's speak with Joe Kaiser, CEO of Switchyard Partners, a venture capital firm that invests in and supports innovators scaling companies focused on energy transition and re-electrification. Joe, great to have you on. Congratulations on Switchyard, your new gig. What do you make of this giant power merger that centers on Dominion right at the heart of like the data center ecosystem?
Oh, Matt, you nailed it. Well, thanks again for having me on. Great to see you again. This is, make no mistake, this is a data center play. You're combining the massive portfolio of power generation owned by NextEra with the transmission and distribution assets that Dominion owns. And to put a point on it, Dominion is building a huge transmission project right now that flows right into the substation at the heart of the concentration of data centers in the United States.
So what I'm wondering about is, first and foremost, whether regulators will approve this, because it creates such a behemoth, right? Already the biggest power company taking over the biggest data center provider. It seems like they have 10 regulators that need to approve it, from FERC to all the different states in Delmarva. Right. How likely is it to get through?
Matt, I think it is highly likely. I think the market to watch, or the regulatory body to watch, is the state of Virginia's PUC, or utility governing body. That's the one to watch. That's probably where the most contention is. Virginia just announced approved a large price increase for residential power consumers. But I think from FERC, federal government, I think the path is pretty open for this transaction to push through.
So will they actually be able to bring enough power in terms of supply, right? Because I think demand is 3 or 4 times what is actually generated today. And will they be able to bring it at prices that don't, drive inflation higher for all the residents of Virginia and the surrounding area?
Yeah, Matt, I think that's a great point. I think the beauty of this project, or this merger, is its ability to be a one-stop shop for the hyperscalers, and as a consequence, you can aggregate that CapEx to keep it off of the bills of the residential homeowners. I think where you'll start to see some challenges from a power delivery standpoint is on these smaller projects. So I think it actually causes larger data centers to be built by the hyperscalers, It's those projects in the 10 to 100 megawatts that I think, because of queues and to get interconnection, where you're going to see some challenges. But from a homeowner perspective, I think this actually bodes well long term.
Yeah, we're seeing right now headlines coming across from NextEra. They say they could have a combined large load pipeline of 130 gigawatts, so absolutely massive. I think
massive.
You know, Manhattan needs like 13, so a tenth of that, and I'm rounding up. What percentage of this is going to be?
We still haven't gotten you on electric vehicles, Matt. When that day happens,
as soon as then we're going to need 130 gigawatts. What does the sort of renewable energy picture look like here? I mean, is it all natural gas, coal, oil, or are they bringing solar and wind power to this combination?
Well, I think that is one of NextEra's core competencies, is their distributed and diversified portfolio of power generation. I think that is one of the things that NextEra might do better than any other utility on the planet, is bring all forms of power generation. So absolutely, you're going to see natural gas, some coal, but it definitely pulls renewables to the forefront. NextEra has a huge portfolio of solar and wind projects, and in fact, their CEO has made that case about the importance of a distributed portfolio of power.
By the way, if this goes through, Joe, does it make NextEra the most important utility company in America, in American AI? Like, is there anybody else even close?
They are already the largest, Matt. They will be an order of magnitude. No, not an order. They will be double the second largest utility in the country, and I think this provides the roadmap for utilities of what has to happen going forward, and maybe most importantly in the short run, given Dominion was already 10% of the users of power on PJM. This only accelerates and emphasizes the importance of the NextEra Dominion combined entity or PJM region.
All right, great to get your take. Appreciate you joining us at short notice. Switchyard Partners CEO Joe Kaiser, with such important experience in AI, as well as experience in energy generation in solar. Coming up, the Bloomberg 100 index on the MIAX futures is officially live. We'll talk about that next. This is Bloomberg Open Interest.
A multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on with the stocks. Here you can see the S&P 500 gaining 0.2%. The NASDAQ up about 0.1. So 74.22, still 80 points shy of the all-time high, closing high that we hit last week at 75.01. The NASDAQ at 29,163. We were up over 29,600 at the end of last week. Bit of a pullback on Friday and concerns about rates and crude prices. Today, we're looking at rates coming back in a little bit, still near multi-year highs at 457, and crude coming down fairly meaningfully from 111 and change to 107.73. NVIDIA not doing much in today's market, and we're waiting for NVIDIA earnings this week. That should really drive markets one direction or the other. Tesla down 1.8% right now, and we're looking for a SpaceX IPO announcement, a public filing, I should say, this week, as well as a rocket launch. Nextera, after its announcement that it will purchase Dominion Resources for $67 billion in stock, is off about 4%, whereas Dominion is rising 12%, and there's a lot of regulators that still have to sign off on that for it to really happen. Ford is now down. Those shares were up earlier, also on an energy deal. We talked a lot last week about Ford not only making batteries in its CATL JV in Marshall, Michigan, but also making just giant power blocks. They're absolutely massive and hold the capacity of like 60 EVs in one. And a big hyperscaler could order the capacity of like 300,000 EVs in one fell swoop. So everyone's looking at Ford and data center deals. York Space Systems higher on more talk of a $2 trillion valuation at SpaceX. Let's go down right now, though, to the MIAX. Miami International Holdings, the Miami Stock Exchange, seen tremendous growth since it was founded over a decade ago. It operates 8 exchanges across options, equities, and futures. And for disclosure purposes, as part of a collaboration, Bloomberg and MIAX have launched futures and options, and Bloomberg has also a dedicated television studio on the exchange floor down there in Miami. Our Nora Melinda is there. So Nora, tell us about the MIAX and the Bloomberg 100.
Well, Matt, we're here in Miami on the MIAX exchange. Of course, we know we're here because we're celebrating the launch of a new product, Bloomberg 100 Equity Index Futures. We're here, we're really seeing a lot of a shift towards southern states like Florida. And so we see MIAX here in Miami at the center of it all. We know MIAX is the 4th largest options exchange in the United States. And this new product is really geared toward attracting some retail traders who are able to trade commission-free. So a lot of activity that we're seeing, a lot of new collaborations that we have here with Bloomberg and MIAX really celebrating the launch of this new product and being able to attract different diverse traders who are coming to work with them on their exchange here.
All right, Nora, thanks very much for checking in from Miami. We'll talk to you more throughout the day. Bloomberg's Nora Melinda on the floor of the MIAX. Now, in the next hour, she's going to speak with MIAX Chair and CEO Thomas Gallagher. Definitely tune in for that because he's built a pretty amazing business in quick time down there with the help of a lot in the local business and political community. Also coming up in the next hour, Matt Maley from Miller Tabak joins us. We'll also talk coal mining turned rare earths with Ramaco's CEO, and PIMCO's Libby Cantrell joins the program to talk about the G7 finance ministers meeting that's happening this week as well. So much going on from G7 to NVIDIA to SpaceX. There's a lot to cover in these markets as we witness a continued rally on the S&P 500. This is Open Interest.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi in Beirut, and this is Bloomberg.
A judge in New York City has just ruled that evidence seized from accused CEO killer Luigi Mangioni's backpack can be used as evidence in his trial. Among the evidence, the alleged murder weapon and writings prosecutors say amount to a confession. Here's ABC's Peter Haralambous.
Mangioni's lawyers have argued that police violated his rights by searching that backpack without immediately obtaining a search warrant. Mangioni's state murder trial is scheduled to begin in September.
One of President Trump's many lawsuits, this one for $10 billion against the Internal Revenue Service over the leak of his tax returns, is being dropped. But there's more to it than that, says ABC national correspondent Stephen Portnoy in Washington.
The three-page filing advises a federal judge that the president is ending his lawsuit against the IRS. It doesn't lay out any explanation or next steps, but sources tell ABC News the president and his administration intend to announce a settlement, creating a $1.7 billion fund to pay out claims to those who allege they were unfairly targeted by the Biden administration. Democrats have expressed outrage over the prospect of taxpayer money being handed out to rioters who desecrated the Capitol on January 6th.
No end in sight in the war between Iran and the United States. The ceasefire is holding, but the Strait of Hormuz continues to be blocked. Here's ABC Chief White House correspondent Mary Bruce.
Last week, Trump swiftly rejected Iran's response to a U.S. proposal meant to set the stage for peace talks. The president insisting Iran must give up its nuclear development and turn over its enriched uranium. And this morning, Iran says they've sent their response, saying they will not negotiate over their right to enrichment.
The UAE's Seoul nuclear power plant was damaged in a drone strike overnight. Oil prices have also eased. Congo's health minister has set up 3 treatment centers for Ebola virus treatment, that region grappling with an outbreak of a rare variant that has no approved therapeutics or vaccines. This is ABC News. A shooting spree in Austin, Texas over the weekend, leaving 4 people wounded. ABC's Jim Ryan with more from Dallas.
The targets of the 12 incidents seemed completely unconnected. Austin Police Chief Lisa Davis says 3 suspects as young as 15 drove around stealing cars and shooting at people.
It doesn't matter if it was a car dealership that was struck or it happened to be a fire station or a police station. These are dangerous kids out causing havoc in this city.
At least 4 people were struck by gunfire, 1 left in critical condition. Jim Ryan, ABC News.
In Israel, growing unease over the weekend to mark Jerusalem Day, a national holiday. ABC Chief International Correspondent James Longman was there and says the day is normally peaceful, but has been marked by violence in recent years.
I spoke to the police when we were there. They said we will be here intervening where possible. There are isolated pockets of violence. The Israeli police told us they arrested a number of people on the day, but we did see a lot of this violence. We did, though, manage to speak to a couple of people. Majority of these people are Americans. One young man, Eli, he feels very strongly that basically Jerusalem is for the Jews and Arabs and Muslims need to leave.
Israel's military intercepting boats off the coast of Cyprus, part of the latest wave of flotilla activists trying to break Israel's naval blockade of Gaza. Flotilla organizers say they're trying to bring awareness to the living conditions of Palestinians in Gaza following the Israel-Hamas war. I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Broker Studio, streaming live on YouTube. We're streaming live at Bloomberg.com/video, and that's where you'll find us here. We've got some red and green on the screen here. We'll get to that in a moment with John Tucker. Tyler Kendall, Bloomberg Washington correspondent. She's going to join us here, get us the latest reporting out of the Mideast. Phil Orlando, Chief Equity Market Strategist at Federated Hermes, give us his market call. Anthony Hughes, he covers all the equity capital markets for Bloomberg News. Busy week coming up. SpaceX, I think it's coming to tell me they might file this week maybe and get this thing done in a few weeks' time. I can't wait.
Trading in June?
Yeah. I can't wait to see this prospectus. I'm grabbing that right off the shelf.
Ira
Jersey, it's going to be like 1,000 pages. Ira Jersey, Bloomberg Intelligence Chief Interest Rate Strategist here. He's got some survey work out on what a new Fed chairman means for the Fed. We're going to check on Sam Fazeli. He covers all the pharmaceutical companies. He's based in London. We got a lot of stuff going on in the energy space. We'll break it down with Sam Fazeli, maybe talk a little bit of wine. He's very disparaging of my wine choices over time, but we'll see if we can.
He's also a wine expert.
He is. And so every time I send him, like, hey, this is what I'm drinking, he's like, yeah, I wash my teeth with that. I was like, okay, great. Thank you very much. Right now, let's get it all started here. John Tucker in the Bloomberg Business Flash.
All right. Happy Monday. This Bloomberg Business Flash brought to you by IBKR, where the Fed raised rates by 25 basis points in June 2026. Trade your predictions alongside your stocks and options at ibkr.com/predictions. The last trading day is June 17th. Right now, the major average is mixed. Oil lower with some sort of renewed hope over a breakthrough to end the closure of the Strait of Hormuz. Dominion, the best performing stock in the S&P 500. NextEra Energy agreeing to buy them for $67 billion in stock. Biggest power acquisition ever. Shares of Dominion right now close to 11% higher. As for the major averages, the Dow up 95 points, the S&P 500 11 points higher, 74.19 on the index. The Nasdaq Composite Index, that has just turned higher at 30 points higher right now. That is up 0.1%. Elon Musk says he's back in Texas working on plans for an IPO of SpaceX as the company gears up for the largest listing of all time. And meantime, Rob Rowe at Citigroup, Citi Research, says inflation is going to remain in the driver's seat for markets.
The narrative on inflation will continue into probably June or into the summer, and that inflation will continue to tick higher, which will put pressure on the central banks to raise rates.
The 10-year yield right now, it's actually down a basis point. That is at 4.58. As far as oil, Brent, the active contract right now, down about 39 cents, 108.85 a barrel. And because I checked The water temperature at the Ambrose Light Buoy, 54.5. I'm not going swimming.
I was in yesterday.
Yeah.
Burr. I mean,
But give it
in
like
and out.
2 days and it'll be hot because it's going to be brutally hot. The
Yeah,
next 2
it'll
days.
warm up.
It takes a
July
while for it
4th.
to warm up, despite the air temperature. Yes,
exactly.
it does. So
I mean, we were on the beach yesterday. Beautiful weather, beautiful weather. The breeze shifted just a little bit to come off the water. Boom, everybody left. It's dropped like 20 degrees.
it's the way it goes. Memorial Day,
Yes.
fast approaching. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube and at Bloomberg.com as well. Green on the screen there across the board have been up and down here this morning. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Jordan Fitzgerald. Jordan, what are you looking at?
I mean, first and foremost, like John mentioned, Dominion Energy. Dominion Energy up as much as 12% today. That's set for the best day since 2020 after NextEra said it would be buying the company for $67 billion. That is the biggest power acquisition that we've seen.
That's a big deal.
I mean, this all comes on the heels of lots of demand for power given the AI build out and everyone using ChatGPT and all the other large language models.
Yep, Dominion based in Richmond,
Do
Virginia.
you think the regulators will let this go through?
I don't know. I haven't.
My power rates are going to go up. It's just
See,
like
all these
consolidation.
We'll see.
Lazard is a lead financial advisor for Dominion, Bank of America, and Wells Fargo, also on the deal. And for the seller, it's Goldman Sachs and JP Morgan representing them. So anyway, that's a good deal. How about what else you got there?
UNH, we got Berkshire's 13F.
University of New Hampshire?
I wish.
Oh, okay.
United Health, made famous for some other headlines, I think, among the general public. But we got all of these 13F dumps on Friday. But first and foremost, everyone's always watching what is Berkshire Hathaway doing. And Berkshire Hathaway did say they're cutting UNH. And as such, the stock is down about 2% this morning. Berkshire disclosed some other positioning. Macy's and Delta Airlines both up on Berkshire disclosures of stakes there. But with UNH, they're really taking a hit on that front.
So when we say that Berkshire is making a decision here, is that Warren Buffett making a decision or his successor?
His successor.
Okay.
Totally.
Just wanted to double check that.
Yep.
All right. Last one, Jordan.
Ford. Ford made huge headlines last week, was up 21% in 2 days after a Morgan Stanley note highlighted Ford's energy business and the potential for it to potentially partner with some hyperscalers. And you say the word hyperscaler with a stock and instantly it shoots up. And so it sold off on Friday as a result of, the broader weakness in the market and just deflating some of that hype that it had seen previous days last week. Then today, Ford said it formed a new pact with EDF Power Solutions, and the stock was up 5% in the pre-market, and now it's cooled off a bit, down about 1%, but Ford's becoming this new AI name to watch.
I'll take it any way you can get it. Little AI.
Everyone's going to announce something that puts them in the AI narrative, right?
What isn't an AI stock these days?
Exactly. All right. Thank you so much, Jordan Fitzgerald. She is one of our equities reporters here at Bloomberg News. And for more conversations like what you just heard, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. So in terms of what's happening out of the Middle East, oil prices have come down just a hair. WTI just below 105 a barrel. Brent off by 0.6%, just below 109 a barrel. It's not clear that there's any movement on what's taking place with Iran.
No, I mean, I think there's Iranian media said U.S. offered interim waiver on oil sanctions. Not really sure what that fully means. And there's also some reporting that Iran is saying that one of its ships went through the U.S. blockade. I'm not sure if they were, the U.S. Navy allowed it to go or whether
busted through.
Yep.
Okay, well, let's check in with Tyler Kendall to get more on what all of this means. She's our Washington correspondent, and she's back in the U.S. after traveling with the president to Beijing last week. Tyler, welcome back home. Just walk us through what this report means. Iranian media saying that the U.S. proposed a temporary waiver of sanctions on Iran's oil.
Well, Scarlett, as you're both outlining here, we're a little short on details, but according to Iranian state media, maybe we could see a temporary lifting of the sanctions related to Iranian crude until a deal is reached. Keep in mind, this has been one of those sticking points that Iran has really wanted to see the U.S. put on the table, but at this point, we haven't gotten confirmation from the White House side. And it also comes the same day that we heard the U.S. Treasury Secretary addressing G7 allies, urging them to ratchet ratchet up their sanctions. So perhaps there could be a world where we see the U.S. winding down its sanctions and European allies instead filling back up that gap. But at this point, it's just really not clear. But what is clear is that the White House's patience is running thin for there to be a deal. We saw this renewed threat from President Trump over the weekend, the first of a series of threats that came after he came back from his travel to China. And it's, adding to the fragility of the ceasefire that is currently in place, because over the weekend we saw some of those regional risks be renewed, right? The UAE confirmed that a drone had hit a power plant in that country, Saudi Arabia saying that it had intercepted projectiles that were over its airspace. And then there was also this reporting from Iranian state media that the latest U.S. proposal had been a non-starter for them because it didn't include things like payments to cover war damages. It said that the U.S. proposal was to unfreeze less than a quarter of Iran's frozen assets. So at this point, we're not getting a lot of indications that the sides are getting closer, at least publicly, to a deal, because so far we've only heard from Iranian state media on where they stand when it comes to a potential agreement.
And Tyler, last week the world's attention was on China as the president was there for the summit. Now the president's back. Is there any sense that collectively the administration now can refocus on Iran and a solution, a resolution to Iran, or let this thing just keep dragging on? What's the feeling?
I think that Iran has really been dominating the conversation in some sense. Foreign policy has really been dominating the conversation in some sense with President Trump's trip abroad last week. But actually, Paul, I would say that domestic politics are coming a little bit more into focus this week. And that's where we're going to see a dovetail with Iran, because a flurry of states are holding their primaries. And while we can say that actually most Trump-backed candidates are winning the Republican primaries, the war in Iran is, of course, compounding higher prices for Americans as affordability and the cost of living remains the #1 issue as we head into November. Now, President Trump has been pressed on this. He has repeatedly said that he doesn't think that the issue is going to hurt Republicans when it comes to the midterms. He maintains that this is going to be a short-term disruption in exchange for curbs on Iran's nuclear program. The issue is, we got an update just this morning from Iran's foreign minister speaking in a briefing, ultimately saying that uranium enrichment is, quote, not something we want to discuss or compromise on. And we know that that is perhaps the biggest sticking point for the U.S., that there needs to be those curbs when it comes to Iran's nuclear program. So it's going to be something to watch as we get closer to the midterms. Maybe that would help grease the skids in order to get some sort of progress when it comes to this deal. But at this point, the U.S. is holding firm on its top demands, including that the U.S. military blockade is not going to go anywhere. In fact, Paul and Scarlett, I'll point you to a new Bloomberg News analysis that was out just this morning that shows nearly 23 tankers right now are stationed outside of Karg Island. That marks the largest cluster of ships that have essentially been blocked from going through related to the export hub since the U.S. started its naval blockade a few weeks ago.
Tyler, before we let you go, there's also news that the president has or is moving to drop a $10 billion lawsuit against the IRS. Can you tell us a little bit more about that?
So this is an interesting one because we've seen President Trump expand the use of executive authority before, right, when it comes to his tariff policy, for example, and not going to Congress. But this lawsuit represented an interesting fissure of that. Now, we don't have that many details. This filing came in a Miami court earlier today and didn't really have anything else other than the request to drop the suit by President Trump's lawyers. U.S. officials have discussed creating this $1.7 billion federal fund to pay victims of so-called government weaponization. This has been a big focal point for the Trump administration, pushing back on allegations against the Biden administration when it comes to the idea of weaponizing the justice system to go after political rivals. Something to watch here. Allies have concluded about 1,500 individuals who were prosecuted for storming the Capitol on July 2021 could be impacted by this.
Tyler, thank you so much. Always appreciate your reporting. Glad to have you back here in the U.S. from that long trip over to China last week. Tyler Kendall, Bloomberg, Washington correspondent, just down there in our D.C. studio. We got some green on the screen here. S&P's up 13 points, and Dow's up 100 points. And then Nasdaq's up 42 points there across the board. Yields pretty steady here. 10-year Treasury yield 4.58%. WTI crude oil off slightly. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Stocks, well, they've turned around from earlier today. Now moving higher as we're heading with this report out of Iran that says the U.S. proposed a temporary waiver of sanctions on the nation's oil. This is key demand from Tehran to agree to a peace deal and reopen the Strait of Hormuz. So as a result of that, you have energy prices. Right now, they are lower. Brent crude is down about 0.2%, 108.96. As for the major averages, S&P 500 up 14 points. The Dow is up 111 points right now, and the Nasdaq Composite Index is up 34 points. 6 of the 11 major industry groups in the S&P 500 up. And communication services, that's in the lead. That's home to Netflix. It's up 2%. They are set to supercharge their ad business to over $3 billion this year by, among other things, expanding the content breadth with sports like the NFL. And, of course, the biggest deal in the power industry on record. We've been telling you about this. Best performing stock is Dominion Energy. Next to Era Energy has agreed to pay about $67 billion for the utility giant. It underscores how soaring electricity demand from AI data centers shaking up the power sector. And Berkshire Hathaway has amassed a $2.6 billion stake in Delta Airlines. Berkshire purchasing close to 40 million shares in Delta as of the end of March. That's about a 6.1% stake in the airline, and Delta is up 2.3%. Then you have Disney banking on Baby Yoda to revive Star Wars, The Mandalorian, and is it Grogu? The Grogu movie is set to open in theaters worldwide come Friday.
I've been seeing marketing for this everywhere.
Yeah.
I was at the airport last week, and it was definitely all over San Francisco.
Yep. So there you go. Yoda, Baby Yoda.
I mean, how many the Star Wars franchise?
It's the franchise that keeps giving.
It keeps giving. They have the French fries at Burger King, Star Wars based. Baby
I didn't
Yoda,
know that. I do
Grogu,
McDonald's, so
whatever. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Paul and Scarlett.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Let's check in with Phil Orlando, Chief Equity Market Strategist at Federated Hermes. Phil, we're starting to get some of these big IPOs. We got Cerebus last week. Boy, that thing traded well. Looks like SpaceX is going to file this week. We have maybe even sometime later this year the Anthropic and Open ChatGPT or whatever all that stuff is. As someone who's been in this market a long time, Phil, what does it tell you when you start seeing some of these mega IPOs come to market?
What it tells me is, first of all, Paul, thank you very much for having me back on the program. The expression "a strike while the iron's hot" is the one that comes to mind here. I mean, we hit an all-time record high in the S&P 500 last Thursday at 7,500. We hit records again in the Nasdaq. So if you're thinking of having a mega deal, you might as well bring it out while buyers are desirous of product and the market's at record highs. And there's likely to be strong demand for your offering. So that makes perfect sense to me.
So I guess what I'm confused about here is that you mentioned the S&P 500 at a record high on Thursday. There's clearly a lot of optimism for some big IPOs coming up. But we did get a pullback in stocks on Friday. We also on Friday got a huge sell-off in bonds, not just in the U.S., but around the globe. And bond yields have currently held around those high levels. The 10-year yield right now above 4.5%, 4.59%. The 30-year yield at approaching 5.13%. Do bond investors and equity investors, are they seeing the world very, very differently right now? Just talk a little bit about that divergence.
Yeah, they're pointing in absolutely different directions, Scarlett. I think you hit the nail on the proverbial head here. You've got equity investors who are extraordinarily euphoric. You've got the Iran situation, which is now dragged into week 12. Originally, we were told this would be a 4 to 6 week conflict. You've got crude oil prices up, 80%. You've got gasoline prices up 50%. That is filtering into the inflation data. We saw last week nominal consumer price index in February was at a 5-year low. By April, it's at a 3-year high. Bond investors are, in my view, completely absorbing and reacting correctly to this. Bond yields have spiked. Remember, yields and prices move in opposite directions. That means you're losing money if you're a fixed income investor. Yet, equity investors seem to be whistling past the proverbial graveyard. So as we look at that situation, we say, okay, stock prices are elevated. We're getting to a seasonally difficult period of the year. You've got the Iran and inflation data moving in the wrong direction. You've got a leadership transition at the Federal Reserve. Going back and studying the Fed over its 113-year history, the market always, without exception, tests a new Federal Reserve chairman during the first couple of quarters of when the chair takes office. And you've got a midterm election year, which historically results in negative quarters, the two middle quarters, second and third quarters. So you put all of that together, and our best guess is that the tape feels heavy here. We think we're likely to see some chop and some volatility in between now and say, September, October. We think we will find our sea legs and we'll right ourselves to better numbers at the end of the year. But there's a lot of ground to cover here over the next 6 months or so, and the likelihood is we could see a correction before we see a move back up to additional record highs.
Phil, got the Russell 2000 outperforming the S&P 500. What should we read into that?
Well, we like small cap stocks, we like value stocks, and we like emerging market stocks. The underlying fundamentals for those three areas are very strong, and the valuation's much more attractive than the large cap domestic growth and technology names that are largely driving this powerful rally we've seen over the last 6 weeks. We talked about the NASDAQ and the S&P being record highs. The S&P has risen by 19% over the last 6 weeks. The NASDAQ's risen by 30% in 6 weeks, Paul. Yep. And that's largely on the back of the Mag 7 names.
Yep, just been an extraordinary snapback after the initial sell-off on the war. Phil, thanks so much for joining us. Phil Orlando, Chief Equity Market Strategist, Federated Hermes here, giving us the latest update on these markets. Again, we got red and green on the screen here today. The IPO window, it's wide open, folks. We had a big IPO last week, and more to the point, maybe a filing of SpaceX as soon as this.
I know, this is the world's most widely anticipated IPO. We've been talking about it for, it feels like forever, but in actuality, probably a year or two.
Right.
Is it going to actually happen
exactly.
in June?
And here we go. Anthony Hughes, equity capital markets reporter for Bloomberg News, joins us live here in our Bloomberg Interactive Broker studio. What do we know about SpaceX and potential timing there, Anthony?
Yes, well, as Scarlett points out, we have been talking about this for a while, but actually the process is moving along quite rapidly if you think about the fact that we reported that they filed confidentially at the end of March, and then we're in May now, and we're looking at a filing perhaps in the next few days, or next 2 or 3 days, and that really sets up SpaceX to, that's the public filing, and that would set SpaceX up to launch the IPO, so start the public marketing of the IPO. Basically, companies have to wait 15 days after they file publicly, at least 15 days. And that sets up SpaceX to potentially launch the IPO on the 4th. And generally, you do a 5, 6, 7 day roadshow, and that would set SpaceX up to price on perhaps the 11th, which is a Thursday, and then go public on the 12th, which is a Friday. Now, the interesting thing is that we were previously reporting that it was more likely expected the following week. So what we're actually seeing here is that Elon Musk seems to be quite aggressively, pushing the banks hard to get this done as quick as possible. And I think the caveat here is that even though people are saying that this is all going to happen, obviously the filing is going to happen either way this week by the sounds of it, but the actual marketing of the IPO, it looks like there's a bit of flex potentially in that timetable. So, you could maybe delay it a week or so if necessary, because, one thing is when we express a lot of certainty around the timing, we have to take into account that the SEC is reviewing, the prospectus and all the details, and, some of that is out of the control of SpaceX. So when we talk about these dates, we're talking about targets, not necessarily what's, there's other parties involved that have to make sure, allow them to meet those targets. So, we have to put a little bit of a caveat on the time.
Sure. Anthony, is there anything about this IPO that's going to be different or novel, or is this going to be a fairly conventional IPO, albeit a gigantic one?
I think remains to be seen, but it looks like it will be unconventional in a number of ways. I mean, it will be, obviously, in terms of size, it will be something we've never seen before, and that's going to mean that other people who want to go public are going to have to probably think hard about whether they want to compete with the attention that this is going to get, because already, I know for me, it's getting all the attention, and a whole bunch of other things have been pushed to the sideline. But in terms of the structure, I mean, it's going to be very interesting whether there's a large cornerstone investment up front where, if that is the case, it could be a massive corner. If we're talking about a $75 billion IPO potentially, And, you know, the other caveat I would put on this is that maybe you want to, when you actually announce this if it's going to be on the 4th of June, maybe you want to start a little smaller and then build up a little bit higher as the process goes on. So that's another aspect of the deal. But in terms of a cornerstone means getting some big names up front to commit to take on a big chunk of that 75 and therefore de-risk the process of getting the rest. If they do that, that would be that would be the biggest cornerstone ever. I mean, obviously everything about this IPO is going to be the biggest ever. But you know, some bankers think that they don't have to do that. So we might find that more happens in the shadows and it's not on the cover of the prospectus. But the other really interesting thing, which is a little bit more complex, and you know, if we look at the IPO last week of Cerebras, it didn't get reported too widely that there was a quite unique lockup structure. Where the employees and other existing shareholders are going to be able to, or were able, in the case of the employees, were able to immediately sell some shares after the IPO rather than stick with this traditional 6-month lockup. And the idea, this has sort of been called a dribble out lockup, which basically, you know, you can look at this from a different perspectives, but you could say that when, you know, we've also got this situation where these big companies are getting early index inclusion. So, you know, to tap into that, the insiders could sell a little bit of stock and, you know, to feed into that index demand. But the broader point being that if you're worried about all the stock becoming available at once and then depressing the price, this dribble out process might be able to smooth that and make it so the price trades better in the aftermarket.
Yeah, you could never do that on my deals. 180 days,
Back in the
baby.
day, that did not
180
exist.
days, not even discussion. Anthony Hughes, thanks so much. We appreciate it. He covers the equity capital markets for Bloomberg News. One exception, one of my radio IPOs, last day, the founder comes and says, I need $10 million. I need to sell it on the offering. We're like, no. He says, I have to have it. And we're like, why? Wanted to buy a helicopter. So
and that was a reasonable explanation?
Exactly. I'm like, we'll loan you the money, dude. And we're not letting you sell stock here on the deal. S&P down 15.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages right now turned to being mixed to a little change, we'll call it. Brent crude has now moved higher again. Earlier was lower after that report from Iranian media as that Washington proposed a temporary waiver on sanctions. This is part of the peace talks. Right now, you have 8 of the 11 major industry groups in the S&P 500. They are up. Technology is the biggest drag. And then Dominion Energy, the best performing stock in the S&P 500. NextEra is buying Dominion for $67 billion to form a power giant, a power colossus, I'll say. We're going to see what regulators have to say about that, though. Economist Yelena Shaletova at the Conference Board says the Fed, meantime, will eventually cut interest rates, but for reasons nobody's going to like.
You know, we will have rate cuts eventually, but not because of what the market says, but because of what the economy does. In our own projections, we expect a lot of demand destruction from all these inflationary pressures that we're experiencing right now.
Right now, the S&P 500 down 11 points. The Dow up 83 points. The Nasdaq Composite Index down 128 points. The benchmark 10-year yield pretty much unchanged, still a 460. The long bond up about 2 basis points, 513 on the 30, and Brent crude up 61 cents, 109.88. So Pope Leo is launching his first encyclical on artificial intelligence. This is next week.
Timely.
And it's going to feature kind of an unexpected guest, Christopher Olah. He's the co-founder of Anthropic. He's an expert on machine learning. He has joined Pope Leo at the launch of the Pontiff's first encyclical. This is May 25th, Magnifica Humanitas.
Nice.
Expected to outline the Pope's views on preserving humans in the age of AI.
That's a good goal.
All right, okay. I will read it. I should
Will there
actually
be
be
Latin
sent
in
there
there?
to go cover it, don't you think?
If there's
Raise-
Latin, I'm okay with Latin.
Oh, I can't.
8 years of Catholic school, you picked up a little bit.
Yeah, you had to, even though it's a dead language. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paulus. Magnificent.
I saw that. Yeah, I heard that. What would my Roman name be?
I know. Sorry. Scarlettus.
Scarlettus. Okay. All right. Let's talk about what's going on in the bond market, because we had this massive sell-off in global bonds on Friday, pushing yields higher in the UK, in Japan, in the US. And we're getting a little bit of relief today, but not so much, because you look at the 10-year yield, it is still up at about 4.6%, the 30-year yield at 5.13%. Ira Jersey is our chief US interest rate strategist. And Ira, this kind of makes things difficult for a new Fed chair, Kevin Warsh, who doesn't have to do anything right away, but he is gearing up for the FOMC later in June.
Yeah, it's going to be hard for him to make the case that they should be cutting interest rates right now. And you know, even though the market is higher, I think the part of the issue is that we're seeing this global sell-off. So this isn't all just about U.S. Treasuries. It's not all about the U.S. either inflation expectations or monetary policy expectations, but it's the fact that you have in Japan and the U.K. in particular really serious questions about their fiscal health in the longer term. So you know, if we want to call this bond vigilantes, I think that you can make the case that there's at least a little bit of that seeping into the markets via the kind of the back door into the Treasury market. So it's not Treasury specific, but it is a global developed market phenomena.
Scarlett, you know you're a player in the global interest rate business. If in your email inbox you receive the following document, Bloomberg Intelligence Federal Reserve Chair Transition Survey. Ira,
That's what you get, really?
If you're a player, yeah. Ira, I know you sent this survey out to the main players out there in the marketplace, and you're talking about what does the new Fed chairman mean for the Fed? What did this survey, what did you guys learn?
Yeah, so we put out that note this morning, Paul, and you know, we found that the most surprising thing in there was not that Kevin Warsh is expected to be more dovish than Jay Powell. I think that's certainly something that many people thought, given that he's being appointed by President Trump. But it's really that over 2/3 of the respondents thought that the yield curve would steepen, and you haven't seen that very much. So, you know, it might be very difficult for the yield curve to steepen at this point, especially if the market continues to think that the Fed's going to be relatively hawkish.
You okay? Let's
go on. Little tickle in my throat talking about Kevin Warsh.
Yeah, well, he's got a big, heavy task in front of him. How does he fold in what's happening overseas? I mean, does that factor into his thinking, the FOMC's thinking at all? You talked about the return of bond vigilantes that's maybe seeping into the U.S. Do they just not focus on that at the moment?
Yeah, so the Fed's going to focus on how the international environment is going to affect the U.S. economy, right? And I think that when you think about higher oil prices, when you think about the fact that you've had now higher yields, in a way, the market's doing the Fed's job for it, right? It's tightening financial conditions at a time when the growth is okay, right? The growth isn't great, like it's very disjointed growth right now in terms of the consumer, and we know that, right? We call it the K-shaped economy. So they will take into account what's going on in Europe, what's going on in the UK, what's going on in Japan. These are our major trading partners, and these will have an effect on the U.S., right? We do export a lot. We do have large trade balances, both positive and negative, with some of these countries. So, so all of that will be taken into account for sure. Now, Kevin Warsh, I think, would like to lower interest rates, but he wants to do that by cutting the Fed's balance sheet. And one of the things that did come out of the survey today was not many people in the investing community think that the Fed's going to be able to actually shrink its balance sheet.
Earlier today on Bloomberg Surveillance, Ira, we had Guneet Dhingra, head of U.S. rate strategy at BNP Paribas, on. He was saying basically, if you look at the third year, 5% is the new 4%, kids. You better get used to it. How do you think about that?
Yeah, you know, we've been hovering kind of between 4.5% and 5% basically for a couple of years now, and 5% might not be the new 4, but you know, 4.5% might be the new 3.5%, and I think that that's pretty standard thinking, especially given that the U.S. fiscal situation has not improved any, right? So we've seen slightly smaller deficits than we had a couple years ago, but we also don't see any relief from that in sight. So it's hard to see why 30-year yields would go down very much when you are worried about longer-term inflation not being your target, and also, in particular, the size of the government's debt outstanding.
Ira, when you guys held your survey, you also asked about the legacy of outgoing Fed Chair Jay Powell. What did you get from that? What was the takeaway for you?
Yeah, most investors thought that Jay Powell did a pretty good job on communication. He did a good job maintaining the Fed's independence. You know, part of this is some people think that Kevin Warsh won't be quite as independent as Jay Powell was. That certainly was one of the findings of the survey. But generally speaking, people were fond of Jay Powell. Most of them didn't think he was perfect, so we asked an open-ended question at the end of the survey. And some people said, like, hey, you know, he was not great saying that inflation was transitory, but he also reacted relatively quickly to that as well. So I think, you know, Jay Powell will be seen as pretty fondly. You know, the other thing that we pointed out was Jay Powell is one of the few Fed chairs that's had to contend with 2 economic cycles. You know, obviously Alan Greenspan was in office for so long that he had to deal with multiple cycles. But outside of him, there's been very few Fed chairs in the post-war period that have had to contend with raising interest rates, lowering interest rates, raising interest rates, and then lowering interest rates again. And Jay Powell, you know, guided the Fed through that whole process over the last 8 years.
Ira, 30 seconds. Is the U.S. going to be competitive at all in the World Cup?
I certainly hope so. We should get out of the group stage. Turkey is probably the most challenging country that we're going to play in that group. But yeah, it's exciting. Right? 3 weeks away from the beginning of the World Cup. I'm certainly excited. We've also started the club that I co-own. We've started our season just this past weekend as well. So a lot of soccer for me the next 6 weeks.
Are you going to go see the World Cup, Ira?
I'm going to one game, yeah. I'm going down to Philadelphia to see the Ivory Coast versus Curacao.
There you go. Who wouldn't want to go to that? Ira Jersey, thank you so much. Appreciate it. Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. He is all into soccer, folks. He's a co-owner of this minor league soccer club, Real Central, New Jersey.
Real Central, New Jersey.
That's what it is. And they're good. And he he's a big part of that soccer stuff. So he's our guy. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Good Monday morning. Paul Sweeney, Scarlett Fu, and John Tucker here. This is the first hour of Bloomberg Intelligence, and there's been a lot going on over at the FDA, the Food and Drug Administration. The commissioner, Marty McCary, has left. He was asked to go. He resigned. I mean, it's...
You were supposed to interview him, right?
I was supposed to interview him, but he got let go or was pushed to resign last week.
Okay.
So we're going to talk to him about the FDA's removal of a safety warning from estrogen patches, hormone replacement therapy for women, and how that has really kickstarted HRT and the drug makers that make those items. But that's not going to happen anymore. So we'll see how it all shakes out. But Sam Fazeli is our Director of Research for Global Industries and Senior Pharmaceuticals Analyst here at Bloomberg Intelligence. And Sam, I just want to get a sense from you, what happens now at the FDA? Presumably, McCary left because he would not approve these fruit-flavored vapes that the president wanted approved. And so he got asked to step aside, and now they're going to move forward with those approvals. But how does the FDA reorganize itself now?
Yeah, I think, Scarlett, that this is probably a combination of things and not just that issue. Excuse me. I think part of it was to do with the topic you just mentioned earlier, the mifepristone issue with regards to pregnancies, etc. And then, of course, before that, there have been some controversies that might have led some companies to complain to the administration about the lack of clarity on what direction they're supposed to be taking. We've had the situation with Vinay Prasad. and vaccines up and down, and then also some prosecution of conversations that the commissioner had with companies on national TV. Those are all probably things that all eventually got together and led to this situation. And, the commissioner did quite a lot of good things too, at least the ideas that he was bringing to the table. I mean, it takes time to action things. So now we're left with a pretty headless regulator, right? The commissioner isn't there. Deputy Chief of Staff, Sam Doran's gone. I'm just looking at the names here. Jeremy Walsh, head of AI, is gone. Tracy Beth Hogue, so we've got a bunch of folks that aren't there now anymore. So I think companies would be worried about how their filing would be considered.
Is there any indication, Sam, that filings are taking longer for approval or longer than usual? Or, because I think this is an administration that would like to speed things up, if anything.
Correct. But not really any data. It's only been a year, remember, and it's a very short period of time. There has been one company at least where they came out with some data that you can judge as positive or mildly positive or whatever for Duchenne muscular dystrophy. And they said on their call that even though they've got the phase 3 data that looked positive, they're going to wait for the FDA to settle down. And they're hoping that people who come in would be the types of people who are going to be more positive, as Marty McCarry was, about rare diseases and getting drugs for rare diseases through, which often takes time. There aren't that many patients. It's not easy to do placebo-controlled studies. So that's what they're going to delay that by a few months in terms of the filing. So let's hope that they're going to be dealing with an FDA that's well settled by then.
What we've noticed with a lot of the empty positions or vacancies is that the president will announce an interim director or head of some department and kind of leave it there and not move to appoint someone more permanent. If he were to do that with the FDA, does that create any limitations?
No, it all depends on the individual, right? So Jay Bhattacharya, I think, is an interim head over at the CDC. And, some people like him, some people don't like him. But at the end of the day, he's carrying on as the interim head. If I haven't got the agency wrong. The issue here for the FDA is you just need someone to be in charge to give direction to the rest of the team. And the team is a massive team, and they do most of the work. The commissioner is just there to set the tone. They shouldn't be getting involved in the decision making, which to a degree, Marty McCarry and Vinay Prasad, etc., were getting involved. That's not supposed to be the case unless there's something significant that needs to be dealt with. They should let the heads of the divisions get on with their job and the career staff to do their work. Although quite a lot of those career staff has also been fired. So it's a bit of a mess.
Sam, the World Health Organization declared the Ebola outbreak in Democratic Republic of Congo and Uganda a public health emergency. How concerned should the world be about this?
Well, of course, whenever there's disease anywhere in the world that's killing people, we're all concerned. Nobody wants to see any of this. And this, unfortunately, is in an area which is under difficulty in general. So the DRC is for want of a better phrase, a war zone. Has got some issues going on. So access to healthcare is tougher. Managing to deliver the healthcare is tougher. And of course, with a lot of the aid that's been cut off by not just the United States, although primarily the United States, but some other countries too, you can't get in there and manage these things quickly. So when you can't do that, what happens with infectious diseases? They don't have no borders. So the problem we have there is this is a virus that's a problematic virus. So we need to deal with that. And I think I'm a little bit worried there.
Sam, thanks so much for joining us. Sam Fazeli, Director of Research for Global Industries and a Senior Pharmaceuticals Analyst for Bloomberg Intelligence. He's based there in London. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in moments with the S&P pretty much unchanged on the day. The Dow's up 100 points, but the Nasdaq's down 92 points, so not a lot of movement there. WTI crude oil, it's been up and down all day, now up about $1 here at $106 per barrel. A lot of volatility intraday in global oil markets this week.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Monday morning from the Bloomberg Intelligence, Bloomberg Interactive Broker Studio. Did I get that right?
Nailed it.
Okay. Sometimes, you know, on a Monday, the brain doesn't work as quickly. But this is Bloomberg Intelligence, the second hour of it, with Paul Sweeney, Scarlett Fu, and John Tucker. And we've got a lot to cover on this Monday morning. We're going to check in with our own Michelle McCaskey on this LIR strike that is bringing chaos to New York City commuters. This is the world's, John, you've been talking about this, the busiest rail network in the U.S.?
The busiest commuter rail network, up to 300,000 commuters using the LIRR.
Okay, so we'll get more on that. This is an ongoing story and hopefully one that ends soon for all involved. We're also going to check in with Mike McGlone. He is our senior commodity strategist. Oil prices remain elevated, even though the gains today are not particularly significant. We're going to check in with Dryden Pence, the CIO at Pence Wealth Management, to get his outlook for these markets. Markets right now are mixed. Yields remain elevated as well. And Matthew Palazzola, our senior analyst covering PNC Insurance, will talk to us about 13F filings, specifically what Berkshire Hathaway is doing and isn't doing. But first, let's get to John Tucker for Bloomberg Business Flash.
All right, Scarlett and Paul, major stock averages, mixed little change. Now, crude has reversed course. We were telling you earlier with those headlines that it was lower. Brent, the international benchmark, now up 1.2%, 110.62 for the benchmark right now. So doubts resurfacing about any imminent U.S.-Iran deal. And we got to tell you about Dominion because it's the best performing individual stock in the S&P 500. Right now, 10.5% higher. We'll break it down in just a second. The Supreme Court turned away appeals from pharmaceutical companies. They're trying to topple the Medicare drug price negotiation program. They wanted to kill it because it leads to billions of dollars in discounts on some of the top-selling drugs. Dan Greenhouse, meantime, at Solus Alternative Asset Management, says the higher bond yields we've been seeing lately will put pressure on stocks.
You could argue that around 460, 470, you've had some periods of momentary equity weakness. And today with the S&P basically at a high, borderline overbought, you could certainly have a 5 or even 6, 7% correction right about now.
That benchmark 10-year yield right now is at 460, so it's up a basis point. The long bond still above 5.14%. An index of market conditions from the National Association of Home Builders and Wells Fargo increasing 3 points to 37. That's according to the data we got this morning. But keep in mind, a value below 50 means more builders see conditions as poor than good. S&P 500 down 14, the Dow down 40, the Nasdaq Composite Index right now down 125 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As John was just reporting, we got a little bit of a sell-off in the marketplace today. Let's take a look at some of the stocks on the move. We can do that today with the pride of the University of Virginia, Emily Graffeo, cross-asset reporter for Bloomberg News. Emily, what are you looking at today?
Okay, so I'm looking at shares of Dominion Energy. Like John mentioned, one of the biggest movers in the stock market today. The ticker is just D.
Got it.
Single ticker.
Coveted, one letter.
Exactly. The stock is up about 10% right now. Highest level since 2022. On some deal news, NextEra Energy agreed to buy the utility company in an all-stock transaction valued at about $67 billion. So we are seeing NextEra shares falling. The combined company will operate under the name NextEra Energy. I hope I'm saying that right.
Yeah. I think so.
NextEra?
NextEra.
NextEra?
Yep.
Okay. It's going to trade on the New York Stock Exchange under the ticker NEE. Couple analysts this morning, though, talking about how it's not a done deal. There are still some regulatory hurdles that this needs to clear. Bloomberg Intelligence specifically saying that This acquisition of Dominion would create the largest U.S. electricity utility holding company, but it could face a difficult approval process given NextEra's prior utility M&A setbacks. So watching for that.
All right, so massive M&A deal to start this week. Next up on your list.
Regeneron. So these shares are down about 18% year to date and down about 11% today. This, of course, is a biotech company, the ticker REGN. A big move down today. The shares tumbling on a key late-stage melanoma study failure. This was coming late on Friday, but they've had a series of challenges for the U.S. biotech, and the latest one, this failure of this melanoma study.
Got it. All right, last one's Hive Digital Technologies. Who are these people?
Yeah, okay, so this is a smaller cap company, but I wanted to flag it because the shares are currently up about 28%. This is a cryptocurrency mining firm, the ticker HIVE. They said this morning that their cloud and data subsidiary, Buzz HPC, is building a 320 megawatt AI data center in Toronto. Listen, this is something that we've seen a couple other crypto miners do. They're like trying to get into data centers. And
I see.
It's something that the equity investors seem to like, and we're seeing that this morning.
Nice.
I know, but everyone jumps on this bandwagon. At some point, you're kind of like, really? You too?
I just don't want to be the last one. That's
Yeah,
all. So
exactly.
okay.
But yeah, they have a lot of infrastructure. They like have this capacity. I guess they have the power
Stock
to.
goes up. Let's sell some stock.
Yeah, it's a game of musical chairs, right? When the music stops, just make sure you have a seat. All right, Emily Garfeo, thank you so much, Emily Garfeo, our cross-asset reporter. Actually, she covers credit now.
That's right.
I keep forgetting that. But
all
you know,
right.
in my mind, you're a cross-asset reporter.
It's cross-asset today.
There you go. For more conversations like this, be sure to subscribe to our Stock Movers reports, where we have 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. You guys spoke with MT Chairman and CEO Janno Lieber this morning, didn't you?
Yes, we did.
And he was talking about the LIR, the Long Island Railroad strike, which just began over the weekend and continues to really make life difficult for Long Islanders.
Yeah, 300,000 is kind of a daily ridership number, isn't it?
Well, Janno Lieber did tell us that Long Islanders are heeding warnings and finding alternatives to their usual commute.
Most people have taken the governor's suggestion to make it a telework day. 95% of Long Islanders telework during COVID, and they know how to do it. The turnout at our shuttle bus locations has been pretty light. So people who have to come into the city are getting there, and the subway service from the Queens subway stations where people are being dropped off has been fantastic. So far so good, but it's the first day, and you know we would like to resolve this issue and restore Long Island Railroad service, which carries like 300,000 people a day most days.
So let's bring in Michelle Kasky. She's our Bloomberg News reporter on the latest on this strike. Michelle, the strike actually began on Saturday, so this is the first weekday that people are really feeling the impact. Are there any talks or negotiations scheduled right now, or is everything at an impasse?
They actually are talking right now. They're at MTA headquarters. These are the union leaders and MTA officials and MTA lawyers are still negotiating with the different people involved, and they were brought back into discussions by the Federal Mediation Board. That started yesterday, actually, Sunday afternoon, and they went late into the night yesterday till about 1:30. Still no deal, so they started up again at roughly about 7:30 this morning.
What's the sticking point here? Where are they apart?
Yeah, it's about the raise for this year. It would start next month and go into 2027. The unions have asked for 5% wage increase or close to it. MTA has gotten to about 4.5% or almost to it.
Split the difference.
But the problem here is to be at that 4.5, the MTA is saying even at 4.5, we need to find some other things to generate some savings here.
Offsets.
Yeah, offsets, basically. Yes, thank you. And the unions are saying, no, we want 4.5 or more, close to 5, without any offsets. It needs to be a true raise increase.
Okay, what's the role of Kathy Hochul, the New York State governor, in all of this?
She has a big role because the MTA is a state agency and it's under her jurisdiction. So she has been encouraging the parties to come together, make a deal, but she has made it clear that she doesn't want to agree to a wage increase that would mean higher than anticipated fare increases. That puts more pressure on riders. She also doesn't want to have to go back to residents and tax them more to be able to find the money for this pay raise.
Is there any role here for the White House, or are they staying out of it?
There's a federal mediation panel that's been helping for a number of months now. But even with that structure and those mediators, they have yet to strike a deal here. So it's different now. Now we are in the first work day of the trains actually not running. Hopefully that really kind of switches things up here and makes the sides really come together.
What are we hearing from commuters themselves? Are they supporting the union workers who are striking?
It really is a mix because the problem is everyone is feeling this pressure of affordability. Yes. Everybody goes to the grocery store and we're surprised by the prices. You fill up your car and it's like, whoa. And so everybody's feeling that, and as much as it's important that these essential skilled workers are paid properly, the problem is the riders are already paying a lot of money to ride Long Island Railroad.
Yeah, there's inflation everywhere you look. I mean, and that's why, and I guess it's, having ridden New Jersey Transit for 40 years, I've certainly seen it. So there you go. All right, hopefully they can, cooler heads will prevail.
I hope whoever got a monthly pass gets some of it back.
That is the plan. MTA plans to rebate some of the monthly ticket holders.
Yep, absolutely. All right, Michelle Caskey, thank you so much. Michelle Caskey is a reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Looking back to global commodities here, oil's been all over the place. And I think it's just kind of fluctuating on reporting of, are we going to lift some oil sanctions? Are we going to let some ships go through? There's all kinds of reporting out there. Fortunately, we don't have to be experts on it because we have experts here who do all this stuff. Mike McClone's one of them. It gets a little warm down in Miami. What does he do? He bails and comes up to New York for the week.
Up to us because it's really
maybe
warm here.
Okay, you're thinking maybe he brought the good weather to us?
Yes.
Okay, all right. I was ready to throw him under the bus, but you're throwing him a lifeline. Mike McClone, Senior Commodity Strategist for Bloomberg Intelligence. Mike, are you guys in the oil pits just like everybody else, just kind of reacting to headlines as they cross?
Exactly. Just like Michelle said, though, it's the fact that everything is getting so expensive, and we have an election coming up, and we are the world's largest producer, net exporter, and things like that, and we have a president who probably needs lower energy and lower inflation and lower interest rates by the time we get the election. The key question is now, how's he going to get that? So you heard my bias that December crude oil future. Right now we see the front is 106. You go to December, that's the one that's going to really matter before elections, it's 84. I still think that's going to be closer to 50. But the key thing I want to point out that's happening this year is we all hear about how great crude oils and everything and how energy is going up. There's only one commodity sector that's made a new high this year, and that's precious metals.
Really?
Yeah, okay. Energy. If you look at the Bloomberg Energy Spot Index, which measures crude oil, natural gas, gas oil, and everything, we're at the same price as 2005. So we've bounced, but look at the way this works. It's been a 20-year range. You bounce near the upper end of the range, you get really bullish, and you hear extremes. Are we pretty extreme right now? I sure think so. And then you go down the lower end of the range. So it's just a matter of time. I think it scales back down. The problem is what's really missing this year is wealth reversion. That's usually what it takes, and that's usually what helps crude oil and gasoline prices go lower.
Interesting that we're only at the high since, you said 2000.
Well, it's the same price since 2005.
2005. What was happening in 2005 again? I mean, I know there are a lot of comparisons to 2022.
I don't remember what happened yesterday.
I know. 2022 was when the Russia war in Ukraine really took root. But what about 2005?
China coming out, enter the World Trade Organization.
The demand.
Yeah, and it was starting to kick in the demand. And the U.S. back then was actually a massive net importer. With Canada, we imported maybe 12 million barrels a day. Now with Canada, we're not so much a net importer, but we have a surplus of 8 million barrels a day. Trump knows it. That's only going to go to 10 with prices going up. So this is a short-term thing. It's just lasting a lot longer. The key thing I really missed was I did not think that our government, our military would allow the strait to be closed, and it's closed. And it's showing that I think what's happening is that K-shaped economy is really accelerating, where people are looking like, yeah, thank you, Mr. Trump. I know you say you won, but we go to the gas pumps, we go to the grocery store,
Doesn't feel
everything.
like it.
We lost, is the way most Americans view it. And you can see that show up in polls.
Or as SNL put it over the weekend when they had an opening monologue and Will Ferrell said, oh yeah, the end of the Iran war, we came in second.
Okay, there you go. Dr. Copper, what's going on there?
Completely dependent on the stock market going up. And that's the unique thing I find really weird about economies, about our commodities right now, is the whole industrial metal sector is almost completely dependent on stocks going up. So even we have a fundamentally based strategist in London, Grant Spory, and he even pointed out recently, copper's fundamentals aren't so great globally. Yeah, everybody gets electrification, but it's going up because the Kospi is going up. And Kospi is mostly technical firms. So I look at
Kospi being the Korean stock market.
Yeah,
right?
Korean stock market. So copper, industrial metals, and that's in my dependent category of commodities. They have to have a stock market to go up, or they're going down.
Wasn't there a big thing between the difference between the London copper and New York copper? Is that still a thing?
It's not anymore. So London copper got above $14,000 a ton. U.S. copper above $6 a little bit. That's already been alleviated with the tariffs. Now that's still part of the problem right now. In the past, I usually focused on London copper. Now I focus on U.S. copper, partly because we're in the U.S., but it's what most matters with the U.S. kind of driving this whole situation.
Gotcha.
So that's the key thing to remember about industrial metals. If stock market goes down 10%, industrial metals will probably drop 20%.
Temperature here in New York City, 84 degrees. Temperature in Miami, 84 degrees.
Really? See? I was right.
See?
And check the temperature on Wednesday. It's going to be like 90 something.
I know. So, all right, very good. Mike McGlone, thanks so much for
sir.
joining us here. Mike's usually based down in Miami. We got him up here in New York this week. He's getting into trouble up here some way, shape, or form. He's a senior commodity strategist for Bloomberg. We'll do pork bellies next time Mike is in here. And I'm looking at the market, just kind of not a lot of movement here, but I'm getting ready for the SpaceX prospectus. So if you hear the printer just whirring the entire morning on Wednesdays, because I'm printing out the 10,000 page prospectus for SpaceX, because I want to see, A, did they make any money? Where did they make any money? And I'd be dying to see kind of what the analysts are forecasting for kind of like
I can't wait to see the risks part of it, because that's always really interesting. All the various ways that the IPO may not live up to expectations.
And I was told when I was very, very early in the business, when you get a prospectus dropped on your desk, the first thing you go to is the related parties transactions.
Why is that?
Because if there's anything kind of funky with a company that you don't know, it'll show up there. And when you think about Elon Musk, I would think there's going to be a lot of related party.
A lot of fine print to go through.
Yeah, so that'd be interesting. But just to see the, the financials of this space company, I don't know where to start. So I'm not even sure when I'm going to see when this thing comes out.
Well, as Anthony Hughes told us, we could be looking at a listing in second week of June or third week of June. Yep. So that could take us to June 12th, June 19th, or not 19th, it's a holiday. June 18th is a possibility.
Yep, very cool. So we'll be there with so maybe the single file on Wednesday, and if it does, we'll bring some cool stuff for you. It could be very interesting there. S&P down 20 points, the Dow down 60, and the NASDAQ down 150 points. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with his Bloomberg Business Flash. We're brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide, learn how to add metals to your IRA or 401k tax and penalty-free. Go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. The S&P 500, all major averages have now raised earlier gains, with crude oil. Now, this is U.S. crude, WTI topping $106 a barrel. 106.83 right now. Iran has given an updated proposal to end the war, but the White House believes it's insufficient for a deal. At least this is the reporting we're seeing from Axios this morning. The biggest deal in the power industry on record, NextEra Energy agreeing to pay $67 billion for Dominion Energy to form a utility colossus. This underscores how soaring electricity demand from AI data centers shaking up the power sector, and it is also the best performer in the S&P 500. You have shares right now of Dominion up close to 10%. Soon, you're going to be able to trade the Knicks and the Rangers. The board of MSG Sports says it's made progress toward a proposed spinoff of its Rangers business from its Knicks business.
Whoa,
each
big
team
divergence.
would be a separate publicly traded company.
Is the NYR ticker taken?
Yeah, you know what? I don't know. Here's the quiz.
I don't think so.
What's the #1 TV show in the U.S.? I have no idea. It's on HBO.
Oh, of course.
Wait, it's on HBO?
Yes.
Wow.
Why do you sound surprised by that?
Wait, is it currently airing?
According to, well, I wouldn't do it. According to Nielsen data, it's The Pit. The show has increased its
I love that
audience
show.
by 82%. What's it about?
An ER in Pittsburgh, but it's not a typical like ER like we grew up with. Seriously gets into it, shows you stuff that you really don't want to see.
Because this is HBO.
Yes.
Okay, awesome.
But it does star Noah Wiley, who was Dr. John Carter of ER, but here he's not John Carter, he's Dr. Michael Rabinovich, or Dr. Robbie. I watched a lot of it. On the plane ride back from San Francisco.
She's the celebrity lodestone. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Well, you like electric vehicles? How about a semi-truck? That's what the world needs. Tesla Semi is coming, and our next guest is going to tell us all about it. Mei-Ni Yang, commercial transport analyst at BNEF. She's based in London. Mei-Ni, talk to us about Tesla and this semi-truck they have.
Yeah, so thanks for having me. This truck has been 9 years in the making, and on the market currently, there aren't that many long-range electric trucks in the U.S., but this new Tesla model that has just entered series production promises up to 500 miles of range on pure battery electric. So it's quite a special truck, and there are quite a lot of subsidies from California that can potentially bolster the economics, in addition to the optimal time they chose to roll this out when the oil prices are high, which make the TCOs, or total cost of ownerships, more advantageous. And I can get into that a bit more.
So tell us a little bit about what you were surprised by. When you were doing the research on these Tesla Semis, what caught you by surprise?
I think it was the time it took for them to actually ramp up series production, because this vehicle was announced in around 2017, but it really took a long time for them as a startup to actually bring it fully online, because in the past couple of years it was in pilot phase, and we heard some positive feedback from fleets testing the trucks, but this is one of the only electric truck models in the heavy duty segments that are actually rolled out by a pure play like EV company, because currently the companies we see that sell electric trucks are mostly the legacy manufacturers. So I would say that is quite surprising that they can gain this much traction as a pure play electric truck maker.
So, Manny, what's the company saying about their production, going forward? I assume it's going to be kind of a slow build into their output rate. What are they telling us?
Yeah, so I think specific numbers are not really released for this year. We just know that it will be a slow ramp up. Eventually, they target making 500K of these semi-trucks per year. But we think this year it's going to be far from that, because so far on the US market, no single manufacturer has managed to sell over 500 electric trucks per year by manufacturer. So I think the ramp up is still going to be quite challenging. And there are also a lot of uncertainties around the tariffs, because last year, the Trump administration introduced new truck and parts tariffs, and it's quite a short time span for these manufacturers to switch to local supply. Tesla takes an approach of co-using components across its vehicle types. For example, the Semi can co-use some parts with the Cybertruck, but of course they might be subject to different tariff conditions. So that could be a potential challenge for the ramp up.
All right, Manny, thanks so much. Appreciate it. Manny Yang, commercial truck analyst for BNEF. I'm looking at pictures of this thing. It looks kind of like a normal truck, unlike the pickup truck, which looks just silly.
Well, it looks like it's out of Minecraft or a Lego vehicle.
Yeah, every time I see somebody driving down the street with one of those things, I'm like, what
Why?
are you doing, dude? What are you doing?
Why?
Anyway, but some people are doing it, so what do you know? We got some red on the screen here, a little bit of a sell-off here today. Yields pushing a little bit higher here. Let's get back to these markets. We can do that with Dryden Pence, Chief Investment Officer, Pence Wealth Management, Newport Beach, California. We're heading out there in the fall, aren't we? Somewhere out there?
Yes, or Huntington Beach.
Huntington Beach,
The beaches get me confused.
It's all a scam. It's all a scam.
It's all
not,
the beach.
It's not Wall Street. It's not. I don't care. Dryden,
We're
what do you
just
make of
jealous,
this?
Dryden.
Exactly. What do you make of this market, Dryden? We had a sell-off when the war started, but boy, the stock markets have just come ripping back. What do you make of that dynamic?
Well, I mean, geopolitical events really have kind of a short life. Around about we look at it over the last couple of decades, about 45 days, you get a sell-off, it hits a bottom, it comes right back. So geopolitical events kind of have a round trip of anywhere from 19 to 45 days, and that's kind of what this has happened. And so we tend not to get overly concerned about them. We actually look at them as opportunities. If everybody else is going to, panic sell a little bit, we try to step into the panic and go from there.
And it looks like that's what the rest of the market feels like too, given the reaction and the rebound we've seen. However, the new normal does seem to be higher oil prices. Whether it stays at 106 or not, it's going to be higher than it was before the war. How does that show up in which sectors you want to avoid and which sectors you want to really zero in on?
Well, there's two parts to that. The first one is, what is it going to be 90 days from now? We believe that we're below 190 days from now, that we're probably back down into the 80s, and that it becomes, because in the end, economics beats politics every time. The world needs oil. Iran needs money. Sooner or later, things flow through the Straits of Hormuz. Oil prices come down. And so I think that first part of it is the overarching concern. We're back down to 80. 80 is a good number. Everybody's making money. The economy's working fine. 60 stimulative. 80 is fine. 100 is inflationary. 120 is recessionary. That's kind of the way we look at it. So we think we're going to roll down below this fairly soon. When you think about the sectors to avoid in that, you see some constriction normally in consumer discretionary in that, and not necessarily in consumer staples, but there's a balancing. This higher oil price is kind of balanced out by also some of the benefits of the great big beautiful bill coming in. So people having a little more money, you have where is going to be tax bills turned into small tax refunds, and so consequently we think this evens out and sets us up pretty good for the rest of the year. It's not. I don't think it's a big event 90 days from now.
And that says a man who spent basically your whole adult life in the United States Army as an officer, so you know what you're talking about there. One of the names, we had a rotation. As people think about the AI story and how to play it, we had a period of time where they were just selling software stocks left and right. One of those was Microsoft. And I know you guys have an interest in Microsoft. How do you view the Microsoft story? It's down 13% this year, so people aren't sure whether it's one of these software stocks I need to be concerned about.
I think that when you look at Microsoft, you have to recognize its absolute dominance in business. 95% of the companies out there, the Fortune 500, use it, right? And so it's really hard for people to change habits. So as Microsoft is going to not only have their software in it, they're getting their AI piece, the Microsoft 365 going. And I think what's going to happen is people are going to gradually continue to find that Microsoft grabs bigger wallet share as we go through this. They're slow. They're not, ahead of the game. But then this puts us in a situation where if you're trading, it's one thing. If you're investing, everybody's using Microsoft. Everybody's going to continue to use Microsoft. They're not going to get displaced. So they're going to end up coming out on the other side of this in a favorable situation.
Okay, so Microsoft is one of your picks. NVIDIA is also one of your picks as well, the OG chip maker tied to the whole AI boom. It's reporting earnings on Wednesday. And the last 3 earnings, it has beat to the upside, but the stock has reacted negatively. How are you thinking through what people are pricing in at this point?
Well, I think, first of all, on earnings, I think we're going to probably see earnings be extremely good. It's only growing. When you take a look at the amount of CapEx that's running into chips is almost the size of the capital expenditure of the U.S. Defense Department. I mean, it's hundreds of billions of dollars, and NVIDIA is the greatest benefactor of that. So while what happens is some people look at this stock and go, well, it's just too good to be true. It's too good to be true. It's too good to be true. But the point of the matter is, as long as earnings are going to continue to be terrific and they're going to capture that much of the market, we think that it's a sustained system. It's going to take a while for anybody to catch up to NVIDIA. And then we're spending 2% of GDP on the AI buildup right now. This is like the Transcontinental Railroad. I mean, it's huge. And so I think that they're going to be the largest benefactor.
30 seconds left. How else are you playing AI?
We also have Meta in here as well,
okay,
because we think that, again, you have over 3 billion people using the Meta platform. That's bigger than China and India combined. When you've got that many people using your platform, all they have to do is begin to have an AI solution that becomes ubiquitous, and they begin to capture that part. So we look for people that are a lot of consumers doing stuff. That's Microsoft and Meta. We look for the company that's key to that choke point. That's NVIDIA. And that's kind of your trifecta for AI.
Yeah, so you're not getting cute here. You're sticking with what makes sense.
Exactly.
All right.
Exactly.
Really appreciate it. Dryden, thank you for coming in. Dryden Pence, Chief Investment Officer at Pence Capital Management, here with us in New York. He helped bring the heat as well, because it's going to be brutally hot later on this week. So we appreciate your coming in.
Absolutely. Thank you.
It is a Monday morning, and we're looking at declines in equities to start the week at least. And this is kind of a follow-through on the sell-off we got on Friday. The S&P 500 lower by 0.4%. The NASDAQ Composite losing 0.75%. Oil prices are modestly higher. And when I say modestly, we're talking about a gain of about 1.5%. And worth noting here that bond yields remain elevated. That was the big story on Friday. Ira Jersey reminding us that perhaps this is the return of bond vigilantes, particularly in places like the UK and Japan, and how that might be kind of spilling over into the US. The 30-year yield, 5.13%. The 10-year yield, 4.60%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The deadlock over the Iran war is sending oil prices higher again, so that's fueling inflation worries, raising bets on higher borrowing costs. The end result again, the major averages lower. S&P 500 down 20 points. The Dow down just 7 right now. And the Nasdaq Composite Index 161 points lower. West Texas Intermediate is up at 106.77 a barrel. That's up $1.28 right now. A lot of earnings this week. Key test for investors comes with NVIDIA. We'll also hear from retailers, including Home Depot, TJX, Lowe's, Target, and Walmart. Elon Musk says he's back in Texas working on plans for the IPO of SpaceX as the rocket and artificial intelligence company gears up for the largest listing of all time. He said he wanted to get the SpaceX IPO underway, quote, pretty soon. Amanda Gotti, meantime, at PNC says the war with Iran demands that investors diversify.
The market wants the conflict to be over. It's clearly not over, right? It ain't over till it's over. And so I think from a portfolio positioning perspective, broader exposure as opposed to just picking one name or a handful of names is the right answer right now.
Looking at yields right now, the benchmark, the 10-year 4.59, the long bond 5.12. That's up just a basis point today. So a tech entrepreneur took his 3.5-foot tall humanoid robot Stewie on a Southwest Airlines. Yeah, well, he's got a lot of time on it. Well, who knows what his issues are. So he took Stewie on a Southwest Airlines flight from Las Vegas to Dallas last week in its own seat in coach, not as cargo. So the airline has since updated the travel policy, banning robots from the cabin as checked luggage. They are citing safety concerns. So
did the robot do anything? While in the seat?
With Stewie? I mean, that's their business. Oh, no, on the airline flight. No,
Right,
nothing that we know about. It's according to the New York Post, so we'll see. But anyway, we check the markets and other stuff for you right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. I don't know what you're thinking there, Scarlett.
I'm just curious if, there are any pictures of Stewie on flight. On the
Sure,
flight,
if you-
doing stuff.
ChatGPT will go find it for you.
There we go. Stewie.
All right. Once a quarter, they get this thing called the 13Fs get filed. So you can see what funds are buying and selling. And there's a whole cottage industry out there for people who do this. For Berkshire Hathaway, what's Warren Buffett buying and selling? It's a little bit different this time because we got a new CEO, Greg Abel. And I want to see what he's been buying and selling here. Matthew Palazzola, he knows. He's a senior analyst covering the insurance biz, including Berkshire Hathaway for Bloomberg Intelligence. So what do we learn from this 13F from Berkshire Hathaway? What is Mr. Greg Abel, the new CEO, what's he doing?
So we never know actually what's happening behind the scenes. They don't talk to analysts. They don't tell us anything. Warren Buffett is still around. He's the chairman. He goes in the office every day. So there could be some fingerprints on this, but maybe not, because the biggest move was a dramatic increase in their stake in Alphabet. So they had about $4 billion, and now they have about $16 billion worth of Alphabet shares. And that was the biggest individual move in the quarter.
And Buffett is known for investing in things he understands. That's kind of how he puts it, right? He wants to be able to understand the business model, and then he's in on it. Does Greg Abel have like a self-professed philosophy on investing?
Same. that was pretty much what he said in interviews, was we think of it the same way. They took this initial Alphabet stake while Buffett was still there last year, but it could have been Abel then. It could have been the investment deputy, Ted Welcher. So he does profess we want to understand the businesses. So I guess he understands Google's business.
So any reason to think, first of all, give me what's that cash number that's on the balance sheet that we should?
I believe it's $380 billion. The reported
380
number was too high because they had some settlements in there.
Okay, so just give our listeners and viewers a ballpark. $380 billion that they have on their balance sheet that supposedly they're supposed to invest.
Mm-hmm.
Anything, but that's been a problem because you can't find stuff out there that can put a dent in $380 billion.
Correct.
So is there anything that Greg Abel may do to change that dynamic?
So we talked about this before. I think capital return. I mean, so what are you going to do? You're going to buy something, buy a whole company, return capital, which seems to be a no-no. I don't think he's in any rush to buy make a huge splash. And I also don't think, as long as Buffett is there, that he's going to return capital in any meaningful way to investors. So I think we'll see more of the same. I think this was still, so the other story of this quarter is they sold a lot of stock, but that stock they sold was likely positions by one of the former investment deputies who left the firm. So they sold about, I think...
The guy who went to JP Morgan, right?
Yes, Todd Combs. So they sold about $11 billion in positions that I think are related to him. Again, they don't tell you if they are. Mm-hmm. Included in that was a Visa and MasterCard. So they sold a lot in the quarter. The net story then was they actually sold more than they bought. But if they didn't do this, they would have bought more than they sold. So the story is and for I think it was 14 quarters prior to this, they had sold more than they bought. So that big move, they would have actually been a net buyer of stocks for the first time. And
I remember Warren Buffett a while ago talking about how he was going to go elephant hunting with, his hoard of cash. What was the last major acquisition they did make, and how did that go?
So they've bought a couple of sizable things. I mean, like they bought it was $12 billion worth of Google stock in the quarter, right? Yeah. They bought a chemical company from Occidental for about $11 billion last year. They bought Allegheny, which was an insurance company, holding company, the owner of Jeff Kirby, Squishmallow fame that people go crazy about at the annual meeting. So they've put money to work. It's just they're generating a lot of capital, so it's kind of offsetting it. I mean, they're doing like $10 billion at a clip. Is not insignificant. I think all of those deals, I don't know about the OxyChem deal, that's still ongoing, but I think the Allegheny deal was good for them. It bolstered a bunch of insurance businesses where they could use more scale, and those additional businesses have been good as well.
All right, what else is going on in your world of property and casualty insurance here? I'm looking at the index, it's kind of flat for the year, I guess. Yep. I'm looking at the S&P property and casualty insurance thing, kind of flat.
So we're kind of, so I started my career in the tech boom, and I got deja vu all over again. We're at the mercy of the I guess, Stewie robots of the world, where these names sell off when tech, kind of gets more in favor, risk on. We are going to go into hurricane season. So the forecasts for hurricane season are about average. So, if maybe you want to see me a little bit more, maybe we'll get more activity. I don't know. But you've got two things. So you've got the El Nino effect, and then you've got hot sea surface temps. So hot sea surface temps increase hurricane activity, but the El Nino effect actually decreases it. So we got two kind of countervailing forces going on in the Atlantic, which will kind of net out to probably an average hurricane season. So we'll see what happens.
I've been reading that the AI weather forecasts will make these forecasts a lot more accurate than they have been in the past. So there'll be fewer surprises, or that's what we should expect.
It's possible. I think the thing is you can have a lot of hurricanes, but they don't really hit high value areas, and it doesn't matter all that much for my companies, or society. Or you can have just one, and it kind of slips through and hits Miami or something like that, and then it's a disaster. I have heard similar things that the AI can help with modeling, but I think there's always going to be the weather wild card.
I live at the beach, but the good news is I live 6 very long blocks from the beach, and they built up the dunes after Sandy that could withstand another Sandy, I think.
Hopefully,
and if you have beachfront property, you don't have ocean view property anymore because they built the dunes up so high. And all the towns along Jersey just said, tough. This is the way it's going to be.
Live with it.
We've had enough bailing you guys out. So Matthew Palazzolo, thanks so much. Appreciate it. Senior analyst, property and casualty insurance dude at Bloomberg Intelligence here. Berkshire Hathaway, we got, again, a new CEO, Greg Abel. He's got the reins, and he's been buying some tech, so it's pretty interesting.
I like what Matthew was saying, how his philosophy is pretty much Warren Buffett's philosophy. I'm sure that's the case. They want to make sure that there's a consistent handover, but over time, it'll be interesting to see how that evolves.
The day after Warren Buffett passes,
perhaps
we'll get a big dividend. That's my call. Get like a 3-4% dividend yield. Now we're talking.
Buffett's just totally opposed to dividends.
Yeah, I mean, he's been right. But I'm just saying, you get that kind of cash there. S&P off 21 points, the Dow off 5 points, and the NASDAQ off 170 points. That's 0.7%. This is Bloomberg.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube and streaming live on Bloomberg.com/video. Merger Monday, definitely here. NextEra Energy agreeing to pay about $67 billion in stock for Dominion Energy, in the biggest power acquisition ever. That's pretty cool. Dominion, I know those folks. They're down there in Richmond, Virginia, one of my favorite places. Emily Forgash joins us here, energy reporter for Bloomberg News. Emily, talk to us about this deal. It's a monster-sized deal. Why is NextEra buying Dominion?
Yeah, it's such a great question. There are many answers. The one that I've heard the most from analysts so far is that NextEra needs to rebalance its utility business versus its unregulated, non-regulated development business. Its development business for renewables has grown astronomically in the past few years because of demand largely from data centers. And it needs to rebalance more back to its regulated side. That's what credit rating agencies require of them. So they either needed to sell generation or buy a regulated utility.
How is AI and the need for electricity, we're seeing it all over. How is that driving this deal?
Yeah, I mean, Virginia, where Dominion operates mainly, is home to Data Center Alley, which is the biggest concentration of data centers in the U.S. And
is that right?
Yeah.
Wow.
Northern Virginia. And Virginia is struggling to meet that demand, and the demand forecasts for the next few years are completely outstrip what these utilities can provide at this moment in time. And that's the story across the country. And so NextEra, now being by far the biggest utility in the country once this goes through, the challenge for NextEra would be to try to provide energy for those data centers.
Wow. All right, you said they're going to create the biggest, so I'm thinking the regulators are just licking their chops here to review this deal. What are the companies saying about the regulatory hurdles they need to clear?
Yeah, there's a long list of regulatory bodies within the power sector that will need to look at this deal. Some analysts that I've talked to, though, have been pretty positive about this going through, especially from the Virginia legislature side and regulators in Virginia. Virginia really needs some help with meeting this power demand, and NextEra comes with a whole host of renewables and a lot of development and a strong utility side, and are pledging to use batteries in the area and things like that to meet demand. So the analysts I've talked to have been pretty positive from that perspective.
What do we know? I don't know that much about NextEra. I see they're down in, they're a Florida company. I think this feels like the old Florida Power and Light or something like that. But what do we know about NextEra?
Yeah, so NextEra has a utility in Florida, but then also has a huge development business. It's become one of the biggest renewable energy developers in the U.S. in the past couple of years. And as I said, that demand has been proven by how big the renewable energy arm of NextEra has gotten. And this is why this rebalance is quite necessary.
Are analysts saying get ready for some more consolidation in the utility industry? Is this just the beginning? What are they saying?
Yeah, they are definitely saying get ready for more consolidation. One of the reasons is that all of these utilities are pledging to spend trillions of dollars on like new generation, new transmission, basically upgrades to the grid over the next 5 years. And each one of these new, like a new gas plant, costs billions of dollars. Mm-hmm. And so these utilities are striving to get bigger and bigger market caps, more money behind them, so that they can reasonably pledge all of that money that's necessary to upgrade the grid and add new generation.
I read the book called The Grid.
Ah, did you?
Yeah, so I'm all in on this stuff. But I guess one of the questions is, who's going to pay for all this? Is it going to be the ratepayers like me and you and Charlie? Well, Charlie's definitely going to pay. Or is it going to be, if Google wants this big, data center, you pay for it, Google?
Yes, so that's still the major $1 million question. But I will say that there have been certain pieces of legislation that are passed or in or being talked about right now that would answer this question. What the big tech companies have said that they are willing to pay for the new generation that's necessary to meet their demand. The question is whether or not they will pay for all of the upgrades, or whether or not some of that CapEx that these utilities are going to have to spend will trickle down to ratepayers. So far, Bloomberg did an analysis that shows that so far the data center boom has made electricity prices higher, and electricity prices inflation outpaced overall inflation last month. So,
and I would think in the metro Washington, D.C. area, Virginia, all that kind of stuff, those folks are probably pretty sensitive to that.
Yeah, yes, exactly. And electricity prices are already forecast to be a really big part of the midterms this year. And so that's always going to be the backdrop of the conversation with a big deal like NextEra and Dominion.
All right, Emily, thank you so much for that reporting. Emily Forgash, she's energy reporter for Bloomberg News. Again, the big deal announced this morning. NextEra Energy down in Florida, they're agreeing to pay about $67 billion in a stock deal for Dominion Energy in the biggest power acquisition ever. A whole host of investment banks and law firms getting paid on that deal. So you can check that on MA on the Bloomberg terminal. That'll give you the full breakdown analysis of all the M&A trades out there, including this big one in the power space. Looking at the markets here, a little bit of red on the screen. Got the S&P down about 23 points, the Dow down 15, and the NASDAQ down 177 points. Not a lot of movement there, but we'll keep an eye on it. Energy prices, they've been whipped around all day this morning, up, down. The now got WTI crude oil up about $1.40, sitting just below $107 per barrel. Tom Keene asking for a Bitcoin quote, 76,000. Remember, we were just at 80 a few days ago, so the continued volatility there. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Again, a little bit of red on the screen here. The dollar, looking at the DXY index, a little bit weaker, but sitting right at 99. So we've rallied off of that 96, 97 print from a couple of weeks ago. Dollar a little bit stronger here. Stocks, S&P down 27 points. More Bloomberg coming up right now.
From ABC News, I'm Mike Dubusky. A judge in New York has ruled certain evidence seized from Luigi Mangione's backpack when he was arrested must be suppressed. Specifically, the judge said Mangione's backpack was not in a grabbable area when he was detained by police in Pennsylvania, and therefore prosecutors will be barred from using a loaded magazine, cell phone, wallet, and computer chip from that bag. However, the alleged murder weapon and a notebook of Mangione's writings will be allowed. Attorneys for President Trump have informed a federal judge that the president is dropping his $10 billion lawsuit against the Internal Revenue Service, and now the DOJ has just announced an anti-weaponization fund, a collection of $1.7 billion of taxpayer funding aimed at paying out victims of supposed government weaponization. It all comes as the tensions with Iran ratchet up, with the president now planning a national security meeting tomorrow at the White House. ABC News White House correspondent Karen Travers with more.
We were told that he also had conversations over the weekend with Vice President Vance, Secretary of State Marco Rubio, the CIA director, as well as his special envoy Steve Witkoff. But tomorrow's meeting is set to talk about next steps in Iran and potential military operations. The president's been asked that question so many times of what could potentially trigger a return to major combat operations, and the president will not say, but just said you'll know it when that happens.
President Trump also issuing a stark warning after Iranian drones struck a nuclear plant in the UAE.
Any escalation in the region, and you see it immediately reflected in oil prices. And this morning, you're seeing oil prices climbing after President Trump warned in a post for Iran, the clock is ticking and they better get moving fast. That was his quote, his words calling into question the fragile ceasefire with Iran, with the critical question of what happens to that Strait of Hormuz still unanswered.
ABC's chief business and economics correspondent Rebecca Jarvis. You're listening to ABC News. Weeks after President Trump and Pope Leo traded barbs over the war in the Middle East, now there's another dispute between the White House and the Catholic Church. Federal authorities are now planning to use eminent domain to seize 14 acres of land owned by the Catholic Diocese of El Paso.
The site sits alongside a 29-foot statue of Christ overlooking El Paso and Ciudad Juarez across the Rio Grande. Crews have already used dynamite nearby to level the land for border wall construction.
The blasting that they've done so far, we haven't seen that it has damaged the monument itself, but there's no telling.
Ruben Escandon Jr. is with the Mount Cristo Rey Restoration Committee. He worries about the future of a site that has drawn pilgrims for nearly a century. Jim Ryan, ABC News.
The nation's heartland is bracing for a new round of severe weather today following a weekend of tornadoes in Nebraska. ABC's Alex Perez reports from Chicago.
Sirens blaring in Alexandria, Nebraska. At least one confirmed tornado touching down near St. Libory. The tornado warnings reaching Omaha, where American Jake Rosemarin is quarantining after the deadly hantavirus outbreak on that cruise ship. Jake documenting the experience online.
Many of those same impacted areas are bracing for more severe weather today. Meanwhile, in Minnesota, the governor has mobilized the National Guard to help fight fires burning in the northern part of that state. Dry, hot, and windy conditions have created an increased risk for fires. I'm Mike Dubusky, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Primary season kicks into high gear. Welcome to a special edition of Balance of Power, live from Georgia, one of 6 states holding primary elections this week and breaking early turnout records, as we'll explore over the next 2 hours here on Balance of Power, live from the campus of Georgia Tech here in beautiful Atlanta. This hour, we're going to talk Georgia politics with musician, activist, and conservationist Chuck Lavelle. Sounds like he's arriving by train right now. The former Allman brother and member of the Rolling Stones will be with us right here at the desk with insights from former Georgia Republican Senator Saxby Chambliss, and we'll get an update from the White House when we talk to Bloomberg Washington correspondent Tyler Kendall. A lot of news happening in D.C. as well, and it's all after a look at Wall Street. Let's start there right now with the Monday trade and Charlie Pellet in New York. Hey, Charlie.
Well, hello there, Joe Matthew. All aboard. We're looking at a day right now of losses for the Dow, the S&P, NASDAQ, and right now we do have West Texas Intermediate crude on the rise. Wall Street's rebound attempt failed. Stocks falling. Oil climbs after doubts resurface about an imminent U.S.-Iran deal that would revive energy flows through the key Strait of Hormuz. Here's where we stand. S&P right now down 31, just about the low of the session right now at 49,493. That is a drop now of just under 0.1%. We do have the S&P 500 index right now falling by 28, 73.80, down 0.4%. Again, it is the Dow that is down by under 0.1%. NASDAQ down 0.8%, down now by 201 points. The 10-year, 4.59%, with the 2-year currently yielding 4.07%, and the 30-year, 5.12%. Gold up $3 the ounce, just about flat on the day at $45.43, while West Texas Intermediate crude up 1.5%, $106.93 a barrel on WTI. Barrel of Brent closing in on $111 a barrel, up now by 1.6%. Deal news on this Monday: biggest power acquisition ever. NextEra Energy has agreed to pay about $67 billion in stock for Dominion Energy, creating a giant utility that will extend from Florida to the data centers clustered in Virginia. Shares of Dominion, they are surging now by 9.1%. NEE, NextEra Energy, it is down by 6.1%. Day 3 of the LIRR strike in and around the metropolitan New York area, and for anybody not working from home, potentially they're looking at another challenging ride home. MTA Chair and CEO Janno Lieber was on Bloomberg Surveillance this morning. He discussed the state of ongoing talks between the MTA and its unions.
They're going on right now. They resumed at 7:30 this morning. Folks took a break at about 1:30 in the morning last night. I was here with them, and they're back at the table right now as we're speaking. So I don't have an update, but work is going on right now.
MTA Chair Jan Oliver interviewed this morning on surveillance. Politics, specifically in the UK. Andy Burnham, the current favorite to replace Keir Starmer as UK Prime Minister, who's ruled out changing the government's self-imposed limits on borrowing if he were to gain power. Recapping, S&P 500 index down now by 28 at 7380, dropped there of 0.4%. WTI 107 a barrel, up now by 1.5%. Back we go to Atlanta, and once again your host of Balance of Power, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. Charlie will be back with us in just about 15 minutes' time, watching Wall Street from his perch at World Headquarters in New York while we talk politics here in Atlanta, Georgia, on the eve of the primary here in Georgia and 5 other states that we're going to be talking a lot about in the next couple of days here, the next couple of hours here on Balance of Power. Thank you for joining us on our special Monday edition. We're live on the campus of Georgia Tech. It's hot in Atlanta. The sun is out. Early voting is over. They set a record, by the way, as we're going to talk a little bit later on this hour with Chuck Lavelle and with Saxby Chambliss, both joining me here at our desk at Georgia Tech. And a little bit later on in the program, I'm just going to give you a fair warning here. Second hour, live from Atlanta, our conversation in person with Killer Mike. He'll be with us at the desk here as well. We, of course, have a lot to talk about, though, when it comes to Washington, and that is where we start our coverage today with our eyes on Iran and a still closed Strait of Hormuz. You just heard Charlie Pellet running through oil prices, and the story simply has not changed since we last met, if only gotten slightly worse in the energy markets. New York crude, $107 a barrel. Brent is at 111 almost. And the president is back on Truth Social. The clock is ticking, he says. Ahead of his meeting in the Situation Room with military officials tomorrow, for Iran, the clock is ticking, he writes on Truth Social, and they better get moving fast or there won't be anything left of them. As the president picks through the results of his trip to China, which got a little bit better looking, involving more agricultural products and at least an agreement to buy more food from the United States. But strait's still closed. Oil and gas prices are still high. And we walk into this new week with the same concerns we ended the last one. Bloomberg Washington correspondent Tyler Kendall is back at the White House. I'm not sure what time zone she is in, having just gotten back from her trip to Beijing following the president at the big summit, but joins us now with the latest. Tyler, what's the president thinking as he starts this week, knowing that this standoff has not budged in Iran?
Right, Joe, and I mean, it's particularly pertinent. You're in Georgia. We're going to see a flurry of states have their primaries this week as the domestic issues compound and energy prices are impacted by the ongoing war in Iran. We know that the U.S. wants to find a diplomatic solution. We've repeatedly heard U.S. officials say that that's still a viable option, but at this point, it's very clear that the White House's patience is wearing thin. You mentioned President Trump and his recent threat on Truth Social over the weekend when he landed back here in the U.S. and had met with some senior advisors, including Vice President J.D. Vance, Secretary of State Marco Rubio, and Special Envoy Steve Witkoff. At this point, we haven't gotten indication that the sides are any closer towards a deal amid some new reporting from Iranian state media today, including that the U.S. has proposed a temporary waiver for Iranian oil sanctions until a deal is reached. The U.S. has not confirmed this reporting, though we do know that this is something that Iran has really been pushing to be put on the table to reach a deal. Pair that with other reporting, again, from Iranian state media over the weekend, that the latest U.S. proposal had been a non-starter for a few different reasons, including that, according to Iran state media, the U.S. is saying that there will not be payments for war damages and that we could see an unfreezing of less than a quarter of Iran's frozen assets. These are all things that Iran would like to see reversed. They want to get those payments for damages. They want to see a total unfreezing of their assets. So, Joe, at this point, it's unclear if we're getting closer to a deal, because I will point you to one very important line from Iran's foreign minister in a briefing earlier today when it comes to the issue of uranium enrichment. Quote, "This is not something we want to discuss or compromise on. As you well know, this administration has maintained that there needs to be curbs on Iran's nuclear program. There needs to be assurances, at least, that they're going to talk about it before we could see that lifting of the U.S. naval blockade in these discussions."
What do we make of this report on sanctions, Tyler? This would be a pretty major development. Iranian media reporting the U.S. proposed a temporary waiver of sanctions on Iran's oil, which feeds into the demands from Tehran. Is this going to happen?
Well, at this point, we haven't gotten confirmation, Joe, from the U.S. And it's interesting because it comes against a backdrop of earlier today where we had the U.S. Treasury Secretary Scott Bessent tell G7 allies that he actually wants to see them ratchet up their sanctions regime when it comes to Iran. Perhaps the U.S. would wind them down and European allies would put them on. It's unclear if this would happen at this point, though we know that the administration is looking for a diplomatic off-ramp, and according to Iranian state media, this would only be temporary. Allow this to happen while they negotiate a firmer deal. We'll have to see, because this is one point in what has been a long list of demands from Iran when it comes to reopening the Strait of Hormuz, including that the U.S. needs to lift its naval blockade. And that's another thing that the White House has maintained isn't going to go away. In fact, a new headline crossing on the Bloomberg terminal within the last hour that Karg Island has no tankers loading, in sign that the blockade is biting. Data analyzed by Bloomberg News shows that as many as 23 tankers right now are anchored off of that export hub, marking the most number of tankers, the largest cluster that we've seen since the blockade has began. It's very clear that the administration has said that they want to keep up that economic pressure. So it's hard to imagine that we would see an easing when it comes to this, but perhaps it would be part of a broader deal to help move forward that diplomatic process. But at this point, we're still just waiting for confirmation either way.
Hey, Tyler, what's going on with the IRS here? DOJ, if I could change the subject, has announced that as part of the settlement agreement between President Trump and the IRS, a $1.7 billion anti-weaponization fund is going to be set up here to redress claims of others, it says, who suffered weaponization and lawfare. This is taxpayer money, right? Almost $2 billion.
Right. And this is part of President Trump dropping his $10 billion lawsuit against the IRS over the 2019 leak of his tax information. You'll recall the IRS had this data leak that impacted a number of wealthy individuals, including President Trump, Ken Griffin, Elon Musk, Jeff Bezos, that were stolen by a former contractor. The DOJ announced as part of that settlement agreement what you're outlining, that the Attorney General has essentially set up this fund. It has gotten criticism from Democrats, including Democratic leader Hakeem Jeffries, who's calling this a slush fund. But we should say that President Trump wouldn't receive any money directly, but instead claims could be made by parties that allege that they were victims by so-called government weaponization. It does mark a pretty interesting point in what has at this point been a years-long saga by President Trump. We'll have to see where it goes from here, but it certainly is a win for the Trump administration in this case.
Just looking at the schedule today, Tyler, we might see him and hear from him, right? There is a White House event at 4:30 p.m. Eastern Time, an affordability event, as they're calling it. This is healthcare related, Trump RX. Might we learn more when we see him?
Right. So people familiar with the matter do confirm to Bloomberg News that President Trump is looking to add generic medications to its direct-to-consumer drug sales website. You mentioned it, Trump RX, alongside billionaire Mark Cuban. So that will be an interesting pairing in the Oval Office later today. We know that this administration has been really focused on foreign policy recently, the war in Iran, the fact that President Trump was just overseas in China, but we should expect this week for a refocusing on those domestic policy issues. Of course, it's a big primary week, and we know that the cost of the war in Iran is compounding those issues for Americans. Now, we can say, Joe, that many Trump-backed candidates are winning their Republican primaries, and President Trump has said that this is going to be a short-term disruption when it comes to the war in Iran impacting the cost of goods, notably energy, but it's proving to still be the largest issue for American voters. So it makes sense that we're going to hear a lot more about the White House's affordability push, as those higher energy costs are eating into the higher tax refunds that Americans have been getting and Republicans have been banking on running on as we get closer to November.
Wow. I'll be very curious to see this one. If they're appearing together, Trump and Cuban, they don't like each other, right? Did Mark Cuban call him the most unethical person in politics during the campaign? Wow.
Yeah, right. And has supported Democratic candidates before.
Tyler, thank you. Glad you're back in the USA. Bloomberg Washington correspondent Tyler Kendall getting us rolling here on a special edition of Balance of Power, live from Atlanta, Georgia, on the eve of the primary. Chuck Lavelle, conservationist, activist, and rock star, will be with us next.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. A volatile day for the U.S. stock market. The Dow back in the green right now, higher by 64 points, up by about 0.1%. S&P 500, however, erased earlier gains. Brent crude hit $111 a barrel, right now just below that. Iran has given an updated proposal to end the war, but Axios is reporting the White House believes it's insufficient. S&P right now at 73.96. It is down 12, drop there of 0.2%. Again, the Dow does remain higher, up by about 0.1%. The Nasdaq Composite Index lower by 133 points, down 0.5%. All of this with the VIX holding just above 18, a 10-year at 4.58%, a 2-year currently yielding 4.07%, and the 30-year 5.12%. Gold little changed, up 0.1% right now at $45.46 the ounce. West Texas Intermediate crude $107 a barrel, up 1.5%. Barrel of Brent $111.10 right now, up by by 1.7%. Lululemon Athletica is criticizing founder Chip Wilson. Lululemon is rejecting Wilson's overtures to install new board members. Shares of Lululemon today, they are trading a little change. Lululemon now up by about 0.3%. Back we go to Atlanta. Balance of Power continues now. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. Charlie Pellet will be back in about 20 minutes' time with more on Wall Street as we connect the dots between policy and the markets every day here on Balance of Power. This one is special, of course. We're on the road on the eve of the primary here in Georgia. Yeah, we're live in Atlanta on the campus of Georgia Tech. Of course, Georgia, one of 6 states hitting polls tomorrow with primary elections taking place around the country. We're going to be looking at Kentucky. We're going to be looking at Pennsylvania. And yes, of course, the granddaddy of them all right here, the microcosm of the nation that we call the great state of Georgia. And when we started making plans to come down here, we knew we'd be talking to the Pauls. We knew we'd be talking to candidates and political analysts, academics, and all of the voices that you would normally expect to hear on Balance of Power. But there was one voice we wanted to hear to bring a slightly different narrative to this conversation, equally as important. He's an activist, a conservationist, and yes, he is a rock star. And you've actually seen and heard him on this program before. When we think back to the funeral for the late President Jimmy Carter, that'd be Chuck Lavelle. I think I described him pretty well. Of course, of Allman Brothers fame, of Rolling Stones fame, and yes, political fame. Chuck, it's great to have you back on Bloomberg. Thanks for coming to see me. It's a thrill, as always, and I just wonder your thoughts on the lay of the land here in Georgia, because I keep hearing that all politics are national now, that it doesn't really matter where you land in the country. It's the same debate. Gas prices, data centers, left versus right. Is Georgia different?
Well, I think there's a lot of the same right here in the state. You just mentioned data centers. We had an approval of a data center in my county of Twiggs recently, and of course there's quite an upheaval of discussion about that. And of course other factors, at least that I'm involved in, that affect the state and affect us personally is the forest industry. We've had mill closures here in Savannah and Riceville and Cedar Springs. And so this has affected the forest industry quite significantly.
You know a lot about this, having actually gone to school for forestry, and you are the force behind Charlene Woodlands and Preserve, presiding over some 4,000 acres of forest land. Conservation is a story that has, in many ways, fallen out of the political discourse. Is it something you're keeping alive here in Georgia?
Absolutely, yes, sir. For me personally, we have 3 different conservation easements on our properties, and I think a lot of our fellow landowners are looking at this option. You know, look, we're going to have development in this country. There's no doubt about it. You're going to have room for that, and I think you just need to be very reasonable about it. And I think you do need to protect certain areas for, you know, wildlife, certain areas for recreation and so forth. Very important.
That really plays into the data center debate,
It does,
correct?
yes.
Because there's a competition for water, there's a competition for power, and for actual land. It's become the biggest NIMBY issue in this country, hasn't it?
Yeah, absolutely. And, you know, when you talk about the power issue, one of the things that I wish we could get going, and it would be a good market for our forest products, would be using wood pellets for energy to power these data centers. As we know, they take enormous amounts of power. And so, you know, it may not be an end-all solution, but it could certainly be part of the solution.
Does there need to be a moratorium, as some are proposing, until these ideas are figured out?
I think there probably
Sprout
should.
like weeds.
You know, Monroe County here in Georgia had a big controversy, lots of townspeople showing up for the commissioners' meetings and so forth. And they very wisely, I think, said, hey, let's hold off here. Where's the fire? You know, why don't we take a breath here and find out what we need to know before we approve these things. I think maybe they have approved one data center, but one that has been proposed is being postponed now. And I think it's a good idea to take a breath.
Yeah, interesting. So when you pull back from this whole idea, there's a question of whether conservation and alternate energy has fallen out of the debate since President Trump came back into office.
Yes.
He's not a fan of wind, we know that. He's not much of a bigger fan of solar. And we've seen stocks and companies that have made big investments in this area hurt quite a bit, making it hard for them to continue to invest.
Yes.
Is this a turning point or just a dark patch for people in alternative energy?
I think it's a dark patch. I think that's going to turn around. I think it has to turn around, Joe. You know, you can't just depend on coal, and certainly nuclear should be a part of the plan as well. We know now that we can make smaller nuclear plants that are more community-based and not, you know, huge. But again, wood pellets and other alternative energy, I think solar and wind need to be part of it. I think it'll come back around. I'm confident it will.
Has Georgia gone too far into the data center hub business?
I think a lot of people are nervous.
Yeah.
A lot of people
I live
are
in
nervous.
Virginia, the data center capital of the world. Some think Georgia's next.
You know, it's all over this country. It's not just Georgia,
Well, that's
not
for
just
sure.
Virginia. It's everywhere, and people are concerned. And look, I understand it. You know, you got to, if you're going to have all these things that AI supposedly will give us, you're going to have these data centers. I know this sounds a little far-fetched, but I'm sure you know this as well, that they're talking about having data centers in space now.
Yeah, they are.
Maybe sometime in the next 20 years that'll come about, and that could offer some relief because, let's face it, these things are huge. They use tremendous amounts of water. Supposedly the more modern ones, the newer ones, don't use as much water as some of the older ones do. But, you know, you're talking 1 million gallons a day for these older centers. That's a concern.
Oh, my God. You mentioned AI. As an artist, as the keyboard player in the Rolling Stones, as someone who's been composing music for years, do you worry about this creeping in on the creative side of your business, whether it's for writing? You could go listen to music from an AI band that doesn't even have a real person, Joe.
No, it's insane.
Yeah.
Yes, we're all concerned. I like what Taylor Swift is doing. She's gone and sort of copyrighted herself, if you will, you know, protected her image, protected her voice, and so forth.
This is what you have to do now?
You have to do that. I think you're going to see a lot of bands and artists go that way. I think you have to protect yourself. We've seen what actors and writers in the television and movie business have done, and I think music is going to follow suit.
It's become a big debate in union negotiations, to your point, in the acting world, and when it comes to writing. Does it potentially lower the quality of music? What's the fallout? Isn't more better?
It's an interesting question, and I don't know the exact answer, Joe, but I think it can be used to benefit. Let's say you got writer's block. And you're trying to finish a song, and you say, well, how can I do this? And maybe you go, just like in the old days, you know where we used to go? A thesaurus.
Right.
What a thesaurus is?
Yes, my favorite book.
And so, I think as a tool like that, you could use it to help finish a line or something like that. But, you know, this concept of creating a band or an artist that doesn't exist, that's weird, man. I don't know. I don't get that. I don't see that as I don't want to.
Can't imagine an AI band opening for you at the Fillmore. It would be pretty weird. You just wonder where the middle ground is here as we talk about the prospect of losing jobs, but also increasing efficiency and productivity, and maybe there's an equivalent in the music business.
Well, you know, here in the state of Georgia, recently our legislature passed a bill that would include an Office of Music for our state, and unfortunately, our governor vetoed it. But I think that could help protect all of our artists, our Georgia artists, and collectively, and connect our cities like Macon, Atlanta, Savannah, Augusta, Rome, you know, for music as a whole. So I hope that bill will come back around and we can.
You could have been the commissioner.
Yeah, there you
get
go.
this thing together. Are you glad that Georgia's going to get a new governor? Is it time for change?
I think so, yes. You know, Kemp has been great for business, no doubt about it. That's wonderful. I would like to see him put as much energy in the music business as he does in other businesses. And I think that would be great for our state. We have such a rich history of music here in Georgia. Are you kidding me? James Brown, Otis Redding, Little Richard, you know, absolutely. Allman Brothers Band that I was privileged to be a part of, and so much more. So we want to preserve that history, and we want to continue that history.
Yeah, you've got a super competitive Senate primary, super competitive gubernatorial race, record spending, and I understand record turnout in early voting.
Yeah.
What did you make of that? When you closed the books Friday, 1 million people, never seen that many in Georgia.
I think it's fantastic. I think people care. People want to have their vote make a difference, and they want to be heard. So I'm very proud of our Georgians coming out to vote.
It appears to be Democratic, by a good 15% Democratic turnout that drove those numbers. Does that give us a sense of what Georgia's feeling politically?
We'll see. That's all I can say. I don't know, but we'll know soon enough, won't we? I mean, here's the primary. Of course, we have the main election in November, and that'll be the big question answered. But I feel a little bit of a change in the state. You do, huh? And I think also throughout the country, you know. I'd like to see, I don't know, fairness come back around, you know, common sense come back around, love come back around, peace. You know?
Those are some different
concepts. I think these are things that are on people's minds, and we are quite divided. I'd like to see us come back together as a country. I think that's so important. Everybody talks about that. How do you do it? I'm not sure. I don't have a magic wand away, but I think we could listen to each other more. I think that would be a big help. So let's hope that we can come together a little bit
Well, I appreciate that very much. And in the spirit of that answer, we've only got 30 seconds left. Stone's got a new album. Are they going on the road?
Well, no immediate plans. I don't think you're going to see it this year. Hopefully next year. Yeah.
Next year?
Yeah, hope
With
so.
this guy?
Of course, it's up to Mick and Keith and Ronnie, but if they want me, I'll be a part of it.
Man, I can't imagine. What a life you have led and continue to lead, and it's so great to have you with us here, Chuck, on Bloomberg.
Thank you.
Happy election, primary eve, and you're off to a gig here, right? You're out of town.
Yeah, I'll be in Miami tomorrow for a private show. Looking forward to it.
Fantastic. Those guys are in for a treat. Great to see you again.
Great to see you, man.
The great Chuck Lavelle with us here, live from Atlanta on Bloomberg. I'm Joe Matthew in Georgia, the eve of the primary. Stay with us with much more ahead on Balance of Power on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow giving up earlier gains. Volatile session back in the red right now. Little changed and lower. Dow Industrials down 6, a drop there of under 0.1%. S&P 500 index 73.75 right now, down 32 for the S&P, a decline of 0.4%. The Nasdaq Composite Index down 239 for Nasdaq. That is a drop of 0.9%. The VIX holding above 18 now, with a 10-year at 4.59%, the 2-year 4.07%, and the 30-year 5.12%. Gold, little changed on the day, up under 0.1%, higher by $4 the ounce to $45.44. West Texas Intermediate crude up 1.7%, 107.17 a barrel, and Brent back above 111 now, $111.10 a barrel on Brent crude, up by just about 1.7%. Bitcoin 76,440 on Bitcoin, down by 2.3%. Sources tell Bloomberg the U.S. is expected to issue a waiver allowing the sale of Russian crude oil and petroleum products that are already loaded on tankers. It comes only days after the previous one lapsed. Again, West Texas Intermediate crude 107.17 a barrel, up 1.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. They are live in Atlanta. Back we go, and once again, your host, here he is, Joe Matthew.
Okay, thank you, Charlie Pellet. He'll be back coming up top of the hour, 1 p.m. Eastern Time, as we welcome our global television audience to the program. And it's an important one today, a special edition of Balance of Power live from Atlanta, Georgia. Georgia is one of 6 states holding primary elections tomorrow. And we're on the ground here to get a better sense of what issues are driving decisions. And of course, we've got 2 really important races here, gubernatorial and Senate. Who's going to run against Jon Ossoff? And who's going to replace Brian Kemp? 2 questions that we're asking here as we talk with voices from Georgia and around the country here. We're going to be looking as well at Kentucky and other states voting tomorrow. But we zero in on this important set of primary elections statewide in Georgia, which some people call a red state, some people call a purple state. You can say that on your own here, because there are a lot of cross currents that we're going to be discussing now with Saxby Chambliss. Delighted to hear that the former senator was going to stop by to talk to us on the campus of Georgia Tech, and he's here right now, the former Republican senator from Georgia. Mr. Chambliss, welcome back. It's great to see you, Senator, here on Bloomberg.
Thank you, Joe. Good to see you. Glad to have you in Atlanta.
We'll appreciate that a lot.
On the campus of a great university.
Isn't this beautiful today? And it's so beautiful outside. We picked a good one, and I'm glad that you're part of our conversation. As we look at these races, and I want to cover the waterfront with you. There's a lot of news out of Iran that I'd like to talk to you about with your former Intel committee cap on. But as far as this election goes, I was just talking to your old friend Chuck Lavelle about a remarkable early vote that set a record in Georgia, 1 million people. Yet we've got races that are so close they will likely go to runoffs. How would you describe the current political environment here in Georgia?
Yeah, it's a lot of people say that we're a transition state.
Yeah.
When Republicans come out and vote, we're a red state. If they get apathetic, we're a purple state. Okay. So, being a Republican, I hope they all were turned out in the early voting as well as tomorrow. Republicans usually lag behind on early voting for whatever reason. Our folks like to come out on election day and cast their vote. But here, Joe, we've got so many candidates, particularly on the gubernatorial side, that it's hard to figure out what's going to ultimately happen tomorrow. The Senate race, we've got 3 Republicans in that race trying to win a race to run against Jon Ossoff. They're 3 great guys. They're all 3 dear friends of mine, and they've been slugging it out. And nobody has really blown the water out.
Yeah, right. Governor's taking a real stand on this, though. He's spending some capital on this race. Is it worth it?
Brian is he's a longtime friend of the Dooley family.
Yeah, sure.
And he and Derek have known each other all their lives, and he's committed on it. You're right. right. He's spending a lot of his personal capital on this.
Derek Dooley, we're talking about running against the two members of Congress, and Buddy Carter and Mike Collins.
Right.
Would any of these three be a more formidable match for Jon Ossoff?
It's hard to say. When people ask me, who are you favored in that race, and my standard answer is whoever can beat Jon Ossoff.
Right.
And as I said, I don't think any one of the three has really risen to a point to where you can say this one will be better candidate versus this one. So it's kind of up in the air.
It's going to a runoff, it sounds like.
I do think that Ossoff has some vulnerabilities. He votes right down the Democratic line, and that's not the mainstream of most of Georgians. So it's going to be an interesting fall as we head into that, whoever comes out on our side.
No doubt. You know, it's interesting you talk about this red versus purple. Most statewide offices are held by Republicans, but you've got two Democrats in the Senate. And as the former senator, I wonder what you make of that.
Thank you, Donald Trump.
Yeah.
Because that was 2020, if you remember. Both those senators were elected, and
we were here for the Warnock Herschel Walker special.
Yeah, well, Donald Trump came out in after 16.
Yeah.
I'm sorry, 20, and said, look, the election is rigged. I really won. Don't vote. Your vote is not going to count. And too many Republicans listened to that, and they didn't come out in the runoff. And both those cases, we had a runoff, and the Democrats won. They were fired up, and we weren't.
Well, so you've got Donald Trump back in the White House, doesn't like early voting. We saw a 15% margin, more Democrats early voting than Republicans. And you're paying over $4 for a gallon of gas. How does that come together for Republicans in this cycle?
Not helpful.
Yeah.
At the end of the day, in all of my 14 elections that I was involved in personally, Joe, at the end of the day, the pocketbook was the number one item. If the economy was doing well, then incumbents usually do well. And when the economy is not doing well, then, and when I say incumbents, the incumbent party, particularly in the White House. And when the economy is not doing well, then there's a real headwind against this White House now as we heading into these elections. And 6 months is a lifetime from an election standpoint, but the policies of the Trump White House really need to move in a different direction to get gas prices down, to get inflation down, to get grocery prices down, because people are hurting right now.
Well, let's get into that, because you remember what it's like to sit on the Intel committee as a ranking member, as a matter of fact. You were there after 9/11 to conduct an investigation. I remember you being on TV just about every day back then, looking into how this could have happened. I can't imagine you envisioned a hot war with Iran at that point. Maybe you did, but was this a fool's errand to close the strait?
Well, I don't disagree with what the motive of the president was to take out.
When it comes to the nukes,
Khomeini.
Okay.
Yeah. He's a bad guy. The policies from the standpoint of national security favored taking Khomeini out. I don't know what happened inside of the White House before the initial attack, but it appears that whatever calculation was made on if we do this, this, and this, and I think that everything they wanted to do, they've done it, that the reaction of the government in Iran is different from what they anticipated. And the staying power from a military standpoint on the Iran side is probably a little more than what the White House anticipated. But at the end of the day, still, I mean, we've destroyed their military.
Yeah.
They have no military,
right,
but they have a bunch of missiles, and they can really make the Strait of Hormuz very difficult for some period of time here.
Yeah. And they've got a mosquito navy that's making things a little difficult with
Yeah.
these speedboats in the strait. Do you think the president has good intel? That was your specialty. Did he have the right set of information when he went in?
I know still most of the leadership in the intelligence community, and John Radcliffe and his folks at CIA are top notch. All up and down the military side, you know, we just have great patriots and great Americans still running the military side of it. So I have to believe that what he's hearing every day from an intelligence standpoint is right, that he's getting the straight.
We're starting to hear off the record, primarily off the record, from Republican lawmakers about war powers. We're not there yet. Every vote on war powers has failed so far, but that 90-day mark is looming. And I know the White House says they stop the clock or they reset the clock with a ceasefire. How do you view that? Should there be an authorization for the use of military force, or as long as the ceasefire is in place, we don't have to worry about it on Capitol Hill?
Well, there are certain powers that are invested with a president, and he can do what he did with respect to Venezuela, to Iran.
Yeah.
But there comes a point in time where you got to go to Congress and say, guys, okay, here's the deal.
Yeah.
Here's what I'm hearing from my intelligence community. Here's what my military commanders are saying, and give Congress a voice. It's not. It cannot always be just the White House making military decisions when you get to a point, and that point is getting close.
Interesting. Does the clock stop in a ceasefire? Have you ever heard that before? Even though we have
I don't think we've
thousands
ever had that scenario.
I guess we haven't had that conversation before.
Yeah.
But it is one that's going to need to be answered pretty soon, it seems like.
In all probability, yes.
This is
Because
colliding.
when it gets closer to the election,
Yeah.
the American people are going to say, Senator, Congressman, it is at a point where you guys need to be involved.
Is this top of mind for Georgia voters, or do we go back to the pocketbook, as you said, and maybe they're not connecting the dots on foreign policy and the price of gas?
Well, Georgia is a strong military state.
Sure
We've
is.
got 11 military installations in our state. We have a huge veteran population. They're very agreeable to having military conflicts, but here again, those same folks, those veterans, they're getting squeezed on the economy, in part because of what's going on in Iran. So it's a double-sided coin there.
Well, Senator, we're out of time here, and I really appreciate spending some time with you. Just quickly, does record early vote mean record turnout tomorrow for a midterm cycle?
I hope so,
Yeah.
and there's a lot of excitement. There's a lot of campaign on the airwaves, Joe.
Yes,
so
sir.
if that's an indication of what's going to happen tomorrow, I think it's going to be a big day tomorrow.
I've been here for all of 24 hours, and I've seen more political ads than I know what to do with. It's great to see you, Senator Saxby Chambliss, in the flesh with us here on Balance of Power on Bloomberg. I'm Joe Matthew. We're live in Atlanta on this primary eve, and we're going to have much more in our second hour as we welcome our global television audience to the conversation. We're going to spend some time with Killer Mike, only here on the fastest show in politics. This is Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
Early voting is over. Now it's on to mini Super Tuesday. Welcome to a special edition of Balance of Power. We're live in Georgia, one of 6 states holding primary elections tomorrow, with 2 of the most competitive races in the country happening right here in Georgia. Joining this hour on the campus of Georgia Tech, our host for this week, the school's president, Angel Cabrera. We'll also talk with former Atlanta Mayor Shirley Franklin, and later this hour, a special conversation that you won't want to miss. Award-winning artist and political activist Killer Mike is going to be with us right here on our Atlanta set. And we start, as always, with a look at Wall Street. Let's bring in Charlie Pallett. He's at World Headquarters in New York with the latest on the Monday trade. Hey, Charlie.
Well, hello there, Joe Matthew. And right now we are looking at an update for the Dow Jones Industrial Average. It has been a volatile trading session as I speak. We've got the Dow now lower by 4 points. Little change. Key takeaway, at least for the Dow right now. S&P does remain in the red, down 25. The S&P 500 index at 73.83. This after hitting 7,500 last week. Right now, the S&P is down 0.3%. NASDAQ, the composite index, trading lower by 184 points right now. For NASDAQ, a decline of 0.2%. We've got the VIX just above 18 with the 10-year currently yielding 4.59%, the 2-year 4.07%, and the 30-year 5.12%. Gold up 0.2%, 45.49 the ounce. West Texas Intermediate crude up 1.3%, 106.79 a barrel. Barrel of Brent right around $111 now for Brent crude. That is a gain of 1.6%. The U.S. is expected to issue a waiver allowing the sale of Russian crude oil and petroleum products that are already loaded on tankers. It is day 3 of the LIRR strike. Long Island commuters had to navigate congested roads and packed buses this morning. It'll likely be the same for the ride home. MTA Chair and CEO Jano Lieber spoke on Bloomberg this morning about the ride-in for commuters.
The turnout at our shuttle bus locations has been pretty light. So people who have to come into the city are getting there. And the subway service from the Queens subway stations where people are being dropped off has been fantastic. So far so good, but it's the first day, and you know we would like to resolve this issue and restore Long Island Railroad service.
MTA Chair Jano Lieber interviewed this morning on surveillance. President Trump, meanwhile, telling the New York Post that Iran, quote, knows what's going to be happening soon after the president huddled with his national security team. Again, crude oil, WTI, up 1.4%, 106.88 a barrel. Barrel of Brent just below 111 right now at 110.92. Barrel of Brent up by 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pallett, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pallett will have more on the markets coming up in just about 15 minutes time here on Balance of Power. It's great to have you with us on the Monday edition. If you're with us on Bloomberg TV or on YouTube, where you can find us right now by searching Bloomberg Business News Live, you realize we're somewhere a bit different. Indeed, we've made tracks to Atlanta, Georgia for primary coverage tomorrow, and it's going to be taking up some time here the next few days as we look at this state and 5 others holding primary elections. This is the big one, though, and we wanted to get on the ground in Georgia to explore some of the political issues that are driving what was a record turnout in early voting. 1 million people for the first time ever in a midterm cycle voting ahead of time here in Georgia. Early vote just ended Friday. And we've got 2 incredibly close races that will likely head to runoffs here. Of course, statewide races will be decided across the board, but it's the Senate primary we're watching to find out who's going to run against Jon Ossoff. That will likely go to a runoff. And then, of course, who will replace Governor Kemp here in Georgia? An open race, massive field on both sides, again, will likely go to a runoff. When we consider the political landscape, though, and the issues that are driving the debate here in Georgia, knowing that we are here on the campus of Georgia Tech, we wanted to get in the heads of young people as well. It was Democrats by 15% who drove that early turnout record. And now that they get into the summer season here, it's a very interesting time to talk to people who are coming out of school, who are going into an ever-changing job market and dealing with a very challenging economy. $4.50 gas in many places, and artificial intelligence that's changing the job landscape before our eyes. This is why we wanted to spend some time with our host this week at Georgia Tech. Angel Cabrero is president of the Georgia Institute of Technology. It's great to see you. Welcome to Bloomberg.
Thank you, Joe. Thank you for having me.
How would you start by answering that question? This class that just left, and I know that you've got a group of summer session students on campus now, are going into a world that you and I would not recognize when we think back to when we stepped out of college and you start, very cute to think about mailing resumes around. AI is gobbling up jobs. It's making other jobs more efficient. And it's more difficult to be a young person to fill a car with a tank of gas or to buy a home.
Well, it is. You are absolutely right. This is one of the biggest inflection points driven by technology that any of the, probably the classes going back to the turn of the century with the internet revolution.
Yeah.
Maybe we haven't experienced anything like this. And yes, it creates uncertainty, creates a little bit of fear among this graduating class. But honestly, it also generates a huge opportunity. And obviously at Georgia Tech, we are a technology oriented and centered university. We make sure that no matter what your major is, that you will be able to fully leverage the tools of AI. That's our goal.
Okay.
I want to make sure no one graduates Georgia Tech without really being able to fully leverage those tools.
Sure.
But it is creating a lot of uncertainty, for sure.
It's really interesting. You use the word fear. I keep hearing anxiety, right? If you're stepping out into the job market right now, but you could also argue that that makes a higher education ever more important.
Absolutely. In fact, if you live in a world like we live now where the computer can code better than the human, or can write, or can do research, can write a report, can create a PowerPoint, can do all these things better than the human, then the question of what does the human do? Well, you better be able to ask the right questions, to have the capacity to critically analyze the answers, to have really a great understanding of the world we live in, or of the mission of your business, of how you're going to be competing. So all those, if you will, are questions that lie outside of technology, that have to do with understanding the broader picture. So what we're trying to do is make sure, yes, that you can use those tools, that they're part of your learning, but at the same time that we help you grow and be able to ask those bigger questions.
Sure. You know, there was a debate about whether kids should just go to trade school to, get a certification, get a paying job, as opposed to the old liberal arts education. If we're vibe coding everything now, does the liberal arts education reemerge as a primary course?
I think it does.
Yeah?
I think it does, as long, and this is the key, as long as you are able to fully leverage the tools of AI.
Okay.
And that is our goal.
So you keep going back to the tools of AI.
Yeah.
I remember when I was first pointed to the internet as a graduating college kid, because I had never seen the internet before. And schools quickly realized they had to get people online now, and to your point, teach them how to use these tools. How do you do that when it comes to AI, when there are so many competing platforms and a technology that's developing so quickly? This isn't like going on Alta Vista and doing your first internet search.
AI is new, but the problem that you describe is not new. For years, every student at Georgia Tech has had to take a coding class. And you would say, why would an economics major have to take a coding class?
Right.
Because the way you do economic analysis at this time of in this era is by using and fully leveraging the tools of computing. Same thing happens here. We don't need everybody to study computer science. We want you to study biology or history or economics or public policy, civil engineering, whatever you're passionate about. But we will make sure that by the time you graduate this place, you are ready to fully and responsibly leverage the tools of AI, plus all the knowledge of your discipline.
And so is AI changing the way you use a classroom? Is it changing the way you teach a course on the college level?
AI is changing everything.
Okay.
Think about it. If you were teaching computer science 3 years ago, you would teach an algorithm, you would teach data structures, and you say, okay, by Monday, I want you to code a program that does X.
Yes.
That doesn't work anymore because you can just cut and paste into Claude and it will produce the answer. So it is forcing us to rethink how we teach everything. But not to see AI as the enemy, but to see it as this incredibly powerful creative tool. It is forcing us to raise the level of the thinking and the analytical competence of our students.
Fascinating. Yeah, if you assign a paper to a student.
Same thing.
They crank it out of an LLM and hand it back to the teacher. How do you teach that student in that world?
Well, in fact, we have, for example, a writing seminar. It doesn't matter whatever major you do, you have to do a writing seminar. Until now, it used to be you just write every week, you get feedback on that paper. What we're now assuming is that we're not saying you cannot use AI. We're assuming you're going to use AI, but our expectations of quality of what you produce are a lot higher than they were 3 years ago.
Yeah, I was fascinated to learn that Georgia Tech is the second largest recipient of federal research grants. We've seen these grants challenged in this administration. The Doge effect was very real, and I'm wondering what it has meant for your campus.
Fortunately, Georgia Tech has fared very well. We are indeed, I mean, just 7 years ago, we were number 9 in federal research grants. We're now number 2. Yeah. Our volume of research keeps growing, but it is a policy issue that affects us very, very directly. I mean, right now, if you look at right behind us, that skyline did not exist in Atlanta 20 years ago. Some of that didn't even exist 10 years ago. The reason why Atlanta is growing is because of the innovation, entrepreneurial energy that is coming out of Georgia Tech. That is the driver of all that activity. The fuel of that is research funding, most of that coming from the federal government. So we do hope that whoever is in Congress, whoever is in the capacity to influence that we remember that the future of our country, if we're going to win, if we're going to beat China, we better be investing in the basic research that is the fuel of the whole enterprise.
Fascinating. You're running an academic institution here, but it's actually a massive business, and your input costs are higher than ever. What do $100 a barrel oil, $4 a gallon gas mean for this institution? Because it's bleeding through into everything, including food. Your room and board doesn't cost what it did even months ago.
Inflation is never fun to deal with, and of course it's affecting us. We have several things going for us. First is the state of Georgia has been a very generous investor in higher education. I'll tell you, the appropriation that Georgia Tech receives now is more than twice what it was when I showed up 7 years ago. We're also bigger, and because we're bigger, we have economies of scale. So we've been able to fend that inflation and still reduce our tuition and fees, which is very rare in American higher education. If inflation keeps growing, I'm not sure we're going to be able to do that. We may need to put a little bit of pressure on tuition. That may be inevitable.
Boy, that's a very honest answer in a world where some people are questioning the value of a college education, the return on investment. How do you answer that?
Very often, when I read an article that is critical about the value of higher education, is written by someone who went to a very nice school.
Of course.
And when I ask the authors, would you suggest to your own children that they forego higher education? They say, no. It's like, then why? What's the argument? That someone else's kids don't go to higher education?
Or we're all going to go to community college, is what we hear.
The value of a Georgia Tech degree, we're very proud, is one of our top objectives. We right now provide the highest return on investment of any college in America, any public university in America. We're very, very proud of that. But really, when you look at the value that an average college degree, with some exceptions, but the average college degree delivers, it's one of the safest investments anybody, any family can make.
It's great to meet you. Thank you for coming on Bloomberg to talk to us today. He's the president and our host this week here on the campus of Georgia Tech, the president, Angel Cabrera. We thank you so much. I'm Joe Matthew here in Atlanta with a special edition of Balance of Power on this Monday, with our eyes still, as always, on Washington and Wall Street. And we just want to take a couple of minutes to update what's happening at the White House. Our Washington correspondent, Tyler Kendall, is live in our Washington bureau right now. Tyler, we've got eyes on the Strait that, of course, remains closed today. And the president is threatening Tehran once again on social media, saying the clock is ticking. They better get moving fast. There won't be anything left of them. Do we have a new timeline?
Well, Joe, at this point, it's very clear that the White House's patience is wearing thin. In fact, President Trump just telling the New York Post in an interview released moments ago that he's not frustrated with Iran, but he's not going to make concessions related to Iran's nuclear program. This says the progress still remains gridlocked over a potential deal. And we're getting some breaking news within the last hour from the U.S. Treasury Department. The Treasury Secretary Scott Bessent confirming that the U.S. will issue a temporary 30-day waiver for some Russian barrels that are already at sea, underscoring the supply crunch that we're seeing from the Iran war. In fact, people familiar with the matter do tell Bloomberg News that it is very possible that this temporary waiver could be extended as the conflict drags on. That is, of course, adding pressure to the scenario for this White House, which has long maintained that a diplomatic solution is still viable, though we do know that President Trump is slated to convene his national security team tomorrow to look at potential military options, because at this point we haven't really seen much progress. In fact, we are hearing that the U.S. naval blockade has only expanded, as CENTCOM Joe within the last hour confirmed that so far 85 commercial vessels have been turned away as part of the U.S.'s efforts to secure the strait.
Really interesting. Tyler, we know the president spent some time at the golf club in Virginia with his military advisors yesterday, including the Secretary of State and the CIA director, and tomorrow he'll be back in the Situation Room with military officials to presumably run through the options that he has at this point. Do we have any sense of what that conversation will include?
Well, the reporting at the moment and President Trump's own statements, including his increased threats on social media, do imply that U.S. military action could be on the table. At this point, though, we haven't gotten confirmation on exactly what would happen if the White House does pursue this route, but does underscore the growing frustration that the White House has when it comes to these negotiations. So far, we've only heard from Iranian state media about where the latest proposals stand, including Iran state media reporting earlier today that the U.S. had agreed to lift or ease some sanctions on Iranian crude temporarily while they hammer out the rest of a deal. We can say that a senior White House official is telling Bloomberg News that that report is false, though hasn't provided any additional information. Pair that with other reporting, again from Iranian state media over the weekend, that the latest U.S. proposal included non-starters for Iran, including that there would be no payments for damages related to the war, and that the U.S. would seek to unfreeze less than a quarter of Iran's currently frozen assets. Again, at this point, we haven't heard from the U.S. side when it comes to these specific points, whether or not they were included in any potential proposal. All we know at the moment is that President Trump is very unhappy with the counter proposal that Iran has put forward. So a lot of moving headlines here, but at the moment still seeing this escalation when it comes to regional allies. Joe, important to point out that the UAE over the weekend confirmed that a drone hit one of its power plants, and Saudi Arabia said overnight that it intercepted multiple projectiles that had entered into its airspace.
A lot to cover with Tyler Kendall. Tyler, thank you so much for the update. Our Washington correspondent. Live in the nation's capital, I'm Joe Matthew in Atlanta. We're live on the campus of Georgia Tech on this primary eve in Georgia. And coming up, the former mayor of Atlanta, Shirley Franklin, will join us right here on the set on Balance of Power on Bloomberg's.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Dow Industrials continue to advance. So right now the Dow is up 70, higher by 0.1%, trading below 50,000, 49,600 on the Dow. The S&P 500 index is moving lower, down now by 0.3%. S&P 73.38. We've got NASDAQ trading lower as well right now, retreating further from last week's records, down 190 now. For NASDAQ, that is a drop of just about 0.7%. All of this with the VIX holding above 18, a 10-year at 4.59%, the 2-year 4.07%, and the 30-year currently yielding 5.13%. Gold is up 0.3%, 45.52 the ounce, while West Texas Intermediate crude oil 106.65 a barrel, up 1.2%. Barrel of Brent right now at 110.50, Brent crude up by 1.1%. Homebuilder sentiment rebounded in May, but does remain low overall as affordability concerns continue to weigh on the outlook. An index of market conditions from the National Association of Home Builders and Wells Fargo did increase 3 points to 37. However, a value below 50 means more builders see conditions as poor than good. And among home builders, Toll Brothers up now by 1%, Lennar up 2.6%, Pulte up now by 2.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that Joe Matthew in Atlanta is a Bloomberg Business Flash.
All right, Charlie, you can still get down here. We're going to be here for 3 days. We're cooking in hot Atlanta. It is pretty warm out, as a matter of fact, as we get into the 80s here on the campus of Georgia Tech, exactly the way we would have wanted it to be here on this day before the primary in Georgia and in 5 other states. It's going to think of it as a mini Super Tuesday tomorrow. We'll be talking about that a lot more. Of course, Kaylee Lyons, by the way, is on her way right now from the nation's capital. Will be joining me on the late edition of Balance of Power that starts at 5 p.m. Eastern. With much more on the races. We're specifically looking very closely at primaries for the Senate race, who's going to run against John Ossoff, and for governor, as Brian Kemp is term limited, and we've got a wide open field on both sides with a lot of issues to consider. We've spent so much time talking about the economy when we're in Washington. That's no different here as we look at crude oil prices in the triple digits, and of course a gallon of gas ever more expensive at $4.50, and that's no different here in Georgia. And on this campus, as we discussed with Angel Cabrera, the president of Georgia Tech, this is a very real situation for students who are graduating and walking into a, in many cases, unrecognizable job market with the impact of AI colliding with the cost of living. It's where we start our conversation with the former mayor of this great city. Shirley Franklin is with us on our set, was mayor of Atlanta from 2002 to 2009. We just had a chance to meet, and I appreciate your coming to see us here on the campus of Georgia Tech. Welcome to Bloomberg.
Welcome to Atlanta.
Well, thank you. I'm going to have a couple of pointers from you later on. You can tell me where to go for dinner tonight and all the rest of it, but I want to talk politics first. And what is on the minds of people in Atlanta as they prepare to vote? We were really taken by a record turnout in early voting. I don't know if you were as well, with 1 million people. And a lot of Democrats, 15% more Democrats than Republicans, making up the difference. What does that tell you about this current state of affairs?
It tells me, number one, that early voting matters to people. They want a chance to vote and not stand in long lines on Election Day. But it also tells me that people are paying attention to what's going on in the country and in the state. They are more informed, thanks to you and other folks who are talking about the issues, and that they want to be heard. I'm not as surprised by the turnout. I think the level of discussion and debate about public issues is higher now than it has been in recent years.
How much of that has to do with the Trump administration?
Well, I don't worry so much about motivation. I mean, as a former elected official and city official, I just deal with what is in the present. So maybe it has to do with the Trump administration. Maybe it has to do with the Supreme Court.
Yeah.
The changes in Roe v. Wade, the situations around immigration. There are many immigrants in Georgia. In 1996, there were very few immigrant populations that were are active politically. I've worked for the Olympics, and we used to calculate those things.
Yes.
So now the immigrant populations are much larger. They have a point of view, a position, and many of them are naturalized citizens and want to express themselves.
That's all fascinating. We're also in a midterm cycle. Sometimes people stop paying attention when you're between presidential elections. Does that say more about Georgia or the city of Atlanta or the political climate that we're in?
Well, I'll leave it to you to tell me what's going on nationally.
All right.
I will tell you that Georgia is a fast-growing state. It is a state that has a history of political engagement through the civil rights movement, at least, but even before that. So people are used to being a part of politics. Atlanta elected the first African-American mayor of a southern city in the 1970s, the first African-American congressman in Andrew Young. So this is not news to us. We're used to being engaged, and we're used to being engaged in a bipartisan way. And whites and blacks, and now other people are used to being on both sides or either side. So I'm not surprised by the engagement.
You know, it's interesting. I love talking to mayors because mayors do not have the luxuries that lawmakers have. You have to fix things. You have to deal with potholes. You got to deal with constituents. You have to deal with the realities on the ground. And you keep coming around to making that point. It's a rare breed in politics. How come we don't have people like that in Washington?
Well, we should have more mayors who are elected to Congress.
Well, I guess maybe that's the answer.
Well, maybe even a president. We have had several mayors that have considered it. Buttigieg.
That's right.
Was a former mayor and very successful mayor, one that we all got to know and love. So I think I would say to you that you mentioned all the things that mayors do, but if you knew me, you would know that you would be talking about water and sewer.
Yes.
I'm the sewer mayor. I believe strongly in investing in infrastructure, and that doesn't have a party.
Right, exactly. It gets back to running a city without the luxuries of going into open debate or being a partisan. It's difficult to run a city on that level, certainly in a place like Georgia. So talk to me about what happens tomorrow, because we've got two big races, two big transitions taking place. The biggest one is the governor. Say what you will about Brian Kemp, love him or hate him. This is going to be a tough, drawn-out race and likely the most expensive in Georgia's history. Are you ready for this transition?
Well, it's way too expensive.
Way too expensive.
Way too expensive. But it's great that there are contenders on both sides, in the Republican and the Democratic side. I'm a Democrat, so I'm paying most attention to the Democratic primary. And our former mayor has been polling really strongly, as have several other of the candidates. But we have 7 candidates who are running for governor.
Sure do.
And most people believe that we're going to have a runoff. I don't know whether that's true. I haven't seen any of the polls in detail. But even if we have a runoff, I mean, it's a good, healthy debate.
It seems almost inevitable that both of these are going to go to a runoff at some point here. Is the former mayor, you mentioned, Keisha Lance Bottoms, I'm assuming a friend of yours?
Well, I know her. I know her well.
Okay.
And
will she be a formidable general election candidate running against a Republican?
Well, anyone who wins the nomination is going to be formidable.
Okay.
Because Georgia is not all Democratic and not all Republican. So if you look at the races of Senators Warnock and Ossoff, those were close races.
Yeah.
So we can expect that we would have a close race. I believe that the Democratic Party will rally around the nominee. And whoever that nominee is, and I hope all the candidates who are running will rally around whoever the winner is. The issues of the day are too important for us to be divided. And then afterwards, there'll be a winner. Someone will win the governor's seat, and all of us need to pull in the same direction to make this the best state that it can be.
You mentioned the Supreme Court, which made me think of your state Supreme Court. I didn't expect as much talk as I've been hearing about these 2 Supreme Court seats that are also drawing a lot more people into this race, knowing that there could be a redistricting, a redrawing of congressional districts in the state of Georgia. What do you make of that?
I think it's great.
Yeah?
I think it's great. I mean, Supreme Court justices need to be challenged as well as all of the other judiciary.
These are nonpartisan seats, but it does appear that Democratic-friendly justices could replace them.
Well, I ran as a nonpartisan seat. So the fact that I'm nonpartisan didn't mean that I wasn't a Democrat.
Understood. Sure, exactly.
So I think it's wonderful that we're getting a lot of attention around the courts. I think people in Georgia, and certainly those that I know in Atlanta, are paying more attention to the importance of the third branch of government.
Yeah, how about that? Should Georgia redraw its maps and become part of this movement that's sweeping the nation? Does that make you worry?
Absolutely not.
Not?
Absolutely
What's
not.
going to happen if you do?
I don't know what will happen, but absolutely not. My former boss, Andrew Young, said some really strong words about that. Voting rights, the Voting Rights Act is an attempt to correct wrongs of the past. And I think that the legislature would make a huge mistake.
By eliminating minority districts?
By eliminating...
Do you think that's where we would be headed here in a redrawing?
Well, why else would you redraw them? We don't have a census.
Well, that's right. But it's just a math problem now, right? It's about how many seats you can get for D's and R's. Should Democrats respond in states where they can do it?
I'll leave that to the other states to figure out, but I will tell you that in Georgia, we need to recognize the history of Georgia. We need to recognize Reconstruction. We need to recognize that we were disenfranchised, and that we need to have a level playing field in order to run. We deserve that. African Americans have not been full citizens in the state of Georgia for most of the history of the country, and we need to be represented. But so do other people. So do people from other backgrounds need to be represented. So I'm absolutely firm on that. I'm firm on Roe v. Wade.
Yeah.
I'm firm on having controls on the immigration tactics that we're using. And now that I'm not in office, I can say that.
Well, I'm glad you could say it with us. It's great to meet you, and I appreciate you sharing all of your insights today on Bloomberg. Thank you, Mayor.
Thank you.
It's great to meet you. Absolutely.
My
With
pleasure.
us live in Atlanta, the former mayor of this great city, Shirley Franklin, here on Balance of Power on Bloomberg. We've got some breaking news. We're going to be sticking with our primary coverage here in Georgia, but this just crossed the terminal. Elon Musk has lost the case against Sam Altman over the future of OpenAI. This is a big one. Knowing this case, this trial has been underway for days now. Musk losing his bid to force OpenAI to overhaul, with the jury rejecting Elon Musk's OpenAI claims, saying that he sued too late. I think we're going to be going to somebody to talk about this. Who do we have here with this breaking story? If anybody can help me out. All right, Matthew Schettenhelm is joining us right now with more on this. Matthew, what does this mean for the future of OpenAI?
Hi, Joe. So this is really great news for the future of OpenAI. This lawsuit potentially threatened to hang over the company's head. Elon Musk was seeking court-issued limitations on the company's ability to pursue its for-profit mission, and really to be limited and hamstrung by its original charitable roots. And so this win for the company reduces that risk. It eliminates that shadow potentially hanging over the company. The jury came back with this decision very quickly. It took the case late Thursday after closing arguments. They were off on Friday. They were deliberating this morning and very quickly returned a verdict against Elon Musk. And they didn't even need to reach the merits, the questions, the legal questions. They said on the statute of limitations, did Musk sue too late? Yes, he knew of this earlier and effectively could have sued earlier, and because he sued too late, the whole case gets dismissed. And so it's a complete win for OpenAI, and this risk that potentially could have hung over the company is now out of the way. Potentially Musk could appeal on this, but I think it will be tough to undo a jury decision that the judge immediately adopted as her own view.
Boy, this is really something. The suggestion that he sued too late tells you what, Matt?
I mean, it was always a difficult factual case for Musk because, look, a lot of these negotiations about starting up OpenAI happened in 2016, 2017, 2018, and we're looking at a lawsuit that Musk didn't bring until much after that. And so, you know, one of the reasons we have a statute of limitations is that we want parties to act when they have claims, you know, pretty quickly. You can't just sit on these things and then once you want to go after someone, bring it up many years down the road. And so basically what this jury is saying is that, look, even if Musk had a real claim that OpenAI was supposed to operate as a charity, not seek a for-profit mission, you should have brought that claim a couple years ago because you knew about it, effectively the jury's saying, many years ago, and you did nothing about it. And then you sued too late to try to go after it now.
Matt, does this settle the whole question, the whole nonprofit question when it comes to OpenAI?
For purposes of this litigation, it should. Now, as I said, I think Musk could appeal this decision to the Ninth Circuit and try to overturn this jury's decision, but appeals courts have a really hard time second-guessing a jury decision. And so I don't think it's very likely that this gets disturbed on appeal. You know, questions of whether a charity has been misused are typically reserved for state attorneys general. So the California Attorney General could have something to say about it. The Delaware Attorney General could have something to say about it. But in this case, they've both signed off on how OpenAI has proceeded. They've not raised concerns, which was one of the weird things about this case, is typically suits like this would be brought by those states' attorneys general, and they didn't have a problem with it. They did not actively litigate against what OpenAI has done. It was only Musk bringing what he claimed was a breach of charitable trust claim after his contract claim sort of fell away, that was trying to pursue those issues. But this loss, yes, I think basically should end the issue for OpenAI.
All right. Matthew Shedenhelm, who's been all over this story live from Washington. It's great to have you, Matt, in the clutch here. A story that's just breaking with a redhead on the terminal. Elon Musk losing his case against Sam Altman over the future of OpenAI. June Grasso is with us now. If we could get some insights from June, of course, the host of Bloomberg Law, with us from World Headquarters in New York. June, what brought us to this verdict?
Well, I mean, it's been a pretty short trial, actually, and it's because Elon Musk wants to basically, I mean, it would be an existential threat to OpenAI with the things that he's asking for. And it's over whether or not OpenAI and Sam Altman had gone back on a bargain to make OpenAI a charitable trust. But the problem for Musk was that there was no evidence, no documentary evidence that that was the case. There wasn't a contract, there wasn't an email, there wasn't anything like that. So it became a battle of, you know, the credibility of the two main witnesses, Musk versus Altman, and neither of them fared that well on the stand. They both had problems on cross-examination. But in order to find here, they'd have to believe Elon Musk over Altman. What's unusual here is this is a jury verdict on a statute of limitations, saying that when Musk sued, it was outside the statute of limitations. You know, statute of limitations, for those who don't know, it makes certain claims time-barred for a certain certain amount of time. So what's unusual is that it's usually the judge who makes decisions before trial about the statute of limitations. So I don't know why she left this for a jury question. I've never seen a jury ask a question about statute of limitations. That's usually a judge decision. In this case, the judge is going to accept their decision. She didn't have to. This is an advisory. It's another unusual thing about this case. The judge has a jury trial, but then she says, this is only an advisory jury verdict. I'm going to make the final decision. And that doesn't happen often. And I have no idea why she decided to do that in this case. But that's also something that's very unusual about this case.
Well, we're going to have a lot more to learn about this, June. Thank you so much for jumping right on with us. June Grasso, live from New York. It's going to be an important next edition of Bloomberg Law on Bloomberg Radio. I'm Joe Matthew in Atlanta. Didn't think we'd be talking about this necessarily today, but we are talking politics. It's the eve of the primary here in Georgia. We're looking at not only politics, but of course economic trends here in one of the most important states in the nation in this primary cycle. It's a mini Super Tuesday tomorrow, with this being the big one, and we're going to talk about it next with the voice I've been promising all day. Killer Mike is with us, coming up straight ahead on Bloomberg TV and radio. First, we want to check Wall Street. For that, of course, we turn to Charlie Pellet. He's got the latest from world headquarters in New York on the markets. Charlie, what do you have?
Hi, thank you very much, Joe Matthew. And right now we are looking at an up day, a volatile day, though, for the stock market. Right now, the Dow is higher by 19 points. That is a gain of under 0.1%. The S&P does remain lower, higher in the early going, but right now down 21. On the S&P, looking at a loss right now of just about 0.3%. NASDAQ Composite Index down 180 for NASDAQ, a drop now of 0.7%. The VIX just above 18 with a 10-year at 4.59%, 2-year currently yielding 4.07%, and the 30-year 5.13%. Right now, we've got spot gold up $8 the ounce, 45.48, higher by 0.2%. West Texas Intermediate crude just below 107 a barrel, now up 1.5%. Brent also below $111 a barrel. It is up by 1.4%. Bitcoin, meanwhile, selling off, down 2.1%. Bitcoin, 76,618. As we have been reporting, a California jury has rejected Elon Musk's claim that OpenAI, under Sam Altman's leadership, betrayed its mission to benefit the public by morphing into a for-profit business, finding that he waited too long to bring his claims against the company. Recapping, S&P down by 0.3%. Back we go to Atlanta, where balance of power continues, and once again, your host, here he is, Joe Matthew.
My mom wouldn't buy me in '84. I had to buy myself. So, look how the world progresses.
Charlie, thank you so much. Look who I'm with here. You're not going to believe this. I'm live in Atlanta, Georgia, and there's one person you talk to when you come here about anything. Politics, economy, life, sneakers. He just came, right, from a Puma commercial.
Yeah.
Killer Mike Render, great to see you.
How you doing, Joe?
In person, no less. I'm great. Last time we came down here for the special election for Senator Warnock, we had a chance to talk.
Yeah.
We were down at Ebenezer.
Yep.
But we weren't together, and it's great to see you at our set here
I'm
today.
absolutely
It's fantastic.
happy to be here
So,
with you.
look, this is someone who needs no introduction. You're a superstar, Grammy Award-winning artist. You're an actor now.
Yeah.
You've got your own bank. You're also one of the faces of Georgia. Yeah. Tell our audience, people who are watching Bloomberg TV all over the world, what they need to know about your state, because tomorrow we're going to be here talking elections, talking issues. What is it that makes Georgia special this time?
Well, I mean, Georgia has the ability to affect the election in a big way, the same way it did. And when I say affect the election, these elections are important first and foremost for Georgia. I want people to think hyper-local. Who are going to be our two Supreme Court justices in Georgia, our new ones? We have two amazing women that are running.
Yeah.
You know, how are we going to make sure we get Ossoff back in there? First 2 times, I worked like a dog on behalf of his campaign. We got him in. I had a call from him about a week and a half ago, like, hey, you know, looking forward to seeing you out there again. Warnock, who's he and Ossoff have went and done an amazing job hitting the ground. So, you know, I think we got to hit the ground. I think we got to galvanize, plot, plan, strategize, organize, and mobilize our way to the polls. It was important then. It's important now. And ultimately, you know what I understand? We don't have to stay in a perpetual state of fear that we're going to lose it all if we lose an election or this is important. My grandmother taught me that it was a civic responsibility to vote. Miss Ellison, who was an absolute tyrant and my civics teacher, taught me to appreciate the Bill of Rights and Constitution because I had no rights in her classroom. And she made sure that I understood that I was lucky when I got out outside their classroom and to exercise those rights. So I'm always encouraged to help people get to the polls. I'm always encouraged by every election, no matter how minuscule and small it is. And I encourage people to do their research. Go on your Google while you're on your lunch break. See who's running in your district, who agrees with you. Talk to your neighbors, see who they want. And you guys, you know, make demands of the politicians that you get in office. The day after they win, they should just get a note from you. These are the potholes we want filled this week.
Well, a lot of people must have been talking to their neighbors because 1 million Georgians voted early. That's a record. What do you make of that?
I'm excited, and I know that this state that has been politically active for a very long time. And I think that whether it was the wise decision of William Hartsfield to give Delta an extended contract here, or the wise decision or Maynard Jackson to say, hey, our own local companies, including being black companies, can build this airport. I think those kind of local decisions have helped make us an international city. So I think that we're going to continue to do that. So go Georgia.
This is a tough time for our economy, which we talk about a lot here on Bloomberg, as you know. You and I spent a lot of time talking about the debanked last time you were on. Even if you have a bank account now, you're dealing with $4.50 gas. You're dealing with mortgage rates, a housing market that won't budge. We're seeing food prices go up now with this war underway, and I'm wondering to what extent that's impacting Atlanta as a city and decisions at the polls tomorrow.
It's impactful. Atlanta has more. I'll give you an example directly from my community. Atlanta has more black millionaires than any other city. Atlanta and D.C. are the top two. You look at Atlanta. With that, we have the greatest wealth disparities, too, between the lowest and highest. We actually are a microcosm of America. America probably has greater economic opportunity than any other country in the world for a person that lands here on a boat 100 years ago or someone that's getting off a plane today. But with that said, we have some of the biggest disparities, and we have lack of education, lack of proper, we have food deserts, we have lack of proper health care. We can fix these things. I think that our mayor in Atlanta, Mayor Dickens, is doing an amazing job of getting people housed. I think that small businesses like the one T.I. and I have opened called Bankhead Seafood, which employs nearly 40 people, are important. We have millions of small businesses that are in this country. Everyone cannot work for large corporations. So these small and medium businesses, as FIFA comes here and World Cup is here, we're going to have those small and medium businesses, some grow, but we don't want them to go. We want them to keep people employed. So in these tough times, let's make sure we're supporting small and local. That's who's going to keep people employed. Let's make sure that we demand more of our politicians in terms of, you look what that mayor's done up in New York in terms of eliminating some debt and stuff and easing some pressure off people. Let's look at those candidates who are going to do that here, and let's vote for those.
I love that you first reached for Supreme Court in your first answer. Because national coverage hasn't gone down to that level in most cases in Georgia, but I'm hearing more about those two Supreme Court seats than just about anything other than the big ones, the gubernatorial and Senate primaries. And it has a lot to do with redrawing maps. People started to really wake up to what they see as a potential opportunity here. Is that why I'm hearing so much about it?
I think that is the why. That is the why. And you know what I'm encouraged by in Georgia is because although it's being discussed racially, and it does impact my community from a racial standpoint, because some places it's going to be used to deny, to break up black constituents from proper representation. But I would like to implore right now that the working class understands that the master class and the planter class in the South 300-400 years ago did not care about the poor workers that they were working in the fields, whether they looked like near you. They didn't care if they were the people that were labeled rednecks that came out of the UK. They didn't care if the people they looked at that they brought from the shores of Africa. They cared about economic domination. And if you think that this is not a working class issue and it is only a racial issue, it will only be so long before you are on the chopping block and there's no one there to advocate an ally. So I would implore the working class right now to make sure that you get people in office that are going to represent for you. And I would encourage the corporate class to make sure that they're fair. Well, what you're going to see is a break in this country that we haven't seen in nearly 100 years.
Well, that's fascinating because the redrawing of congressional districts, particularly after the Supreme Court ruling on the Voting Rights Act, seemed to be distinctly racial, is it not?
Well, at that time it had to be. I'm just saying that at the time that Martin Luther King was fighting for proper workers' rights and a fair wage for black people in Mississippi, the most underpaid people and people who were resisting him the most were also white Mississippians. At the time that Colin Kaepernick, Skip Bayless did an amazing thing one time, Joe. He said there, I think it was in Pittsburgh, everyone kneeled in solidarity with Colin Kaepernick. One player didn't, I believe it was a white player. The player, of course, patriotic, believed in his country, and that was great. But the NFL is notorious for having a bully pit in terms of negotiations with the Players Association. Skip said that guy doesn't understand, and what he did, he broke solidarity and broke the ability for them to move as a unit beyond this particular issue. So I want to say that even if it feels distinctly racial, understand that if the tactics work on race based on me, it will work on class to you. So I'd say whether you're in the Appalachians or Atlanta, you had better be wary of anybody that wants to redraw.
These are incredibly important points that you're making. Will Georgia redraw? Do you think that's done?
I don't. It's something I disagree with my governor on.
Yeah.
You know, and I think he's ruled with a pretty fair hand, and I think he's absolutely wrong on that. And
Okay.
I'll say that to him. I say that on national television.
Understood.
But I think it is not a wise thing to do.
Yeah.
I think that Georgia has shown itself to be emotionally intelligent in terms of going in the voting booth. I think that our mayors in Atlanta have done a great job of working with our governors, be they Democrat or Republican, from Joe Frank Harris to Zell Miller on through to our current governor. I think that it throws the balance of Georgia off, and it makes us copy states that are not as progressive as us.
You think politics all day? Is music a hobby at this point? It's amazing to listen to you.
No, I love, so most of the day I'm thinking, oh my God, how can I make sure this restaurant doesn't cost me any more money? So I'm thinking Bankhead Seafood. I'm thinking music because I'm going to be working on Michael 2 this summer.
Great.
But lately I've been thinking about acting. I've been luckily.
You sure have.
You're not the only handsome guy I get to look in his eyes and we talk. But I get to sit across from Ethan Hawke on a show called The Lowdown.
Yeah.
And I've been brought in for season 2
Is that
on a
fun?
show called Scarpetta.
Yeah.
It's very fun working with Ethan.
Scarpetta is amazing, by the way.
Scarpetta is an amazing show.
How do you prepare for an acting role differently than you would for a musical show or to sit down and record something?
Well, music, you can record, just emotionally get it out, and then you can go back and learn the song, and you can imitate the emotion.
Interesting.
With acting, it's important that you do what you do in kindergarten, repetition. Let me learn these words. I have to say my ABCs perfectly, or my
I have
mom
a
won't
horrible
let me go
memory. I
outside.
could never do this.
Right? So your ABC, your mom won't let you go outside until you say all your ABCs, right? And you have to treat yourself like that. I see why actors and writers have to get along, because you get there in solitude, and then you got a good reading partner. I have a filmmaker friend whose name is Michael Allen, and he reads with me. I have friends in the industry that give me good advice. So I think, more than anything, kindergarten taught you repetition.
How about that?
And once you learn it, put some emotion.
Repetition indeed, but everything we're talking about is a creative exercise that you're involved in. And there are big questions about the way AI is about to change or is already changing this. Whether you're a visual artist, a musician, I was talking to Chuck Lavelle about this a little bit earlier.
Yeah.
You could listen to AI music that's not even made by a person anymore. Is that a good or a bad thing?
Well, I know a producer sent me a track last night that I ended up getting on. It's an amazing track.
Yeah.
He said I couldn't wait for a singer to sing it, so I sang it myself and made AI fix my voice.
Wow.
Oh man, he sounded amazing. I'll never let him sing it live. We're gonna go find a real singer to sing it. But it enabled him to get his idea out. And what I found with technology, and it's interesting because I was just told by the president of Georgia Tech that they're actually bringing a program that teaches technology through creativity. You're going to be able to learn music, but at the same time be learning coding. I think that's absolutely genius. And shouts out to my friend from childhood, Raheem Bia, who's a professor emeritus over here. But what happens is, I think that AI is going to give musicians and artists the ability to have another tool to use their imagination with.
Yes, right.
I can imagine a sketch before I draw it, but the ability to use AI to say, do the sketch and then I'll draw might work, might help.
That's important, though. So it would augment your work, not replace you as the
I
artist.
think the possibility there if we take advantage of it.
If we do it right.
If we do it right.
Yeah.
You don't do some wrong before you do it right.
You playing with AI? Is this part of your world? You got Claude, you got Gemini?
I am as ignorant as can be. I know as much about as AI as my grandpa knew about an iPhone.
Well, listen, maybe we'll learn together then.
Absolutely.
It means a lot to us that you came all the way here to see us.
It means a lot.
I appreciate having you on Bloomberg. I'm very happy for your success, and I'm looking forward to the next show.
Looking forward to seeing you at Bankhead Seafood for a big fish sandwich.
Let's go do that. Absolutely. Can I be there tonight?
Come on,
James. Let's
I'll have
get this
open up the
together.
restaurant just for you, and it's an off night.
Tim's coming too.
Yeah.
Amanda, let's get the whole crew together here. Killer Mike with us live on Bloomberg. This is why we came to Atlanta. I'm going to meet you back here on the late edition of Balance of Power. Kaylee Lyons will be here. We're going to have to take a picture for Kaylee with Killer Mike here. And that's, of course, a conversation that you're not going to want to miss on Bloomberg. After the bell, 5 p.m. Eastern from here in Georgia. I'm Joe Matthew. Bloomberg Business Week is coming up straight ahead, top of the hour here on Bloomberg TV. And
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Welcome to Bloomberg Business Week Daily. Carol Masser, Tim Stenivek. No, we are not at Bloomberg headquarters on this Monday.
We're in Lower Manhattan. We're live from just above the floor of the New York Stock Exchange. A really historic setting for a historic jury trial today, or historic verdict, I should say. And we're going to get to that in just a minute.
As Tom Keene says, we are ripping up the script because we do have a ruling against Elon Musk. So we're going to get to that in just a moment. In the meantime, we've got a really special deep dive today. It's something we do at Bloomberg. We cover the healthcare space. And in particular, we here on Bloomberg Business Week Daily have been covering women's health in particular. And so we've had some great voices coming your way in just a moment as we tackle some of that, including we've got Dr. Doug Lucas. He leads the clinical side for bone health and longevity science at LifeMD on bone health. We have talked to him before. It's something that's certainly super interesting to all of us.
Yeah, also she's a Rear Admiral. She's a former U.S. Assistant Surgeon General. The first ever Deputy Assistant Secretary for Women's Health, Dr. Susan Blumenthal, is going to join us a little later as well.
Talk a little bit about what's been coming out of the administration over the last year. And we do want to remind you, it's a big week for NVIDIA. We get their earnings after the closing bell on Wednesday. So we've got Jensen Wang and Michael Dell live this hour from Dell World in Las Vegas. Wang, I always forget.
Jensen is what he goes by. He wears a leather jacket.
I was going to stop at Jensen and can I just say Michael for Dell? And I don't know. Yeah, I think he's pretty well known as well. So anyway, we're going to get all of that ahead over the next 60 minutes. Stick around, everybody. But right now, we're going to check on the market.
Yeah, Charlie Pellet is holding down the fort at Bloomberg headquarters in Midtown. Hey, Charlie.
And that's what's going on. I do appreciate it. We do have both NVIDIA and Dell. They are trading lower. Right now, we've got NVIDIA shares down 1.8% and Dell trading lower by 2.2%. All of this on a day when the Dow Jones Industrial Average has been fluctuating. Right now, the Dow is higher, barely up 7 points. That is a gain of under 0.1%. Interesting day for the S&P 500 index. Yes, down 24 right now, down 0.3%. But you run the DES page on the Bloomberg, and we can see that we have got 354 S&P members higher, 148 lower. So, in fact, most S&P stocks are advancing. The S&P, though, down 25 right now, down by about 0.3%. NASDAQ Composite Index down 197 for NASDAQ. That is a drop of 0.8%. And right now, we do have our Mag 7 Index trading down by 0.6%. 10-year 4.60%, with a 2-year right now, it is at 4.07%. The 30-year 5.13%. Spot gold little changed, up 0.1%, 45.45 the ounce. West Texas Intermediate crude 107.41 a barrel. WTI up by 1.9%. Barrel of Brent right around 111 now, up by about 1.7%. It is the biggest power acquisition deal ever. NextEra Energy has agreed to pay about $67 billion in stock for Dominion Energy, creating a giant utility that extends from Florida to all those data centers that are clustered in Virginia. Right now, we do have Dominion up 8%, shares of NextEra down 6.7%. And as we have been reporting, an Oakland jury has rejected Elon Musk's claims that OpenAI, under Sam Altman's leadership, betrayed its mission to benefit the public by morphing into a for-profit business. Day 3 of the Long Island Railroad strike around New York City, first full weekday of the strike. Long Island commuters dealing with congested roads, packed buses for the ride home. MTA Chair and CEO Jenno Lieber was on Bloomberg this morning talking about the state of ongoing talks between the agency and its unions.
They're going on right now. They resumed at 7:30 this morning. Folks took a break at about 1:30 in the morning last night. I was here with them, and they're back at the table right now as we're speaking. So, I don't have an update, but work is going on right now.
MTA Chair Jenno Lieber interviewed this morning on surveillance. Recapping, S&P lower right now, down 29, drop there of 0.4%. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. As we just heard from Charlie, big story this afternoon just broke across the Bloomberg. A jury rejecting Elon Musk's claims that OpenAI under Sam Altman's leadership betrayed its mission to benefit the public by morphing into a for-profit business, finding that he waited just too long to bring his claims against the company. It's an interesting case when he brought it, but it's interesting to see this development.
Yeah, it's a bitter feud between these two entrepreneurs who worked together to launch the startup OpenAI back in 2015. For more, we're joined by Matt Schettenhelm, a Bloomberg Intelligence senior litigation analyst. He joins us from Washington, D.C. Matt, what are the immediate implications of this verdict?
Yeah, so the immediate implications are that this removes a cloud that had the potential to hang over OpenAI going forward. Elon Musk was saying that there was a breach of the charitable trust here, and he had asked this judge not just for hundreds of billions of dollars as a remedy, but also for limits on OpenAI's ability to seek profits for investors going forward. So if OpenAI was looking at a potential IPO, if Musk had succeeded with this lawsuit, that's a big problem. And so the result just a little over 40 minutes ago from this jury, which the judge immediately adopted, is really great news for OpenAI on a for-profit basis going forward. This claim that it has to operate as a charity is no longer absent, that is, Musk succeeding with an appeal of this decision.
So, Matt, help me out here. So is it just a case of timing, like, oops, Elon, you should have done this sooner? Or is it that the actual core of his argument just didn't legally make sense?
So it's exactly where you began there, that the jury didn't even need to reach the core of his argument. It stopped based solely on the timing. And this was sort of a secondary issue at trial over the past 2 or 3 weeks. Really didn't get a lot of attention, but it's a very easy way for the jury to resolve this quickly. And the jury had the case for very little time. It took it late Thursday. They didn't deliberate Friday. And here we are Monday morning in California, and very quick decision. And so they didn't need to get into any of those difficult questions of, was there a charitable trust created? Was it breached? And anything along the actual legal merits. It was simply a question of, look, Elon Musk filed this lawsuit in 2024. There's a statute of limitations of 3, maybe 4 years on one of the claims. But basically the jury is saying, look, Musk knew about these problems, about these, the shift to a for-profit model way before 3 years ago. And if he wanted to sue, he should have sued before that statute of limitations had run. This gave the jury a very clean and simple way to avoid, all those knotty questions about whether this was a charity or not.
So is that it, Matt, for Elon Musk? Has he exhausted all his legal options when it comes to this specific issue, or is there more to come?
Well, yeah, so the judge immediately adopted the jury's verdict. She didn't have to. This was just an advisory jury, but she, within seconds, adopted it as her own and ended the case. So he doesn't have many options back, with this precise judge, one wouldn't think. And so the only option now is we're in federal district court in California. The appeal goes to the Ninth Circuit in California. And so in theory, Musk could pursue that, but it's very difficult to overturn a jury decision. And it's very possible that Musk tries, but I don't think his chances of succeeding on an appeal like that will be very strong. I don't think it's really much of a material threat to OpenAI going forward.
Hey, just one last thing. I'm looking at this right through, too, on the Bloomberg. It just talks about Musk's battles with OpenAI are far from over. He's got some separate cases, I guess, trade secret theft and antitrust claims. So more to come, perhaps?
So this case had a number of other secondary claims to it as well. Secondary claims where the judge deferred. A number of those Musk had sort of dismissed. It's true that technically there are still some remaining claims teed up here. Are those going to go anywhere? I'm pretty skeptical. I think there was a reason why the judge put these claims first. I think those were the ones that really potentially had legs in her mind. I'm pretty skeptical that the other claims, like the antitrust claim, will go anywhere.
Interesting stuff. Hey, listen, Matt, so appreciate this. As we said, this has become one of our top stories at this hour. Matt Schettenhelm, he is Bloomberg Intelligence Senior Litigation Analyst, joining us on that story. Now, as we kicked off at the top, we mentioned we're live at the New York Stock Exchange. You can see the background behind us. You and I have spent time here over the years.
Yeah, this is like in my previous career, I spent every day down there. So it was nice to see some familiar faces when we walked in. It was
got a
pretty
welcoming.
cool.
It was really sweet. We are doing them a special deep dive. Bloomberg Business Week Daily. We're talking about health, technology, and healthcare, and more on that specifically when it relates to women's care. And there's been some research that's out.
Yeah, the Menopause Society reporting that osteoporosis, which is highly prevalent in postmenopausal women, has long been associated with an increased risk of fractures. There's a new study that suggests it may also increase women's overall risk of death by as much as 47%, especially within specific ranges of bone mineral density. Results of the study were published just last week in Menopause, the Journal of the Menopause Society.
And it's not just women, it's men too, although women have a higher prevalence than men. Let's get into this. It's somebody we've talked to before about this area. It's great to have back with us Dr. Doug Lucas. He's orthopedic surgeon leading the clinical side for bone health and longevity science over at LifeMD. He's here in studio. He also has his own YouTube show. It's called the Dr. Doug Show, Longevity Through Bone Health. Welcome back. Nice to talk with you again.
Thank you for having me back.
I have to say, I was surprised. I think we were surprised kind of reading in that, yes, it impacts both men and women, but it's more prevalent. It seems to be much more discussed about for women. Why is that?
Well,
I'm not complaining. I'm glad we get attention somewhere, but it impacts all of us as we age.
True. It is more common in women simply because women have lower bone density to start with. So men just have a bigger room to lose bone density before they actually reach that threshold of osteoporosis.
So when we think about it from what new research has told us or given us, is there any indication that we can start doing stuff earlier for preventive measures, eating differently? Last time you were on, we talked a lot about what's being done with hormone replacement therapy. What does the data say? What do the data say?
Yeah, so the challenge with osteoporosis is that in the conventional model, we really look at it as a chronic disease. And like most chronic diseases in the conventional model, we tend to just think pharmacology or maybe surgery. But like most chronic diseases, osteoporosis does respond really well to dietary interventions, exercise interventions, potentially even some over-the-counter supplement type things, depending on what your diet looks like. So there is a lot of room for opportunity to actually improve bone density.
How early, though?
Yeah.
Well, we start losing bone in our early 30s, both men and women. So I would argue let's start as early as possible. Let's learn what our bone density is, what our trajectory is, and then intervene when we need to.
Are the health insurers, game for this, for you to start early? Because it just feels like there's so many parameters about what's okay in terms of testing.
Yeah, it's difficult with insurance because insurance is generally going to want to pay for the doctor's visit and the drugs if you need them, if you qualify for them. Prevention is challenging in our conventional medical model.
Why is that? Why is that? We're supposed to be about preventive medicine. We've been talking about that for years, and yet...
Well, we're better than we used to be, so now some preventive services are covered. But the system as it's built is just not good at educating on nutrition in a way that's meaningful for bone health especially. Not good at focusing on sleep because these things take time. They take a lot of question and answers and back and forth and accountability. And the system's just not built for it.
But I guess what I don't understand is in the long run, wouldn't they save resources? Would it mean less stress on the system? And by system, I mean for our own bodies, but also the health system.
Yeah, I mean, financially, if we could prevent chronic disease, of course, the system would spend less on chronic disease. There just isn't a way that I can see in the system to do that.
Yeah, I mean, I think about this too, like what, I was thinking about your YouTube and what you must focus on, and I don't know if people can call in and ask questions, but I mean, what are we all doing wrong when it comes to bone health? So if we have to be kind of our own activist, right, and advocate, what should we be doing from age 30 on?
Well, I love looking at, you mentioned my YouTube channel, the longevity piece, right? I love looking at bone health through the lens of longevity because I think every 30-year-old wants to live as long and as healthy as possible. And when you look at it through bone health, it gives you a recipe for that. So the diet that's good for bone health is good for your brain, it's good for your heart, it's good for your skin, it's good for your energy, it's good for your sleep, right? So focusing on eating a protein-forward whole foods diet gives you all the tools that you need. exercise that gets you out and moving, resistance training for your muscles, potentially impact for your bones if you can tolerate that. Those are the foundational pieces. And then you can just keep stacking on top of that. Better sleep, better mindset, potentially hormone optimization for those that qualify.
Yeah, I mean, the food, there's a lot of stuff that we can dive into here. I want to dive into the food part a little bit. Do you think there's a misunderstanding?
I want to take notes.
Yeah, well, do you think there's a misunderstanding about, like, saturated fats? Because if you think about a protein-forward diet, some people might say, wait a second, if I'm going to eat all that yogurt, for example, to get all that protein, then I'm going to just blow past what the USDA recommends for, or FDA recommends for saturated fats. Are we a little behind when it comes to this stuff?
It's challenging because if you look at the saturated fat recommendations, it's for the entire population. But the entire population is not sensitive in a bad way to saturated fat. So we have to kind of step away from these global recommendations from a nutrition perspective and start getting really individualized. What I need to eat, what you need to eat, and what you need to eat are all different. So yes, I think saturated fat and dietary fat in general has been demonized in a bad way, and so people are afraid of it, and that does result in less protein, especially from animal sources being consumed.
Like, I do think about that with nutritionists. Like, should we all be seeing a nutritionist early? Like, I can see your kind of, your facial expression, not so sure. Why?
So nutrition's a very challenging space. There is honestly not great research because it's difficult to do nutrition research in a randomized control trial meaningful way. There's too many inputs. So a lot of the older mindset in the nutrition space is really set off of these dogmas from the 50s, the 70s, the saturated fat, dietary fat restriction that really no longer applies and has been hurting us for a long time.
Doctor, always good to see you.
Thanks for having me back.
Thanks so much for joining us on the program today.
All right, thank you so much. Really appreciate it. All right, right now we're going to head to Las Vegas and Dell World and to Bloomberg's Ed Ludlow, co-host of B-Tech on Bloomberg TV, sitting down with NVIDIA's Jensen and, of course, Dell Technologies' Michael Dell. Ed, all yours.
Perfect. Nico's great.
Yeah, thank you, guys. Really clear focus in Las Vegas. AI servers, and you have the GPUs that go into the servers, NVIDIA. And then you have Dell, absolutely critical in the supply chain. What's happening
of all places
in AI infrastructure. And gentlemen, good morning. Hello.
Good morning.
Michael, in the quarter gone, 1,000 new clients for AI server, for AI factory. It's a hell of a jump. What is it that those new clients, 5,000 total, are actually building now, different to 1 year ago? I think that's probably a good place to start.
I think the change we see is it's kind of moved from testing and evaluating into production. And we showed some great examples on stage, right? With Eli Lilly with 1,000 GPUs.
In the physical world.
It's Samsung. And these are not things that are on the screen, right? This is in the real world with the largest companies in the world. And so it's propagating broadly across all customers in every industry, in every country. And, you know, you see the improvement in all the models, and now we have the agentic capabilities. And so while it is exciting and there's been a tremendous amount of growth, I still think it's just the beginning of this wave, particularly when it comes to enterprise, which is really where, you know, we have an enormous opportunity.
What's so fascinating, Jensen, is you spent 4 years telling me that we needed to change the definition of the computer in a context of accelerated computing. But the big focus was on the hyperscalers, right? Cloud. What I took from Michael's presentation was this is happening, you said locally, but on-prem. What's the NVIDIA interpretation of that part of this cycle?
Intelligence has to be performed, produced at the point of context. And so wherever the context is, wherever the action is, that's where you want to produce the intelligence. For most of the early applications of AI, it was in the cloud. A lot of consumer services are in the cloud. However, for Lilly, Samsung, the future manufacturing, a lot of companies, you want the agents to be on-prem because that's where all of your data is, where all your secure data is, your proprietary data, and all of the skills associated with your company is. And so now we have agents that are here, AIs that can do work.
Right.
ChatGPT was fantastic. It launched generative AI.
But it just made content. That was it.
Making content is very important, but doing work is really valuable. And now we're doing productive work incredibly well. That's why they're called agentic AI.
in this new era, what everyone is trying to work out is, aren't all the GPUs locked up at the hyperscalers? How is Michael Dell going to service those 1,000 new clients with the GPUs to build their own on-prem local AI factory?
Well, the supply chain that Jensen has built and we built together is continuing to scale up. And while it's true that there's more demand than supply, there's more supply that's being added, and customers are figuring out how they start to scale these systems up. So, I think what's also happening is companies are understanding that when they reimagine their workflows using this technology, they don't get 10 or 20 or 30% improvement. They get 10 times or 20 times or 100 times. And that is really the speed that matters to make a business successful. We're doing it ourselves. NVIDIA's doing it. And so it's not a secret anymore that these things are possible. And every company wants to capture that speed and translate it into competitive advantage and outcomes.
Dell was the sales channel, right, Jensen? Michael's company is very good to selling technology to America's biggest companies. How is that going to change things for NVIDIA going forward? Like the makeup of the types of companies we're talking about are at scale, but there's also that kind of middle market of data center that's being built, different kinds in the industrial space, in healthcare. Is that something that puts NVIDIA into new territory, away from the frontier labs, away from the hyperscalers?
Well, NVIDIA is a technology company.
Right.
The hyperscalers have the ability to take our technology and integrate them, operate them into a service. Dell has the ability to take our technology, turn them into a solution that delivers impact to customers. If you look at what has happened, agentic AI has completely, as we were talking about earlier, reinvented computing. We had to do several things together. The first thing, of course, we had to build the brain. This is the Grace Blackwell NVLink 72, the Vera Rubin NVLink 72, giant large language models. The second part now is the Vera CPU that we're now in the process of launching. The highest performing CPU in the world. It's designed for agentic AI. And now this will be the harness running the agent itself, using the tools.
Would you kindly, Jensen, what does harness mean? What's
harness?
The name?
Harness is what puts a harness around the large language model so that it can access memory, access the network, use tools, have local scratchpad memory, working memory, access long-term memory. And so that harness basically turns, if you will, the brain into an agent, okay, into a digital robot, if you will, that can do work. And so now the agent runs on a CPU. We also worked with Dell to create a new type of long-term memory for agents. We call it the Dell AI Data Platform. That's built on NVIDIA. The networking to scale it out is built on NVIDIA. So the agent, the brain, the long-term memory, all of the networking necessary to scale it up, as well as the agent runtime itself, we call it NemoClaw, running in a secure and governed container called OpenShell. All of that has been put together, and now the technologies are the technology parts. What Dell has to do is turn it into a solution that people can use. Dell will do for the world's enterprises what the clouds do for the clouds. Makes perfect sense.
What is the Dell story, Michael, around CPU and sort of like general purpose computing in the agentic era? We've talked a lot about the AI factory offering, the GPU, but actually there's potential for you in more general purpose workloads. The build-out's happening either way.
It is, and the demand is exceeding the supply there as well, as you know. And look, as you move to these agent frameworks inside companies, you use a lot more CPUs.
Yeah.
And that's just the reality of what's happening, and I think that's only going to increase. So
instead of humans using tools, it's now agents using tools. And agents, as you were talking about earlier on stage, we have 1 billion people. We'll have hundreds of billions of agents. People use tools every now and then. Agents are going to use tools all the time, and agents use tools very quickly. And so we're going to need a lot more CPUs, and those CPUs are connected to GPU brains so that the CPUs know how to think, how to reason, how to plan, and how to use those tools. So that's basically how it works.
Gentlemen, what is the biggest supply constraint or bottleneck for you right now?
Well, certainly, memory is a challenge. I think
it is memory.
The advanced node semiconductors are still challenging. It's really, we think about it from the things that we're producing, and the semiconductor supply chain is ramping, but the demand's growing faster than the supply.
In our case, we provide the technology integrated, and so the memory comes with our technology. We've been planning our supply chain for a couple, 2-3 years. We have the largest supply chain in the world. Our partners have done a great job securing supply for us, and so all of the pieces go together. The CoWoS is lined up with the HBM, which is lined up with the Grace Blackwell and the CPUs. There's the CoWoS R, the CoWoS L, the CoWoS S. All of it is all lined up. The silicon photonics is lined up. Everything is all lined up. It's just that the demand is much greater than the overall capacity of the world.
So the overall capacity, Jensen, should I put my textbook away? Because if I get my textbook out, it tells me that memory historically is cyclical. It's boom and bust. And so you both kind of have to convince the memory makers of the permanency of this to build the capacity that won't sort of fall away. Is that the right way of looking at it? That this is not a boom and bust cycle, it's just a complete change in the structure of that market?
Well, Michael and I do this all the time. We spend a lot of time with the supply chain. I mean, if you ask Sanjay Mehta over at Micron, he'll tell you 3 years ago, during a meeting, I explained the future to him exactly as is happening right now. And I was really grateful that Micron and NVIDIA really lined up all of our roadmap. Tony will tell you over at SK that we did the same thing years before. And so it's our job to make sure that the vision of the future of the industry, we convey upstream to our supply chain so that they are building for it. We also have to convey it downstream to people who have power generators and land and financing and so on and so forth. And so we have to make sure that the supply chain upstream and downstream are prepared for this future. It is true that the simple logic is this, that we have now reached a level of agentic AI, useful AI, productive AI capability. And the way to think about these agents is kind of like just digital workers. We have hundreds of millions of digital workers in the world. We're going to have billions of AI agents in the world, and they're going to be working 24/7. And so just as we give every digital worker a laptop and a small part of the data center, we're going to have to give every agent essentially a computer and a little bit of storage in the data center to use.
Think about it this way, you do individual work, as a person.
I do.
And you send it on to somebody else, and, there's interactions. Well, now you might have hundreds or thousands of, digital agents working for Ed, right?
That I supervise.
That you supervise. And that's going to help you be way more productive, get way more things done, expand your creativity. Now, it does require a lot more computing and memory and storage and networking and all the things that we're doing together.
Last one on this, like Jensen outlined the Micron and the SK example. 3 years ago, you gave them the heads up. Do they believe you? Are they sort of acting on that?
They're investing. I mean, we're managing through it, but these things are very hard to predict, right? If you tried to predict, in 2023 what the demand was going to be in 2027, you would have a hard time doing that. So it does take a long time to build these factories, but we've got great relationships with these partners we have for decades. That's helping us, and they see that we're winning, and so they want to work with us even more. And it's really a great long-term partnership, even though we'd like more right now.
We're in the beginning of the AI build-out. This is literally the very beginning of the agentic AI build-out. We're going to be building this out for a decade, maybe more, because after this, digital agents will be physical agents.
Then we go to the physical AI. We haven't even started that. I mean, you saw some examples of that, in the keynote.
but that is a way bigger market, and it will require all sorts of new infrastructure capabilities. We're going to, for the very first time, bring IT to the world's 90 trillion other industry. And so there's a giant industry ahead of us to build towards. Now, meanwhile, the supply chain is more than doubling every year. I mean, it's probably quadrupling every year, but we'll still have a hard time keeping up with the build-out for at least a decade, my sense.
China. Jensen, you just returned from China. On Friday on Air Force One, the president said that H200 came up, but that China's position is it wants to support its own industry. Could I just ask what the net outcome was of your trip to China and your understanding of what is not or is allowed with H200 and the customers that you have or do not have in China?
The president wants America to win everywhere.
Right.
The president wants America to lead the AI revolution. And so H200s are licensed to sell to China. The Chinese government has to decide how much of their local market do they want to protect, and how much of their local market do they want to expand with more AI capacity. My sense is that the demand in China is so incredible. Just like it is here, agentic AI is also making enormous progress there. My sense is that over time, the market will open. President Xi was very clear that he wants China to be an even wider open market. Premier Li Qiang was very straightforward and explained very eloquently that China will be an open market. So I'm looking forward to China being a more open market.
To clarify, Jesse, you were able to meet with those officials directly to discuss whether or not you can sell to those Chinese tech companies.
I didn't discuss directly with them about H200.
Right.
I was there to represent the United States, and I was honored to do so. I was there to support President Trump, and really glad to do so. But that was really the focus of my trip. President Trump had some conversations with the leaders, and I'm looking forward to what they decide.
Michael, you did not go to China, but I think what's interesting is you are a member of the President's Council of Advisors for Science and Technology, as is Jensen. Your net conclusion on whether or not China will become open to American technology companies to do business there?
You know, we have a business in China. Obviously, we comply with all the restrictions and various controls that are in place. But I hope that there's more economic collaboration between the United States and China. That ultimately is what will lead to greater outcomes and prosperity for everyone, and a greater likelihood of a successful relationship between the countries and around the world.
The final question on that trip, Jensen, is the sharpest rhetoric was probably on Taiwan. We've talked about the supply chain, but what did you take from those comments from President Xi on the issue of Taiwan? Of course, from a manufacturing capacity standpoint, TSMC is a critical partner. You and I have discussed it in the past, but at this moment in time, how top of mind is it for you, the security of supply from Taiwan?
Well, none of us were involved in any of those conversations except for President Trump. With respect to Taiwan, obviously Taiwan is still epicenter of the world's technology manufacturing and technology development. The supply chain is rich in Taiwan. We're also, of course, reindustrializing the United States, bringing manufacturing back to the United States. We're doing so at a time when demand for AI and this beginning of this new computer revolution is happening, and so demand is extraordinary. So as a result, we're building more factories here in the United States, chip factories, packaging, computer factories, AI factories, of course. So we're building factories of all kinds here. They're also ramping up capacity, and the reason for that is because the demand is just so great across the board. I think the answer is that we want to have, it is possible to have supply chain diversity and resilience, and everybody should be seeking to improve that. It is also very true that Taiwan will continue to be one of the epicenters of the world's technology hub.
Michael, I grew up using a Dell computer. You know that. We discussed it in the past. Desktop, laptop. You and I never talk about computers in that context. We're always talking about supercomputers, accelerated computing. both of you.
And I think you should upgrade. I mean, now we have the new XPS 14 or 16. That would be my choice for you.
So what is the story?
These are the best notebooks we've ever had.
We talk about AI PC, but we're going to get Jensen's take to finish. But what is the role of the PC in this agentic age? Like, I'm using a computer at my desk to do work.
Yeah, well, look, I mean, it's still the device that is the center of productivity for knowledge work. And it is right there in front of everyone. And, you know, we have a great business there. And those devices are evolving too. You saw on stage how we're, you know, embedding the ability to run the small models and the local models inside your PC. And, you know, what's happening is customers are wanting more powerful PCs because they want to be able to do all this great hybrid AI. And so it's a great business. It's still very much alive, and it also gives us incredible scale and strength in our supply chain, which helps us secure all the needed ingredients that we need.
So you spent 31 years working on the servers design together, accelerated computing. That's the scale we're talking about. Let me just be really direct.
We started with the PC.
But why don't you just team up?
I was trying to sell them a gaming GPU.
So what's going to happen between the two of you? A PC with a powerful GPU inside it. Why doesn't that happen?
We have that, yeah.
And what's the plan going forward for that?
Well, we can't tell you the plan right now.
You can tell me.
Very, very soon we like to tell you. You're
interested in the PC market.
Think about the arc. I'm interested in computing, no doubt. Think about the arc of computing. When Michael and I came into the industry, it was kind of at the tail end of mainframes. Not that it was a tail end of mainframes because mainframes go away, but it was a tail end of its growth, and it was the beginning of personal computers. We're now seeing the beginning of course, AI in the cloud, and that's going to continue to grow, but we're also going to see personal AI. Instead of personal computers, we want personal AI. So the question is, and the reason for that is just, we were talking about earlier, AI needs to be where the context is. If all the information that I have is on my laptop, and I need help, I need AI to help me do work on my laptop, then I need the AI to run kind of locally. And if I have a factory, then I need agents to run in the factory. If I have a hospital, I need agents to run the hospital because that's where the operating room. In the operating room, it can't be running somewhere else, right? Because that's where the context is. That's where the action is. Yeah, if you've got an autonomous vehicle, right? The AI has to be run in the car inside the vehicle. Yeah. And so this idea of distributed intelligence and unmetered intelligence, right, where you can generate as many tokens as you want, Ed, on your new XPS 16. You just have to get Bloomberg to get you one. You know, I'm sure we can.
And on that note, Michael Dell, Chairman and CEO of Dell Technologies, Jensen Huang, CEO of NVIDIA, live in Las Vegas once again, Dell Technologies World 2026. Back to you guys.
All right, Ed Ludlow, of course, the co-host of VTech on Bloomberg Television.
If those guys are telling him to get a new computer, like a new Dell, then
put in a ticket.
Put in a ticket. Get it. I think it's kind of justifiable. Just throwing it out there.
I think it's
you
really
got to do your research.
You got to do your research.
Yeah.
I think what's interesting too, what we heard from Jensen of NVIDIA, is basically saying that it will be hard to keep up with the build out for a decade. So again, we keep hearing from investors, from folks in the space, that this is just not a 1 or 2 year thing. It's already been a couple of years, right? But that it's going to go on for much longer.
Yeah, also some really notable commentary from Jensen coming fresh off his trip to China with President Trump. He said he was in China to support President Trump during the summit. Also said that the AI boom is driving expansion of chip making beyond Taiwan. And that's certainly a big question as we think about the future of that region and what the role of Taiwan will be.
I'm curious, too, what we'll get from NVIDIA when they report earnings after the close on Wednesday. Shares of NVIDIA, folks, they're just down about 2.5% in the trade on this Monday. Stock, though, is up almost 18% year to date. But nonetheless, when you think about AI, you got to think about this company.
All right, I'm also thinking about Charlie Pellet. He's holding down the fort and watching these markets as we do get just a little over 20 minutes from the close of equity trading. He He's up there at Bloomberg headquarters. Hey, Charlie.
Well, hello there, Tim and Carol. Right now we have got the Dow, the S&P, NASDAQ all very much in the red. 44-point drop on the S&P 500 index. 73.64 where we stand right now, down 0.6%. We've got oil higher, Dow lower. Right now, Dow Industrials down 93, drop there of 0.2%. Tech selling off. NASDAQ down 301, down 1.1%. The NASDAQ 100 index down 1.2%. Both Dell and also NVIDIA lower. Dell right now down 3.8%. NVIDIA down by 2.5%. 10-year at 4.61%. The 2-year 4.08%. The 30-year 5.14%. Gold flat on the day, up by under $1 the ounce to $45.40 right now. West Texas Intermediate crude 108.38 a barrel, up 2.8%. Brent just topping 112 a barrel, up now by 2.6%. A California jury has rejected Elon Musk's claims that OpenAI, under Sam Altman's leadership, betrayed its mission to benefit the public by morphing into a for-profit business. Ford shares down 2.6% right now. Ford is in negotiations with defense departments in Europe and North America to supply pickup trucks and software to their armed forces. Lululemon Athletica shares, right now they are trading higher. We do have Lululemon advancing by about 0.5%. It is criticizing its founder, Chip Wilson. Lululemon is rejecting Wilson's overtures to install new board members. Briefly, Uber boosting its stake in Delivery Hero, says no takeover for now, and Delta says it will prioritize global expansion over domestic transactions. Recapping S&P down by 0.6%. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, we'll take it from there. Yes, indeed. Carol Masterton, Stanovic, live here at the New York Stock Exchange. We're on radio. We are on television. We're on YouTube. We're on streaming. What a great place to be here when I think about all of the companies that have gone public. Yes, we talk a lot about tech lately, but healthcare, we have certainly seen companies over the years make their mark here at the exchange.
And on healthcare and really public health, you remember last week we were talking about the hantavirus with Dr. Amish Adalja of Johns Hopkins. Now, we're actually talking about Ebola. The U.S. has banned non-U.S. citizens traveling to the Democratic Republic of the Congo, South Sudan, or Uganda for the next 30 days to curb the spread of a deadly Ebola outbreak.
It terrifies me. We've got a great voice, though, to talk about this. She served for more than 2 decades as a top federal government health official in the administration of 4 U.S. presidents. And so we are delighted to have back with us Dr. Susan Blumenthal. She's retired Rear Admiral, former U.S. Assistant Surgeon General, and the first ever Deputy Assistant Secretary for Women's Health. I could go on and on and on, but we've run through. But you are, we love talking with you, your experience, your background. You've seen so much. When we talk about Ebola or a new virus, how do you think about these? I mean, is it just a matter of time before there's something that is akin to what we got with the coronavirus?
Well, I think that what we need to realize is that there are more than 40 different infectious diseases circulating right now, and that infectious diseases have killed more people than war. And that's why we need to stay vigilant against them. We need to keep our public health infrastructure strong and our ability for preparedness and response. And we're at a time where that's being deconstructed, and that's where the new tools of technology can help. AI is already helping us to really do predictive modeling about where outbreaks will occur and what the patterns might be. But we need to stay vigilant against these invisible enemies.
Will the predictive models be enough, or do we also have to make sure we've got the infrastructure, whether it's in government and in our health organizations?
We need to have the infrastructure. I mean, this is critical. And one thing that we need to do in rebuilding infrastructure and reimagining it is to build a seamless system of data and predictive analytics. And that means, because when we saw in COVID, some of our public health departments still were using fax machines, and we weren't doing real-time data monitoring. So we had to scrape the system to find different data sources, and we need to find new methodology, and AI will help to do this as we move forward in this decade and beyond.
How does trust fit into this?
Trust?
Yeah, the question really that I have is, we talked about this with Dr. Adalja last week, is that if we think back to the Biden administration and you know, during COVID and post-COVID, there was a lot of skepticism from the right, including people like Robert F. Kennedy Jr., who's now HHS Secretary, about the COVID vaccines. He gets into power. Now he's communicating things from that perch, and there's an entirely different group of people who are skeptical of what he says. So now you have 2 different groups that are skeptical of what the government has said?
Well, it's very dangerous because vaccines were a landmark public health accomplishment of the last century and continue new kinds of vaccines being developed, like with mRNA. This has saved so many lives. You know, we wouldn't let our defense system decay, but we're letting our public health system decay. And this is a dangerous thing for the American people and people worldwide.
You're talking about military defense, correct?
Yeah, absolutely, military defense, because we want to have the shiniest missiles and methods of defending ourselves, but we're tearing down the defense for human beings in terms of our health.
Dr. Blumenthal, I'm so glad you went there because we talk about, you know, the size of budgets that we're talking about, what, $1.5 trillion or something, you know, extensive spending, and then there's cutbacks in other parts of the government.
Right.
I mean, do you think this is a one administration thing, or do you think whoever comes in next, we get back to a government that is more involved in these issues?
Well, as the poet Emerson said...
Can we afford to?
So as the poet Emerson said, health is the first wealth. You know, health is not only important to a foundation of our lives, but it's an economic issue. We spend over $4 trillion on healthcare in America. We get the right treatment only 50% of the time. We rank 42nd on life expectancy, and there's a 20-year life expectancy differential based on your zip code in America. That's just a fragmented system. We need to do better. And
fragmented
I believe,
and flawed,
and
right?
Flawed, and that's why, again, the new technology tools will help us move forward. And when it comes to women's health, I think this is an area that's been long neglected. It's a design flaw era because women were excluded from the research studies on heart disease and lung cancer. These are #1 killer of women is heart disease. Lung cancer is the #1 cancer killer of women. And yet women were excluded from those studies and prevention trials when we got people to stop smoking, or to look at the 20% of people who don't smoke. 4 times as many are women. Why? So again, we need to use AI and other technology tools to look at the patterns. We need to use it for discovery. We need to use it for access with telehealth and mobile devices to improve access in underserved areas and to do prevention.
Why do we still need to be our own advocate? And I say that I'm a little bit older. I'm proud of it. But it's just, I actually went to a doctor, not my GP, a specialist, not a heart specialist, but she said, nothing wrong, but you should make sure you go to a doctor and get XYZ done, just as like a base thing, like because she was a woman, and just saying things are overlooked when it comes to women and heart health and some different things.
Well, again, you know, our healthcare system, it was a design flaw. Women were excluded, and therefore so many of the clinical recommendations are based on data from men. So,
but you've been a doctor for how long? Like, women have been in the profession, right?
So I built, you know, infrastructure for women's health.
I know you did.
It got mainstreamed. We were talking about all these issues 30 years ago. But, you know, now we have to bring an innovation agenda back. What you were talking about, the misinformation that's out there. We need to use new tech tools to create a new communication environment because healthy messaging has to get out there.
Are the incentives aligned for all the different stakeholders right now? And I'm talking patients, I'm talking doctors, I'm talking hospital systems, I'm talking insurance companies.
Well, as Hippocrates says, prevention is preferable to cure.
Yeah.
But most of the funding has gone to treatment-oriented solutions. You know, women are 50% of the population. They make 80% of the healthcare decisions. They make 85% of purchases. And yet, their health has been neglected. Only 6% of healthcare investing, private healthcare investing, has gone to women's health, and only 2% of venture capital has gone to women's health. Yet McKinsey has said, because women live longer on average in every country, in America it's 5 years, they live longer but 25% greater disability. If we invested in women's health, it's, McKinsey says, a $1 trillion boost to the economy by 2040 because of lower healthcare costs, more productivity.
Seems like a no-brainer.
A no-brainer. And so that's what, you know, this new sort of laser beam focus on innovation in women's health is all about. And it will improve not only women's health, but the health of families, communities, and countries.
I hate to tell you, men, there's no babies without us. But I just think about, like, you typically, but follow the money. Like, that's what I don't understand. Like, if they understand the economic impact, why hasn't it flowed?
I don't think the economic impact has really been underscored as it might have been. And I think that's something that we really need to emphasize, the economic gain, and also the innovation agenda, that there are so many opportunities to explore how, for companies, diseases that affect women only, like endometriosis or ovarian cancer, diseases that affect women disproportionately, like autoimmune illnesses or Alzheimer's disease, and diseases that affect women differently, which are diseases like heart disease or lung cancer. And that's where we need to really invest. And I think companies are starting to come along, because this is the innovation agenda, and it's a new pipeline of opportunities for companies.
Are you hopeful?
I am very hopeful. As Madame Curie, who won 2 Nobel Prizes but was never admitted into the all-male French Academy of Sciences, once said, "I never see what has been done, I only see what remains to be done." And I think if we apply new tools like AI to discovery, make sure that women are included in those research studies, and importantly that the data is reported and journals publish that data, because again, AI is only as good as the algorithms, the data you feed into it.
Right.
And then again, for prevention, for prediction, for early diagnostics, and for access, because it will help to bring care to people in underserved areas, women everywhere. AI should stand for accelerated innovation, but also for everyone included, all people included.
You're optimistic about AI in healthcare.
Well, but we can't bias, but we need to. I am, absolutely.
Always love time with you. Thank you so much.
Thank you. Great to be with you.
Dr. Susan J. Blumenthal. She's retired Rear Admiral, former U.S. Assistant Surgeon General, and the first ever Deputy Assistant Secretary for Women's Health. She's also a visiting professor with the MIT Media Lab. I think we should just take her home with us.
That sounds good. Hey, the S&P 500 down about 0.7% right now. The NASDAQ Composite down about 1.3%. When we come back on Bloomberg Business Week Daily, a check of stocks that are on the move. This is Bloomberg Business Week Daily.